that will have a negative impact on the overall picture for equities for the European market.
Yep, the equity market adjusting to that energy shock, the inflation concerns, rates higher for longer, rewritten expectations about central banks. European futures then pointing lower by 2.6% today after losses of about 4% through the week last week. FTSE 100 futures pointing lower by 115 points. A little bit of ballast being found in the energy sector, you would expect, given those jumps in Brent and WTI. DAX futures pointing lower by 2.3%, looking to drop 541 points over in Germany. Lizzie.
Well, we'll mind the oil majors at the open, as you say, could cushion the blow to the FTSE 100 this morning, Tom. We are still looking at Brent and WTI, both above $100 a barrel. President Trump says that's a small price to pay, but neither side showing any sign of de-escalating this war. We're now on the 10th day, so do keep an eye on the likes of BP, Shell and Equinor at the open. Also the airlines, the likes of IAG, TUI, EasyJet, Lufthansa and the banks, because of the impact on the global economy, and traders boosting their rate bets to price in 2 ECB hikes and more than a 50% chance of a BOE hike this year, Anna.
So we're watching all of those sectors, Lizzie, and everything else really on these markets. It's difficult to think of sectors that won't be affected by all of this. We'll get into a conversation about that, but higher energy prices then rippling through these global markets, and we will certainly have be watching for the effect that that has on a host of different sectors here in Europe. How long this war lasts for, how long it takes to get any signs of de-escalation, any signs that the Straits of Hormuz could be reopened around a different calendar to the war is also something that we need to keep in mind, and something our guest was talking to us about a little bit earlier on. But that's perhaps a conversation for later. We are certainly in the moment focused on the much higher energy prices, much higher oil prices and gas prices, and what that does to European stocks. The FTSE 100 then down by 1.3%. The IBEX giving us a sense of what this could do to some of the more peripheral markets in Europe, down by 3.3%. We'll wait for the CAC to open, wait for the DAX to open. Interesting that some of these European markets are not all that far away from correction territory. Could we see some of them down 10% from their most recent highs by the end of the closing, the end of trading today or during this week? That is certainly a possibility, but waiting for probably quite a lot of volume to go through these markets, so it could take some time to get all of them open. But Tom, it does look like a pretty negative start for European stocks as expected.
Just one sector in positive territory so far. No surprises, that's energy up 1.3%. Everything else is under pressure. Every other sector is falling in the session so far today. The biggest losses coming through the banking space, down 2.7%. Travel and leisure, one that we'd flagged leading up to the open, falling 2.6%. Retail, also we've been on top of this one leading up to the 8 a.m. open. 2.6% is the drop there. Again, every single sector in negative territory, apart from energy, up 1.1%. It's banks taking the biggest hit so far, alongside retail and travel and leisure. Tech also softer by 0.9%. No ballast in the tech space, at least in the session so far.
Well, some of the hardest hit banks look to be UniCredit, Santander, SocGen, all down about 4% this morning. BBVA about the same. In your airline space, you have IAG down 4.4%, Air France down 5.3%, EasyJet down 3.4%. So negativity there. But Tom, you mentioned energy as the only sector in the green this morning. Shell, BP, both up more than 2%, and Total up 1.4% at the moment. Just keeping an eye on defence, as we always do throughout this conflict. Rheinmetall down 0.8%, but Hensoldt and Leonardo managing to eke out gains. It's negativity, Anna, though, for the rest of the sector.
Yeah, absolutely. Negativity across these European equity markets, down by 1.6 on the Euro Stoxx 50. So perhaps we're seeing a little bit more resilience in some of these European markets than anticipated, but we are very negative. And we've been through the sectors, and it's interesting to see what we've got on banks, because sometimes banks like a higher interest rate. They don't like weaker growth, though, I suppose, and we'll get into a conversation about what's driving some of these sectors. Construction and materials, no surprise that that one is down by 2.6%. That could be to do with the costs of construction, around higher energy prices, perhaps, but that's an area of focus. And yeah, absolutely, one sector just stands out in positive, and that is energy.
Let's just briefly check in on what's happening in the gilt markets. Opening sharply lower, yields up double digits across the board. So we're looking at the front end in terms of the gilt market, and that's where the pressure is, up 20 basis points. That is a significant move, back above 4% on the 2-year. You have to go back to October of 2025 to get to that level. 4% on the 2-year right now. The benchmark 10-year at 475. 475, yields up 13 basis points. It's the back end that's seeing a little bit less selling, but still up, yields 9 basis points on the 30-year. The front end is where the most of that selling is concentrated, reflecting what we're seeing in the sovereign debt markets in Europe, but more extreme here in the UK.
Yes, it was Ben Ram on the Markets Live blog writing earlier on. You know, this is a problem that goes across Europe, and we see that at the short end of the curves for Italy, for France, for Germany, and the rest. So it isn't just a UK story, but because the underlying inflation dynamic in the UK is worse than it is in Europe, that is why maybe there's a little more pain, a little more focus on that. Let's get another perspective on what's going on these markets. Helen Jewell joins us, International CIO for Fundamental Equities at BlackRock. Helen, very good morning to you. So I suppose investors looking at this picture over the weekend, no signs of de-escalation, and we see that very clearly in oil prices this morning. And when we look at stocks, we have only energy in positive territory. When you're thinking of areas that might be more resilient to this kind of shock to markets, where does your mind go?
Good morning, Anna. There's a lot going on this morning, and I think when we actually look at the markets today, you've got two things really happening. You've got the first, which is this de-risking, and the de-risking by its very nature will be on those names that have done very, very well so far and into the conflict. And then on the other side, you have started to get some real nervousness. The longer this conflict goes on, we're going to see stickier inflation, nervousness about slower growth. We had jobs data on Friday that was disappointing. So to answer your question, where might there be opportunities? Well, there's two areas that I think we should be focused on. The first is in the energy space, but not just obviously the energy names that we see doing really well. Obviously, what we're really focused on at the moment is the importance of energy independence. Energy independence is absolutely key for any region and any country, and stocks that play into that are going to do very well. The second area is an area that had not done very well up to now, and that is in the quality growth names. We saw a real pullback in quality growth. And so that is, again, a double whammy. An area that you saw a pullback, so they're not exposed from a de-risking perspective. And quality growth, by its very nature, is often more resilient in these kind of difficult markets. So as we start to talk about rate hikes, it's a long time since we've talked about rate hikes. Before the conflict, the assumption was we'd have rate cuts. It's those quality growth names, I think, that you will start to see continue to be a real, dare I say, safe haven for the markets.
Okay, and the fact that we've got yields moving as high, as much as they are at the short end, up by, 20 basis points on the UK, 25 basis points actually on the UK 2-year, and we've seen up 20 basis points on the BTPs in Italy, a little bit less than that in other parts of the Eurozone. I mean, that obviously takes us to real estate and construction and anything. What else should we be watching for in a higher rate environment?
Yeah, I mean, it's not just those names. The challenge is, and again, this is the difficulty, is a lot of those stocks. We'd started talking about this HALO kind of acronym, which we'd not heard, and it's because those stocks had already done very, very well. So it's a lot of the names that perhaps had not been part of that particular group where we start to see some resilience. Some of the, for example, consumer staples names, even the consumer discretionary names within Europe that had seen a pullback through last year, they were not necessarily names that had got a large amount of strong positioning within them. So they're not exposed to the de-risking. That is actually in some ways the sweet spot. So yes, you've got those kind of more the value names of things, obviously construction, cement, trucks we've seen do very well, but also don't discount consumer discretionary just because of that title, consumer discretionary, because we don't have necessarily those names that had a big rally, and therefore they're not crowded in the same way, and therefore seeing a pullback because of the de-risking. So it's not a particular necessarily sector, it's the names that had not necessarily done well year to date, but we see resilience in the earnings. So again, you might be surprised at some of the names within that space. As I say, some of the consumer discretionary names, might be worth watching a little bit.
Are there not dips that are worth buying, though? How big do the dips have to be for them to be worth buying? I'm looking at airline stocks, for example, down today, but surely at some stage things will open up again. Korean stocks down today, but you're talking about that positive underlying story. That's there, isn't it, for the Kospi?
Exactly. So if I take Korea as a great example, Korea is a really good example of, if you look at the actual number of how much it pulled back, it's enormous. I think it's one of the kind of top 10 biggest ever pullbacks. But if you actually look at it versus where it was at the point it pulled back, it was up something like plus 60. So plus 60 to then minus 12 is not actually as much. Then it's still like basic maths, plus 48, right? So they are where it's really interesting to buy the dip, because you've got the structural opportunity set within the Korean market. It's a really interesting market, emerging markets. On the one hand, you've got the structural winners of AI, and on the other hand, you've got some really interesting value opportunities, particularly in Latin America. That is where it's worth buying the dip. Where it's more nervous in terms of buying the dip, Lizzie, is where they are potentially value traps. Now, actually, where it looks to travel, that is a real area that it's very interesting and important to be selective. We still, for example, are underweight autos. It is an area that we still think is under real structural pressure. So don't be buying the dip there, but be buying the dip where you still see the structural opportunities. The other nervousness I would say, and I think the thing that I would love, and I know that you've already talked about this morning, it's important we don't get macro complacent. I want to go back again to this jobs data we saw on Friday. It was not great jobs data. A couple of weeks ago, we were talking about AI and the implications of AI. I think that's where we need to focus, because we don't know where Hormuz is going to be reopened. We could all sit and speculate on that. But actual macro data, not great for
This is interesting, because we had a debate at the start of the show as to whether or not the jobs data was important in this environment.
Yeah.
Helen Jewell, you're coming out and saying, yes, it absolutely is. In fact, that's partly where more largely where your attention should be. What does the US face right now? Is this a stagflationary environment? What assumptions are you making about the Federal Reserve as the labour market weakens and inflation shocks come through?
So it's a bit too early to call it stagflation. I mean, stagflation is a kind of much longer period where you've got the higher inflation and you've got lower growth. But they have now got a less clear path forward in terms of the Fed. It was pretty clear that the Fed was going to cut rates. It's going to be much more difficult for them to do that if you've got the stickiness in inflation. And all of that will come back to how long Hormuz stays compromised for. If this goes on, and I think kind of the end of the month is currently the feeling that if it reopens before then, that we will start to see the oil price kind of pull back and the inflationary concerns go away. But if it goes on for much longer than that, then there is no doubt that they are caught between the inflation on one side and the lower growth that potentially is coming through on the jobs for the other. So I think compromised Fred is definitely what we are seeing. And again, therefore, what we're seeing is we're seeing a move towards where there is resilience in the earnings numbers and when there is certainty in earnings as well. It's only a month ago or so that we were talking about the uncertainty around AI. So you've got these two blocks of uncertainty at the moment, both of which means that there is a real focus and a flood to certainty in earnings where that's not already been overbought. So a huge amount that is going on. And I think that's, again, where you can't just look too much into saying, okay, that sector, defense this morning is off. That kind of in some ways doesn't make sense, but that is because it's a crowded area that when the markets and portfolios are de-risking, that is where the portfolios are de-risking from. So short answer, Tom, uncertainty about the Fed path, which we didn't have just a few weeks ago.
Let me ask you about gold, because it's not acting the haven anymore.
Yeah.
It's down 1.3% today, but you still like the miners.
Yes.
Why?
Well, let's firstly talk about, again, why gold is kind of off. Again, it's because of that crowdedness of position. Gold is not off because people don't see it as a safe haven anymore. It's off because it was very well bought, and therefore, if you're de-risking a portfolio, where do you need to kind of de-risk from? If you've got margin calls, where is the opportunity from? So again, let's not read too much into that, but why the opportunity for buying the dip when it comes to the gold equity providers? We still see the real long-term opportunity for gold and across all the commodities. They are part of the sustainable energy story. Energy resilience, energy independence is one thing that we can be certain of as we go through the next few weeks. The need for that remains critical. So buying sustainable energy and clean energy stocks, a real core part of any portfolio at the moment.
Helen, always great to see you. That's Helen Jewell, International CIO for Fundamental Equities at BlackRock. Thank you. Let's check in on the core six, shall we? We are looking at red across the screen for European equities, but diving into these individual names, and it's only Novo Nordisk that's managing to eke out gains this morning. As you would expect, with the prospect of a prolonged war, you've got consumer names knocked, luxury names knocked, like LVMH down 2.3%. As Helen was saying, some of the defence names suffering today. Rheinmetall down 1.4%, ASML down more than 5% this morning, Schneider and Nestle also in the red. But let's get a check on some of the individual stocks that are moving with Jennifer Creary. Jennifer.
Yeah, fairly negative open so far. So we've got some of those metals and mining stocks in the red this morning. That's after a JP Morgan analyst note downgrading a host of those stocks, those analysts reversing their previously positive view on the sector. We got Anglo American down 6%. We got Antofagasta down 5% as well, all in the red this morning. Next up, we're going to flip over to oil as well, having a reaction this morning, of course, off of the back of the conflict in Iran. Those shares are up only a little bit now. So at BP, we've got up almost 2%, Shell up almost 2% as well on the open. Next up, we're going to flip over to ASML, the Dutch chip provider, down almost 5% on the open. Perhaps one of the victims of broader risk-off sentiment from investors off of the back of that geopolitical news, but also over concerns over longevity of demand for AI in the future. Next up, we've got Roche as well. We talked about that company a little bit before, but those shares are down almost 6% on the open. That's after the Swiss pharmaceutical company said that a stage 3 breast cancer study did not meet its primary objective, and that it did not see any statistically significant improvement in patients with advanced breast cancer. Those shares down on the open.
Thank you very much, Jennifer Creary, with some of those movers this morning. Let's go back to the big picture around stocks this morning. And European equity markets are substantially weaker, of course. The Stoxx 600 down by 2.3%. The Euro Stoxx 50 falling 10% from its February high. So this, of course, not in one session, but falling from its February high by 10%. And if we stay there by the end, stay in this kind of range by the end of the day, then that will be officially a correction. But we are flirting with correction territory, I suppose, this morning. Watching in particular what's going on in the DAX with that in mind. It's down 2.6%, I know, which would take it very close to correction territory on that index as well. Coming up on the programme, with the Iran war showing no signs of abating, we'll examine why oil is soaring and the impacts it will have on markets more broadly. That's next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back to the opening trade. We're 18 minutes into today's session, and as you can see, it is red across the screen. Risk off in these markets as we see the prospect of a protracted war in the Middle East. Neither side appears to be backing down at this point. We've seen oil crossing $100 a barrel, and as you can see here, the FTSE 100 is somewhat cushioned from the blow because of its exposure to energy markets, but still the FTSE down 1.7%. The Euro Stoxx 50 falling 10% from its February high. So if that holds, it'll enter a correction territory. And if we turn over to US futures as well, they're pointing negative too as we head towards the Wall Street session. S&P E-minis and Nasdaq futures both down more than 1.5%, Tom.
Yeah, oil, Brent running now $107 a barrel, up 16% so far in the session, then surging past that $100 a barrel level, and quite significantly so, had been close to 120 at the start of the session. Of course, there's more major Middle East producers curb production. This with the Strait of Hormuz remaining all but closed, and the US threatening to deepen a conflict that has upended, of course, the energy markets. Let's bring in Anthony Di Paola, our Middle East energy markets reporter. Anthony, what are we seeing in terms of the latest impact? We're hearing Macron over in France suggesting there's going to be a call amongst G7 leaders to talk about energy. We had the FT reporting about potential tapping of reserves. Where do these markets stand right now as we look at the infrastructure hit and the constraints around the Straits of Hormuz?
Yeah, good morning, Tom. I mean, that was a really impressive move today on oil. I mean, both measures, Brent and WTI, just surged past $100 a barrel, really strong. Traders have been saying since the end of last week, as we saw the strait blocked, we saw force majeure declared by some producers and others reducing output, that this was going to be a broadening crisis because there's no idea, no visibility on when Hormuz might get to reopen. So that's really pushing those prices because that oil just can't get to the market. As you mentioned, the G7, the IEA, that's a grouping of the developed economies that was set up even in the 1970s, post some of those Arab oil crises and embargoes to manage consumer countries' energy industries. They're going to meet and talk about releasing reserves to add oil to the market to try to calm some of the prices, make sure markets stay supplied. Again, that is bringing prices down now, but that is a one-time thing. When you release reserves, you're releasing oil that you've got in storage, it hits the market, and that does its effect. The G7 countries, coordinated by the IEA, can do multiple releases as it goes along, as long as those reserves last. But again, that's a one-time thing, whereas the closure of the Strait of Hormuz looks like it's going to be continuing. So that's the issue there. How long does it continue? How long then does it take for those producers if and when that gets reopened, to ramp up production, and what infrastructure is potentially damaged as the war goes ahead. So we've got all those kind of issues to consider as we look at the market and this run-up in oil, Tom.
Anthony, we've seen now confirmation that we're going to get G7 ministers meeting at some level to discuss what can be done to address this, perhaps releasing from strategic reserves. Is that anything more than just a sort of sticking plaster over the higher energy prices?
Yeah, well, that's a good way of referring to it, Anna. No, I mean, that was set up, the IEA and the reserves in those G7 countries were set up to respond to emergencies, really, when there was an interruption of supply, just to make sure that the market keeps getting oil, that refineries can keep refining. But again, the big question is the length of the closure of the Strait of Hormuz. If that stays closed and oil cannot get to market, then those consuming countries really have their backs up against the wall. They can release the oil from the strategic reserves, but as those stockpiles get reduced, the leverage that those releases have will decrease as it goes along, and the real imperative is to work on some methods to get Hormuz reopened, and then for the oil producers and the consumers to make sure that they can get oil from those alternative pipelines that are still in operation. So we've got a UAE pipeline that runs to the Emirate of Fujairah, which is outside of Hormuz, and then Saudi Arabia has a pipeline that runs across the country to the Red Sea coast, and they can export from there. Of course, that's not going to cover all the Gulf exports, but at least it's bringing some oil to market, Anna.
Anthony, thank you so much. Anthony DePaola, our Middle East energy markets reporter. Thanks for the update. Now, it's not just crude oil we're talking about here. It's all kind of refined products, and now this is spilling into other commodities as well. Palm oil has surged as much as 10%, with wheat nearing a 2-year peak. This, as war in the Middle East drives energy and fertilizer costs higher and threatens to tighten supplies across agricultural markets. Joining us now is Alaric Nightingale, Bloomberg's lead Europe oil reporter, but also somebody who covers, of course, the transportation of this stuff. And that includes everything, I suppose, that goes through the Straits of Hormuz, Al. So good to speak to you. So what impact is this war having on not just crude oil, but other things, including here crops?
Well, it's just choking off supply of everything that goes through the Persian Gulf. And in terms of prices, it is also important to remember that oil is going to feed through into all of these things. It's going to increase production costs, increase the price of diesel that's kind of integral to so many other industries. So there are kind of two aspects of it. One, there's pretty much nothing going through, or very little going through. And on top of that, these industries are going to be affected by the rising fuel costs.
And how is that going to feed through to food inflation? Because surely that's the thing that's going to also hurt politicians when it comes to elections.
Absolutely. I mean, if this carries on, we've got something, as Anthony was just saying, that is indefinite. We just don't know when the end of this is going to happen, and so the upward pressure on oil prices, even with an oil release, it's going to be hard to kind of restrain that. So you've got this upward pressure on oil prices that's there, and everything else that's affected by Hormuz is also going to be kind of challenged. So there's upward pressure on prices.
Okay, thank you very much indeed. Our lead Europe oil reporter, Alaric Nightingale. That brings us to what's happening in the gilt markets. It's a double blow, really, because there's the fiscal response that now seems to be coming through. You've got governments in South Korea, in Japan, in Italy, suggesting that they may intervene around higher energy prices. That is going to come at a cost, of course, and the bond markets are reacting not just, it seems, to higher inflation risks and soaring energy with this energy shock, but also the prospect of more fiscal spending. And you can see yields up, look at that, 25 basis points on the benchmark UK 10-year, 412, close to 413. Yields soaring on this sell-off, and you're seeing a similar story over in Germany. US Treasuries, of course, in focus, and sovereign debt of France and Germany as well. Yields up, bonds selling off, and most aggressively here in the UK.
Yeah, absolutely. The story across across Europe, then we were up by 12 basis points. And the German 2-year, we're up by 13 basis points. The French 2-year, we are seeing some repricing of ECB expectations there. Coming up, as global bond markets and stocks tumble, we will get analysis. Hake Bathgate joins us from Kalanish Capital to think about what we are witnessing in these markets this morning. The growing realization of what a higher energy price, what a higher oil and gas price means for global equity markets is certainly front of mind. This is Bloomberg.
Take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
This is the opening trade. We're 30 minutes into today's session, and it is ugly out there in these markets. Red across the screen for European stocks this morning. Not a single sector, even energy, in positive territory this morning. Yes, the FTSE 100 is somewhat cushioned by its exposure to energy, but as I say, even that sector as a whole suffering right now. We've already seen Asia stocks battered in their session. US futures pointing to a lower opening there. It all comes back to oil, above $100 a barrel, Tom. What are you seeing under the hood?
Let's lift the lid then, because you have just 38 individual stocks in positive territory, just to drive home your point about how much selling pressure there is and how broad that is right now across the European equity space this Monday morning. You're seeing 559 stocks in negative territory. Volumes are spiking, up 52% versus a 20-day average. Let's flip the board and have a look at some of the individual names then. On the upside, no big surprise that some of the energy names are performing well in an environment with Brent above $100 a barrel. So Shell is up 1.4%, BP gaining 5 points, up 1% above 503. Novo Nordisk in the drug space gaining 0.3%. This is a story around him and hers in the US, and there's an end to a dispute there, which is giving some upside to that stock. In terms of the downside, let's flip the board and have a look at the tech space as well. ASML in the Netherlands, of course, front and center in terms of its place in the chip space, but falling 5% so far today, possibly on what's happening in terms of shipping and the constraints around the Straits of Hormuz. Siemens Energy, big exposure to project density in the Middle East. That's being hit today, down 5.8%, even as some come out and say there's going to be more need for renewable energy in Europe to compensate for the shortage of oil and gas into the future. Roche in the drug space, breast cancer drug combination missing targets in a study, and that is being hit. An idiosyncratic story in the drug space, currently down 5.4% in Roche. What else do we need to be thinking about, Anna?
Yeah, so as some of those individual stock stories cut through, let's get a briefing on some of the other news flow we are watching this morning. Iran has named Mojtaba Khamenei as its new supreme leader after what has been described as a decisive vote in the Assembly of Experts. In a statement, the Islamic Revolutionary Guard Corps has pledged full obedience to the new leader. The choice was quickly criticized by US President Donald Trump. The German Chancellor has suffered a setback in crucial state elections, losing the state of Baden-Württemberg to the Greens. Friedrich Merz's CDU party has been projected to win back the state for the first time in 15 years, but that did not come to pass. China's consumer price growth accelerated to the quickest pace in over 3 years last month, while factory deflation moderated again. This after a rally in energy markets and as household spending boomed during a later than usual Lunar New Year holiday. Annual CPI jumped to 1.3%, above all of the estimates. Producer prices narrowed their drop to 0.9% from a year earlier. Tom.
Okay, so equities keep tumbling, of course, with the conflict in the Middle East intensifying. Some really significant moves in Asia, and the losses today building on the downside that we saw 4% last week for European stocks in terms of moves lower, and as you can see across the benchmark dropping around 2% so far. Let's bring in Haig Bathgate, CEO at Kalanish Capital. Haig, good morning. How do you move and adjust your portfolio in the midst of an energy shock and bonds selling off aggressively?
Yeah, well, I think it's just one of those classic leverage unwinds that we're seeing at the moment. Everybody's running for cover. We've probably got quite a lot of systematic traders driving the short-term volume in the markets. And obviously, there's just no sign, there's no sign of this conflict ending anytime soon. And with the appointment of a leader that's obviously not acceptable to the US, I think that's the markets, reacting and saying this could rumble on for quite a few more weeks, if not longer.
Does it feel like the equity markets are catching up to the bond markets, Haig? How concerned are you with yields spiking to these levels at this point?
Yeah, so I think it's again it's all the same related trade, isn't it? I mean, there's two aspects I think hitting gilts at the moment. Obviously, there's the short-term spike in inflation, which could be sustained a bit longer. But there's also I think a realization in some of these slightly weaker fiscal countries that they're going to have to put more and more funding into defence and so on, and the balance sheets are not looking great to start with. So it's kind of a perfect storm in a negative sense for central banks. So I do think, though, I mean, again, there's quite a lot is reminiscent of what we saw in the early days of the Ukraine conflict. Remember, we saw a lot of agricultural commodities spiking then because of the reliance on those coming from Ukraine and so on. I think there's a lot of short-term fear, and I think again this can de-escalate quite quickly. So there's a key factor is not to panic, and I think at some point we'll start to see maybe the longer-term investors starting to come back into the market at lower levels.
Well, yeah, some are saying that this stock sell-off could be much worse than it is today. Yes, we're seeing red across the screen, but it could be worse than this, Haig. Do you basically assume that we're nearing President Trump's pain threshold and that the taco trade will come in, that the Trump put will come at some stage? Because from the geopolitics, it seems like neither side's backing down.
Yeah, I think that's the key thing, isn't it? There doesn't seem like there's going to be any sort of jumping off on either side at the moment, which is obviously rattling the markets. But I think you're right. I think the markets are the one thing that could call Trump to task. And if we continue to see things intensify, and I don't think in the short term, if the rhetoric doesn't improve, I don't see any reason why the markets don't intensify their sell-off, and ultimately could be the markets that actually do eventually impact Trump and kind of force them into some kind of de-escalation.
Well, I wonder how bad do you think things could get? Because Ed Yardeni's raised the odds of a US stock market meltdown to 35% for the rest of the year. How likely is that if stagflation concerns mount?
Yeah, so I think in the short term, there's a lot of noise, isn't there, in the short term, and markets don't like uncertainty, and we're at this maximum point of uncertainty at the moment. I think obviously the longer this goes on, the more you get these second order effects. As you say, you could have stagflation, but there's always a hedge fund here or there that'll have been levered heavily into this. So again, if things don't settle down, I think in the coming week, or we don't get a sign of when this might end, and maybe that's what we do. We do see more of a signaling from the U.S. military or President Trump about the likely timescales of this conflict. I think things can get worse, and obviously they then feed themselves. It's like the snowball effect, where bad things then sort of feed into the real economy and become more sustained.
Hey, how much do we set this in the context of the strength that we had seen in global risk assets running into this war? Stocks, yes, we've seen some rotation out of mega caps in the US into some other parts of the tech space, but we'd seen all-time highs in global stock markets in all parts of the world just before this. That's sort of important context, I suppose.
Yeah, I think that's right. I think we did see a bit of weakness, didn't we, in software and software stocks in the back of capex concerns, and how large tech monetize and get the payback on some of the infrastructure spend. But it was quite a dichotomy, wasn't it? Because we still had 80% of companies beating expectations. We saw that obviously before all of this kicked off. Nvidia had incredibly good results, but then sold off again on the back of capex concerns. So I think things can settle down quite quickly, and it's easy to say that when we're in the eye of the storm. But we do have precedents for this with the Ukrainian conflict. Your markets do adapt, and people can adjust even if these conflicts persist for longer than expected. But in the short term, obviously, it does get very noisy. But yeah, look, the markets were sort of primed for some kind of setback. We had obviously started to see that a little bit, before we come into this with large cap tech.
And hey, we've seen the dollar really be the haven of choice since this war started, and other potential havens have not lived up to expectation, perhaps. Do you see anything that changes that dollar outperformance within the FX space?
No, I don't think so. I think those who are predicting the immediate demise of the dollar are grossly overstating the situation. The fact remains that U.S. investors remain the majority of global capital, and when they repatriate assets, that always creates natural demand for the dollar. All of a sudden we're now starting to see a slightly better return on U.S. government debt as well. So so I think those long-standing relationships remain, and that doesn't really come as a big surprise to me, seeing the dollar being the safe haven of choice.
Haig, good to see you. Thanks for jumping on. That's Haig Bathgate, CEO at Callanish Capital. Well, coming up, we're going to be speaking to the CEO of the anti-drone defence company U-Force, as the war in Iran shows no sign of abating. That's next. This is Bloomberg.
point in your tennis career did you say, I've had enough and I'm just going to retire at the top? You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly, and so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to the minute global news whenever and wherever it happens. I'm Anne-Marie Hordern in Davos, Switzerland, and this is Bloomberg.
Welcome back to the opening trade. We are 43 minutes into our European session this morning. We have European stocks very much on the back foot. We're down by 2.5% on the stock 600. We're down 2.3% on the stock 600. We're down by 1.8% on the FTSE. The CAC 40 also much weaker. The DAX much weaker. We're flirting with correction territory on many of these European indexes, so we'll certainly keep an eye on that. Oil prices is the culprit. We're up by 15%, up by 15.7% on oil prices on Brent this morning. 107.34 is where we trade. So we see the impact of that across all of the sectors, and it is all of the sectors on the European equity market.
Yeah, the energy shock is there, and it's pronounced this morning as we look at both sides, Iran, the US and Israel, digging in this conflict. Meanwhile, Ukrainian President Volodymyr Zelensky has offered to share his country's expertise in protecting against Iranian drones, which are flooding the defense systems of the US and its Middle East allies in the region. The Ukrainian leader is trying to leverage his nation's war savvy to keep it on the world's agenda and is offering interceptors in exchange for Patriot missiles. We're joined now by Oleg Rudzinski, the CEO of anti-drone defense company U-Force, which is a collection of Ukrainian defense companies. Oleg, good morning. Given your experience, given your company's experience, what can Ukraine feasibly offer those Middle Eastern partners in terms of defensive capabilities that they may not already have?
Good morning. Ukraine has already solved this problem in one particular area, which is Odessa, where there was a maritime location that was exporting a lot of commodities to the world markets, which in Ukraine's case was grain. And so based on that, Ukraine had to develop not only the aerial interceptor drones that would cheaply interdict Shahed drones coming in, not only from the land, but also from the sea. And so what we will need to see in the Middle East quite quickly is ability to launch cheap interceptor drones, not only coming from the ground when Shaheds are coming into the ground, but also putting out enough combat mass and enough drone capabilities in the middle of the Persian Gulf to catch drones before they're hitting your shores, your oil platforms, or your desalination plants.
Because you point to what is essential around this, which is the cost differential between an interceptor, a typical interceptor, and the Shahed drones. And that differential is significant. $40,000 US approximately for the cost of a Shahed versus, what, up to $4 million US, depending on the type of interceptor used by the US and its allies. Are you in conversation with governments in the Middle East about supplying some of your capabilities? Are you in conversation with governments in the West, the US, the UK, or others? How advanced are these talks if you are in them?
The phone is ringing off the hook, but we cannot comment on the state of the conversations.
Okay, you can't comment on the state of those, but the demand is clearly there. What is your ability to meet that demand? Are you ramping up production? Are you looking at signing additional orders?
Yes, of course, as a company that was started to help Ukraine protect itself and help the democratic world protect itself in the first hours of the war, we've learned how to quickly scale up production and how to make our supply chain completely independent of China and other kind of rogue destinations. And therefore, we are ready to step up and ramp up the production to meet all the needs. On top of that, the Magura Sea drone, which was one of the key capabilities that U-Force helped field, it has kind of done its job in the Black Sea, and therefore the maritime interdiction capabilities, which are most needed in the Persian Gulf right now, are available. The supply chains are available.
And how much difference is it making in your investor conversations, in your customer conversations, Oleg, that the products you're talking about here are battlefield tested, as you described, off the coast of Odessa, for example?
Yes, absolutely. And yeah, it makes all the difference in the world, because as a warfighter, when you have a choice to take a exquisite system that has amazing demo videos but hasn't seen a minute of combat versus maybe less exquisite, but Ukrainian tested system that has seen thousands, if not hundreds of thousands of missions already, you will always pick the battle tested system, because your life as a warfighter depends on that system working every time without any issues. And that's why the mileage or the hundreds of thousands of combat missions our technology has seen in Ukraine is the most important parameter when it comes to choosing combat systems for defending democracy.
Okay, so you say that the phone's been ringing off the hook. You can't tell us everything that's being discussed, which we completely understand, Oleg. But in terms of the opportunities for businesses that are part of U-Force, or the products that are part of U-Force in the Middle East, is there anything holding you back, like restrictions on what you can export to the Middle East, or the fact that some Ukrainian voices might be saying this product should be made for Ukraine, Western governments want access to this product as well? Tell us some of the limitations you face, if any.
Yeah, first and foremost, the culture of the company, the culture values we've set up are, we need to make sure that Ukrainian safety and wartime resilience stay as our priority, because it would be very unfortunate if us or others get distracted by multiple priorities and we do not help Ukraine as much as we could. But second of all, there is a number of capabilities that have less need of in Ukraine now. For example, the maritime drones, because there is not that many warships left in the Black Sea right now. And so from that perspective, it is all up to political decisions that are all being discussed right now in the region for companies like ours to start supplying the technology and literally putting drones on the planes.
How do you protect your IP in general and from US defense giants, legacy defense giants in particular?
To be honest, the defense giants haven't been the issue. There is a number of smaller players all over the world, and in the US in particular, that are trying to copy Ukrainian technology as we speak, put on a American logo on it, and then also file for IP rights in other countries before Ukrainian companies are able to claim their place. That's why us being subject to British jurisdiction and having our international headquarters in London is so important, because UK in particular is very good at protecting IP of companies like us.
And would you look to list in London when the time comes?
Let us win the war first.
That is a possibility, did you say, Oleg? I missed that, in terms of the IPO question in the UK.
We definitely would be interested in London as one of the destinations for the IPO, but but we as a company are focusing on the immediate mission in front of us, which is protecting the democracies, providing the free world with the technology that is able to give them peace of mind, as well as allow the democratic values to continue. And that starts with us really focusing on maintaining the quality while also scaling up the supply chain of a cheap, attritable defensive systems.
Oleg, appreciate your time this morning. That's Oleg Rodzinski, CEO of UForce. Thank you so much. Well, let's get back to the big moves that we're seeing in these markets this morning. Skylar Montgomery-Koenig from our MLive team joins us now. Skylar, right across the screen, you can see it there. This sell-off, though, put it in context for us. Is this actually not as bad as it could have been?
I mean, it's not as bad as I think it will get, is maybe the clarification I'd make. I think what we've seen over the weekend is people are definitely more concerned about what's happening in Iran in terms of, if you look at betting markets, for example, the idea that the conflict would go on for more than a month was at 30% at the end of last week. Now it's down to 20%. So it means that markets are thinking that it's going to be a long conflict. That means that the Strait of Hormuz will be not allowing supply through, and that means oil prices can be sustained. Now, I think in the context of the moves that we've had so far this year even, we haven't had enough downside in the fact that if you look at something like Korea, for example, you're still up almost 30% on MSCI Korea this year, despite the fact that you've had a week and a bit of very strong downside. And so I think you'll see more de-risking and more turning away from those energy importers, but also ones that have gained quite significantly.
Let me ask you, Skylar, about bond markets, government bond markets. We're seeing, if I look at the 2-year, UK gilts up 26 basis points, France, Germany up 10 basis points or so, Italy up 14. Why is it so much worse for the UK? Underlying worse inflation dynamics, but also index-linked gilts. I think you've been writing about this.
Yes, absolutely. So I think bond markets are definitely taking the worries around stagflation from higher energy prices more seriously. The UK in particular, we had just gotten to a good place in terms of valuation was actually turning against bonds as the Iran conflict happened. So part of it is a pricing dislocation, and part of it is something like 25% of UK bonds are linked to inflation. So that means that debt servicing cost automatically rises as inflation rises, and you get this negative cycle where you have higher inflation, you have higher debt servicing costs. It makes it much harder for the Bank of England to cut, and actually we're starting to think about hikes from the Bank of England, and that means debt servicing costs go even higher and debt sustainability gets worse because growth is lower too. And so it's this really toxic mix for the UK because they also have such a high amount of their debt linked to inflation directly.
Inflation linked, yes, absolutely.
It gets worse from here, is my clear takeaway from you, Skylar. When we think about President Trump's calculus, we know there is a pain point for him. We saw this after Liberation Day and tariffs. We saw him reflect and react on the back of soaring yields and the sell-off in the equity markets. Do the markets constrain Trump? And if they do, how quickly is the snapback to pre-war levels?
I think there is somewhat of a constraint. I think the issue is, you know, we're so far into the conflict. How do you protect the market? I think, you know, he has some kind of goal in mind when it comes to the conflict, and I don't think that's going to be completely eliminated by equity markets, and particularly given that U.S. equity markets are relatively calm right now. U.S. equity markets weren't gaining strongly this year. They were actually flat, and so there's not as much to undo, and valuations are also cheaper than they were at the start of the year. So I think it's a relatively high bar. The conflict is so ingrained in gold right now. But also, we're not seeing those in the market yet.
Just briefly, do you see a catch down for U.S. equities versus their European and Asian counterparts this week?
I think you're still going to see pressure on U.S. equities because it's very hard for the equity market elsewhere to sell off without the U.S. also. But the issue is that you've had a valuation adjustment. You're not as exposed as an energy exporter in the U.S., and so there shouldn't be as bad of a stagflation hit. I mean, if you just look at European gas prices versus U.S., big difference there.
Skylar, thank you very much indeed. Skylar Montgomery-Koenig from our MLive team.
Yeah, European equity markets then down by 2% this morning, and US futures down by 1.3% on E-minis. So there had been this sense last week, and maybe this made total sense given different exposures to higher gas prices, higher oil prices and the like, that the US would be a little insulated, and we saw that play out last week. This week, again, the US drop is not as substantial as it is here in Europe, according to futures, but we'll see how the US session plays out.
The non-farm payrolls were concerning for the US, at least for some, in terms of the weakness in the labour market at a time of higher prices and what that means for the Federal Reserve. And whether or not, and to what extent, if we get the reopening of the Strait of Hormuz or some kind of end to this conflict, do we pair the changes and the increase in rates that we've seen now priced in for the ECB, for the BOE?
But as we started the show by saying, if you see hits to infrastructure, even that reopening of the Strait of Hormuz may not be enough to do it, to bring oil prices back to where they were.
Which is why it was really interesting listening to that conversation with the Ukrainians about what they've learned about drone warfare, and talking a lot about seaborne attacks, and so that very much in the mix when we think about reopening of the Straits of Hormuz. And interesting to think about how much that conversation about reopening the Straits relates to the war per se, or other measures that can be put in place, which is what our guest on the oil market was telling us all about. European equity markets then very much on the back foot. That is it for the opening trade. See you tomorrow, everybody. This is Bloomberg.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show,
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
First time since 2022, and Iran names a new supreme leader. And for some stocks let's check on our markets right now with Morwenna. Abir Obu Omar.
Hi, Julie. Good morning. So starting with oil majors in the U.S., obviously this is probably the only sector or one of the few sectors that are going to benefit out of the events that we're seeing across the Middle East, the closure of the Strait of Hormuz, and some of the Gulf producers, including Bahrain, Kuwait, the UAE, saying that they're going to halt production or stop the supply through the Strait of Hormuz, is sending oil majors in the U.S., but certainly in Europe as well, higher. So we're seeing the likes of Chevron, Exxon are going up quite a bit this morning. This is as Brent crude obviously edges closer to $120 a barrel. It's paired some of those gains from earlier, but still quite a bit up. Moving to NVIDIA. Now, this is another stock, Julie, that is not doing well. I mean, one of the probably the stocks across the S&P are probably not going to be doing well this morning. The futures picture does not look good aside from oil, as we mentioned, but NVIDIA possibly the biggest drag on S&P this morning, down over 2.6%. But moving to Hims & Hers, that is another sector that is benefiting this morning. Hims & Hers is doing quite well, may I add, 50% up, and that is on the back of solving this dispute that it had with Novo Nordisk in Europe. Now, Hims & Hers has had these concerns about its copycat drugs, but it's come to an agreement with Novo Nordisk and is doing quite well this morning on the back of both companies selling their drugs together. And so Hims & Hers up nearly 50% in the pre-market trade this morning. Julie, back to you.
Thanks, Abir. And coming up in this hour, more on the implications of the new leader in Iran with Julie Norman of Chatham House. And Nuveen's Laura Cooper joins us on the market turmoil. Sources say the G7 ministers are set to discuss a possible joint release of oil reserves as the war with Iran sent prices soaring, but cautioned that no decision has been taken. Let's go to our team coverage with Bloomberg's Joanna Bersecci in Dubai, EMEA News Director Will Kennedy, and markets reporter Skylar Montgomery-Koning. Joanna, let's begin with the reaction to the new supreme leader in Iran and what he represents.
Well, good morning. Well, in many ways, he also represents a continuity candidate. He was the front runner going into the weekend. It was widely anticipated that he would be appointed. He is, of course, the son of Ali Khamenei, the former supreme leader, which is also interesting because there are many sort of purist theocrats in Iran that wanted to avoid a hereditary succession scenario. But here we are. The son of Ali Khamenei, Mujtaba Khamenei, has been appointed the third supreme leader of Iran. He is, in many respects, just as much of a hardliner as his father was. He has very close ties to the IRGC, the Revolutionary Guard Corps, very close ties as well to the security structure and system that has presided over Iran since 1979. And also there is little doubt that his elevation would also help increase the influence of IRGC over key decision-making right now. And that was pretty evident throughout the course of the weekend when you had a statement that was put out by the President Pezeshkian suggesting that he was looking to extend an olive branch perhaps to Gulf allies. That was shortly shot down afterwards by many members of the parliament, including the head of the National Supreme Council, Ali Larijani. And so in many respects, the appointment of Mujtaba Khamenei is seen as an act of defiance out of Iran. It elevates the status of the existing power structure. And President Trump himself has also insinuated that this would be an unacceptable choice. He posted over the weekend that they want nothing short of unconditional surrender out of Iran.
Skylar, thank you. The G7 again going to discuss the joint release of emergency oil reserves as the Strait of Hormuz remains closed. European gas up as well. Will Kennedy, break it all down for us.
Yes, I think that the oil markets and the energy markets more broadly are really adjusting to the fact that this disruption to oil supplies out of the world's most important energy producing region isn't going to end anytime soon and is starting to have knock-on effects through the whole global energy system. So we've seen a real jump in oil prices this morning. We're above $100 a barrel, both for Brent in London and WTI in New York. WTI is up more than $30 since the start of this war. That's that's an enormous jump to adjust to in a huge short period of time, and we're starting to see that feed through into expectations about interest rates. We're seeing that in the sovereign bond market, and we're also starting to see the knock-on effect on global equity markets. So it seems to be the morning where the market has really woken up to the possible impact of this war, and the longer the Strait of Hormuz remains effectively closed, the worse it is likely to get. Now, you mentioned that IEA release, that G7 meeting that happens later today to discuss emergency stockpiles. That can help, that can cushion the blow, but it cannot do all the work of offsetting this disruption to global oil supplies if it carries on for days and weeks ahead.
Well, I want to talk to you about how you said that can help, but what are the expectations for that, and how much can it help in a situation like this?
Well, it will probably talk about the IEA, which is the body that coordinates the energy policy of the world's developed nations. It was established after the oil shock of early 1970s for precisely this kind of situation, and what it does is it coordinates among its members so that they can release their stockpiles of crude oil and oil products on a coordinated basis, both state stockpiles and, importantly, commercial stockpiles. And so it can have an impact. We also have China, which has big crude stockpiles to draw on for its own enormous energy system. But we're talking about a stockpile here which is finite, and the longer you go without flow, the less stockpiles can mitigate. So it can cushion things for a short period of time, but it can't solve the whole problem.
Well, Kennedy, thank you. And Skylar, after the weekend, the markets, again, negative reaction to the conflict in Iran. What's changed now in the calculus, especially after everything you've seen this morning?
Yeah, absolutely. And I think the calculus has changed, as Will was alluding to, in terms of how long the conflict will go on, and so how long supplies will be disrupted in the Strait of Hormuz. The real question is, now that we have energy prices so much higher, will they stay high, and how will that feed into the economy? Because typically what you see is that geopolitics doesn't matter for markets. They move on quickly unless there's a real economic impact. And with Brent in particular, something like $100 a barrel or even higher, that's going to have a real economic impact in terms of inflation will be higher, growth will be lower. Now, that stagflation mix is the worst, most toxic environment for markets because there aren't a lot of places to hide. Equities sell off because of the growth implications. You also have bonds under pressure because it's more inflationary, so that means higher yields, but also it causes more hawkishness from central banks. And there's not a lot of places to hide in currencies either. So the only things that are really benefiting are energy prices and the dollar. And we're starting to see that impact very much so in bond markets, but I'd argue that equity markets haven't quite caught up in terms of the economies that are most exposed are energy importing economies, which are a lot in Asia, and it happened to also be these overlap with EM equity markets that have done very well this year and will be pressured by higher yields, by a higher dollar, as well as that impact from a stagflation perspective on being an energy importer. And if you look at a market like Korea, for example, despite the fact that you've had downside in the past week, it's still up something like 30% MSCI Korea year to date. So there's certainly more room for downside in equity markets.
Skylar, this kind of shock is particularly toxic for asset markets with both bonds and equities under pressure. Is there really anywhere for investors to hide right now when you look at these numbers?
Yeah, when we think about safe havens, there are a couple that stand out. Bonds are usually high up on that list, but as I said, bonds are under pressure because the inflationary feed through to more hawkish central banks. In terms of currency markets, what you typically look at is the yen or the Swiss franc. The yen has its own issues as an energy importer, as does the Swiss franc. In terms of, there's also worries with both those currencies around intervention. So the only thing you're really left with is the dollar. And the dollar's been very strong on the back of that, and it's benefited for two reasons. One is that it's a safe haven, so you're getting clear flows into it because of that, but also the U.S. transition from being an energy importer to an energy exporter over the last decade. The actual switch happened in 2019, so what you see now is the dollar amplifies these energy shocks, and that energy prices go up. The correlation with the dollar now means the dollar goes up, and because they're priced in dollars, that is, commodities are priced in dollars, that price adjustment higher gets even worse because there's safe haven flows into the U.S. dollar.
Looking at all this, Skylar, are there any markets that you see particularly vulnerable?
Yeah, I think in terms of what you're looking at within equity markets is more vulnerable than maybe bonds because we've already had a bigger adjustment in bonds. I think, too, you're looking around two layers within regional equity markets. You're thinking about, are they an energy importer? So Europe and the UK fall in there, as well as Asian markets and some other EM economies like South Africa. And then I'm also thinking if there's broad de-risking, if there's these worries around EM, what equity markets are going to sell off or what equity markets have gained the most in the past year to have room to sell off, and Asian markets, particularly in EM, fall into that category.
Thanks to Bloomberg's Jumana Bersecci, Will Kennedy, and Skylar Montgomery Koenig. Good to be with you. And now to other top stories trending on the terminal this morning. Veteran strategist Ed Yardeni raises the odds of a U.S. market meltdown to 35% from 20% as the Iran war escalates. In his late note, he said that, quote, if the oil shock persists, the Fed's dual mandate would be stuck between the increasing risk of higher inflation and rising employment. Telsa billionaire Leo Kogwan doubles his stake in NVIDIA to 2 million shares. The investor hopes his purchase can contribute a little to calm the nervous market amid a global sell-off sparked by the war in the Middle East. And UBS increased its bonus pool for the last year by 10% as Credit Suisse integration nears its end. This while keeping Chief Executive Officer Sergio Armati's compensation at the same level. That's $19 million. Coming up, more on Iran's new supreme leader and what it means for the war with Julie Norman of Chatham House next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
In case you missed it on Bloomberg Deals.
This year, we enter 2026 again saying this is going to be the year of M&A, and then there's this big AI disruption. Can this year be saved? Is 2026 going to be the year of M&A returned?
If you look at the market and what it's trading at, forward earnings, it's very, very high by historical standards. So it's hard to do deals other than all stock deals. And there's also some volatility in the market.
Don't miss Bloomberg Deals live every week.
I do think it is important to step back and to understand two things. One is we have to understand what the objectives of this is. How do we determine what success is? I'm not sure success is necessarily, quote, regime change, but one will have to debate that. And I do believe Congress has a role here, guys. I think it's important for us to understand that. And I think that's will be debated for a long period of time of the role of Congress as it relates to this particular war.
Former Ambassador to Israel Tom Knight speaking to Bloomberg This Weekend. Joining us now for more, Julie Norman, Associate Fellow on the Middle East at Chatham House. Thanks so much for being with us.
Thank you, Julie.
I do want to start with Iran has said it has the capacity to continue this war for months. Now they have a new leader, Ayatollah Khamenei's son. That says to me that the nation is really doubling down. President Trump flatly has rejected him already while demanding almost absolute surrender. Certainly, this doesn't look like a way out right now.
No, it doesn't. And I would say that the appointment of Khamenei, his selection, was certainly a way to send a message to Trump that the regime is not going away. They're not going to capitulate to him. This was a very defiant move. This was an individual that Trump had blatantly said earlier in the week he would not accept. And of course, Khamenei is the son of the slain supreme leader who was killed last week. So really trying to show this continuation of the regime. And I would note, Julie, in some ways, it was a surprise pick to some because the idea of the revolution was that you wouldn't have a hereditary process. You wouldn't have a dynasty like a monarchy. So many before the war thought Khamenei wasn't an option because of that. And here you have the regime saying, all that's out the window. We want to actually show that there's continuity, and this is going to be the guy. And I would say, too, Khamenei, very close to the Revolutionary Guard, was seen almost as a sort of chief of staff or gatekeeper to the previous supreme leader. So internally, it was I would say, an important move for the regime to do this. But again, more externally, showing Trump, showing the world that they are not going away. They are not looking to capitulate.
So when you're saying they're not looking to capitulate, how do you think that the new Ayatollah will rule?
That's hard to say, Julie, simply because he has not really been in the public eye. He's pretty untested as a leader. He's come up as a cleric, a mid-level one, and then again has been more of a behind-the-scenes operator, but one that is known to be very effective in that role. How he will actually perform as in terms of governance, in terms of politics, that's still where he is untested. But I think the assumption is that he will maintain that hardline stance. There are some who say he could be a different kind of actor, someone who could perhaps take Iran on a different path, but I don't think we would see that in this moment. And as you alluded to before, the regime is going to be trying to show that they can continue this war, whether through drone strikes, which have continued to be very effective in getting past some of the traditional defenses that the U.S. and Gulf states have, but also through other means that, of course, your listeners are following very closely in terms of disrupting oil flows, keeping the Strait of Hormuz pretty much impassable, other things that are just going to make this war very costly and very disruptive for regional actors and increasingly global actors.
And Julie, it looks like the uncertainty actually gets greater because of the Strait of Hormuz, other Persian Gulf nations being hit with drones, being hit with missiles. It adds to an uncertainty in a region that has seen so much uncertainty.
That's right. And, I think Trump and Netanyahu went into this war with a massive tactical advantage, what they are utilizing by the day. But in terms of a strategic endpoint, it's really unclear what that is. And, for Trump especially, I think to destabilize Iran, to destabilize the region, and not have a clear pathway in how to deal with that, how to commit to that, is what's causing a lot of this anxiety, of course, on the ground in the region for civilians who are bearing the cost of this right now. Again, not just in Iran, not just in the neighboring states, but really across the region.
You talk about an endpoint. If there were to be some type of surrender, which we're not seeing any signs of, but if there is, what would be the plan moving forward?
Yeah, I think what Trump has been looking for is, some individual in Iran that he feels is pragmatic, that pretty much one that will give to what Trump wants in terms of ending the nuclear program, ending the missile program, ending support for proxies, and essentially being in line with U.S. interests. And at the same time, you have a regime that is now hanging on for its life. It's going to be, making decisions that are maybe not seem sort of rational to a Trump or to outside observers, but certainly are for a regime that is trying to hang on and survive. And simply by not surrendering, that is kind of Iran's endgame right now. Simply by showing they are still standing as the regime is a victory of sorts at the moment for them, and they're going to try and keep that going as long as possible.
We did see a lot of protests, but we have seen in the past in this region, when one leader goes, there is still resistance. So what does this really mean right now for global negotiation?
Yeah, I mean, I think there will certainly be internal resistance from Iran to the new appointment of Khamenei. We've already seen some small protests this morning to his appointment, again, from many in Iran who wanted to see a change from this regime. But in terms of where negotiations go from here, I think it's going to be really hard to see that for some time. I mean, many in the region feel that diplomacy is somewhat dead, that the U.S. was not negotiating in good faith to be negotiating then carrying on these strikes. Trump himself has said it numerous times in the last week that, negotiations are off the table. But at the end of the day, there is going to be some kind of winding down. China has posited itself as a possible interlocutor. I think other states will try and position themselves in that way. Oman has in the past. So there will be actors who will be wanting to mediate this for the region, but also for their own interests and how destabilizing this all has become.
Julie, great to have you with us. Thanks to Julie Norman of Chatham House. Now let's take a closer look at those markets. Morwenna?
Hello. Yes, we're seeing markets really being impacted heavily this morning in the European Open. We've got bond yields in particular surging across the curve. That's as we've seen a big repricing of market bets for interest rates from both the ECB and the Bank of England this morning, now moving towards pricing in interest rate hikes, particularly 2 from the ECB this year, and more than a 50% chance of an interest rate increase from the Bank of England as well. We're seeing yields surging across the curve, particularly at the shorter end, up in double digits, over 20 basis points, particularly in the UK, which is the most sensitive to those energy price surges. Of course, we've got oil above $100 barrel. We've got gas futures surging as well. We're seeing stocks falling across the board too as the dollar rises, pressuring currencies.
Morwenna Koniam, thank you so much for joining us. And coming up, Iran names Khamenei's son supreme leader. More on that and a look at what else is making headlines in your front page news next. This is Bloomberg.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. and rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
This is Bloomberg Brief. I'm Julie Fine in New York. Time now for your front page news. First up on the Washington Post, the U.S. military says a 7th American service member was killed in action during the war in Iran. The service member, who was not identified, died Saturday after suffering injury during the first weekend of U.S.-Israeli strikes. Next up on the New York Times, Kyiv offers hard-won expertise in advanced technology to counter Iranian drones. In an interview with the Times, Ukrainian Minister Zelensky said his country sent drones and drone experts to protect U.S. military bases in Jordan. And on the Financial Times, German Chancellor Friedrich Merz's party suffers a narrow defeat in a key regional election.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past 2 years, we hadn't really seen any deals above $30 billion. And now we're seeing, Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
Investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's Deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every Wednesday at noon Eastern, only on Bloomberg Television.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 9:30 a.m. in London. Good morning. Julie Fine in for Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Oil shock. Crude spikes to above $100 a barrel for the first time since 2022. That fueling a global bond sell-off. Stocks dip and the dollar hits its highest since January as inflation fears mount. All of that as Iran names a new supreme leader. Let's take a closer look at those markets with Morena.
we've had quite a sell-off starting in Europe this morning, and that looks set to continue across in the US trading. We've got S&P futures pointing down. We've got Russell 100 futures pointing down, and the Nasdaq. All of those changes looking down about 1% at the moment this morning. We've also got the bonds across the board. Yields are rising, up about 20 basis points in the UK. Treasury yields up about 5 basis points across the curve at the moment. In Germany, also rising about 9 to 8 basis points across the curve there. This morning, big sell-off and mainly driven by a rise in oil prices, with Brent crude and New York crude above $100 a barrel, and European gas futures up about 15% this morning, really having quite an impact on inflation expectations, which is driving up those yields across the global bond market and weighing on stocks and stock futures in the US.
Rowena Coniam, thank you so much for joining us. And now let's go to some stocks. Here's Abu Omar.
Thank you, Julie. Let's start with the pre-market when it comes to some of the oil majors in the U.S. Now, this is part of the story about what is happening in the Strait of Hormuz, the closure that has led to oil jumping this morning, closing to $120 a barrel. Now, it's paired some of those gains from earlier, but it's still quite a bit up. And then this is obviously impacting oil majors when it comes to markets in the U.S., but also those in Europe. We saw BP and Total open up, adding the biggest gains to the stock 600, and it's a pretty similar story to the S&P, with the likes of Chevron and Exxon adding to the gains that we're seeing this morning. Now, the futures image is not that bright, but oil stocks or energy stocks are those that are benefiting from Mideast tensions. Now, we turn to the other side of the story. We flip the board, and this is on the downside. Airlines are clearly not doing well across the board. We saw, declines in American Airlines, Delta, and that is on the back of the same story that we saw last week. Higher oil, higher prices of jet fuel that are really impacting what we're seeing across the airline photo. And then when we turn to Hims & Hers, this is just, we flip the board and we turn to the healthcare sector. Now, this is a pretty specific story to Hims & Hers that was clearly in some disputes that we've mentioned multiple times with Novo Nordisk, that ended up suing them for a copycat drug. Now, they seem to have gotten over these disputes and are now working together to create some of those weight loss drugs. So Hims & Hers, a whopping upward trajectory this morning, nearly 47% gain this morning. And this is what we're seeing in the pre-market trade. Julie, back to you.
Thanks, Sabir. And joining us now, Laura Cooper, Global Investment Strategist at Nuveen with Bloomberg Markets. Today, Managing Editor Christina Kino on the set here with us. Thanks so much, all of you, for being here. Laura, I do want to start with you. We just went through the stocks. You saw the bonds. You saw the oil. You're seeing everything that's happening this morning. So what specifically are you watching for today?
Well, I certainly think we'll be watching for the oil price dynamics. We have seen markets go from repricing a temporary oil price supply shock, and now they've gone into more of those stagflationary concerns. That's driving yields sharply higher with bonds under pressure. We are seeing a combination of de-risking and rotation into stocks, and crucial will be just the duration of the disruption coming through on oil flows with the Strait of Hormuz. And so all of these does suggest that oil prices have scope to meaningfully move higher, I would say, from here.
Well, Laura, thanks for joining us. And yeah, my question to you is, looking at the oil price, do you have a specific level that would really send the warning flags that this is just going beyond the sort of digestible volatility that a lot of markets are thinking it is at the moment to something that could really cause lasting damage?
Well, I think we can look to the 2022 playbook as an example when we did see that supply shock come through from Russian production. But even in this current dynamic, we are seeing that disruption in oil flows be significant multiples of the disruption that we saw back then. And so that does suggest we are going to retest that 2022 high for Brent around 140. And if we look at oil price dynamics now, looking at the futures curve, it's in steep backwardation. In fact, the time spread is at all-time highs. So the oil market is essentially at all-time tights. And that does suggest there's going to be potentially upward pressure on that potential mark. The key question for investors is at what point will the oil price reach a level where we start to see demand destruction, and then that could curtail some pressures. Or if we start to see, for example, the G7 come through today and tap into those strategic reserves as a means of trying to cap this upside price pressures.
You know, the credit market, of course, already suffering volatility, and now you add the impact of Iran. Where is this headed?
Well, credit spreads certainly are continuing to trade quite tight. We are seeing a bid for more up-end quality exposures. I suspect we are going to see some widening come through in the market there. Where we are seeing the greatest kind of price action, I would say, is just an unwind of those popular carry trades where we saw that significant spread compression. So I think this is an environment looking for more of those high-quality characteristics, and again, looking for some of those defensive posture, whether that's in some areas of floating rate exposures, for example, given this backdrop where we're now likely in a higher for longer yield backdrop because we don't see any near-term relief for yields to come down meaningfully from current levels.
Now, Laura, I want to bring this discussion over as well in terms of the implications for monetary policy moving forward, because we have seen markets across the globe in the U.S. and Europe pricing out some of those expected rate cuts for this year. And, you know, we've heard from Federal Reserve policymakers saying last week that they think the impact from oil prices will be transitory. We've heard that one before, of course. Who's correct in this situation at the moment? Is it markets? Is it policymakers?
I think markets have probably gone a bit too far in terms of the rates repricing, predominantly looking at the UK and Europe, where they're now pricing in anywhere from 2 to 3 rate hikes. Whereas we think about the Bank of England only a few weeks ago, they were potentially looking at a fully priced March rate cut. And I think the dynamics are very different this time around from when we saw the last supply shock in 2022, in the sense that back then, growth was still benefiting from that post-COVID reopening demand. We also saw inflation was much higher. That allowed central banks to embark on a more aggressive tightening cycle. In the current dynamic, inflation has largely trended at least towards those 2% targets. Growth is on a more precarious footing than back then. And we're also navigating a more challenging fiscal dynamic. So there's limited capacity, I would say, for central banks to aggressively try to curtail this oil price shock, particularly when it's very difficult for central banks to target a supply shock rather than a demand shock. And this is against an environment where I think we're going to have to see policymakers probably take a bit more of an extended pause rather than risk that growth destruction from tighter policy.
Laura, I'm curious if the current geopolitical tensions continue, which it certainly appears they will, what do you view as the biggest market risk?
I think the biggest market risk is potentially what comes through on the global growth dynamics. Right now, markets are acutely focused on the inflationary impact, but we're likely going to see knock-on spillovers, certainly to that European growth recovery. Even China's current account surplus could come under pressure as well. I think the U.S. is likely a bit more insulated, let's say, given that U.S. consumers are demanding less in terms of energy than previous decades, and as well, the U.S. being a small net exporter of oil, they should benefit and offset some of the headwinds. But I think markets are not focusing so much on the growth dynamics. But I think all of this is really predicated on the duration of the disruption. Will we see more of a temporary shock, or could we see elevated prices from here? You know, European natural gas potentially even has further room to run. Again, just challenging some of that upbeat growth recovery stories through the year.
So, Laura, given the surge in oil prices and, of course, that shockingly negative payrolls figure on Friday, the term stagflation is being thrown around markets as something to fear. Do you think those fears are overblown?
I think it's a bit premature at this juncture to declare this a stagflationary environment, but yes, certainly the risks are rising at the margin. If we take a step back and look at what the payrolls data told us about the health of the U.S. economy, I don't think you can take a clear read from that January print. We did have healthcare strikes, disruptions, we did have weather distortions, and as well, this came off an outsized bounce in January. So if we look at the trend rate of private hiring is about 30,000 over the 2 months. That's in line with about the 35,000 we saw average last year. So at this juncture, we're still seeing a fairly steady labor market going forward. I think the stagflation risks will become more pronounced the longer that we see oil prices rise at these levels and really start to feed into more of the economic outlook. And as well, we start to see financial markets come under even greater pressure, really challenging that wealth effect that's been a key driver of U.S. consumption over the past year or so.
All right, Laura, we only have a few minutes here, or seconds here, really. I know you're talking for the S&P 500, still 7,500. Sticking to that at this moment?
I think at this point, yes, because fundamentals still largely remain intact. Again, it all comes down to the growth dynamics, but we are seeing a rotation from some of those cyclical winners year to date, more towards those defensive players around energy security, where demand is more resilient, even some of those high quality tech stocks. So I think that's a trend that we'll be watching for going forward.
Thanks to Laura Cooper of Nuveen. Thank you, too, for Christine for being here. Now on to the other top stories trending on the terminal this morning. Chinese software shares surge after local government agencies join tech leaders such as Tencent in promoting viral AI software. OpenClaw has garnered a cult following since launching in November for its ability to operate autonomously, clearing users' ink boxes, making restaurant reservations, and checking in for flights, among other tasks. Live Nation is close to settling a federal antitrust lawsuit accusing the company of illegally monopolizing the live music industry. Under the settlement plan, Live Nation's TicketMaster subsidiary would eliminate some exclusivity in ticketing contracts and with concert revenues. And Tencent is said to rejoin Paramount Warner deal with funding. Sources say the Chinese company would be acting as a passive financial investor. Representatives for Tencent and Paramount declined to comment. Coming up, Iran's new supreme leader has been chosen. What that country's new pick means for President Trump next. This is Bloomberg.
Market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
In case you missed it, on The Pulse.
What can we expect in terms of M&A? Is there something that you want to get rid of, or are there targets that you'd like to acquire in the next 6 months to 12 months?
We are in a period of execution. It is very important that Beauty Reimagined, we are at the beginning of this journey. The first year we delivered on our promises. The second year for me is about now accelerating the growth and making sure that we are simplifying the ways of working. We are rebuilding profitability, but at the same time we are looking at our portfolio. So we have, and I've been very public on that. Yeah. We are looking at the portfolio, and we will always be part of the M&A discussion. M&A is not only about buying something new, it's also about incubating new brands. And we are incubating a lot of new brands as part of like DCM or taking minority investment. One of the last one was Zinu, a really fantastic brand that we've taken a minority stake in Mexico.
Don't miss The Pulse, live every weekday.
In case you missed it, on Bloomberg Open Interest.
We're going to be an affordable luxury item, but if you look at it, we're priced pretty darn competitively. Pricing is one of those things that will always be the last lever that will pull. There are times where you do have to put some pricing into the business, so we'll see how things evolve. If we need to do it, we'll do it very strategically, and we'll try to do it as minimal as possible.
Don't miss Open Interest live weekdays.
This is Bloomberg Brief. I'm Julie Fine in New York. Iran has chosen its new supreme leader, a choice that was quickly criticized by President Trump and one which signals the Islamic Republic is not backing down. Joining us now from Washington is Bloomberg's Tyler Kendall. Tyler, thanks for being with us.
Hey, Julie, good morning. Well, President Trump said in an interview over the weekend that he is, quote, not happy with Mojtaba Khamenei being chosen as the next supreme leader of Iran. The 56-year-old is the second eldest son of the late supreme leader who was killed in airstrikes last week. And as you mentioned, analysts say signals that there will be a continuation of the hard-line stance of the Iranian regime. Now, you'll recall last week, President Trump had said that the potential worst-case scenario of this military operation would be if new leadership in Iran was, quote, just as bad as the regime the U.S. and Israel have been trying to change. We know the administration said that they were eyeing some other potential contenders that they felt may be more amenable to cooperating with the U.S.'s demands, but instead this choice is considered to be very closely aligned with the IRGC, that critical military faction within Iran, signaling again that we are likely to see no capitulation when it comes to cooperating with the U.S. as this goes forward. Important to note, Iranian state media, after this pick was announced, was reporting that the regime is saying that they have enough weapon stockpiles to continue this conflict for at least another 6 months. And Julie, in the weeks ahead, that we should expect them to start to deploy some newer, longer-range missiles as the conflict continues.
And Tyler, the president also saying this weekend he'll consider widening those strikes on the Islamic Republic. What's the latest you're hearing this morning from the White House?
Well, that was some interesting commentary from President Trump, though we haven't gotten much specifics on exactly what he was talking about. He said in this post on Truth Social that they were going to target new areas and groups of people in Iran not previously targeted. The administration has said that they haven't gone after some critical infrastructure, including energy infrastructure. We heard that from Energy Secretary Christopher Wright over the weekend, though it is important to note that Israel did target some Iranian fuel depots, so potentially we could see perhaps some more wide-scale targets in the weeks ahead. There is also reporting, as you well know, Julie, from Bloomberg News, new overnight, that the U.S. is considering an operation to go inside Iran to extract its highly enriched uranium stockpiles amid concerns that those stockpiles have been moved. So that's something to watch closely as this conflict continues. And at the moment, it doesn't seem like we are any closer to a diplomatic off-ramp.
And all of this happening as the Strait of Hormuz remains closed. Oil prices over $100. G7 to discuss joint release of emergency oil reserves later today.
Right, and this is one of those potential off-ramps to help curb the rising costs that we're seeing as this White House is downplaying the spike in oil. Julie, we heard from President Trump saying that this is going to be a short-term disruption for a long-term gain of establishing the U.S. and Israel's goals abroad. In fact, we heard from the Energy Secretary, Christopher Wright, in an interview over the weekend maintaining that this conflict is not going to be long-term, essentially insinuating that this is a fear reaction from the oil markets, but that the conflict should be resolved. This is going to be something to watch closely because if we bring this back to domestic politics, of course, as you all know, this White House is playing defense when it comes to affordability concerns. But the thing is that we are seeing so many disruptions from major oil producers in the Middle East curbing their production, the Strait of Hormuz being effectively closed. And Julie, as we just discussed, the White House is now threatening to widen the conflict in the weeks ahead.
Busy day for you. Thanks to Bloomberg's Tyler Kendall for being with us this morning. And NYMEX crude paring back its rally just below $100 a barrel as the war forces more production cuts. Let's bring in Bloomberg's Will Kennedy for more. Will, what a day it's been with oil in the markets.
It has, and we had a very big spike at the open overnight, oil reaching almost $120 a barrel in London trading, the Brent benchmark. But as you just showed, it has fallen back since then. I think that's partly because of this conversation that G7 ministers will be having later today about releasing emergency stockpiles. We also just saw a headline that one tanker, and I should stress it's only one tanker, was able to transit the Gulf Gulf of Hormuz, and that may have people hoping that more may be able to get out of the area. But we should look at the broader context here, is that prices are up about $30 a barrel since the war started, and that will start to have a very real impact for Americans who are going to gas stations this week and filling up their cars. It will be a lot more expensive to do that this week than it was last week, and that will be of concern in the administration, I imagine.
Absolutely. And the administration, as you said at the top of this, is going to be discussing the G7 today, the G7 talking about these gas prices, what to do next. You just pointed out one tanker got through the Strait of Hormuz. What comes next?
Well, what comes next is whether more tankers feel confident enough to do that, whether the US is able to offer some military help to do that. That was discussed last week, as you remember, Julie. But of course, Iran has cards that can play here, and it can act to try and stop those tankers, attack those tankers, keep attacking shipping in the region, and the fear will return, or perhaps we should say remain in place. So as we are today on Monday morning, despite all these noises from Chris Wright and others in the administration, this is a temporary, manageable situation. We still have oil at about $100 a barrel and no clear idea when and how this energy situation will end.
Well, you just touched on that, but in an interview with CNN State of the Union, U.S. Energy Secretary Chris Wright says global energy supplies are sufficient, and the war-linked surge in oil prices reflects a, quote, fear premium in markets that won't last. Where is he going there with this, as people get ready to really start paying some money this week?
Well, I hesitate to use the word, but there is perhaps a certain complacency in his comments. There are pressure valves, and we are different to the 1970s in a couple of ways. The US obviously produces a lot more of its own oil and gas, and that will help at the margin, and prices in the US will stay a little lower than the rest of the world, but it is, at the end of the day, a global market with a broadly global price. We've talked about the G7 stockpile release. The other thing that the US could do is a unilateral release from its strategic petroleum reserve, which is designed for exactly like situations like this. It's not as full as it was, but it is still has plenty of oil, so that's something that we can look to. And the other thing that is happening is that Saudi Arabia appears to be doing a good job getting oil out of the Red Sea, diverting oil from the Persian Gulf to the other side and getting some flow. So there are things counteracting. Will it be enough? We'll have to see.
Thank you. That's Bloomberg's Will Kennedy. And for more on the energy markets, Ed Morse of Hartree Partners joins Open Interest at 9 a.m. in New York, 1 p.m. in London. Coming up, we'll get you set for your trading week. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
What year did you start the company?
In 2013.
Who gave you your initial capital?
General Catalyst, Jim Breyer, and Excel.
And they made on their money?
They did well.
Well.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Now a look at what's ahead this week. Hewlett-Packard Enterprise earnings out after the bell. U.S. CPI numbers come out on Wednesday, and we wrap up the week with U.S. PCE on Friday. Let's take a closer look at that markets once again. Morwenna?
Hello. Yes, we're seeing equity futures pointing much lower this morning, down about 1% on the S&P, about 1% on the NASDAQ 100, and small and mid-cap stocks looking set to fall even more, about 1.7% lower there for the Russell 2000. That comes as we've seen gilt yields and European bond yields surging in Europe this morning, and Treasury yields are pointing higher as well, rising about 3 basis points across the curve at the moment.
Morwenna Coniam, thank you so much. And that's it for Bloomberg Brief this morning. We appreciate you being with us, especially on this busy morning. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
The market has been driven by what's happening globally.
We could break out to the low side on equities.
Broader risks to energy supply have to be monitored and likely priced.
Despite this jump that we've seen in oil, we are going to have that backdrop continuing around earnings growth.
The underlying fundamentals are still pretty positive, and people want to own this equity market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday, oil hits triple digits.
We figured oil prices would go up, which they will. They'll also come down.
The oil is there. You're seeing a little bit of fear premium in the marketplace.
This is a short-term disruption for the long-term gain.
Key producers cutting output, sending crude through 100, pushing G7 officials to consider releasing energy reserves as neither the US or Iran is showing signs of backing down. We begin this hour with our top story, the price of oil surging following a weekend of escalatory strikes. Iran continuing to target several Gulf nations, Israel beginning to target energy infrastructure, heaping pressure on G7 officials who, according to people familiar with the matter, are set to discuss a possible joint release of crude reserves. That discussion happening later this morning.
And that's the reason why you're not seeing oil at 120 this morning. It has come down to about $100 a barrel, only a 10% gain versus something more in the line of 25% a gain in oil prices. Look, this has only been carried out 5 times before, this idea of a coordinated release. Twice in response to Russia's invasion of Ukraine in 2022. Before that, you had Libya, as well as Hurricane Katrina, as well as during the first Gulf War. This would be something that is a fairly rare step, but it highlights the sphere of disruption that you're seeing right now when it comes to such a key market and how this really does seem to threaten global economies.
This really is the only available offset right now. The only pushback we've seen, the only blinking, if we can call it that, from G7 officials. The president's not backing down. This quote from him over the weekend, short-term oil prices, which will drop rapidly when the destruction of the Iran nuclear threat is over, is a very small price to pay.
What's fascinating to me is that markets are believing that. If you take a look at the forward contract of oil, you can see that people don't expect there to be this prolonged bout of oil prices above $100 a barrel. It is priced in that by December, they'll be back down to $80 a barrel. People are expecting this to be over in a couple of weeks. The mechanism to trigger that end, that off-ramp, is potentially the markets, and yet the markets are not displaying a sense that there is abject fear of truly an economy globally that's going to get disrupted. So a real question about why this dissonance exists and how long it can continue.
It depends which market you're looking at right now, because if you check out the European bond curve, check this out. Over in the UK, yields up at the front end of the curve by 20 basis points. Similar moves across the continent as well. We're pricing out cuts, we're pricing in hikes at certain central banks.
Yeah, you didn't say hike, you said hikes, and that's because there are 2 rate hikes now being priced into the ECB in terms of the forward-looking calendar for this year. There is 1 hike being priced in for the Bank of England. So again, it's fascinating. Is this just a single mandate central bank where they have to look at inflation and counter that? At what point does some of the weakness that we've seen in a number of economies and what could transpire as a result of oil prices start to play into exactly how they respond?
We've thrown a lot of this market in the last week, haven't we? Just in an hour on Friday. An energy shock, a payroll shock, and another shock in private credit.
What struck me in the United States is how multifaceted people keep saying it is. How there are parts of the complex, whether it's oil, whether it's materials that'll benefit from this, that can offset potentially the shock to private credit or what we're seeing with respect to the economy. I just wonder at what point you see a pillar that shakes. At what point this is just people who don't want to sell their stocks because ultimately they don't have to buy them back at a higher price, and they have been conditioned by buy the dip, buy the dip, buy the dip, and suddenly they can't even recognize something that's staring them in their faces.
It's another Monday morning that started Sunday evening. Wild ride for crude. Equity futures negative just 1% on the S&P 500. Coming up this hour, we'll catch up with Cameron Dawson of New Edge Wealth with global markets selling off. Henrietta Trades of Vader Partners as President Trump downplays rising crude costs, and Subhadra Japa of SocGen as inflation fears steer investors away from bonds. Our team coverage starts right now with Bloomberg's Jemana Basecci joining us out of Dubai. Jemana, welcome to the program. What's the latest in the region right now?
Well, as you guys were saying, there are no signs at all that things are de-escalating, and if anything, intensifying militarily operations on both sides. I will say that the appointment of the new supreme leader is an act of defiance out of Iran. As you know, the son of Ali Khamenei has now been appointed as the successor, the third supreme leader of Iran. He's quite literally cut of the same cloth of his father, same ideology. He's perceived to be very close to the Revolutionary Guard Corps, the IRGC, very entrenched with the security establishment as well. In 2019, he was placed under U.S. sanctions and has also been accused of interfering with elections and being involved in many of those brutal crackdowns that we've seen on demonstrators. So, you know, if you tie it back to what President Trump was saying over the weekend, that he would like to see a full and unconditional surrender, this is not an appointment that would suggest that the Iranian regime or the Islamic Republic are looking to surrender or to yield to the U.S. demands anytime soon. At the same time, operations continue. IDF saying that they struck 400 targets over the last 24 hours. And Iran continues lashing back at Israel and at Gulf states. More than 2,000 projectiles have been fired towards Gulf states over the course of the weekend, since the beginning of the war, I should say. But over the course of the weekend, continue to target key sites in energy infrastructure. Just this morning, another refinery from the region in Bahrain also declared force majeure. They've had multiple attempts at targeting an oil field in Saudi Arabia. The U.S. State Department is now ordering non-essential personnel to leave the U.S. Embassy in Saudi Arabia. More intercepted missiles being directed at the UAE. Reports of a fire earlier in Fujairah as well. And then in Bahrain also, and this is one other point of escalation, a desalination plant was targeted. Now, it did cause damage, but the messaging from the authorities is that water supplies are still running. But again, it just really illustrates the amount of economic cost that the Iranian regime are looking to inflict, not just on the region, but on the global economy as well.
That right there is a highly concerning escalation over the weekend. Jumana, thank you. Jumana Basechi in Dubai. Just to build on what Jumana was talking about there, Iran doubling down on hardline leadership. And also reports over the weekend suggesting the president is considering a special ground operation as well.
Because the uranium is evidently still there in terms of the refined uranium that a lot of people were worried could get developed into nuclear weaponry. This is the question. How far is this president willing to go? And is that the red line, the ability of eliminating that uranium threat?
Here's the view on Wall Street this morning. Cameron Dawson of New Edge Wealth writing the following: we expect equity market volatility to continue. Weakness is viable. Gone are the days of low volatility and mount-up markets. Cameron joins us now for more. Cam, good morning.
Good morning.
Did you expect to see equities where they're trading this morning after the move overnight in crude?
Well, as of the close on Friday, we were a whopping 3.5% off of all-time highs, and so we wouldn't be surprised if this volatility continues. We see no sign of flush within markets. If you look at the technicals, breadth measures, percentage of names above their 50-day is still at about 42%. You haven't seen signs of indiscriminate selling, which just says that markets have taken this very much in stride, and this isn't the point yet where people are so scared, have so much fear that you want to back up the truck. So that just suggests to us, prepare for more volatility. Eventually, that volatility will create great buying opportunities when we see indiscriminate selling, but we're probably not there yet.
Why is this market so resilient in the face of not only an external shock, but also what we saw on Friday that everybody seems to be shrugging off, which is there seem to be cracks in the actual fundamental economy at the same time?
We think this is the big risk because if you look at 2026 and 2027 earnings estimates, they're expecting about 14% growth each year, which we don't think is consistent in an environment where you're not seeing job additions and you're seeing an oil price shock, because that's how this impacts overall consumers. That's the one way that conflicts end up impacting overall earnings growth. And so given the fact that you have very, very rosy expectations for both 26 and 27, I think that's one of the things that people are hanging their hat on for why this market can be sustained. But we actually think that there is downside risk to those estimates.
How much is the U.S. once again providing sort of the haven trade, given the fact that Europe is getting hit that much harder, that European stocks are actually in a correction from their February highs, that you see people flooding back into the the dollar?
Well, you're seeing it certainly in the dollar. And it's important to note we went into this oil price shock and this conflict with the dollar positioning near record lows. So everybody was short the dollar. Everybody was underweight the dollar, which just suggested that the pain trade of the dollar was actually higher, which is exactly how this is playing out.
The three shocks that we've been tracking, payrolls, energy supply, private credit as well, those redemption headlines that creep crossing the Bloomberg terminal, the accumulation of those risks, are they an index level threat or not? Because at the moment, the index is not doing much at all.
Yeah, I think that one of the things that we've seen over the course of the first 2 months of this year is what we were calling a risk swap market instead of risk off, meaning that people were swapping out a risk set of things like AI disruption into areas that were inherently risky themselves. Look at the flows into things like industrials and materials and energy, of course, which we know is a little bit of a different story, but people were still keeping this broader cyclical bid under the market. That's starting to deteriorate. That's why we're starting to see breadth begin to deteriorate. So we think it's really hard to justify spending 27 times forward on industrials in an environment where you're questioning forward growth.
What is left to anchor the bullish view, the bull case for the year ahead?
That this would be temporary. That's the one thing that keeps this as a bullish view, is that the price spike higher in oil ends up being something that is incredibly short-lived. I think the challenge we have is that even if oil comes off of its highs, it's unlikely to return to where it was before, simply because of the destruction that we've seen to the infrastructure. Also remember, back in 2022, oil prices spiked and hit their high just a few weeks after the Russian invasion of Ukraine, but gasoline prices didn't peak until the summer, meaning that we saw gasoline prices go to $5 a gallon. We saw overall headline U.S. inflation hit 9%. So we could have an environment where WTI comes off of its highs, but it still pressures U.S. consumers because gasoline prices would continue their march higher.
How long do we have until the moment in markets? The whole sort of this question of what are we going to see going forward? Polymarket has a 46% odds right now of a U.S.-Iran ceasefire by April 30th. I assume that will be devastating in terms of the timeline if that were to bear out.
Yeah, I think that is a very long way away. And each and every week that goes by with oil prices and gasoline prices, which are now up on a year-over-year basis for the first time in 3 years, this is important. Remember the fact that over the last 3 years, we've been in a disinflationary environment because of falling oil prices. We've had a boost to consumers because of falling oil prices. So 2 months forward of oil prices at these levels will certainly start to weigh on GDP estimates. And remember, risk assets do not like falling growth estimates. And we're starting this energy price shock with growth estimates for GDP at 2.5%, pretty fulsome. And again, back to EPS, which are really high in that 14%.
Cam, it's always good to catch up. Thanks for being here. Cameron Dawson there of New Edge Wealth. No rest in this market right now. Futures negative by about 1% on the S&P 500. This from Jordan Rochester of Mizuho this morning. The market is waking up from its slumber, coming round to our view that this may be a war, but it's also perhaps the biggest energy supply logistics crisis we've ever seen in modern history. The latest from Mizuho.
Talking about how currently $100 a barrel is where we are currently at. However, the longer this goes on, the greater the likelihood that it goes to $130 to $150 per barrel. And if that's the case, it's a very different scenario for global markets. How long does it take until we get there, right? I mean, how much can people absorb given the fact that right now it seems like markets are saying, look, we don't want to be ending up with stock prices that much higher and being behind the curve and buying in.
A massive gap higher that we saw in crude at the open overnight. This morning we're up by double digits, up by 12% on Brent, 104 off the highs, on WTI 101. Up next on the program, a fair premium for crude.
We are suffering high prices, not in natural gas, but in oil, because it's a globally connected market. The oil is there. You're seeing a little bit of fear premium in the marketplace.
Up next, we'll catch up with Henrietta Trays of Veda Partners, live from New York City this morning. Good morning.
Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
8:30 Eastern Time, an important call with G7 finance ministers considering the release of energy reserves following some major moves overnight in the crude market. Check it out at the highs, pushing 120, 119.50. The high of the session on Brent right now, just short of 105, a move of more than 12%. Weighing on equity futures down by 1% on the S&P 500. Likewise on the Nasdaq by 1.14. On the Russell, down by close to 2%, Bramo, so far this morning.
Yeah, the Russell being slammed on a couple different fronts. Not only do you have a question of oil price sensitivity with consumers, but also a question of whether the Fed can cut rates. Well, the answer is, well, it seems less likely given the inflationary pressures. And it seems right now people are focused more on the inflationary pressures than weakness, seemingly coming from the underlying employment market.
The Fed between a rock and a hard place right now, that's for sure. Under surveillance this morning, a fair premium for crude.
We are suffering high prices, not in natural gas, but in oil, because it's a globally connected market. We're communicating with our allies abroad. The oil is there. You're seeing a little bit of fear premium in the marketplace, but the world is not short of oil today or natural gas. We are nowhere near normal traffic right now. And, that'll take some time. But again, worst case, that's a few weeks. That's not months.
So here's the latest this morning. President Trump saying oil surge is a very small price to pay as hopes fade for a quick resolution to the war in Iran. G7 ministers set to meet today about the possible release of emergency oil reserves. Bloomberg's Tyler Kendall joins us now from Washington for more. Good morning, Tyler. Where's this one going?
Yeah, hey, John, good morning. Well, at this point, it appears that the administration is trying to downplay the spike in oil as the U.S. Energy Secretary maintains this will not be a long-term conflict. And we've heard from other U.S. officials framing this as a short-term disruption for the long-term gain of the U.S. trying to achieve its goals in Iran. The thing is, we haven't seen any intent or notice that there's going to be a diplomatic off-ramp anytime soon as major Middle East producers curb production. The Strait of Hormuz remains effectively closed, and the White House is now threatening to widen the conflict. In a post on Truth Social over the weekend, President Trump said that the U.S. is now considering striking other areas and groups of people in Iran not previously considered to be targets, though he did not elaborate. So far, it appears most of the strikes have been targeted against government and military sites rather than a full-scale bombing of infrastructure. Secretary Wright made that point when it came to energy infrastructure, though Israel did hit several Iranian fuel depots over the weekend. And in another potential escalation, Bloomberg News now reporting that President Trump is weighing a special operation to go into Iran to extract its highly enriched uranium stockpile. John, as you well know, this White House is already playing defense when it comes to affordability concerns, and those prices are starting to trickle down to retail gasoline. And you mentioned one of those potential options to help curb those costs as G7 finance ministers meet later today to discuss a strategic release of reserves. This would only be one of 5 times that this has happened before, though people familiar with the matter do caution that no decision has been made.
Tyler Kendall with the latest in Washington, D.C. Tyler, thank you. The words of the president, short-term oil prices, which will drop rapidly when the destruction of the Iranian nuclear threat is over, is a very small price to pay. For many, it's a high price to pay. Henrietta Trays of Vader Partners writing fears of $4 gasoline are being pulled forward. Republicans, including in the White House, are scrambling to contain the fallout. Henrietta joins us now for more. Henrietta, welcome to the program. What signs, what indication do you have that anyone's scrambling to contain this?
Well, they're doing the Lord's work trying to present a calm front on the outside. The president is down in Doral, Florida this week talking about an elections reform bill that focuses on mail-in ballots and transgender sports issues. So they're trying to project calm and talking about this being transitory. But when you're already just on day 10 of any kind of military engagement, we're already talking about a $50 to $150 billion emergency supplemental spending package. That is your indication that we have upended the legislative agenda. We will not be getting a crypto bill. I don't think we'll get a housing bill. It's going to be either all Republicans, reconciliation bill, spending money to address this war, or bust. And that's the agenda that they're going to be talking about below the surface today and this week in Doral.
Henrietta, how united are Republicans behind President Trump when it comes to this war?
Not very. You're seeing a lot of consternation. It's very public when it does come out. It's mostly led by the usual suspects. Thomas Massie of Kentucky is a Republican who is being very blunt about his opposition. And you're seeing the breakdown. What I would recommend is look at the way that the Republicans are responding to the president's entreaties to repeal the filibuster to pass the SAVE Act on that elections package. There's just not support there. Leadership can't pull it off. So when Speaker Johnson says we're going to prioritize the reconciliation bill, it's because members behind the scenes are saying, if we're going to wage this war, if we're going to stick behind the president on this, we have to get spending out the door. It needs to go to farmers, $15 billion for the second bailout, because of course we're dealing with the fertilizer impacts from the Strait of Hormuz. And we also need to do something to bring prices down as we go into the November elections.
It seems like markets don't believe the calm being projected from the White House, and they do think that at a certain point, prices rising and some of the distress will pressure this White House to capitulate. Are there any signs that pressure from Republicans and pressure from the oil markets is starting to affect any of the strategy coming from the White House?
Well, I think that the actions that we see from the White House on tanker insurance, on letting it be known that there will be an emergency supplemental request, on letting it be known that there'll be a second farmers bailout, that's indication that they recognize there has to be some give on this. When the president does his military campaign, though, that is largely outside of their control. And that's, I think, where we're seeing the headlines shock the markets every single day. You know, I was speaking with investors last week who were saying this will be wrapped up by Friday. Well, here we are on Monday, crude spiking through the roof in the fastest ever growth, and you have to readjust your expectations, reset. The SPR release or the G7 release of strategic petroleum reserves is helpful today, but you need a wide-ranging sort of bazooka to address a shutdown of the Strait of Hormuz, which is where we are right now.
Henrietta, as you mentioned, that call takes place at 8:30 Eastern Time between G7 finance ministers considering discussing the potential to release those reserves. There is a much bigger question, I think, for the US specifically, why the SPR wasn't refilled ahead of this moment.
Especially when gas prices were so low. It's a major strategic blunder, and you have to question, was the president prepared to go into this war and recognize that the strait would be shut down? What did they think was going to happen? We had a year of very low energy prices. Indeed, it was the highlight of the president's economic agenda to have gas prices low, and you could have refilled the SPR. And instead, he chose not to. It just suggests that they did not have their ducks in a row when they went into this, and now we don't have the SPR filled. It's at, very low levels. And of course, even when you do release the SPR, it's heavy crude that needs to be refined. It's not going to immediately fix anything. It makes you feel better, perhaps, but it's not going to fix anything in terms of $4 gas coming our way.
I think many people tracking this market are asking the same thing. China managed to stockpile energy over the last 12 months. Why didn't the US, when it was the US that was deciding to engage in this conflict or not? Then these headlines as well from the Treasury, Henrietta. I want your thoughts on this. This from Secretary Besson. To ease the temporary gap of oil around the world, we've given them permission to accept the Russian crude. Talking of India, we may unsanction other Russian oil. In essence, by unsanctioning them, Treasury can create supply. What's your response to that?
Well, I think it's just further acknowledgement that they were not prepared for this. They've spent all last year putting sanctions on India, on Iran, on Russia. They have, don't forget, they're supposed to raise tariffs under Section 122 to 15% this week. The White House has a completely disjointed agenda, from the energy components to the tax components to the tariffs. And they're trying to, as I said before, cover every single base, because there's nothing you can do with one silver bullet that will fix this problem. You've got to do everything. So if that means taking Russia's sanctions off, releasing the SPR, ensuring oil tankers, providing a farmer's bailout, you need to do every single one of those things at once in order to keep gas from getting to $4. And that's where we're headed.
Henrietta, how much do you allow the U.S. to keep exporting LNG to Europe, given the fact that natural gas prices in the U.S. are also going up? I mean, do you expect that to be a conflict?
It's definitely a tension point. We've seen this movie before. You know, when I think of the Russia-Ukraine war, I mean, this is something that I think the United States ultimately is happy to have a conversation about, getting LNG over to the EU, making them a little less dependent on Russia, on oil sources that we prefer them not to go to. So I think that this is a tried and tested path of trying to deal and resolve with that tension.
Henrietta, always good to catch up. Thanks for being here. Henrietta Trace there of Vader Partners. This conversation follows our conversation with the National Economic Council Director on Friday, following the payrolls report. Asked him specifically about the SPR and whether there was an active conversation about releasing any energy from those reserves. And the answer was no. And it was pretty direct, and he didn't dance around the issue. Many people asked that question over the weekend. How did we get here without refilling the SPR? And yes, the previous administration has a lot to answer for, but this is the one that's decided to go and engage with Iran in the way it has done.
And we had pretty low oil prices for quite a long time, with people saying refill it. Just to give you a sense of how low it is, the U.S. SPR, the Strategic Petroleum Reserve, has about 21 days worth of consumption. That is the lowest in decades. It raises a question, even if you were to release it, how much oomph would it have to really lower prices in a longer-term way?
Triple-digit crude this morning, up by 12% so far intraday. Up next on the program, Joyce Chang of JP Morgan as markets react to soaring crude prices. When does demand destruction kick in? Joyce is coming up next. Plus, Lizzie, how's your morning movers? Energy stocks moving higher with crude prices hitting 100 plus. Exxon up by 0.8. Occidental Petroleum up by 1.4. From New York City this morning, good morning. You're watching Bloomberg TV.
Take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
2-day losing streak on the S&P 500 about to become day 3. Equity futures negative 1% on the S&P, well off session lows. On the Nasdaq, we're down by 1.2. On the Russell, small caps underperforming, down by 2%. The main event, the epicenter of the price action worldwide, this right here. Energy, Brent, WTI. Brent crude up 28% last week, up 29% overnight, and off those highs now up 13 to 105. The spill through, the spill over into the bond market very clear. Yields higher across the curve, stateside, much more worldwide. 2s up by 5 to 360, 10s pushing 420, up by 4 basis points this morning.
As you said, it is a lesser move than what we're seeing over in Europe, where suddenly you've got 2 rate hikes being priced into the market. The reason is twofold. On one hand, the U.S. economy is more resilient naturally, is also an oil exporter. The European region is more sensitive to these oil price shocks, as well as it is a single mandate central bank. They have to respond to inflation primarily, and that is the reason why people are looking at a very different path ahead for them.
The tightening of financial conditions worldwide, higher crude prices, higher bond yields, pricing out easing and pricing in the prospect, the real potential of rate hikes. As we count you down to the opening bell about 3 hours away, let's get you some single names, some morning movers. Lizzie Burden has more. Hey, Lizzie.
Hey, John, we have to start with the oil story. As you say, oil above $100 a barrel. So take a look at the energy names. We've already seen gains in the Europe session for the likes of BP and Shell. We've seen gains for Saudi Aramco as well in the pre-market. ExxonMobil, Chevron, Occidental, all in the green. Aside from energy, there aren't that many winners to be found in the pre-market, but Hims & Hers is one of them, up nearly more than 50% in the pre-market on the news that its public feud with Novo Nordisk is at an end. Novo agreeing reportedly to sell its weight loss drugs on the Hims platform. But don't forget, about this time last year, they reached a similar agreement and it fell at the 11th hour because Hims reportedly didn't want to stop marketing and selling its own copycat medication. So will this deal get over the line? Traders looking optimistic that it will. Just finally, let's turn over to Live Nation. We had a redhead crossing the terminal earlier on that it was nearing a settlement with the Department of Justice on the antitrust trial that had been going on. Of course, the accusation is that Live Nation is illegally monopolizing the live music industry, and this concern goes all the way back to the Obama administration, which had allowed Live Nation, of course, to acquire Ticketmaster. So the settlement discussions heating up since the trial started on March the 2nd, and we report that that could be announced in the coming days. Shares up more than 5% in the pre-market, John.
Lizzie, thanks for the update. Appreciate it. Lizzie Burden there out of London this morning. On a radar this morning, the price of crude breaking through $100 a barrel for the first time since 2022. G7 finance ministers preparing to discuss the joint release of reserves as the war with Iran continues to disrupt energy flows. Elsewhere, Iran announcing its new supreme leader, signaling the country would not back down from the conflict. President Trump denouncing Tehran's choice of the hardline son of Ayatollah Ali Khamenei as unacceptable. And finally, White House Press Secretary Caroline Leavitt dismissing concerns over rising crude prices, insisting that President Trump's energy dominance strategy will stabilize markets.
With respect to what's happening with gas prices right now, this is a short-term disruption for the long-term gain. We're seeing a slight increase in oil and gas prices, but ultimately taking out the rogue Iranian regime is going to be a good thing for the oil industry, and those prices are going to come back down.
The president posting on social media that the crude spike is a, quote, small price to pay for safety and for peace.
Getting the population as well as fellow Republicans on board with this is going to be somewhat more difficult. Interesting that it seems like there is a timeline. You were speaking with the National Economic Council Director, Kevin Hassett, on Friday. He said that there was a timeline. He wasn't going to disclose it. I'm very curious about that. Is this calm reflecting some sort of timeline that has a short leash, or can you get out of it in that type of time? I think that's the concern, given how it has been escalated.
This phrase you keep hearing, ahead of schedule. implies there is a schedule. It's the question I asked. Of course, they're not going to share us the schedule, even if there was one. But reports over the weekend suggesting that they're still considering a special operation, a ground incursion, to secure uranium tells you that maybe this plan isn't fully secure.
And it goes to the question of what is the ultimate goal? How fungible is it? Is it just a question of de-arming Iran? What does that look like? De-arming them currently or de-arming them in the future, given that enriched uranium is still missing? And supposedly reports over the weekend talking about how there still are pathways to go retrieve some of that enriched uranium, which clearly has gotten the concern of the White House.
Feels like the goals are moving in real time, that's for sure. Crude's moving in real time, 105 on Brent, WTI just north of 102. Surging crude prices driving stagflation trades worldwide. Joyce Chang of JP Morgan writing, we expect volatility to remain high in the near term, putting upward price pressure on oil and gas and impacting inflation and impacting growth. Joyce joins us now for more. Joyce, good morning.
Hey, good to be here.
Is that a stagflationary shock?
Well, I mean, we've run two different scenarios at JP Morgan. We've looked at the spike that we've seen to 120, but does it settle at 80? And then you take about 0.5% off of growth, you add 1% to inflation, but you don't necessarily stop the global expansion. But oil at 120, you take a full 1.2 percentage point off of growth, you have inflation risks that are higher. And, you know, we don't see the off-ramp yet, so the risk premium here is going to stay high, I think.
What did we learn in 2022 when we had a similar move? How different is this economic backdrop?
Well, I think that, you know, this economic is different just because the prospects for her regime change, the off-ramp, the negotiation process is not there. But you also see that some of the oil infrastructure is beginning to be hit right now. So I think that there are some commonalities to 2022, but we also have to just look at the fact that we are in a situation right now where we're only a week or so into this, and we were going into year 5 now and looking at what has happened on some of these other conflicts which haven't been resolved. So the market is looking for just what the off-ramp could be.
And right now, they're almost counting on an off-ramp they can't see. How do you explain the market's relative, I don't want to say complacency, but resilience in the face of a shock that could be quite damaging?
I think there's a sense that this level of bombing cannot be sustained, even though you could have, similar to 2022, like a very long slog ahead. There's no doubt about that as far as just, what this conflict means over the longer term. But can this level of bombing be sustained? And I think that the key issue that everyone is looking at right now is that what are the options here? So there's the G7 emergency meetings that are coming up. There are the questions about just how you make sure that more oil isn't taken off of the market. And we think that about 3.5 million barrels per day have been impacted.
So there is this question of the effect on growth, as you were just talking about. Should oil remain above $100, $120 a barrel? There's a question about the momentum the U.S. economy had going into this. I was really struck by how people shrugged off the labor market report that we got on Friday, or said it doesn't fit with other data that we've gotten. It doesn't really represent weakness in the underlying U.S. economy. Do you think some of the strength has been overstated?
Well, look, we have been looking at the labor market weakness for some time right now. Not just the AI disruption, but the impact of lower immigration as well. And we just haven't seen that much labor demand that's there. So I think the sticky inflation, the fact that you've had the labor market weakness, some of the retail numbers that came out were also showing signs of weakness as well. So it's a time to look at the risk premium to stay elevated and to put more hedges on, I think.
Governor Wallace clearly voting for a rate cut at the next meeting based on what he told us, and it looks like the strength we saw at the start of the year is looking like a bit of a head fake. Is he going to have some company at the next meeting?
We have been out of consensus. We have not had rate cuts in our forecasts, even before this occurred. And we just felt that the inflation numbers just did not point to that. So we see that this on hold, being where the market is going to have to stay, just given the macro data that's coming out.
Outside of energy, what's the source of inflation?
Well, I mean, I think you still have very sticky prices, that have not come down. I mean, we're at year 6 of not hitting the inflation target. So this is not necessarily new news, but the case for rate cuts isn't there. Now there's much more concern about the stagflation risk, given the questions about what the economic growth forecasts will be.
We've been talking about these 3 shocks, and John laid them out earlier in the show, the idea of, on one hand, the oil price shock, that's the most recent one. Then, of course, you've got the AI shock and questions with that. And then, of course, you've got the private credit, which is sort of intertwined with AI. With respect to AI, you think that that has already been played out, that we're not going to necessarily have those concerns that continue to mount, and that we're going to go back to some of those sort of feelings of confidence in the technology. Why do you think that's the case?
Well, I think, look, the CapEx growth numbers for AI still remain very strong. I mean, we had started the year thinking it'd be, north of 30% for the Mag 7, actually raised that. Even if it comes down, so you have very strong CapEx growth that is, in motion right now for AI. And the AI adoption is still underway. So I would sort of put that story, not merge all three of these stories that you put together. I think private credit is not one that we see as systemic, at this point. The AI, it seems to me that you're probably past the worst of the concerns on the software. And we've been overweight software versus semis, which has played out. But it's a period where we do think that being in investment-grade credit makes more sense than being in equities right now.
At what point do high oil prices pressure these other stories, whether it comes to AI and the energy consumption, or whether it comes to private credit and the need for the consumer to keep having discretionary spending power?
So it depends on whether this is a short-term shock. If we see oil settling at 80, I mean, it's 0.5% off of growth, it's 1% higher in inflation, but it doesn't necessarily break the global expansion. If you see oil staying at these levels and persisting through the middle of the year, that's when you really have to talk about, a much more serious markdown in the forecast.
Joyce, it's good to see you. Thanks for dropping by.
Great to see you.
Joyce Chang of JP Morgan there on the energy market and what it means for this economy. It is a major energy shock, a move from the 70s, in the 60s not so long ago, and into the 100s, triple digits and pushing 120 overnight. A major move at the open in Asia.
It was the biggest move ever last week when it comes to WTI, the biggest move since the 1990 Gulf War when it comes to Brent crude. A question of what can some of the global powers do to mitigate this? Is it really just tapping their SPRs? Is that going to be enough to stave off this shock? And then once those are used up, then what?
You've got to show a path to de-escalation to get this market to de-escalate and reprice crude lower. And right now, I don't see one on either side.
Well, and there is this issue of, has this conflict taken on a life of its own? When you have different powers attacking one another's oil resources, the desalination plants, that was a very big concern for a lot of people over the weekend. This is how people get drinking water. This is the classic infrastructure that allows people to live in a lot of these countries. That starts to get attacked, a very different scenario emerges.
Futures this morning in the equity market negative just 1% on the S&P 500, even with some major moves in the commodity market. Let's give an update on stories worldwide. Here's your Bloomberg brief. Iran picking the son of Ayatollah Ali Khamenei as its new supreme leader, the 56-year-old taking over from his father, who was killed in an attack by the US and Israel. The president saying he's unhappy with the appointment. Elsewhere, crude nearing 120 a barrel this morning before pulling back on a report of a joint release of emergency reserves. Sources telling us here at Bloomberg that G7 ministers are set to discuss the release at 8:30 Eastern Time. The US is set to support the idea. And finally, an IED was thrown outside of the New York City mayor's mansion in Manhattan. The violence erupting during an anti-Islam protest. The protest drawing an even larger crowd of counter-protesters who were accused of throwing the explosive device. 6 people were arrested and the FBI is launching a terrorism investigation. That right there is your Bloomberg brief. Up next on the program, a stagflationary shock.
As with any supply-side shock, it can lead you in a stagflationary direction. There's not an obvious monetary policy answer to a stagflationary shock.
Subhaj Rajapra of SocGen joins us next, live from New York City. You're watching Bloomberg TV.
case you missed it, on Bloomberg Crypto.
Crypto has had this terrible, horrible, no good, very bad 2026 ever since the events of October 10th. What do you chalk up this weakness to, this volatility to?
Well, I think there's a lot of structural pressure on Bitcoin that's been happening after 1010. It's just a change of who's holding Bitcoin, and you're moving from people who had long-term belief and were holding Bitcoin directly to just access to Bitcoin being wired up to our financial system and markets in ways that didn't happen before. So the combination of what happened on 1010 plus the mix shift change of who's holding changes the dynamic of price action. This is not a short-term market play. You have to have long-term belief and vision, and I think that for those people who have that long-term belief, they'll be fine.
Don't miss the next Bloomberg Crypto.
In case you missed it, on Bloomberg Deals. This year, we enter 2026 again saying this is going to be the year of M&A, and then there's this big AI disruption. Can this year be saved? Is 2026 going to be the year of M&A returned?
If you look at the market and what it's trading at, forward earnings, it's very, very high by historical standards. So it's hard to do deals other than all stock deals. And there's also some volatility in the market.
Don't miss Bloomberg Deals live every week.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute financial news. I'm Lisa Abramowitz in Miami Beach, Florida, at the JP Morgan Leveraged Finance Conference. This is Bloomberg.
What a move in energy overnight. What a move this morning. Overnight, the high 119.50, up by 29% after a 28% gain through last week. The kind of moves that follow major, major shocks. The energy shock of 22, the pandemic of 20. This its own beast, and a beast it is. WTI 103, Brent crude 105. In the equity market, pulling down equities right now across the board. On the S&P down by 1%, on the Nasdaq down by 1.2, on the Russell down by 2 percentage points, and worldwide, triggering a bond market sell-off with yields higher across the curve. Stateside, 2s, 10s and 30s look like this, up by 5%. The 2-year at 361. That is nothing compared to what you're seeing developing in places like the UK.
Where suddenly you have one rate hike being priced into the Bank of England forecast for the year ahead in terms of where things are trading. Look, what we have seen in terms of the market response has been that the rest of the world is much more exposed to an energy shock than the United States is. That's the reason why you see European stocks falling into a correction from the February highs. That's the reason why the Kospi has been trading out of bed, because people seem to think that this is sort of the risk asset of choice when you go outside of the U.S. And it raises questions. Is it actually going to be borne out in the economy, or is this just simply a knee-jerk reversal of some of the consensus trades?
9 basis point move at the front end of the German curve. 25 basis point move at the front end of the UK curve. That is brutal. If you're looking for some kind of offset to comfort consumers right now, you're not getting it with rate pricing at all.
Honestly, the United Kingdom has an even more difficult scenario ahead of it than the ECB, than the European region, because on one hand, you've got a weaker backdrop economically at the same time that you have a very sensitive household to energy prices. So you get a double whammy. On one hand, borrowing costs are going to be tightening at the same time that you also are going to be having higher bills. This is the stagflationary shock that nobody wants.
And this is the headline we did not want to see. Saudi Arabia starting oil output cuts as storage fills up. If you can't move the energy through the Strait of Hormuz, you have to put much of it in storage. And once you breach capacity, you have to start cutting output. We saw it with Iraq last week. With Kuwait into the weekend, UAE followed, and this was the major headline we've been waiting for. Saudi Arabia starting to cut output as they start to hit storage capacity.
People keep reminding us you cannot just turn back on these supplies. It's not a switch. It's actually a complicated process that takes time. When you start shutting down oil output, that prolongs the period of time until we can normalize. And that is the reason why you get a response that continues to expand as we get these headlines.
That's the breaking news this morning. Brent crude high by 14%, 105.64. WTI 103.20. Under surveillance this morning, a stagflationary shock.
As with any supply-side shock, it can lead you in a stagflationary direction, which is to say the inflation side of the mandate getting worse. At the same time, the employment side of the mandate is getting worse. There's not an obvious monetary policy answer to a stagflationary shock.
So here's the latest this morning. Global bond yields rising as the Iran war stokes fears of higher inflation and lower growth. Subhadra Jaffer of SocGen writing, we do not expect this positive correlation between stocks and bonds to persist. A stagflation-like environment argues for policy on hold. Subhadra joins us now for more. Subhadra, good morning.
Good morning.
Is there a tipping point where this becomes bullish for bonds and not bearish?
It's not going to happen anytime soon, it seems like, because of the fact that you have this sort of move in global bond yields, and global bond yields are moving quite dramatically high. As you noted earlier, gilt yields are higher. You're seeing higher yields in New Zealand and Australia. So this global bond yields moving higher is going to keep treasuries higher as well. But I just don't see treasuries really breaking out of the range on either direction. So yes, it's not a good flight to quality hedge in this environment, because typically when you tend to see stocks sell off, you see investors move to the safety of bonds. But I also don't see treasuries really moving out of the ranges that we've been in the last few months.
So how much of a decoupling are you expecting then with the US versus the rest of the world? Because we're seeing some big moves developing in the UK and elsewhere this morning.
Yeah, the US is energy independent. So a lot of this story here in the US is more a delaying of the timing for the easing. We're still priced in for close to 2 cuts for this year. So there's not really a big change in the outlook for the Fed. That's not the case in the rest of the world, with the Bank of England as well as the expectations for the ECB have not only switched from easing, the market's now pricing in for hikes. So this is a pretty dramatic change in the outlook for central banks. So for the US, I would say it's more of a stagflationary environment. The Fed doesn't do anything. It translates into lower growth. We were already looking at very strong growth for this year coming into the year. If anything, we're going to get lower growth, but it's not a really dire situation. That's why I think Treasury yields remain somewhat range-bound.
Do you think that the long end of the U.S. yield curve is rising because of rising inflation expectations over the longer term? Or do you think it's just in sympathy with the rising yields elsewhere, maybe in Japan or in Europe?
I think it's more in relation to what's happening globally. If you look at inflation expectations, yes, they're rising. They're rising more in the very front end. That's what you should see in an environment where it's expectations that are being led by higher energy costs. If you look at the 5-year forward, 5-year break-even, which is what the Fed looks at, it's actually been coming lower because 2-year and 5-year break-evens have actually been going higher. So that actually says that the Fed is going to be credible regardless. So it's not an inflation expectation story for me. It's more a story of what happens over the near term with crude oil prices and higher sort of front-end break-evens.
If we were in a vacuum and we looked at some of the inflation prints, we're going to get CPI and PCE this week. That would have been really important just to understand how much the Fed could cut after Friday's non-farm payrolls report. We would have been talking about the significance of rate cuts. Why is everyone shrugging off the jobs backdrop that looked pretty weak on Friday and just focusing purely on inflation going forward?
Because it's just one print. If you look at the 3-month averages, it's still relatively strong. Yes, if you look through the details of the labor market picture, the labor market has been very much in stasis. So yes, am I concerned about the labor market? Yes. But that said, I think that the bigger concern for me is on the inflation side. The Fed has eased 3 times last year, 700 basis points of preemptive cuts. The job market remains relatively stable. We are looking for cracks, but for the most part, I think the focus is going to be much more on inflation. Coming into the year, it was about tariffs. It was about the feed-through into goods inflation, maybe food inflation, and tariff-related concerns. I think we're still at peak uncertainty on tariffs. So in that sort of context, now you throw in the dynamics with higher oil prices, that really changes the outlook for headline inflation. So the Fed is going to be very focused on what happens on the inflation side while paying attention to the labor market, but I think inflation is going to take priority.
How do you think the outlook's changed with triple-digit crude? At the moment, we've been closer to 3 than we have to 2 on inflation. Are we getting closer to 4?
You know, it's going to be transitory. I hate using that word. For the most part, the Fed is going to be willing to look through spikes in oil prices, especially if you look at the last, 2.5 decades of geopolitical events. These events tend to be somewhat near term, as in like they're short-lived. You see a spike in oil prices come down. We're energy independent, so that's not nearly much of a concern. So you're looking more across sort of what happens once we get through this sort of geopolitical concern as opposed to something that's going to be long-lasting. So that's part of the reason why I think the market tends to discount spikes in oil prices.
Subhadra, always good to see you. Thanks for being here. What a start to the week. Subhadra Rajappa there of SocGen on the bond market. This headline crossed on a Bloomberg terminal just moments ago. This from our team here at Bloomberg News. Saudi Arabia started to cut oil output as storage fills up. We've talked about this dynamic a number of times. It's about the movement of energy. If you can't move the energy, you have to store it somewhere. Now, Saudi Arabia has some options. They have an east-west pipeline. That can do some of the heavy lifting. That can act as a release valve. So the Saudis are essentially telling you, even with that, because the strait is closed, we're getting closer and closer to breaching storage capacity ahead of time, we're cutting output.
Yeah, and they also have the off-ramp of sending oil tankers through the Red Sea. They have done more of that. Even that hasn't been enough to offset this. So now it's the United Arab Emirates, Kuwait, as you mentioned earlier, following Iraq. Now we've got Saudi Arabia shutting down production as a result of storage facilities filling up. All of this just means a longer timeline for how long some of this production can really normalize, leading to questions of, do we have to change our timeline when it comes to market price?
And that headline, Bramo, that's a massive offset to whatever we might hear at 8:30 Eastern Time, when G7 ministers get together and talk about releasing reserves. That headline out of Saudi Arabia is far more important, I think, at this point, than anything they could say.
They can open the gates for their reserves, but it's not going to be enough to offset what we're seeing in terms of a lack of production. In the United States, the Strategic Petroleum Reserve only has 21 days of consumption, the lowest in decades. So how much is that really going to take us in terms of offsetting this?
It's a big headline this morning. Saudi Arabia has started to reduce crude output. This according to a person familiar with the matter. Up next on the program, Sarah Hunt of Alpine Saxon Words, Jeanette Lowe of Strategas, Kate Moore of City Wealth, and Ellen Wald of the Atlantic Council. The second hour of Bloomberg Surveillance up next.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
The countdown is on. everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
In case you missed it, on Bloomberg Open Interest.
We're going to be an affordable luxury item, but if you look at it, we're priced pretty darn competitively. Pricing is one of those things that will always be the last lever that we'll pull. There are times where you do have to put some pricing into the business, so we'll see how things evolve. If we need to do it, we'll do it very strategically, and we'll try to do it as minimal as possible.
Don't miss Open Interest live weekdays.
It's a labor market that is okay, but not strong.
You may start pricing back in some of the cuts that we just priced out.
If the Fed eases into an energy supply shock that is prolonged, the curve is going to steepen.
The higher energy prices will be a shock for American consumers.
The inflationary impact is months out.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action of scores look like this. Equity futures negative by 1% on the S&P, off the lows. On the Nasdaq, down by 1.2. On the Russell, down by 2 percentage points. We're just off the highs in the commodity market. Crude, Brent overnight pushing 120. Right now, Brent crude 106 and up 14% on the session. This headline crossing just moments ago. Saudi Arabia starting to cut crude output.
This is coming after the UAE, as well as Kuwait, as well as Iraq, have all taken similar measures because their storage facilities have filled up. The reason why this is concerning to markets is that once you close an oil facility, it can take weeks or months, if it has fully been closed, to restart. Sometimes it can take a little bit less. Nonetheless, this prolongs how long it is going to take to normalize at a time when everyone's wondering just how big is the supply shock going to be and how long will it last.
8:30 Eastern Time, there's an attempt at an offset. G7 finance ministers set to hold a call on releasing strategic energy reserves across the G7. The US reportedly supporting the idea. Is that enough to offset the pain that's been accumulating over the last week?
The market was up at $120 a barrel. It went down to about $103 a barrel when you saw this announcement. So evidently it moved the needle on the margin. It only moves the needle if you believe this is temporary. Right now, the oil market does seem to think that this will be temporary in terms of going back down to $80 a barrel by the end of this year. It's already higher, though, than where it was just a week ago. Nonetheless, at what point does this go on long enough for people to price in the pain economically, as well as in the forward curve for oil that isn't currently being reflected?
Brent crude, triple digits, around 105. Coming up this hour, Sarah Hunt of Alpine Saxon Woods with crude topping 100. Jeanette Lowe of Strategas as more countries scale back production. And Kay Moore of City Wealth as fears of a prolonged war rattle Wall Street. Our team coverage starts right now with Bloomberg's Jemana Basechi joining us out of Dubai. Jemana, an important headline crossing just moments ago as we've discussed Kuwait, Iraq, UAE, and now the big one.
This is the big one indeed. Yeah, Saudi Arabia saying that they started to cut oil output as storage has started to fill up. And you will recall over the course of our reporting of the past week, they had been looking for alternative routes to get this oil out that bypasses the Strait of Hormuz. And they do have that east-west pipeline that's available to them of reported capacity of around 5 million barrels a day. So it could have gone some way towards mopping up some of the production that needed to get out. But they've actually determined that it's not enough because their storage facilities have actually started to fill up. And just to give you the numbers here, Aramco produces around 10 million barrels a day. Around 7 million barrels a day are slated for export. The east-west pipeline can accommodate up to 5 million barrels a day. And the other thing that you need to think about is obviously we've flagged a lot the security concerns about the Strait of Hormuz, but there's an additional concern to think about on the Red Sea as well, in case the Houthis also get involved in this and start once again targeting ships and vessels passing through the Red Sea. So there may be a security consideration there to think of. But all in all, this is just another massive OPEC producer that has announced halted production or lower production levels because of these storage facilities filling up. And it is not about the damage that is sustained to these sites. From what we understand, limited damage has been sustained because of the ongoing attacks out of Iran. This is is simply to do with storage being filled up and this oil having nowhere to go. So as long as we continue to be in an environment where the strait is effectively shut, you're going to hear more and more of these halts in productions, potentially full halts in productions. And as Lisa was just saying, it's easier to sort of trend lower with your production than to cut it off completely and fire it back up again, because of then concerns around maintenance and bringing in extra operators to get pipelines up and running. And so for the foreseeable future, it just looks like they will be focused on producing less as opposed to fully halting production. But the longer the situation persists, the more obviously you're going to see an impact, a real physical impact on oil supply.
Jumana with the latest out of Dubai. Jumana, thank you. Jumana Basenji there. Crude right now around 105. Saudi Arabia cutting production, 1. Iran doubling down on hardline leadership, 2. And 3, the president reportedly considering a special ground operation to seize uranium in Iran as well. There is no sign of de-escalation there whatsoever.
And there's no sign of an ultimate goal for any of the particular parties involved, which is the reason why oil prices have steadily marched higher, and the reason why these headlines that came out over the weekend left people at 6 p.m. yesterday with a view that you have to send oil prices substantially higher, at least in the near term, before this resolves.
When Monday morning starts Sunday evening stateside, you know something bad is happening. Here's the view on Wall Street. Stocks falling, crude jumping above $100 a barrel for the first time since 22. Sarah Hunt of Alpine Saxon Woods writing the positives that investors were looking for are hard to hang one's hat on, given the oil price surge. Sarah joins us now for more. Sarah, good morning.
Good morning.
What changed with triple-digit crude for you?
I think it changes a lot of things. I think it's really, as we've all spoken about many times, it's going to depend on how long this lasts. The forward curve does not seem to think that this is a permanent state. And I think that what it changes is, one, the possibility of an economic slowdown or even going into a recession, because higher energy prices can often cause that kind of an economic shock. And what happens on the earnings front, both to margins and to spending and to everything else. Right now, this is a near-term problem. If it looks like it's going longer, it's going to change some of the math that everyone's been looking for the next couple of years in terms of earnings.
Consumer-facing names getting beaten up. Airlines, cruise lines, all getting absolutely hammered as crude continues to tick up. Are we at the point of demand destruction now?
I think it's a little early for demand destruction. I think that there's some obvious things that are going to happen as you see prices move very higher in the short term. But I think from a longer term perspective, it takes longer than a couple of weeks of higher prices. Do we get a couple of months of higher prices? That's definitely going to hurt it. And there on the margins, people are going to travel less. People are worried about traveling to begin with, just because there's something going on in a big part of the world that's really important. So I think you're definitely going to see some pullback in activity, and that is in and of itself slowing things down.
Sarah, have you been reluctant to sell stocks, any stocks, in response to this, given the fact that in the past, geopolitics is something that has always been a short-term event for markets?
I think this is, yes, I wouldn't say I'm afraid to sell anything, but it's more that, is this something that is really a permanent change, and what's your time horizon? If I needed, I tell people all the time, if you need money in the very short term, you should have it liquid. If you're in there for the long term, you're going to see a lot of volatility. We knew coming into this year it was going to be volatile. We didn't know why and how volatile it would be so quickly, but you expect after a couple of years, especially of such strong equity performance, that you'll see more volatility. The question is really going to be whether or not this sticks, or whether or not this is something that markets continue to see through and look through. And I think that there are other things going on in the background that are also potentially problematic. So it's going to be interesting to see how that plays out, and not interesting in a good way.
Yeah, we see, of course, what's going on with private credit. We see cracks in the U.S. economy. I'm just wondering, is there an inflection point, something that you're looking for that would change your view, that would make you materially shift your longer-term outlook for 2026?
I think if this continues to go on without figuring out what the off-ramps are. I think that it was a good move to say that globally the G7 will release some energy because prices spike so high. That's not going to solve the problem. The problem needs to be solved by having some resolution and having tankers be able to get through the Strait of Hormuz. Until we see some path for that, I think you're going to start to see people get more and more worried about those longer-term both earnings estimates and just general economic conditions and the market. Right now, we're still in early days. If that really extends, I think that's really going to be the tipping point.
Some of that depends on what your starting point is, what your assessment of current conditions actually is. And we've got very different views on that. Some people think we're okay. In fact, the Federal Reserve, the top of the Federal Reserve, Chairman Powell, would insist that things are stable, they're okay. Others would say things are fragile. Where'd you come down on that, one or the other?
I think that they are a little bit more fragile than they look. I think that you've seen some disruptions in the labor market. You certainly hear a lot of rumblings in the labor market about what's going to happen because of AI in different sectors. There's a lot of spending that's coming out of that, though, so there are offsets to that. I think, generally speaking, absent this shock, the economy was doing fairly well. There were definite pockets of weakness, and you could see that in rotation in sectors in the market. You could see major rotation sectors. The headline indices are still fairly close to all-time highs, but there's been some major devastation in different sectors along the way. This is going to be one of those situations where, depending on how long it lasts, and this is, they're just going to keep saying that, we don't know yet what's going to happen, but on the margin, nothing good comes out of spiking oil prices this high and shutting in oil infrastructure.
Well, let's pick a sector. Financials. Lisa talked about private credit. Blackstone, then BlackRock going into the weekend with a bit of trouble there. Then we've seen Morgan Stanley and Goldman Sachs start to underperform as well. This is going through the whole sector now and not just the private market players. What do you think that's signaling?
I think that's signaling some concern about weakness ahead and some concern about if you're going to have potential issues in both equity and bond markets, but you also have this private credit thing. This would be the top of the story if we weren't going on.
This would be the top story.
This would be the absolute top story, I think, if we weren't going through what we're going through right now with Iran, because this is one of those, it started out small and now you're seeing a couple of other things and then a couple of other things, and that's the kind of things that markets don't like. It's that uncertainty that markets don't like and investors don't like when everyone has been sort of trying to reassure everyone that it's all okay, and then you start to see things that make it look a little less okay. So I think that would be a much bigger headline if we weren't in the middle of this, and that would be something that would be starting to worry markets going forward.
Yeah, the idea that panic and sort of retail investors trying to pull their money and not getting it all back is very concerning to people. Can you put these two stories together of the oil price shock and credit concerns tied to private credit, the idea that some kind of increase in oil and decrease in consumer spending power could catalyze the fears that people see in credit sooner than maybe otherwise would take place?
Well, it's interesting because I think those fears were catalyzing on the back of expectations of problems in certain sectors, like the software sector specifically. But whether or not the reality on the ground is that they were as bad as it looked, I think the problem is more that everybody makes a decision in one direction. I don't know that the higher oil prices are going to make that worse, because I don't think that the credits that people are worried about are ones that are so tied to the consumer. And I think that would be the link that I'm not sure we see yet, but it doesn't mean that it isn't there, and certainly people are going to start looking for that.
Sarah, it's always good to see you. Thanks for being here. Sarah Hunt there of Alpine Saxon Words on private credit, on energy, on the economic backdrop. We have had a payroll shocker, we've had an energy rupture, and we've got some real cracks developing in private markets too.
I mean, the fact that BlackRock followed Blackstone in terms of how they were going to meet redemptions, given the fact that people are concerned about some of these structural changes, would have been front page news. The fact that people are seeing these concerns continue to percolate, and yet here we are.
I don't think the energy move, though, takes it off the front page. I think it keeps it there. It exacerbates the problem. The tightening of financial conditions you're seeing now across Europe, in America as well, is not going to help matters. In fact, arguably, it's going to make it worse.
It might not be exactly the same story with software, but it's an even worse story if it's a broader economic issue. And the one thing that people have said is private credit will be okay fundamentally as long as there isn't a downturn in the economic cycle. What could catalyze a downturn in the economic cycle? Oil prices that reduce people's spending power to a certain degree, that they don't go out to Disney World, they don't fly to France, and this is exactly what people are talking about right now.
That's the bear case. That's the demand destruction off the back of moves like this. Brent, close to 105. Let's get you an update on stories worldwide with your Bloomberg brief. Here's our top story. Saudi Arabia has begun cutting oil production. The country's crude storage tanks piling up, with the Strait of Hormuz effectively closed to vessel traffic. The moves follow similar decisions from the UAE, Kuwait, and Iraq. Elsewhere, President Trump isn't ruling out sending U.S. ground troops into Iran. The administration saying it can achieve its goals in Iran without American boots on the ground, but refusing to take the option off the table. The president saying, quote, if we did that, they would be decimated. And finally, an IED was thrown outside of the New York City mayor's mansion in Manhattan. The violence erupting during an anti-Islam protest, the protest drawing an even larger crowd of counter-protesters who were accused of throwing the explosive device. The FBI launching a terrorism investigation after 6 people were arrested. And that is your Bloomberg Brief. Up next on the program, pricing in energy panic.
We are suffering high prices, not in natural gas, but in oil, because it's a globally connected market. The oil is there. You're seeing a little bit of fear premium in the marketplace.
Up next, we'll catch up with Jeanette Lowe of Strategas, live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
What a start to the week. Equities down again by 1% on the S&P 500. On the Nasdaq 100 down by 1.2. The airlines getting hammered, falling into a bear market. United, Delta trading softer by 3% in the pre-market after dropping double digits through last week. In the commodity market, this is what's driving things right now. WTI and Brent, triple digits. And if you think these numbers are bad, if you were tracking things overnight, Brent crude pushing 120 through 119 as session highs.
And this came after the disruptions to the UAE as well as Kuwait, after coming after Iraq in terms of turning off production or limiting it in response to storage facilities that were full. Also the tit for tat that is increasingly targeting energy facilities. How much can some sort of strategic release of strategic reserves truly offset what we're seeing, which is just a complete breakdown in the supply chain?
When you start to see Saudi Arabia cutting output, and if you're just joining us, that headline crossing about 30 minutes ago, when you start to see those headlines, there's very little that you can do to offset that at 8:30 Eastern time when finance ministers get together and talk about releasing reserves.
The only way that people can have confidence that that actually will stave off any kind of disruption is if you have an off-ramp, if you have a sense of when this can end and when production can start coming back. Right now, that just does not seem to be on the table, so maybe they can announce something at 8:30 that can get people a little more optimistic on that front.
Under surveillance this morning, pricing in energy panic.
We are suffering high prices, not in natural gas, but in oil, because it's a globally connected market. We're communicating with our allies abroad. The oil is there. You're seeing a little bit of fear premium in the marketplace, but the world is not short of oil today or natural gas. We are nowhere near normal traffic right now. And, you know, and that'll take some time. But again, worst case, that's a few weeks. That's not months.
So here's the latest this morning. Crude surging past $100 a barrel for the first time since the Russian invasion of Ukraine back in 22. The president calling the higher costs a very small price to pay as optimism for a quick resolution to the Middle East conflict quickly fades. Bloomberg's Tyler Kendall joins us now for more. Tyler, a lot of people have asked this question. I'll ask it once again. Why did we engage in this conflict without refilling the SPR ahead of time?
Yeah, hey, John, good morning. That's actually a question that Democrats are now asking as they call on the Trump administration to tap the SPR. The thing is, we've heard from the Energy Secretary before that it would cost billions of dollars in both repairs and costs to fully replenish that stockpile. And instead, the administration maintains that there could be some other short-term solutions on the table that they would prefer to tap instead. That then leads to questions on whether or not we're going to actually see a resolution today when the G7 finance ministers meet, as you've been discussing on the program. This would only be the 5th time that this has happened, and no decision has been made quite yet. But people familiar with the matter do tell us here at Bloomberg News that some European nations are now concerned that the U.S. is going to push to pull back sanctions on Russian oil after we saw that waiver granted last week to allow India to buy those barrels. The thing is, as you well know, the White House is really under pressure when it comes to energy costs as they start to trickle down to retail gasoline prices and we head into the midterms. Now, John, the Energy Secretary does maintain this isn't going to be a long-term conflict, but no diplomatic off-ramp appears to be in sight. In fact, the White House is now threatening to widen the war. We heard from President Trump over the weekend saying the U.S. is now eyeing striking new targets, and Bloomberg News is reporting that the president is considering deploying special operation forces into Iran to extract the country's highly enriched uranium stockpiles.
And that's what escalation looks like tonight. Bloomberg's Tyler Kendall. Thank you, Tyler, down in Washington, D.C. Jeanette Lowe, strategist, writing the following. President Trump can pull out of Iran in 3 weeks and gas prices will go back to normal. The risk is if the conflict lasts longer. Jeanette joins us now for more. Jeanette, that statement begs the question if this is still in the president's hands, and if Iran wants to make this messy, they can make this messy for quite a while.
Absolutely. I mean, this could definitely be the risk here for the United States is obviously that this becomes a much more protracted war, or it also creates civil war and just chaos within Iran and then within the larger Middle East region. So there are definitely a lot of risks to the administration here. But I do think that the administration is really focused on this 4 to 5 week timeline. We do think that they have a plan to accelerate attacks on Iran to try to get to their specific goals, which is getting rid of the weapons that could be targeted at the United States and Israel, annihilating the Navy of Iran, and trying to then also prevent them from going after ships in the Strait of Hormuz, and also maybe potentially trying to get some sort of regime change or at least governance changes going forward. So I do think there's obviously some risks, but the administration probably is looking at this still being a 4 to 5 week timeline. We'll obviously see if that changes, and then what does this look like? They have said that there is a surge coming, that they will increase their attacks on Iran. So we'll kind of have to see over the next week to see, well, how does this play out, and then how does that change the timeline going forward?
Jeanette, are there any independent assessments of where the administration is on achieving main principles of that timeline, in particular, wiping out weapons that could attack U.S. and allies, as well as potentially regime change at a time where we now have a new supreme leader that President Trump has already said is unacceptable to him?
Yeah, I mean, I think obviously the regime change is going to be the biggest challenge for the United States and Israel. And I think you have seen the United States a little bit walk back that exact goal for this military operation. But you are kind of seeing the fact that they were focused on getting Iran's air defenses along the coast so that they could then strike deeper into Iranian territory. They do seem to have achieved that goal, at least particularly so far. But I think the big question is there's a lot of unknowns. We don't know if Iran has, more missile capacity that they are still kind of holding on to. That will be important. I think that the United States has been highlighting the fact that missile attacks and drone attacks coming from Iran have been down 70 or 80%, and they do think that they are losing firepower, but we don't also know what actually might still be there. So there's definitely still this risk. But I do think the administration sees that they have made some progress with getting out certain air defenses, using up some of the supplies that Iran has been using against the U.S. and its allies, and also that they're starting to be able to strike further and deeper into Iran. So that is a little bit of some progress towards these ultimate goals.
The U.S. is fighting this war alongside Israel. How aligned are these two nations in their ultimate goals?
Yeah, I mean, I think the one thing that was important about why potentially we may have gone into this is that there was an alignment between the two countries on the actual ability to go after Iran. And this is they both, I think, see this as an opportunity to really kind of strike at the weapons that Iran had that it was potentially using to threaten both of those countries, also trying to go after certain other pieces that Iran has been trying to do with its nuclear program. But obviously, we may see some disagreements longer term. We saw the disagreement over the weekend about the fact that Israel struck oil depots in Iran, and the U.S. was opposed to that. We also may see differences of opinion as to whether or not we're actually going to get regime change, or would the U.S. be more willing to accept some other outcome versus Israel. So I think there could be more fractures going forward, but we haven't seen a lot yet. But obviously, the longer this takes, that could obviously become something that becomes a bigger risk.
Jenna, how much visibility do we have on what's happening inside Iran right now? This is a population of 90 million people, something like that, with very, very complex power structures, as anyone who's followed that country for a while will understand. Jeanette, those strikes from Israel are really, really important because that undermines the domestic support for what is happening. And that's been an argument of both Israel and the US for quite a while, to try and get the Iranian people on side to ultimately topple the leadership. There's little sign of that right now. How do those strikes help?
Yeah, I think that was one of the main concerns that the United States had, was that those attacks could actually make opposition less willing to go after the regime and less willing to kind of rise up in that way. And so that was why the administration was a little bit more upset with Israel for going after those attacks, because they do want to make sure that there are conditions where we're not actually helping to rally the Iranian people behind the leadership and feeling like they in particular are being attacked rather than the regime and the security forces that hold up that regime. So that is definitely a risk. Obviously, the other issue is that we do have these internet blackouts, which doesn't mean we always have a full understanding of what is actually happening within Iran. And that makes it a little bit more difficult to know what could be the ultimate outcome. Obviously, one of the big issues here is that we don't necessarily have a good understanding of could there be an opposition leader who could actually rise up and take over in Iran, like what you saw in 1979, the fact that the Ayatollah was a particular figure. That, I think, is something that is going to be a risk going forward, and to see if that ultimate goal can be achieved.
Jeanette, thank you. Jeanette Lowther of Strategas. Tehran is not Caracas, and the son of the supreme leader is not Delcy Rodriguez.
There isn't a sense of a continuation of power at a time when this is a fractured leadership in a very complicated society.
Up next, Kate Moore of City Wealth, as the war in Iran keeps markets on edge.
What year did you start the company?
In 2013.
Who gave you your initial capital?
General Catalyst, Jim Breyer, and Excel.
And they made on their money?
They did well.
Well.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
When it matters, investors turn to Bloomberg surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg surveillance, we're talking about it. This is the price of conflict in financial markets this morning. Check out energy. Brent, 105, briefly pushing 120, a move of almost 30% overnight. Right now, 13.4% higher on Brent crude. WTI up by 14% as well. That sets the tone for this. The equity market pulling stocks lower on the S&P 500 by around 1% throughout this morning, down 2 on the small caps. And in the bond market, pushing bonds down and yields up higher. 2s, 10s and 30s, 2s up by 4, 10s up by 3. And I keep going back to the international story, pricing in tighter monetary policy in the UK, in Europe. The UK seeing a double-digit move on a 10-year and up by 20-plus basis points at the front end of the curve.
Starting to price in rate hikes, not rate cuts ahead. Deutsche Bank just put out a really good piece of research where they said historical risk-off moves after an oil shock, for example, S&P down 15%, generally require at least one of large and sustained oil price spikes. We're talking where we are now for a month or two. Hawkish policy response, speaking to the move that we're seeing in bonds, and then broader macro damage. That's sort of what point do you see demand destruction start to kick in?
And that all depends on the first one, whether this is sustained or not. The risk of a hawkish pivot is being priced. The reality of one yet to be seen. I don't think central bankers right now are going to rush out and make the pivot, but the longer it goes on, you start to see that in the data. That's when things start to get real.
And it matters where you start from. The fact that inflation in the United States already is closer to 3% than 2%, we're going to get some more data points this week, indicates how much inflationary momentum there already is in the system, which is only going to pressure a bigger move simply because we never killed the inflation beast entirely to begin with.
A 13% move in energy at the heart of everything in financial markets this morning. As we count you down to the opening bell, 2 hours away, let's get you some morning movers. Lizzie has more. Hey, Lizzie.
Hey, John, we have to start in energy. Oil, as you say, above $100 a barrel for the first time since 2022. Of course, that coming back to the Middle East conflict. And we've already seen gains for the European energy names, the likes of BP and Shell. That's set to continue in the US, in the pre-market. ExxonMobil, Chevron, Occidental, all seeing gains. Flip over, and we're also seeing Hims and Hers up more than 50% earlier, pairing some of those gains now. But this on the news that it has resolved its feud with Novo Nordisk. Novo set to start selling its anti-obesity drugs on the Hims platform, and this reflects a similar deal that we saw about this time last year. You remember, and it fell through because Hims didn't stop marketing and selling its own copycat medication. So is this deal going to get over the line? Traders optimistic that it will. Just finally, Live Nation. We saw a redhead crossing the terminal on this stock earlier this morning. Currently up 8.4% in the pre-market, but the redhead being that Live Nation is nearing a settlement with the Justice Department on the federal antitrust lawsuit. Now, this accuses Live Nation of illegally monopolizing the live music industry. It goes all the way back to the Obama administration, which, of course, allowed Live Nation to acquire Ticketmaster. But ever since that trial started on March the 2nd, we've had these settlement discussions hotting up, and now Live Nation up in the pre-market. Announcement expected in the coming days, John.
Lizzie, thank you. Thanks for the update. Some of the movers out there to watch into the opening bell. On our radar this morning, one of our top stories, G7 finance ministers set to discuss a joint release of crude reserves as prices surged to 4-year highs. The potential drawdown helping to pair some price gains after jumping to nearly $120 a barrel overnight. Elsewhere, President Donald Trump downplaying the spike in crude on social media, writing it's, quote, a very small price to pay for peace and safety. This is Iran's newly named supreme leader signals the Islamic Republic won't back down. And finally, the president considering a special forces mission to seize Iranian uranium. According to diplomatic officials, US and Israeli intelligence are searching for the stockpile. UN atomic inspectors last verifying its location nearly 9 months ago.
This is the enriched uranium that could potentially be transformed into weapons-grade material, and this is really the reason why there is concern by the likes of the International Atomic Agency. Unless you get people people on the ground, you don't know how quickly or how close they are to actually forming some weaponry. This goes to the question of what is the ultimate goal? Is it to seize the uranium? Is it to get back to negotiating table with respect to making some deal? Or is that over? Is that not on the table anymore? And there only will be wholesale grabbing of this uranium in order to take the threat off.
This approach from the President, Bramo, I think is worth going over again and again. It's so different to the President's traditional playbook. To go into Caracas or to go and bomb the nuclear sites in Iran that we saw 12 months ago, targeted, limited in nature. This feels so open-ended, and it feels like they're still mulling the options right now. That yes, there might have been a plan, but that plan's out of the window, and now we're talking about doing something different. And the escalation also, and I'm pleased you brought this up moments ago, the escalation over the weekend of Israel to go after Iranian energy infrastructure cannot be overstated. That is an escalation in this conflict, not a de-escalation.
And it's interesting that the United States was opposed to that move. Israel bombing Tehran's oil supplies. It does kind of question how you're going to win over the hearts and minds of people living there, given the fact that they're experiencing oil rain. There also is an issue of, well, all of a sudden you've made this fair game. The U.S. also damaging certain desalination plants, or reports of that in Iran. This also amping up the game in terms of what's fair game to go after. So a lot of questions about the off-ramp as well as the goals. You're right. The goalposts seem to be moving in real time, which is the reason why no one has a sense of what this plan is and when we can say mission accomplished. We know that's a terrible term in terms of historical precedent. Nonetheless, we're just looking for a sense of when you can actually calm things down.
If you were just tuning in, welcome to the program. And let's say you heard all of that and you guessed where equities were right now. I don't think you would have guessed the S&P was only down 1%, but that's where the S&P is this morning. The Nasdaq down by about 1% as well. We're down by 1.7 on small caps. The Russell 2000 underperforming. Let's keep it there on the equity market as Iran's chokehold on the Strait of Hormuz is disrupting the flow of energy, sending prices soaring above $100 a barrel, and Saudi Arabia, the latest to cut output, that headline crossing in the last hour. Kate Moore of City Wealth writing this: we expect markets to remain volatile until we get clarity around both the measure of success for the US and Israel and the subsequent off-ramp. Joining us now, Kate Moore. Kate, welcome to the program. Stocks are down 1%. Can I call that resilient? Is it fair to say that that's pretty resilient given the risks we're talking about?
Well, I mean, I think, John, what we're seeing is the resilience in the U.S. large cap space. And that's largely because we have to understand where positioning and sentiment was before this strike. And that was that U.S. large caps were less attractive or less exciting asset class or, part of the equity market than others. You saw the biggest move so far in the small cap space, in non-U.S. equities, places where there was a significant move over the course of 2025, much of it driven by multiple expansion and not earnings. And the U.S. large cap space, the S&P 500, which has been treading water for 6 months, is holding up relatively well because people had already taken down a little bit of their exposure there. And it's frankly a higher quality part of the market. So there were a lot of things in terms of positioning and sentiment in play at this moment that I think are leading the U.S. large caps to outperform in the equity market. And frankly, our view is that is likely to continue, that U.S. large caps are the safest place in that risk asset.
Within those large caps, what's the sector preference with that in mind?
Yeah. So here's the thing. We need to separate out kind of what's cyclical, what's going to be prone to the shock, and what might be secular. In this case, a lot of people had faded their risk in the tech and comm space, and we understand why. Huge concentrated positions. We've talked about it so many times. Questions around sustainability of AI CapEx. Hopefully people took some of that fear off as we went through first quarter earnings season. But, the whole point is that people were taking down some of the risk in some of the secular growers. I think those still offer better quality and, frankly, better likelihood of being able to sustain their earnings momentum, even in more kind of a geopolitical and economic shock environment. But I do want to mention something on the cyclical side, because we know there is consistent demand for industrial metals. We've talked, of course, about copper and other things going into the AI build-out and CapEx story. I think we'll see, even if there's a significant amount of price volatility across the resources complex, that the opportunities there remain quite strong in the material side.
Kate, have you changed anything about your recommendations to clients on the heels of the conflict in Iran? Have you suggested to them that they shift anything other than just hold pat, stay with what's working?
Yeah, no, Lisa, I haven't at this point. You know, we're just obviously one trading week into it, and we've been watching price action. We feel like we're in pretty good shape in terms of the way our portfolios are constructed, particularly because we have a focus on resilience and we have a focus on high quality. Now, I'll be honest, the first part of this year, there were times where it felt a little uncomfortable because we didn't want to own the small caps for the same reasons that other people were. We didn't see the same kind of quality trade there. And we continue to believe that, you know, the U.S. should be a significant anchor of your equity exposure. And this was, you know, a little painful when other markets were outperforming. But right now, building for resilience, building for quality really is doing very well for us and our clients. The one thing, Lisa, I just want to point out, though, is that you know, we keep on looking for areas of dislocation. Are there massive drawdowns in some of the things that we like over the medium term? And, you know, can we use some of the cash and some of our, you know, tactical skills to really take advantage of these drawdowns? The trouble is, because we have no sense for how long this conflict is going to last, how it might broaden, and what the reaction function might be from countries, not just in the Middle East, but around the rest of the world, it feels like we should kind of sit on the sidelines for a moment here, observing price action before we take moves.
There's also a sense that if the Fed or the ECB or the Bank of England starts to hike rates in response to the inflationary shock, that will also start to change the equation, given the backdrop of growth that isn't in recession, but isn't exactly going gangbusters, and there's a feeling that financial conditions have already been tightening. What kind of risk does that pose, given that most people's base case was 1 or 2 rate cuts this year from the Federal Reserve?
Yeah, that's right. And Lisa, you might remember, actually, we've been out of consensus a little bit in talking about how sticky inflation has been. Honestly, I thought people were going to throw tomatoes at my head in the fall when I was first talking about this, you know, with our clients and basically saying, hey, look, we're seeing many components of both CPI and PPI and PCE moving at a rate year over year that is uncomfortable and is likely to keep overall inflation levels elevated. And I joked for some time, hey, if I was a FOMC voter, it's not clear to me, frankly, that I would vote for rate cuts over the course of the fall. Now we're in a situation where we already had that, price pressure from goods. Obviously, we'll be watching CPI very closely this week, and services inflation had stayed sticky, and now we're going to have this shock. I think it's very fair for the market to be asking these questions. What is the next policy move from all these central banks, and will there have to be a reaction? But we know these interest rate moves are blunt tools, right? And I'm not sure that raising rates alone is going to really change the supply picture that we have from oil that's leading to higher prices. So I'm not banking on a whole bunch of hikes at this point, but I do think it's fair for people to take cuts off the table.
That's the difference, and it's still key. Kate, thank you. Kate Moore there of Citi Wealth. What will central banks do? I don't know, but people were comfortable with the idea that cut interest rates a few months ago.
And right now, that comfort is gone. Not only that, but you're also looking at the potential for rate hikes being priced into the ECB. I keep going back to this Deutsche Bank note because it's talking about how hawkish policy response is one way you get that huge drawdown in risk assets, because ultimately that has a material effect on projected growth ahead, and that is not something particularly the euro area can afford.
In anticipation of that, financial conditions are tightening right now. Don't need to wait for the hikes. It's happening right now. You can see it in the yield curve across Europe, in the UK, in Germany, and elsewhere.
And that's the reason why it's really going to be a conundrum, because it's going to already have a self-fulfilling prophecy on the expectation of this. They're also tightening from credit perspectives as well because of some of the concerns about private credit. So it's kind of a double whammy there.
Peter Shea of Academy with this to say this morning: the downstream problems are real, especially in Asia. Gasoline, diesel, jet fuel, all the chemicals. Lots of people are discussing exactly that. And he goes on to say, as facilities get taken offline, the restart to fully operational is weeks, not days. And finishes on this: things like a global SPR release might help. They're not a solution. And we've all got to have that in mind at 8:30 Eastern time, of course, about 47 minutes from now, when these finance ministers get on the phone and discuss the potential of releasing reserves.
It all comes down to when you get an off-ramp to stop the conflict and to get ships going through the Strait of Hormuz once more. It's not going to be putting a Band-Aid on it that's going to really get people that much more comfortable.
Crude this morning higher by 12 to 13%, around 105 on Brent. Let's get you an update on stories worldwide. Here is your Bloomberg brief. The US ordering non-essential American diplomats diplomats in Saudi Arabia to leave the country. The move marks Washington's first ordered departure since the war with Iran began. It follows the death of a U.S. service member who was wounded in an attack on U.S. troops in Saudi Arabia on March 1st. Elsewhere, Australia's government is assessing a request from Gulf nations for defensive military support against attacks from Iran. The Foreign Minister, Penny Wong, declining to say exactly what Australia might provide and pledging transparency if a decision is made. And finally, the New York Times reporting federal authorities searched 2 homes in Pennsylvania after a homemade bomb was thrown outside the New York City mayor's mansion over the weekend. 2 suspects are in custody after the device was thrown by counter-protests to an anti-Islam demonstration. City officials are expected to update the investigation at 9 a.m. Eastern later this morning. And that is your Bloomberg Brief. Up next on the program, mitigating an energy crisis.
So you don't think Navy escorts of vessels are necessary?
There could be, the early tankers probably will involve some direct protection by the U.S. military, but most important is to defang their ability to threaten these ships.
We'll get into the commodity market next with Ellen Wold of the Atlantic Council, live from New York City this morning. Good morning. You're watching Bloomberg Surveillance.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at the front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
So this is how the pieces of the puzzle are coming together so far this morning. If you can't get the energy out of the Strait of Hormuz, and you're starting to bump up against storage capacity, you cut production. We've seen that from Iraq to Kuwait to UAE, and now this morning to Saudi Arabia. G7 finance ministers getting on the phone in about 42 minutes from now to discuss an emergency release of energy reserves. With that in mind, crude higher by double digits. Brent 104, WTI 102. In the equity market, stocks softer, lower. We're down across the board on the S&P, negative 1.1%. I mentioned the airlines. They're in a bear market. The cruise lines, hammered, down 20% since this war started. Norwegian, Carnival, down across the board.
A lot of the transportation sector did not hedge against oil as time went on because those hedges proved costly. So there is a rush to hedge against this. It's a 1-2 whammy. On one hand, people don't want to travel. On the other hand, oil prices skyrocketing, increasing input costs. It is not a good recipe.
See it in stocks, you see it in bonds. Check it out. Bonds down, yields up across the curve. Tame moves, mild moves, muted stuff, stateside relative to what you'll see abroad. We're up 3-4 basis points at the front end of the US curve. The front end of the UK curve, yields are higher by 24 basis point. Never mind 10s, check out 2s, and that is about monetary policy, and monetary policy is on the back foot.
Right now, the UK and the Euro, the continental Europe, really are facing a much more severe energy shock and single mandate central banks that are going to have to respond to inflation. Raises a question, how do you deal with both the demand destruction coming from the oil shock with the idea that fiscal appetites are going to have to go towards supporting people's bills at the same time that you have central banks tightening financial conditions? Again, this is not a recipe that bodes well for risk assets, which is the reason why you've seen European stocks have a full correction since the February highs.
Let's talk about energy. Under Savanas this morning, mitigating an energy crisis.
I think in the relatively near term, you're going to see their capacity so low that we'll see more normal ship traffic return to the Strait of Hormuz.
So you don't think Navy escorts of vessels are necessary?
Yes, there could be. The early tankers probably will involve some direct protection by the U.S. military, but most important is to defang their ability to threaten these ships.
So here's the latest this morning. Oil prices surging past $100 a barrel. The effective closure of the Strait of Hormuz forcing Gulf producers to reduce output. Alan Wald of the Atlantic Council writing, it is within the U.S.'s power to mitigate the emerging energy crisis. There is still time to prevent it, but the clock is ticking. Ellen joins us now for more. Ellen, this feels like a crisis already. What would you call it?
Yeah, we're absolutely in a full-blown energy crisis. I think that the initial stages of it, if tankers are supposed to wait until they've neutralized every Iranian drone, we're going to be here for a long time. I think they need to take some steps to get tankers moving, even if they haven't completed the military missions and destroyed all of the ballistic missiles and all of the drones. And there are steps they can take to help get this going, including military escorts, but also reroute the shipping lanes towards the UAE and towards Oman and away from Iranian waters. That would make it more difficult for them to actually get the drones there. It would make it easier to detect them. I mean, these are some fairly simple things that they could do, to help make shipping less dangerous.
And then at 8:30 Eastern Time, there's going to be a call with G7 finance ministers. They're discussing releasing reserves. What difference is that going to make?
I think it will help with oil prices, but understand, countries that are members of the IEA, they are required to have about 90 days worth of oil imports stored. Some countries have more. Japan, for example, has, 250 days worth of oil stored, but this is going to deplete their reserves, and it's not necessarily going to help countries that don't have reserves. I mean, think about non-G7 countries. Think about Pakistan, for example, and other more emerging markets. They don't have these reserves. India, for example. So while releasing the reserves may help take some of the pressure off of what European countries and some more advanced Asian economies are facing, it's not going to necessarily help these other countries if they can't get oil out of the Gulf either.
Ellen, you've studied the Saudi leadership for a long time. You're intimately connected with the family and the different political shifts. Do you have any insight into how on board Saudi Arabia is, as well as the other Middle Eastern nations, with this effort by the United States? Is the U.S. still considered an ally in this particular effort?
Well, I think that the U.S. considers Saudi Arabia a strategic partner in general. Saudi Arabia absolutely thinks of the U.S. as probably more than a strategic partner, though they can be a little bit upset when the U.S. Doesn't necessarily see them as close an ally. I do think that Saudi Arabia and the UAE and all of these countries that have been physically bombarded by Iran are pretty much united, in this effort. But I do think that their patience, as this military effort kind of dredges on without movement of tankers in the Gulf, their patience is going to wear thin, and they are going to maybe put some pressure on the U.S. to either wrap things up or help them get things moving. There are things the U.S. can do, and it seems that they're not jumping on it. They don't see it as immediate concern as these other Gulf countries do. Remember, oil and gas, that's their livelihood for the most part.
Ellen, I just want to break in. You said that there are things that they could do. Like what?
Well, I do think that military escorts are the first. They can also work to reroute the shipping lanes. Like I said, the current shipping lanes take tankers into Iranian waters about 10 miles away from the shoreline. That makes it incredibly easy for Iran to send drones at ships. That's not the only place ships can go in the Strait of Hormuz. It's 30 miles wide. They don't have to be right up next to Iran. And through a coordinated effort, they can move those shipping lanes closer to the UAE, closer to Oman, and help ships have some buffer between Iran and where they're going. And that could happen. That's entirely feasible. It just seems like no one's making the effort to get it done.
Ellen, this is a tense time. Can we finish on a lighthearted question? Are you on a cruise or a luxurious tanker?
I'm not.
Where
I'm not on a cruise. No, I'm actually in a hotel in Fort Lauderdale.
Okay, there we go.
Looking at the ocean.
Just seeing the ocean in the background, trying to figure it out. Just seeing how seriously you were taking today's interview. Ellen, thank you. Ellen Wald at the Atlantic Council. Ellen would fly in on a chopper to a tanker, right? Do it live.
Completely. I'm doing some on-the-ground research, and right now things are tense. Things are stable in this particular region, but over there, a tanker is, look, that was an incredible backdrop. Should we all be so lucky?
Yeah, I know. Things are very tense this morning, up by 12% so far on Brent, 104, WTI around 102. Coming up next, we'll catch up with Savita Subramaniam of Bank of America. We'll speak to the former Kansas City Fed President Esther George, Sarah House of Wells Fargo, Alicia Levine of BNY Wealth. With futures right now, negative 1% on the S&P 500, and bonds worldwide selling off. Bonds down, yields higher. This 2-year in the UK higher by 24 basis points. Live from New York City, the third hour of Bloomberg Surveillance up next.
Would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York, and beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know. What he doing? Because I never watched the movies. I was traveling the business. But of course, after, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
In case you missed it on Bloomberg Deals.
This year, we enter 2026 again saying this is going to be the year of M&A, and then there's this big AI disruption. Can this year be saved? Is 2026 going to be the year of M&A returned?
If you look at the market and what it's trading at, forward earnings, it's very, very high by historical standards. So it's hard to do deals other than all stock deals. And there's also some volatility in the market.
Don't miss Bloomberg Deals live every week.
In case you missed it, on the Pulse.
What can we expect in terms of M&A? Is there something that you want to get rid of, or are there targets that you'd like to acquire in the next 6 months to 12 months?
We are in a period of execution. It is very important that Beauty Reimagine, we are at the beginning of this journey. The first year we delivered on our promises. The second year for me is about now accelerating the growth and making sure that we are simplifying the ways of working. We are rebuilding profitability, but at the same time we are looking at our portfolio. So we have, and I've been very public on that. Yeah. We are looking at the portfolio, and we will always be part of the M&A discussion. M&A is not only about buying something new, it's also about incubating new brands. And we are incubating a lot of new brands as part of like DCM or taking minority investment. One of the last one was Zinu, a really fantastic brand that we've taken a minority stake in Mexico.
Don't miss the Pulse, live every weekday.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The market has been driven by what's happening globally.
We could break out to the low side on equities.
Broader risks to energy supply have to be monitored and likely priced.
Despite this jump that we've seen in oil, we are going to have that backdrop continuing around earnings growth.
The underlying fundamentals are still pretty positive, and people want to own this equity market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. In the price action, your scores look like this. Well off session lows. We were down by something like 2% on the S&P overnight. Now down just 1%. On the Russell, down by 1.9%. In the commodity market, these moves right here, pushing 120 overnight on Brent. Brent back to about 104, still higher by 12% after gapping higher big time through last week. The main event now for us in the next hour, 8:30 Eastern Time. There is a call with G7 finance ministers discussing releasing emergency energy reserves to do something to offset a major rally in energy prices.
This has been done about 5 times before, including twice after the 2022 invasion of Ukraine by Russia. A question of how much this will actually do when it comes to lowering oil prices, given that ultimately this is a supply shock. And some people are saying the worst supply shock and supply chain disruption that we've seen in the oil industry going back in modern history. I mean, there really is a question of, can you really offset this just simply by opening a small tap?
Think about the last few days. The escalation is increasing, not decreasing. And what you're seeing in commodities right now, the output is being cut. It's not bouncing back. And you can look at the headlines of the last 1 hour or so. Saudi Arabia cutting output. This headline just moments ago. NATO intercepting ballistic missile that entered Turkish airspace. That does not sound like any kind of de-escalation to me this Monday morning.
It's dragging more participants in, right? The fact that NATO, this is, I believe, at least the second intercepted ballistic missile targeting Turkey. A question of how far this can go and what the off-ramps are. Some questions to be answered. Are some of these oil-producing nations turning off the taps, or are they just limiting production? There is a difference in terms of weeks versus days to turn it back on. Also, can you do more to try to get the shipments through other channels, like Ellen Wald was just saying? A question here, I was looking at our Top Live blog, and top news, one Saudi Arabian tanker made it through the Strait of Hormuz. The fact that that was news gives you a sense of where we are.
I will take it at this point, right? Given what things have been developing and which direction they've been going in over the last week or so, we'll take that at this this point. Look at the European equity story. Real underperformance. We've got the Euro Stoxx 50 down by 1.8%. You've got the underperformance in Europe and the European bond market as well. I've talked about this repeatedly throughout this morning. We're pricing in tighter monetary policy. UK yields higher by 20 basis points at the front end of the curve. Twos right now, surging, and you see that across the curve in Europe.
There is a profound inflationary shock, and people are expecting monetary policymakers to potentially have to respond to that with even 2 rate hikes this year from the ECB. The Federal Reserve still pricing in no hikes, but definitely pricing out some of the cuts that had previously been priced in. At what point does that add insult to injury at a time when there already is demand destruction coming from oil prices?
Stocks on the S&P this morning down 1%. The opening bell about 87 minutes away. Coming up this hour, we'll catch up with Savita Subramaniam of Bank of America as the equity market sell-off deepens. We'll speak to the former Kansas City Fed President Esther George with the central bank facing growing inflation fears, and Alicia Levine of BNY Wealth with oil prices surging to 4-year highs. We begin this hour with stocks sinking as the spiking crude is rattling global markets. Savita Subramaniam of Bank of America writing geopolitical shocks usually mean buy the dip, but with what? Cash is depleted. Key risks to the S&P index are less sideline cash and higher allocations. Savita joins us now for more. Savita, good morning.
Good morning.
Are you saying things are pretty fragile right now?
They feel like it. I mean, I don't know if we're setting ourselves up for a really deep bear market, but I do think that this doesn't feel like the beginning of a great year. And in fact, it kind of rhymes with 2022. Remember the beginning of 2022? Everybody was really bulled up. It was going to be a fantastic year for equities. And then we had war breakout, and here we go again. So I think it's just another, it's another wrinkle in the liquidity story. I mean, we've got this year where we're still penciling in Fed rate cuts, and this is in the backdrop of massive inflation reappearing. So I think that right now doesn't feel like the setup that we were expecting at the beginning of the year.
You're not super bullish at the index level, but has the sector preference shifted given the shock in energy over the last week?
I think so. We're overweight energy, which I think that's likely to continue to work. But we have to be nimble there. And then, financials is one sector where I worry about just the credit cycle hitting those stocks and potentially just private lending, being more contagious than we're expecting. But, we're overweight consumer staples, and that's one sector I worry about a little bit. One of the reasons we upgraded was we thought that the administration was going to be focused on affordability and quelling inflation, and that seems to be the opposite of what's actually happening. So I think that that's one sector we need to really watch carefully, because typically is hurt more by inflation. We're underweight consumer discretionary. I'm happy with that call. I think the consumer is not going to do as well this year in terms of spending on wants over needs. So I think that we're at a point where you want to play the stagflation playbook. Little known fact, one of the best performing indices during the 70s stagflation was large cap value, which I've liked for a really long time, and I think it's almost more reason to
Hold on a second. Why do you think this is analogous to more of a 1970s style stagflationary shock?
Well, okay, look, I mean, maybe it's not perfectly, everything rhymes. So I think part of what we're seeing now is an environment where the consumer might be struggling a little bit. We're going back to more of a manufacturing economy rather than just tech and asset-light companies. And we have some inflation surprises. I don't think we're going to see, Volcker-like inflation, but I do think that we are in an environment where the surprise is that inflation is moving in the opposite direction. Rates are moving in the opposite direction than folks were expecting this year.
You also said that cash is depleted.
Yeah.
Can you explain, given the fact that people would look at the money market funds and say, well, there still is almost $8 trillion there.
That's true.
What do you mean when you say that?
So, you're right. The money market, there's still $6.5 trillion and close to $7 trillion, but I think that money hasn't really moved despite the fact that the Fed has been cutting interest rates. So I don't know what gets that money to flow back into the market. Where we do see depleted cash levels is in Mutual funds, if you look at mutual fund cash balances, institutional investors are now at the lowest levels we've seen in the history of our data. And I think it's because they were forced into the market because of all this, great stuff happening in 2025. And on top of that, they have big outflows last year. So they don't have that cash cushion to add exposure on the dips. And that's what I worry about is, geopolitics by the dip. We've all heard it. We write about it every time this happens, but I don't see a lot of liquidity on the sidelines today. Even individual investors are, increasingly more bullish than our advisors and our surveys. So I think that it's a really unusual time in terms of just kind of catching up to this bull market. 2 years ago, everyone was expecting a recession. Today, boom, that's the consensus call, boom economy. So, I wonder about expectations versus reality this year.
You've written about this. I want to ask you this question. How have private-public market strategies evolved in the last few years? And as private market money increasingly looks a little bit locked up and tense and fractured, pick your word, what does it mean for the strategy to public equities?
Yeah, well, I think that's one kind of technical risk to the S&P index is the fact that this is the most crowded ticker in the world. And if you look at asset owners, they've basically legged into owning private equity and S&P index funds. They no longer own stock pickers or fundamental investment portfolios. They're either in the index or in private equity. And if anything happens that problematizes your returns or your ability to sell your private portion of your portfolio, you're going to be a forced seller of the S&P index. And if everyone's a forced seller of the S&P index at the same time, how liquid is it, right? These are the liquidity scares we've seen in the past. And I don't see this as a 2008 style liquidity crunch, but I do think there are pockets of real crowding that could get shaken up.
Are you seeing signs of that emerging right now, or is that just a risk on the horizon?
We're seeing it happen maybe slowly, quickly on certain days, but I think you're seeing it with tech, with mega cap tech, long duration, the really crowded growth stocks in the S&P 500 have sold off pretty demonstrably, even though their earnings have been okay. So, it's kind of what the setup was. Super high expectations. These stocks are still delivering, but they're not necessarily crushing expectations as much as we saw. So I think that positioning is getting shaken out a bit. But when you look at other areas, like just the S&P overall, I think the biggest risk is we haven't seen a down market with like a protracted down market. We've seen a couple of fast bear markets, but there has been no question for investors that buying the index isn't a good idea, right? It's always been a good idea. Every year you've wanted to buy the index. What happens when the index doesn't do as well? I think that could breed outflows. It's a new theme that investors aren't necessarily expecting.
Can I just finish by gauging sentiment through your conversations with clients?
Yeah.
How much pushback do you get to this pitch, and has that changed as the weeks have progressed?
I think that now we're getting more buy-in, but at the beginning of the year, I think there was a lot of bullishness on tech. There was a lot of, why bother buying anything else if tech is the growth story still? So I wonder if that buy the dip mentality will manifest itself in tech. That's where I see the biggest appetite to add exposure, and it's kind of like post-2000, right? After March of 2000, you saw these little rallies in tech because folks were like, oh, you got to buy it on the dip. And then it took maybe a couple of years for investors to give up.
Savita, always good to see you.
Great to see you.
Thanks for being here. Thank you. Savita Subramanian there of Bank of America. Speaking of tech, I don't think we've mentioned it. I think software was up every day last week. IGV, the must track. Software ETF at the moment.
Yeah, people seeing at least something that they thought might be undervalued and was sort of independent from the oil shock. The conversation you guys were having about the structure between private equity being lock up and sell what you can, we're seeing that in gold too, right? The fact that gold prices are down, it's sell what you can. And it gives you a sense that there is some sort of liquidity mismatch right now going on that speaks to potentially a broader structural readjustment.
One more dimension as well, maybe you can explore this tomorrow, but sovereign wealth funds, particularly those in the Middle East. I wonder how much pressure is going to be on them in the coming months if this continues. If you can't sell the energy, if you breach in storage and you have to cut production, what are you going to monetize?
Yeah, are you going to have a force majeure and say, maybe I'm not going to pay for that project in Tennessee? And that's something that the Financial Times has been reporting on, that potentially a number of countries in the region might pull back from some of those commitments.
Stocks this morning down by about 1% on the S&P 500. The opening bell about 1 hour and 17 minutes away. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg brief. Iran naming the son of the assassinated Ayatollah Ali Khamenei as its new supreme leader. State media reporting the 56-year-old winning a decisive vote from Iran's Assembly of Experts. The choice was quickly criticized by the president, Donald Trump. Elsewhere, the U.S. ordering non-essential American diplomats in Saudi Arabia to leave the country. The move marks Washington's first ordered departure since the war with Iran began. It follows the death of a U.S. service member who was wounded in an attack on U.S. troops in Saudi Arabia on March 1st. And finally, the New York Times reporting federal authorities searching homes in Pennsylvania after a homemade bomb was thrown outside of the New York City mayor's mansion. The incident occurring at an anti-Islam protest. Counter-protesters were accused of throwing the device, which failed to detonate. City officials expected to give an update on the investigation at 9 a.m. Eastern Time. And that right there is your Bloomberg brief. Up next, the morning calls plus the former Kansas City Fed President Esther George as the central bank is facing growing inflation fears. That conversation just around the corner, live from New York City this morning. Good morning.
This weekend. Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
I think we're still at peak uncertainty on tariffs. So in that sort of context, now you throw in the dynamics with higher oil prices, that really changes the outlook for headline inflation. So the Fed is going to be very, very focused on what happens on the inflation side while paying attention to the labor market, but I think inflation is going to take priority.
That was Sabeta Rajappa of SocGen, following a sell-off in the global bond market following a major move in crude. As we count you down to the opening bell, equities declining, but off the lows, well off session lows, down by 0.9% on the S&P, on the Nasdaq, down by 0.9. The underperformance on the Russell down by 1.5. Much of the research I've read this morning as expected. This a little different from Mike Wilson of Morgan Stanley. We think we're closer to the end of this rolling correction than the beginning. We remain constructive over the next 6 to 12 months. The pace of increases in crude and the dollar will determine how long volatility persists, but U.S. equities are in a favorable position versus their international counterparts.
Yeah, Ms. Love Masteka over at JP Morgan reiterating that that and having a similar view this morning, saying that right now there are areas that look oversold and people should maybe start buying. A question of whether this is a U.S. phenomenon or more broadly, if this is something that people can engage with the expectation that this will be short-lived. Again, we keep going back to the timeline and how crucial that is.
What did we talk about last week? And it wasn't a judgment about one group being wrong and one group being right, just the difference between how the equity players were talking about this moment and the commodity experts. The equity players were waiting for that buy the dip moment, conditioned by the experience that when things get tough, the president backs away. The commodity players were looking at real stress and downstream effects of what's happening through the Strait of Hormuz, what will happen to production and what's developing in Asia with the refiners over there under intense pressure at the moment. And at the moment, if you were going to pick on one group that's been right and another group that's been wrong, at the moment, the energy experts have absolutely nailed the risk here, and the risk is materializing.
Yeah, and now it's just a matter of how long this goes on. And you mentioned Jordan Rochester from earlier this morning. And just to repeat what he said, this may be a war, but it's also perhaps the biggest energy supply logistics crisis we've ever seen in modern history. If that is prolonged, then it will start to affect risk sentiment. And that's what people are waiting to see.
Futures just off session highs were negative by 0.9% on the S&P. That's the price action here in your morning calls. First up, TD Cowen cutting its price target on United Airlines and other major carriers, noting it's hard to envision margin expansion this year without a rapid decline in energy prices. That name down another 2.5%. Your second call from Barclays lowering its price target on Oracle to 230, expecting margin pressure from upfront costs in the AI build-out. And finally, RBC Capital downgrading Dow to outperform, believing market tightness could lead to a margin uplift. The latest on Dow there, I should say, was an upgrade to the stock from RBC Capital. Dow in the pre-market higher by 0.2%. Let's turn back to our top story. Surging oil prices sending bond yields higher across the globe. Investors raising bets central banks will keep rates on hold. The former Kansas City Fed President Esther George writing, with oil prices surging over $100 a barrel, inflation is sure to move higher. The Fed will want to look through this price pressure, but it will likely stay their hand for entering rate cuts or entertaining rate cuts. The former Fed President joins us now for more. Esther, welcome to the program. Let's just get to that statement and your experience too. I always want to lean on that. You lived the 22 energy shock. Can you frame for our audience the similarities, the differences between this moment and that one?
Well, good morning, Jonathan. Yeah, I think the uncertainty that we've talked about for some time is one of the characteristics here that we have to remember. We have been relying heavily on a consumer that has faced significant price shock coming out of the pandemic. This is a consumer that has felt the impact of the tariffs, and they also have felt the uncertainty associated with a job market that has shifted significantly. And so when we rely on the consumer, as we do here in the U.S., that becomes a real focal point, I think, for trying to understand. Now we have added a new shock, this gasoline price at the pump. We understand that diesel prices will be affected, which of course will feed into the cost of transportation and other things. And I think it creates a real point, not just of uncertainty, but I think heightened risk around consumer spending and growth as we look ahead.
When you were at the Federal Reserve through the 22 shock, household balance sheets were arguably much stronger and the labor market was much tighter. Do you think differently about how this price shock in the energy market will work its way through the economy?
Yeah, I think you hear a lot about the K-shaped economy, and I think that will come into the fore now. We have really been relying on a group of consumers that can power through this. But you can only stress weaker household balance sheets that have, again, had the benefit of having jobs. That has been really, I think, one of the tailwinds here. But there is a breaking point, I think. And so I think the Fed will have to be particularly focused on thinking about how that consumer is going to be positioned today to be able to look through this kind of additional price pressure.
Esther, that could go one or two ways. On one hand, you could make an argument for easing policy to try to give lower income consumers a better scenario, a better backdrop to meet this price shock. On the other hand, you could say the Fed has a role to play to combat inflation. Which side of the equation do you fit on?
Well, the Fed has been focusing on the labor market and on weakness at, I think, the risk of inflation even before this oil price shock. Now I think the Fed, and you hear them increasingly talking about the risk of inflation, they have allowed it to extend out for a period of time that now puts them in a very, very difficult position, I think, in understanding how they're going to weigh their policy risk. Whether they continue to think they are as well balanced coming into this March meeting, I think is going to be something to listen for here, because you are going to have headline inflation for sure. We'll be getting more numbers in this week to see that. And I think the calculus around keeping those inflation expectations in the long run anchored is going to be a point worth talking about.
Rates traders are pricing in rate hikes over at the ECB as well as the Bank of England. Do you think that as this progresses, if it does continue for a longer period of time, that that's going to be a scenario that's reflected in how the Federal Reserve is being priced?
Well, I think obviously a little bit different for the U.S. to think about that and the Fed as it contemplates its updated dot plots. But I do think it stays their hand on being able to suggest that they are looking to rate cuts, but maybe in a pause mode. I think this kind of environment will really remind them that inflation target has to be credible, and they have to keep focused on that, even if their tools right now are in conflict. They are looking at a job market that may be stable, but has shown signs of weakness, while they have been looking at inflation that continues not only to be persistent, but as we've been talking about, is now going to show some upward pressure.
Esther, would you describe this labour market as stable?
You know, I consider it stable in the sense when you step back and look at the unemployment rate, which is our best gauge, I think, of how that labor market looks. It does mask what is underneath that surface of a lot of moving parts. I think we're beginning to see the real impact of some of the immigration policy hits here. We're beginning to see the uncertainty, I would argue, play out, where businesses are happy to hire for positions they feel confident about, but they're not going to move hard and fast relative to the growth levels that we've seen. So I think it's a tentative labor market, in my view, even though we continue to enjoy a relatively low unemployment rate.
Esther George, always appreciate your time. Thanks for jumping on for us. The former Kansas City Fed president, an individual who lived the energy shock of 22 at the Federal Reserve, talking about this Federal Reserve and a meeting that takes place on the 18th. That's a week away next Wednesday. That feels like a lifetime away. And if this conflict is still ongoing, with no sign of an off-ramp or de-escalation, all bets are off for the next 9 months.
This is a reason why CPI and PCE, core PCE, two metrics that are coming out later this week on Wednesday, and then after that, Friday, is going to be really important to set the tone. If those are hot readings, does that leave the Fed in an even worse position given the oil price shock that we're seeing unfold?
So we've got 30 minutes that you're going to want to track. Sarah House of Wells Fargo is going to join us in just a moment, looking ahead to the inflation data that Lisa's talking about. Plus, Danny will have your morning move as defense names rising in the pre-market. Lockheed Martin is up 40% so far year to date. We'll get into that in just a moment. Plus, we'll track a G7 finance minister's call on releasing energy reserves. That's next. This is Bloomberg. case you missed it, on Bloomberg Open Interest.
We're going to be an affordable luxury item, but if you look at it, we're priced pretty darn competitively. Pricing is one of those things that will always be the last lever that we'll pull. There are times where you do have to put some pricing into the business, so we'll see how things evolve. If we need to do it, we'll do it very strategically, and we'll try to do it as minimal as possible.
Don't miss Open Interest live weekdays.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It has been a bruising session worldwide. Equity futures stay side negative 0.8% on the S&P 500, on the Nasdaq down by 0.9, on the Russell down 1.4. On the Euro Stoxx 50 in Europe right now, negative 1.5%, and in Asia, very exposed to the energy story, oil and oil product. The Nikkei in Japan down by more than 5%. The Kospi down by 6%. Off the back of these moves, Brent crude 102.85. That looks like a big gap higher from Friday's close, because it is. We're higher by 11%. It is nothing compared to where we were trading overnight.
Yeah, some 29% higher, $120 a barrel we were talking about earlier in the trading session before a meeting of international leaders coming together to decide whether or not to release some of their strategic reserves that cap how much prices were rising. The conclusion of that just potentially even moments away.
That call is about to commence, and when we get the headlines from that call, we'll bring them to you as we count you down to the opening bell. About 60 minutes away. Let's get you some morning movers. Danny has more. Hey, Danny.
Hey, John. Another part of this world very exposed to energy prices are airlines. Those United and Delta down at least 2.25% this morning. The entirety of the index has now entered a correction as of close on Friday, down 22% from their peak last month. Jeffrey says that for every 5% rise in jet fuel prices, these two companies are going to see a 5 to 10% deterioration in their EPS. Deutsche Bank calling this an existential threat for the airlines. They're not the worst performers, though. The worst performers in the S&P 500 over the past week since war broke out are the cruise line operators. They're dealing with the same dynamics, higher fuel prices and concerns about the consumer. Carnival down another 3% this morning. Norwegian Cruise Lines, that's down 2.5%. Now, the sector that's been benefiting, again, this is to no surprise, are the defense sectors, energy as well. But taking a look at defense this morning, RTX and Northrop Grumman up 1.8% in the pre-market, John.
Danny Berger with the update. Danny, thank you. Looking forward to the program. Danny and Matt Miller guiding you through the opening bell in about 29 minutes' time. Equity futures, negative 0.8%. Busy week on deck, headlined by CPI data on Wednesday. And if this conflict continues, that CPI data could look very different in the next few months. Bloomberg's Mike McKee has more. Good morning, Mike.
Good morning, John. It is inflation week. You guys were talking about that with Esther George, and there are a couple of inflation numbers that are important. CPI we get on Wednesday, but we start today with the New York Fed's expectations index. What do people think about the possibility of oil prices in the future? Maybe it's too early, because when these surveys wrap up, we hadn't quite gotten into the war the way we have, but it's something to watch. Also, NFIB has inflation numbers in it, the small business folks on Tuesday. Mentioned CPI on Wednesday. Remember, it carries with it as well some distortions from the government shutdown that may make it come in lower than it otherwise would, and it probably isn't going to pick up anything from the war. But Thursday, we get jobless claims, trade, and housing starts. Jobless claims, the one everybody watching, and then I put this as a separate one, Friday, because Friday's huge. Friday, we get PCE inflation, and that's the one that matters for the Fed. We also get income and spending, durable goods, GDP, second revision, and Michigan sentiment. Now, that's going to be something to watch, because That will capture part of the war, not a whole lot of it, but it will capture part of it, and we'll see what Americans think about not only inflation, but about their overall mood and whether it has really hurt them. The good news that I have for you, though, is that this is the blackout period, and we have no Fed speak. Now until the 18th, we'll be able to sit back and just watch the data without worrying what the Fed's going to do. And I know you were talking with Esther George about this, but the Fed's not going to do anything next Wednesday because it's going to be too early for them to have enough data. But after that, as you said, all bets are off.
Mike McKee, I wonder if that's better news for them than it is for us at the moment, the fact they're in a blackout period. Michael, thank you. Michael McKee, go back to their last statement at the end of January. Available indicators suggest that the economic activity has been expanding at a solid pace. Job gains have remained low, and the unemployment rate has shown some signs of stabilization. Inflation remains somewhat elevated. Can you copy and paste that next Wednesday?
I think if they do, then they'd be in a vacuum with a very different view of the world, because since that report, you've seen 92 jobs eliminated in the latest payrolls report. You've seen inflation expectations in the short-term spike on the heels of oil prices going above $100 a barrel. The scenario looks completely turned on its head to the worst case for them, which is stagflationary shock.
Speaking of turning things on its head, this headline just crossed. I want to bring it to you. Zelensky, Ukrainian leader, 11 states have requested Ukraine's security support. How quickly that story has reversed?
Well, Ukraine has had the opportunity to experience modern warfare. And when I say modern warfare, it's about dealing with drones and drone warfare. There has been a mismatch in pricing between drones that cost a couple $100 to produce and missiles that cost $1 million to produce, blowing them up. And one of the things that the Ukrainians have done is to figure out ways to disable some of those drones. And so they're helping the United States with their efforts. So how much the tables have turned. What this does for the Ukraine-Russia conflict is beyond my ability to really game out scenarios. So on one hand, you've got Ukraine in a better spot with the United States and with other allies. On the other hand, Russia suddenly can sell its oil. So, I mean, how do you square this to understand exactly where we are in that equation?
It's really, really complicated. That headline just catching my eye, crossing the Bloomberg right now. Let's turn to the main event this morning. There is a call set to take place any moment now between G7 finance ministers discussing the potential to release energy reserves as crude overnight blasted through triple digits and approached 120. Bloomberg's Tyler Kendall joins us now for more. Hey, Tyler.
Yeah, hey, John, good morning. Well, we're waiting for this call to commence, and reportedly it does have the U.S.'s backing as we look to see if there's any potential to bring it down and boost the supply of oil. Now, we know that the U.S. would be looking for some ways to help American consumers as the price of oil trickles down to retail gasoline, and the White House has been playing defense on trying to reassure Americans when it comes to the health of the economy. We heard just last week from Secretary of State Marco Rubio that President Trump would convene a council, including his energy secretary and the Treasury Secretary, on ways to help keep domestic prices low, but we haven't gotten an update from there. There had been reporting that the White House was potentially going to ask Congress for a gas tax holiday, but that hasn't emerged either. And then we've seen some other points put on the table, including President Trump last week floating the insurance for those ships crossing the Strait of Hormuz, also a potential naval escort. And then lastly, as you were just discussing, we saw that loosening when it comes to a waiver for India to start to buy Russian barrels. Importantly, people familiar with the matter tell us that heading into this meeting, John, some European nations are concerned that the U.S. is going to ask for a loosening on sanctions when it comes to Russia barrels, just as we're starting to see some of those severe impacts hit the Russian economy.
Brent crude this morning still higher, 102.65, but off-session highs. Tyler Kendall there with the latest. Tyler, stay close as we wait for some of those headlines to cross regarding that meeting, that conversation, discussion between G7 finance ministers. Sarah House of Wells Fargo joins us now for more. Sarah, all of a sudden it feels very different. But how much has changed for you and the team with your outlook following this move in energy?
Yeah, so I think a lot has changed. So certainly the inflation backdrop. So we get CPI later this week, but I think the February numbers are already old news. So we're looking for just the move we've seen already. If sustained this month, you could see gas prices close to $4 a gallon, and so you're talking about inflation close to 3.25%, 3.5% already in March and in April. So I think it's a big difference in terms of the picture of the consumer. So expecting that to be rather resilient this year with help from some of the tax cuts, but that benefit is essentially wiped out, I think, with some of the moves we've seen in oil prices.
A lot can change between now and March 18th. March 18th, of course, the next Federal Reserve meeting. But let's assume that meeting was today. Could they copy and paste that statement from January, or have things changed that much for them as well?
I don't think they could. I think they're going to have to downplay that idea about the stabilization that we've seen. I don't think it's completely gone out the window. If you look at where the unemployment rate is, it's back where it was in September, and you've seen relative to when they met in January, it hasn't moved that much. But I think where you're continuing to see the weak hiring backdrop, and still, if you look at unemployment on a year-ago basis, it's still trending up. So I think there's more reason for them to be nervous about the labor market picture. And then, of course, you have the inflation picture going the wrong way now. So hard to say that it's only somewhat elevated when you're going back up above 3% here imminently.
Sarah, this feels like a stagflation moment. This is something that a lot of people have raised. What's the Fed's stagflation playbook?
So the traditional playbook is to look through these negative supply shocks and focus on what's happening in terms of also the demand side. Think about, okay, if you raise the prices once, that increases the level, but that's not necessarily a sustained increase in inflation. The problem, of course, for the Fed is that they've had negative supply shock after negative supply shock, leaving us with inflation above their target for 5+ years now. And so I think they have to be a little bit more sensitive to that upward thrust on inflation coming from this, but it's really tricky given that I think the consumer is in a worse position than where we saw them back in 2022. So I think right now it's a wait and see game. I think they can still try to look through the spike in energy, but it's going to be harder to cut through, I think, just given that they do have that we have seen inflation elevated for so long.
Sarah, it's hard to get a handle on just how quickly financial conditions already are tightening, regardless of what the Fed does. And I'm talking about long end of the yield curve in the United States, in Europe, in the United Kingdom. I just wonder how much that adds stress to an already potentially fragile consumer in the United States, whether that alone is making you reassess what your growth profile for 2026 looks like.
Yeah, it certainly doesn't help if we see tighter financial conditions. I think where I'm more worried about is just that immediate inflationary pass-through to the consumer, where gasoline isn't one thing that they can easily cut back on. Sure, there's maybe some discretionary driving that you can see consumers pare down, but I think by and large that this is going to be a stress on their inflation profile. This is coming at a time when, if you look at income ex transfer payments, that's already in real terms close to flat over the past year. And so I think this is really the added strain on the consumer that I think is making it difficult for them to maintain that pace of spending that we've seen, especially given where markets are right now. I think there's some questions over how much of that boost from the wealth effect we'll get going forward compared to what we've had over the past year or so.
Precisely. Sarah, thank you. Sarah House of Wells Fargo. Energy bills were already going to be pretty steep, particularly in the Northeast. With this move, you've got the additional gas increase, gas spike as well on top of that. If you were hoping the tax refund story would contribute to a cyclical bounce, and I certainly was hoping that would be the case, those hopes have taken a hit with this action over the last week.
It's going to go to paying for how much it costs to fill up the tank, and this is where it comes to demand destruction. It might not happen as quickly because of the extra cash from this boost, but that won't go towards some of the consumer discretionary that a lot of people were hoping for.
If you are just tuning in, welcome to the program. We've got stocks set up like this with negative about 1% on the S&P 500. Not too dramatic given developments overnight, particularly in the commodity market. For Brent crude and WTI as things stand, we are higher by 11 to 12%, still triple digits, but about $17 off the highs overnight, which is pretty crazy.
It just kind of makes me wonder what people are looking at. They expect this to be short-lived, and they expect some sort of measure from releasing strategic petroleum reserves to sort of stave off any increase in pricing in the near term. Let's see if it sticks. Let's hear what we hear from this call.
The opening bout just around the corner, still waiting for headlines from that call with G7 finance ministers discussing the release of emergency reserves. In the meantime, let's get you an update on stories worldwide. Here is your Bloomberg brief. NATO defense is intercepting a ballistic missile fired from Iran that was heading towards Turkey.
It marks the second NATO interception over Turkey in just the last week. Turkish leadership already warning Iran against actions that could expand the conflict further. Elsewhere, the United States ordering non-essential diplomats in Saudi Arabia to leave after U.S. service member wounded last weekend died overnight, bringing the U.S. death toll to 7. Iran says more than 1,300 people have died so far. Elsewhere, the president not ruling out sending U.S. ground troops into the country. The administration saying it can achieve its goals in Iran without American boots on the ground, but refusing to take the option off the table. The president saying, quote, if we did that, they would be decimated. That is your Bloomberg Brief. Up next, we'll set you up for the day ahead, plus Alicia Levine of BNY Wealth drops by with oil prices surging to 4-year highs. That conversation up next.
Take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
What year did you start the company?
In 2013.
Who gave you your initial capital?
General Catalyst, Jim Breyer, and Excel.
And they made on their money?
They did well.
Well.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Geopolitics by the dip, we've all heard it, we write about it every time this happens, but I don't see a lot of liquidity on the sidelines today. Even individual investors are, increasingly more bullish than our advisors and our surveys. So I think that it's a really unusual time in terms of just kind of catching up to this bull market.
That was Savita Subramanian of Bank of America, not bullish at the index level at all, looking for something like 7,100. I say not bullish considering where everyone else is, looking for a move to 75 to 8K on the S&P. Last night felt like capitulation in the energy market.
Is this what capitulation looks like in the equity market, with futures down by 1% on the S&P, on the Nasdaq down by 1.2, on the Russell down by 1.8?
Yeah, we're about 4% from all-time highs. The answer is no. This is not what capitulation feels like, and part of the reason why is because even in the oil market, there is an expectation that this will be short-lived. This isn't going to go on for months and months. When that gets challenged, if that gets challenged, this picture is going to change.
Brent crude up by close to 13% in today's session after pushing 120 overnight. As we count you down to the opening bell, here's the trading diary for the week ahead. 4:30 Eastern Time, the President delivering remarks at the GOP members' issues conference. Look out for that. Tomorrow, earnings from Coles. Wednesday, CPI data. Plus, you will hear from the Fed Vice Chair of Supervision, Mickey Bowman, so look out for that too. On Thursday, Dollar General earnings plus another round of jobless claims and the U.S. trade balance. On Friday, core PCE, durable goods orders, plus UMich consumer sentiment, which if gas prices continue climbing at this rate, that could change very quickly.
It is a pretty direct correlation. Gas prices up, sentiment down. Watch that to be reflected in this survey.
Let's down our top story. The price of crude hitting triple digits overnight for the first time since 2022. Alicia Levine of BNY Wealth writing, markets are signaling a temporary supply shock, not economic or financial crisis. Our base case is volatility now, normalization later. Alicia joins us now for more. Alicia, good morning.
Good morning.
What's the path to normalization look like?
So I think you need more panic in the markets. So what you saw in the oil market early this morning at Brent up near 120, 125, as you point out, the S&P is down 2% from the all-time high. So oil up 50% in the week since the strikes, and yet the S&P down 2%. Even emerging markets and international down 7% from the high is not the capitulation. So when this military action was not over in 48 hours, right, and the market still has somewhere in the back of the mind that, the administration is going to cry uncle at some point, so this is going to be quick. I suspect at this point you're going to have to see that quick, sharp downdraft to get it out of the system with oil at 120, and then we probably move on. On the other side of this, you are in a well-supplied world on the energy side. So you have to get through this. Now, whether it's a week or 2 weeks, I would be concerned about 2 months. And then we would change our view here. We would change our view if this went on more than a month or so. Because we'd have to, because then inflation starts getting priced into everything, into food, into consumer products, and on the industrial side.
Then the story's changed.
And then the story's changed, because then you do actually bring in the Fed. But at this point, if you look at what's going on militarily, I'm no longer a military strategist, but
sure.
But the drones and missiles are down 80 to 90% from where we were Monday morning a week ago. So you now have this decentralization, which perhaps is annoying, but may not be as effective as we move on. So if you think back, are you in a place where 3 to 4 weeks from now somebody can claim victory? Probably. But again, this is about duration, and this is about time unknown. From here, we would assume normalization later.
At the same time, then do you see opportunities, or do you think it's too early to buy the dip like JP Morgan and Morgan Stanley are talking about?
So there's definitely opportunities here. I mean, the most fascinating thing is if you had reversion to the mean everywhere in every asset class and within the S&P as well. Gold is down 3% from this. The dollar is up 2%. Emerging markets down 7%. NASDAQ is down 1.5%. So when you think about what we came into by the end of February, we're serious underpricing of U.S. markets versus rest of world, and the dollar very weak. And then all of a sudden you get this reversion. Software is now up 15% from the lows. The semi-software comparison is now reversed. So you got reversion everywhere. I think there will be great opportunities here. I just think that the market hasn't quite priced in. If you're having like a panic in the oil market, you need to also have the panic in the equity market to say, okay, all in.
The reason why I'm asking this is because everyone's saying there will be. There will be.
That's the problem.
Right? So at what point, right? I mean, it's sort of this interesting thing, and yet it's not ever getting there, I guess, because people are all expecting it to be a great buying point. I mean, what is going to be the trigger one way or another?
I think you have to kind of probably get to 6,500 on the S&P here, which I think is probably likely, only because if we're keeping with energy prices over 100 for a week or two, at some point we're going to have a reaction to that. But again, we see it as temporary. Now, what's the risk? What I just said. Everybody thinks the administration is going to have to claim victory at some point if oil prices stay over 100 for long enough. And that the risk is everybody's expecting some sort of backtracking, and then of course you get some sort of financial contagion. We don't see it yet. We don't see it yet, but this is kinetic war. And things can change. We have not changed our asset allocation. We have not changed our view, but we are being very flexible in how we look at things.
Can I just finish on what is temporary? Triple-digit crude is temporary, $90 crude is temporary, $80 crude is temporary. Do you think we actually go back to where we were? That's really my question this morning. Even after a period of de-escalation, does this energy market go back to where it was, or has something changed because of this development, conditioned by the Chinese who got this right, who stockpiled energy for the last 12 months just in case something like this happened? Doesn't everyone else need to do the same thing even when this normalizes?
Again, this is about duration, right? What's your time frame here? On the other side of this, with Venezuela and Iran out of the sort of axis of evil, as it used to be called, you know, we're in a better supply.
Oh, you think this leads to a bearish outcome ultimately for crude?
No, I think it leads to a bearish for crude and bullish for consumers and bullish for industrial and bullish for markets overall.
So there is a moment where there is a tipping point.
There's a tipping point at some point. I can't tell you when that is, but you know, if you look out, let's call it a year, then we're in a better place.
Okay, Alicia, good to see you. Lots to think about. Alicia Levine of BNY Wealth. Not the only one who considers this moment that way, that ultimately things have changed and maybe they change for a more bearish outcome for crude compared to where we were before this conflict.
Well, and this is something even the president has raised himself, the idea that if you do have more stability in the region, should this lead to some sort of resolution, you actually have more production, and guess what? The U.S. is going to be producing that much more, because when prices stay above a certain point, all those oil rigs can start turning on the tap. So it's going to be an interesting dynamic with a lot of whipsaws ahead.
Of course, Jeff Curry of Carlisle sees it completely differently. There's a very, very different view on what this moment means for this energy market.
A structural insurance premium, risk insurance premium, based on the fact that shipping on seas suddenly has new risk. And you have to start to look at that geopolitics degree in a different way. It's something that we keep coming back to. I would love to talk with him more about that.
What is it about spring and Sunday evenings when it comes to financial markets? Regional banking crisis, right?
Can I just say, I feel like it's been every Sunday night since we have started 2025. So I guess on one hand, what is it about Sunday night that always gets me glued to my terminal?
I think I said years ago, the year begins in March.
Yeah.
You know, everyone puts out these forecasts looking ahead to the year ahead. January, everyone gets together and talks about it. You get to March and everything resets.
Yeah.
And resets pretty quickly.
Here we are, doing the same thing.
Here we are. The coverage continues tomorrow. David Tinsley of Bank of America, Kevin Foley of JP Morgan, Abigail Watt of UBS, Jim Karen of Morgan Stanley from New York City this morning. Good morning. Looking forward to tracking these major ruptures with you all week. From New York City, this was Bloomberg Surveillance.
Day 5 at the BNP Paribas Open. Coco Gauff's tournament is over. At 5-2 down to Alex Ayala in the opening set, the American called for the trainer due to an injury to her left arm. But despite receiving treatment, Gauff was forced to retire just a few games into the second set. Ayala will face Linda Noskova in the round of 16.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past few years, we hadn't really seen any deals above $30 billion. And now we're seeing, Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
Investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every Wednesday at noon Eastern, only on Bloomberg Television.
In case you missed it, on Bloomberg Crypto.
Crypto has had this terrible, horrible, no good, very bad 2026 ever since the events of October 10th. What do you chalk up this weakness to, this volatility to?
Well, I think there's a lot of structural pressure on Bitcoin that's been happening after 1010. It's just a change of who's holding Bitcoin, and you're moving from people who had long-term belief and were holding Bitcoin directly to just access to Bitcoin being wired up to our financial system and markets in ways that didn't happen before. So the combination of what happened on 1010 plus the mix shift change of who's holding changes the dynamic of price action. This is not a short-term market play. You have to have long-term belief and vision, and I think that for those people who have that long-term belief, they'll be fine.
Don't miss the next Bloomberg Crypto.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Good Monday morning, 30 minutes until the start of the cash trade futures down. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, Iran picks a hard-line new leader, signaling Tehran won't back down as war rages across the Middle East.
Meanwhile, oil hits triple digits, topping $100 a barrel. President Trump calling it a very small price to pay.
And strategist Ed Yardeni puts the odds of a U.S. stock meltdown at 35%, while stagflation trades sweep across markets.
There's a lot to keep track today, a lot of things moving, and the move feels more severe than where we ended on Friday. Let me show you some of the biggest stock movers. Just want to point out, NVIDIA is down. It's down with the broader markets. Maybe a sentiment for how we're feeling overall, which it's not even down 1%. The real hit, though, comes from the airlines. Airlines are now in a bear market, falling 22% from their peak last month. American Air down another 3.4% in the pre-market. And the big winners are the energy stocks. Oxy up 1.5%. Some of the only names in the green this morning, Matt, them and the defense names.
All right, I'm looking at, I'm looking at oil, but S&P futures, you can see down 1% here after we closed down more than 1% on Friday. Brent crude right now trading at 103.50. It had traded all the way up to almost $120 a barrel. I think everybody was watching his terminal last night, or her terminal last night. Bloomberg Dollar Index continues to increase, and this adds to pain for the rest of the world, right? Because crude everywhere is priced in dollars. So as the dollar strengthens, this gain looks even worse for everybody else. The 10-year yield continues to rise right now, 4.1731, as investors sell off those treasuries, Danny.
And that all comes as President Trump trying to calm Americans about the jump in gasoline prices, writing on social media short-term oil prices, which will drop rapidly when the destruction of the Iran nuclear threat is over, is a very small price to pay for USA and world safety and peace. His Energy Secretary Chris Wright told CNN that the oil spike won't last.
we have that oil. We have the world is very well supplied with oil right now. The United States is a net oil exporter. We're a net natural gas exporter. We are suffering high prices, not in natural gas, but in oil, because it's a globally connected market. We're communicating with our allies abroad. The oil is there. You're seeing a little bit of fear premium in the marketplace, but the world is not short of oil today or natural gas.
Let's get the latest with Bloomberg's Patrick Sykes in Istanbul. And Patrick, we hope you're staying safe there. The latest news that NATO intercepting a ballistic missile heading for Turkey. What is the latest in the region?
Yeah, thankfully that's fairly far away from here. That's down in the south of Turkey near Gaziantep. But it is the second incident in about a week that's happened here in Turkey. And it's worth mentioning after the last one, which Iran denied, the Turks were very outspoken. They were saying, you know, this is we can overlook this perhaps once, but if it happens again, then it's a different conversation. We'll have to see how Iran responds to it. So far, they haven't said anything. And elsewhere, I think in the region, another thing to watch is the Saudis have been cutting back on production. That's the latest instance of energy impact from the Strait of Hormuz. Tankers can't get out there. That means production, supply of oil is getting stuck in the region.
Patrick, fair to say that Turkey's take on this is really important. One of the biggest armies in the world, I think the second biggest in NATO. How does the country, how does Erdogan respond to this war in Iran and the Ayatollah's son named as the new supreme leader?
I think Turkey's main concern is stability, right? It shares a very long border with Iran to its east. That's one of the oldest borders in the world. Turkey has already experienced what it looks like to have mass migration from its south, from Syria, and that's an issue that's caused a lot of social tensions that have come up election time in particular. So Turkey definitely doesn't want to see a repeat of that. As for the leader, I mean, I think this is really a continuity candidate, right? Besides being his father's son, Mojtaba Khamenei is known to be close to the Revolutionary Guards, who are obviously leading the fight back in this war, and also close to their proxy groups, right, in the region, from Hezbollah in Lebanon to Hamas in Gaza. So I think in terms of the new leadership, Turkey won't see a change. What it's trying to manage is that instability risk on its border and migration in particular.
All right, Patrick, thanks very much. Patrick Sykes there in Istanbul. Again, even if those attacks are in the south of Turkey, it's got to be a concern for everybody in the Middle East. This morning, G7 finance ministers are discussing a possible joint release of oil reserves as the Middle East war affects flows. Let's get the latest on the oil moves with Will Kennedy, Bloomberg's news director for Europe, the Middle East, and Africa. And Will, yesterday was massive in terms of the run-up that we saw. We're still over $100 for both Brent and NYMEX. How would a G7 concerted effort look?
Well, it's happened before through the auspices of the IEA, that's the energy watchdog to represent the interest of the developed nations, which was actually founded after the oil shocks of the 1970s for exactly this kind of situation. They coordinated a release after the Russian invasion of Ukraine, for example. So it is a safety valve, but you're trying to fight a stop in flow with a release of stock. So it can have a temporary impact, but unless the flow resumes, you're not solving the problem. And we saw Chris Wright say earlier that there's plenty of oil in the world. Well, that's no good to anyone if it's not in the right places. And the fact that the market is grappling with right now is that 20% of the oil is inside the Persian Gulf, and a lot of it isn't getting out, and that's forcing some of the world's oil producers to stop production because they've got nowhere to put the oil. So the longer this goes on, the more it cascades through the energy system, and the longer it will take to put right. Yes, the release can help, but it's not a universal panacea for this problem.
Chris Wright saying that the oil spike would be short-lived. Will, with the backwardation in Brent futures, isn't that what the market is also pricing in?
Yes, of course, and the conflict will end at some point, and the oil will resume its flows. But the longer this goes on, the worse the disruptions become, and the more complicated it is to put everything back together again. Because putting everything back together again means restarting fields that you've closed down. It means getting the ships in the right places. It means getting those ships to the oil refineries they need to be, something that can take weeks. So yes, on the assumption that the conflict will end, that the strait will reopen, oil prices will fall. But we don't know when that's going to happen, and the longer they stay closed, the longer the strait remains all but blocked, then the harder it will be to unwind, and the longer it will take to normalize everything again.
Some stunning moves this morning and yesterday. Will, thank you so much. Bloomberg's Will Kennedy in London. Now, for the rest of this market, investors are pricing in a deeper and longer-lasting energy supply shock that could lead to stagflation, at least not in the futures curve. Maybe we're starting to get it in bond markets. Bloomberg macro strategist Michael Ball is here to join us on this. Michael, I got to say, the moves still feel somewhat contained, especially in markets. I mean, we're only down 1%. That feels pretty remarkable as it stands.
Yeah, big reversal on that G7 news overnight. Thankfully, as we were totally breaking down at one point, and we were seeing actually the SPX continue to take out levels that were seen as support. So now we have a little of a better bid, and now obviously we're still down, and anything can change that quickly. But vol around 30% on the VIX means that we should expect 2% moves almost every day now, and I don't think that's really anything anyone would be surprised by, given that we're all headline driven and we're all basically oil traders right now.
I saw Dan Curtis had a couple of great charts this morning. He's a producer out of London. Number one, he was showing that the rotation is reversing a little bit, right? So we heard this last week from strategists that maybe people are seeking some safety in Mag 7 stocks. Number two was an amazing rush into cash. I mean, even if investors are selling off treasuries, they're piling in to really short notes, right? So how do you see this in markets?
Yeah, to both points. One, that dispersion trade that had driven a lot of the price action, where people were basically long materials, long industrials, getting behind this one big beautiful bill, reaccelerating the economy, have completely come off. They were funding a lot of that by being short basically Mag 7 and all these software disrupted names. They had to cover their shorts. They basically want to go into tech. They want to go into the factors that'll be more buffered from slower growth. So that makes a lot of sense to me that we're seeing that. And finally, to everything you're saying, this actually will worsen some of the credit crunch concerns we've been having, because people are moving out of asset-backed commercial paper, out of non-government money market funds into the safest stuff they can have. So now we're seeing liquidity kind of come off for some of these players on the peripheral. So this may end tomorrow, but there'll still be all these unintended consequences. And remember, volatility always echoes. So we're going to continue to see this for weeks to come until it all settles, not just in where the oil tankers are going, but in how everyone's got affected by sort of this drying of liquidity that's occurred the last few days.
All right, Michael, great to get some time with you. Michael Ball writes for the MLive team. Here you can see the chart of record inflows into this short-term Treasury ETF. And you can see these kinds of things on the MLive blog as well. So type MLIV Go on your Bloomberg terminal to keep up with the latest moves in markets. In terms of the latest moves in futures, we're looking still at drops of 1%. Everyone's watching the oil trade. So you can see Brent here right now trading at $102.83 a barrel. It had, as I say, jumped up to almost 120 barrels yesterday evening, and has come off on hopes that the G7 will at least give us some short-term relief with reserves release. You can see the dollar, though, continues to gain strength, and it's up 2% since this war started a week and change ago, and the 10-year yield right now at 4.16 and change. Let's get a look at some of the single stock movers, because there are some big ones. Cruise stocks down again. Norwegian and Carnival, the worst performers in the S&P since the war broke out, continue to drop today.
Similar headwinds to the cruise lines are what's happening with the airlines. They've also slipped into a bear market, down 22% from their peak, with the war in the Middle East threatening to squeeze profits by driving up fuel costs. Fuel in New York, jet fuel, up 50% in the past week.
Hims and Hers and Novo Nordisk are done fighting and have agreed now to sell Novo's weight loss drugs on the Hims platform. So as a result, you can see that very volatile stock, Hims and Hers, jumping more than 40% today.
Coming up, we get back to our top story, and we speak with the veteran of these oil markets. It's Ed Morris about oil prices, which he say could jump another 50%, a conversation you don't want to miss on the other side of this break.
matters, investors turn to Bloomberg surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg surveillance, we're talking about it.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome to Bloomberg This Weekend. I'm David Gray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Oil edging higher as Saudi Arabia begins output cuts. I guess edging. Edging is, I mean, it's up 11%.
Yeah, jumping,
so it's jumping.
flying.
It's soaring. Veteran commodity strategist Ed Morris says, depending on a likely scenario, prices could rise another 50% or even higher before leveling off. He is one of the most influential oil analysts of the last half century, building the commodities practice at Citi, had worked at Salomon Brothers and Lehman Brothers before that, and at the State Department as well. We're glad to welcome Ed Morris of Hartree Partners, now on set here at 731 Lex. Ed, great to have you in the building today. How do you see this war in Iran when you look at past incidents of war in the Gulf or the Arab oil embargo? I mean, we've had a number of hot points in the Middle East. Where does this rank?
So it ranks somewhere in between. Certainly, this is the third Gulf War we've seen since 1990, 91. Strait of Hormuz wasn't closed in the first one or the second one. And it wasn't even closed in the events of the earlier period of time in the 70s or even the Iranian Revolution. So this is pretty unique. So I'd put it more serious than anything we've seen since the early 1970s.
Does that mean that even, let's say this somehow resolves in a week's time, Trump or someone backs off, is it serious enough that we're going to have a fundamental rethink of the way energy flows in energy markets after this, much like after the Arab oil embargo, when the SBR came, like after COVID, after Ukraine, when we rethought of just exactly how energy markets are structured?
So I think we should look and see what some major countries are doing, and we're doing even beforehand. China is energy dominant when you think of clean energy, and they have certainly decided, as being very dependent on flows, particularly from the Middle East, that they're going to double down on the clean energy scenario. Europe is already talking about going back to green energy targets. We'll see what happens in the U.S., but certainly there's been a kind of worldwide rethink about what to do in terms of dependence, and that includes emerging markets as well. It includes India, certainly, as well as China, and much of the Far East.
We were playing some sound from the U.S. Energy Secretary, Chris Wright, on yesterday's Sunday shows, and he was saying, look, this is a fear premium that's going to last a couple of weeks, but we're going to start getting ships through the Straits of Hormuz soon. He seemed pretty sanguine. Do you share his view that this could be relatively short-lived?
Well, I share his views that it could be relatively short-lived, but I'd say I would turn his remarks of a few weeks to a few months. And that's certainly the case if we look at the nitty-gritty of the oil market and the gas market in particular. So we shouldn't forget that gas prices have skyrocketed around the world because 20% of the world's available internationally derived natural gas comes from the UAE a little bit and Qatar an awful lot. And that's not going to be turned on for at least a month.
And that's all priced in dollars, by the way, so it hurts them even worse than it hurts us.
It absolutely is, yes. And on the dollar price, by the way, given what you've just talked about with the increase in the value of the dollar globally, just adds insult to injury. It just makes the inflation for the rest of the world significantly higher than it otherwise might have been. But even the oil is not going to come back like overnight. They'll be testing. They'll see what happens. And we still have a big risk latently in the western side of the Arabian Peninsula. We have the Houthis, and they have not activated yet, and they are a proxy still of Iran, and we haven't seen a complete shutoff. You know, we've seen a shutoff that people are arguing is it 10 million barrels a day or 16? In either case, it's pretty large, but it can go to the full 20 coming out of the Middle East if we have a closure on the other side of the Arabian Peninsula.
And there just feels to be a disconnect. I'm listening to you and other experts in this that are talking about the potential for this to stretch on and have very big implications. Then I look at what markets are doing. I mean, the backwardation suggests that oil prices resume something close to normal pretty relatively soon. Are we being sanguine about the risk that this could stretch on and have much higher oil prices to come?
I think we're being a little bit too sanguine. The futures curve doesn't tell you very much. It tells you that we've had a spike in the interim. It tells you that backwardation has increased. So there's just not a lot of liquidity in the market. And the fact that 10-year prices have not changed very much it doesn't tell you what's really going to happen in the next few years. So I wouldn't use that as a predictor. I'd say that's a reflection of where macro funds are placing their short-term cash.
We have seen a big spike in prices at the pump, and I thought it was interesting in reading your research that the product prices rise faster than the underlying crude, for example. Why is that, and how do you expect to see gas prices go? Because I mean, this chart doesn't do justice to what we've seen on the price at the pump. It's the highest in either Trump term.
Yeah, so we've seen prices coming from, you know, the lower $3 range to the mid $3 range. There's been a, 15–16% increase in the price of gasoline. Mm-hmm. If you look at crude oil, where was crude oil trading 2 weeks ago? Brent was trading at around 70. It even fell below to 68, 69, and it's now at 103. WTI was trading at 65, 64, 63, and it's now at 102, 103. That's a double increase from what we've seen in gasoline. So we've seen a very slow reaction, so to speak, on the gasoline side. That's due to a whole bunch of factors, including you deliver out of what you have from storage and the like. But we're seeing a curtailment on the product side. We've seen the big curtailment out of the Middle East. The Middle East, while they're exporting 16 million barrels a day or so through the Strait of Hormuz, 2 million of that is product. And we've seen that product, which largely goes into Asia, having a dramatic impact on jet fuel prices in Asia, on gasoline prices in Asia, on diesel prices in Asia. So, and that's much more than the 15% increase we've seen in the U.S. So the U.S. is a laggard. And if we see what's happening in the rest of the world, it tells you that we're going to see $4 at the pump more sooner than we otherwise
think. By the way,
think.
Ed, what does it mean that NYMEX catches up to Brent? I thought it was interesting. The other day I looked at a WTI quote, and I thought it was a mistake in the graphics that it was actually Brent, because usually there's a $5 gap between the two. I'm, rounding, but now we're at the same level.
Well, don't forget that there's more crude coming out of the United States than there is out of Northwest Europe, and the U.S. has available incremental crude. It can be bid up. We don't have restrictions on exports, so we're seeing the demand for WTI-related crude skyrocketing in a way that makes it get closer to where Brent has been trading. We're seeing Murban and Dubai at a $10 increment, even above where Brent is trading. So that tells you that the world pricing is sorting itself out.
So if we're at 102 on Brent right now, Ed, Matt started this out saying saying that your calls about a 50% chance likelihood that we see a rise of 50% in prices. What does that scenario look like? How do we get there, and how long does that elevated price last?
Well, one scenario is the one I just mentioned. The Houthis get to work, and we see the western part of the Arabian Peninsula also shut off. That's 20 million a day. We're not going to see the battlefield ending pretty soon. We're going to see at least 2 good weeks, I suspect, of continued bombing of energy infrastructure in Iran and in the western part of the Gulf. The Iranians are not slowing down. As far as I can tell, we're going to see, inevitably, if there are some ships trying to get through the Strait of Hormuz, we'll see those being attacked, and we'll see tankers being attacked. We have to remember that Iran has just reaffirmed the hardline approach by putting in place the son of the former supreme leader, and they had a big debate about that. It was a week-long debate. Which way are they going to go? And they chose the hardline way. So they're there for an existential threat, and they're going to fight for the existential survival of the regime.
I want to actually zero in on that because you talked about that in your notes. We could have seen Iran, after the Ayatollah, if he had been let to die of natural causes, right, go with a more, I guess, reformist supreme leader. But it seems as if this attack by Israel and the U.S. has at least helped to push them towards a more hardline leader. So I wonder, what do you think were the justifications for this war? We haven't heard much from the administration in the way of an official, line of why we did this.
Well, that's the interesting question of why did we do this, and we did it for all of the reasons, I suspect, that we've heard from the White House. We've done it because that regime has been a threat, and it's been a threat to the economies of the part of the world for a while. It's been a threat to Saudi Arabia. It's been a threat to the UAE. The bombings that came in when Abqaiq was hit in 2019 was not an accident. It came from Iran. The proxy attacks come from Iran. So there's been that threat for a long time. Yes, there was regime change in the minds of some people, including the president. He said it too often for you to not believe that regime change was certainly there.
In this case, it's pretty much worse than what we had.
Well, it's certainly not what we expected. We expected, I suspect, they expected, I didn't expect it, they expected this to be over in a couple of days, and that certainly didn't happen.
Well, so it's a president at the same time who's been making this push for affordability, and you've advised presidents before, you've advised governments. We have finance ministers of the G7 meeting right now discussing a possible release reserves of oil. The U.S. is surely trying to figure out how to stem some of the issues too. What would you be advising governments at the moment to try to mitigate some of the price rises?
I think they're doing what they have to do. The governments that have better control than the U.S. government does on local electricity prices is keeping the weight of the increase in the hands of utilities, many of which are public sector anyway. The U.S. doesn't have that privilege exactly. We have very independent regulatory agencies for power generation, and power prices are certainly going to go up. So the affordability issue can only be met to a certain extent by the risk of releasing strategic stocks. And we're seeing what's going to happen in the next hour, I suspect, on what the G7 are going to decide. They're talking about big numbers. They're talking about 300 to 400 million barrels of a release, which is bigger than the release after the Russian invasion of Ukraine, which was a very large release, to say the least. And that didn't stop prices from going up because it takes a while to redeploy oil when you have some of the, the major oil paths sanctioned immediately after that Russian attack. So it's going to be a while. I think it'll be a good month or two before we see the weight of strategic stocks coming in the market. The release will obviously cause the market to fall, but how long that'll last is another matter.
And we should hear from them in about 15 minutes time after that readout. Ed, it's such an honor and a joy to have you on. Ed Morris of Hardtree Partners. Less than 4 minutes to the opening bell. We walk you through it with Seema Shah of Principal.
would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300, and the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the trend, the technology trend and the investment is real.
Welcome to the world of decentralized finance. Bloomberg is covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
All right, you want to see how stock markets trade on $100 oil? Well, today is your chance. We're looking at futures that are down only 1%. The drop on S&P futures, it follows a drop of more than 1% on the cash trade Friday, but it doesn't even bring us down to the 200-day moving average on the S&P. So interesting to watch a relatively tepid response to what we saw yesterday as Brent jumped up above $119 a barrel at one point. You have America 250 ringing the opening bell at the New York Stock Exchange. Rosie Rios there apparently ringing the bell, which is pretty awesome. Not exactly sure why, but I think it's for our anniversary coming up on the 4th of July. Avenue Point ringing the bell at the NASDAQ market site. They have had a relatively difficult start to 2026 with the stock down 20%. Of course, it's a down day for a lot of stocks. And Danny Berger, what do we see in terms of the major movers?
Well, just looking at what NVIDIA does, as we do every day, just because it is the largest stock, just as a barometer of where broader markets are, and it's really not off a lot, as you pointed out, Matt. Broader markets aren't down more than 1%. NVIDIA down 0.6%. There does just seem to be a disconnect between what the experts like Ed Morris are saying and how this market is behaving. American Airlines, though, the airlines in general, that S&P industry is in a bear market, down 22% from their high last month. American falls 4.4% at the open. Occidental, it's not doing as well as we saw in the pre-market trade. Those shares up just only 0.4%, but it has been, Matt, the energy stocks and the defense stocks that have been one of the few sectors in the green.
All right, I'm looking at just cross-asset. You got to keep your eye on oil. I don't know how many times I checked the price in yesterday's session. As the Asian trade began, it was pretty shocking. The hedge fund dad's carpool was losing its collective mind. Right now, we're looking at just $100 and change for a barrel of Brent crude. So a gain of only 8.8%. It looks so tame compared to what we saw last night. S&P 500 right now, the cash trade down at 66.83. The Bloomberg U.S. dollar index up another 1/10%. It's up 2% since the war started a week and 2 days ago, and that makes it obviously worse for everyone else around the world. The 10-year yield is still up, but only now 1 basis point to 4.15. So investors continue to sell treasuries, but not at the level that they had earlier on inflation fears. A trio of market heavyweights are weighing in on the Iran war impact on stocks. Ed Yardeni says the probability of a U.S. market meltdown this year is now 35%. That's up from 20% previously. Goldman Sachs' Ben Snyder sees a meaningful threat to S&P 500 earnings from sustained higher oil prices, and Morgan Stanley's Mike Wilson is staying positive on U.S. stocks over a 6 to 12-month period. Joining us now is Principal Chief Global Strategist Seema Shah. And Seema, what's your take on the effects of this war on the U.S. stock market?
Hi, Matt. Yeah, well, look, I think what's been interesting is I think there's a fair amount of complacency within the market, as you've been saying. It seems quite disconnected with fundamentals. And I think what's interesting is that if you look back to a week ago when people were talking through their scenarios, their severe scenario was essentially oil prices above $100 a barrel. Now that's where we are today, but the severe scenario has actually shifted, and I'm seeing a lot of estimates of like $150 to $200 a barrel. So to me, that suggests that there should have been more of a deterioration in the market, given that those scenarios are shifting. But at the same time, I think one of the reasons that you're not seeing such a big market reaction is there's still that assumption that this is going to be fairly short-lived. And we know from experience that as soon as it starts to turn around, then you could see a pretty quick correction in oil prices, with asset prices moving in conjunction in the opposite direction.
It's a market that's been primed to buy the dip, Seema, and overlook any of these big existential risks. I said this just moments ago, but it truly is the thing concerning me, that you listen to experts, people who are actually geopolitical analysts, saying this thing is bad, the Strait of Hormuz could be shut off for a month or more, and this will be long-lasting. Meanwhile, the macro tourists are saying, we're not too worried, this is going to be short-lived, there'll be some sort of backing off, whether it's a Trump taco or Iran. Seema, how do we reconcile the two, and what does it take for the market to wake up if there are greater risks ahead?
Yeah, you're right. There is a complete disconnect, and I think when we're thinking about like why the market has been primed to buy the dip and ignore a lot of the existential risks over the last couple of years, it's because the fundamentals have continued to be so strong. So that's really been the reassurance for investors through every single bit of volatility and shock. Now, of course, as you said, an oil price spike, which of course then sustains it, and I think that's the key thing, is the duration, well then that can change the macro maths fairly fundamentally, and then you start talking about recession, stagflation really coming into the scenario. So in terms of what would get to markets to really sit up and watch this, it's how long is this going to last? Or we get there 2 or 3 weeks' time and we're still in this position. What's happening to the Strait of Hormuz? So there's a number of different factors which are actually, it's out of the economics arena. This is really sitting in the geopolitics. It's watching the news flow day by day, hour by hour, and getting to that point. So it is a very challenging picture for investors. And the other thing I'd say is, an oil price shock is the worst kind of news for economists, because it's so difficult to figure out what the impact is going to be when you have this negative growth shock and a positive inflation shock. So I think that's what makes it even more challenging for investors to try and consider, to work through what the implications could be for their portfolios.
Seema, I saw a chart overnight from David Inglis out of our Hong Kong bureau. It's a Samsung chart, so we're not talking about U.S. stock, but I think it's pretty interesting, and you could put this on any of the big tech stocks in the U.S. We've seen PEs come down shockingly low. This rout in the price for the memory chip maker has brought its price-earnings ratio down to 7. That's an 8-year low. Are you seeing stocks like that here in the U.S. or over there in the U.K. where the discount is just too big to ignore?
Yeah, you're sitting with it, and that's a really important point. I think with the last couple of weeks, with all the AI disruption and fears which went alongside that, there was indiscriminate selling across the tech sector, and there were some companies which were really unfairly hit. So from a stock picker's perspective, there were opportunities even coming into this crisis where valuations just looked very, very attractive for business models which were pretty robust and could withstand some of the AI disruption fears that were coming through. So certainly there will be some opportunities within Asia, within the US, within Europe, but this is very much a stock picker's market, because from a top-down perspective, it's quite difficult to find a really positive outlook from here.
What about this? This was from Neil Dutta at Renaissance Macro, that the countries that are most dependent on energy imports from the Middle East, South Korea, Taiwan, also have the most tech-heavy equity markets. Seema, could there be spillover effects, and they're big producers of some of the tech equipment too, spillover effects that we don't just worry about oil markets, but what the oil is used for? You can extend that maybe not even to oil, to things like fertilizer and chemicals. Seema, what are wider ramifications besides just energy markets themselves?
Right, and I've seen a number of reports just in the last 24 hours pointing out that about semiconductors being potentially impacted because, as you said, the oil is really required for the production, fertilizers as well. Now, it hasn't yet hit, but of course there are growing concerns that if this were to be a situation which continues to deteriorate, there would potentially be implications for AI capex. And I've got to say, at this point in time, that is not the situation. What actually we're starting to see is that investors are looking for, what are the parts of the market they feel safest in, and actually technology is coming back at the top of that agenda. They continue to like the AI narrative, and they know that a lot of the market has been hit. So that is actually an attractive part for the time being. But of course, if this were to continue, it's very difficult to find bits of the market which would be completely immune to this kind of shock.
Of course, the irony, Matt, was that at one point, the place that you'd hide out in all of this, like we did in COVID or in Ukraine when there's an energy price shock, is software. With low margins and B2B. You can't do that anymore.
No, but actually you're seeing a reversal of the rotation out of the Mag 7 stocks into infotech and communication services. So it'll be interesting to see if people look at those places for safety. Principal Asset Management Chief Global Strategist Seema Shah, thank you very much for joining us this morning. Let's get a look at what's going on in the stock market right now, Danny, because you don't see the kind of drops you may have expected with $120 oil overnight.
You really do not. It is a very constructive market. And again, what will it take for this market to wake up? Seema Shah just saying it's all about duration. But the experts are saying, Ed Morris was saying, this could last weeks, if not months. On the up column, you have some of Procter & Gamble, Johnson & Johnson, Live Nation. They just settled a suit with the DOJ, so that's helping them out. Only 50 stocks are higher on the day. The solid majority is on the downside. 453 stocks are down. The tech heavyweights dragging us down. Maybe we're starting to think about what Neil Dutta was saying, that the semiconductors are being produced in regions that are hardest hit by an energy crisis in Asia. So Apple, Nvidia, Amazon, Meta, all the worst performers in terms of points, moving the indexes down. Looking at the individual sectors, only one is higher. If I asked you to guess and you didn't see this, you would say energy, and you would be right. Energy is up 0.1%. Consumer discretionary, the worst performing sector, and that's because of all of the travel names. The worst stocks in the S&P 500 over the past week is Carnival and Norwegian. They are down hard again today. Industrials, materials, again, facing both chemicals and fertilizers and all of those things we need from the Strait of Hormuz not getting through. But overall, even though just the sectors looks pretty ugly, Matt, only down 1.1% right now.
All right, fascinating look at these markets and the drops that we're looking at with $100 oil. Coming up, Middle East tensions rattle energy markets, as we've been telling you, as U.S. power demand surges. It's the worst possible time for gas prices to rise. We'll discuss nuclear's role in energy security with the CEOs of Oklo and Centrus next. This is Bloomberg Open Interest.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Minutes into your trading day, let's get the top calls. What the sell side is upgrading and downgrade. First up, a downgrade from Morgan Stanley. Jefferies, they are citing credit concerns tied to the bank's exposure to bankrupt auto parts supplier First Brands and the failed UK lender MFS. The analysts say that the fallout from recent credit events could persist for some time. Jefferies falling 4 3/4% this morning. Next up, UBS, they upgrade PG&E to a buy, saying California is moving closer to reducing wildfire liabilities for utilities. The firm expects legislation to lower risk and sees earnings improving as the company cuts waste. Shares, though, are down with the broader market down almost 1%. RBC Capital, they upgrade Dow, saying that recent events in Iran could help the company because problems with supplying raw materials are increasing plastic prices, and you see the impact here, Matt. Shares are up 4.5%.
All right, the disruption in global energy markets is strengthening the case for energy independence and alternative power sources, maybe EVs as well. Joining us now are the CEOs of Oklo and Centrus Energy, two companies at the center of a next-generation nuclear technology and advanced fuel supply. Jake DeWitt and Amir Vexler, welcome to the program. I want to ask first about your partnership. Jake, maybe you can take it, and then Amir, you give us your take. What are the two of you, what are your companies going to be doing together?
Yeah, thanks for having me back on. I'm excited to be here with Amir. I think obviously you've been talking about that this morning, is the importance of energy independence, and that's one of the great things that nuclear affords us. That said, we're going through this reindustrialization and reinvigoration of the nuclear fuel supply chain, and part of that includes some pretty important things that go not just from mining the uranium, but go through all the processes needed to turn it into fuel for our reactors. One of those steps is enrichment, which Centrus is, frankly, a world leader on, and then the other part between that is converting the product from enrichment into something we can fabricate, and that's what we are linking up to explore how we can do together in a much more efficient way, building off the facility they have in Ohio, which happens to be the same site we're building a bunch of things in Ohio. So we get to talk about Ohio again today, so it's great.
I agree. I'm a huge, I'm from Ohio and a huge Buckeye fan, obviously, so it's a great state. Amir, what exactly does this cooperation, though, look like? I saw the wording was you agree to pursue discussions regarding a joint venture. That sounds a little bit squishy. Can you put some hard edges on that?
Sure, of course. In order to realize the fabrication of the fuel that's required for these advanced reactors, we need to deconvert it from the enrichment phase to the next phase. And it makes all the sense in the world to co-locate that deconversion process together with enrichment. For cost efficiencies, for security issues, that is probably the thing that makes the most sense. I will add that in the last 6 months or so, we have seen a huge acceleration in some of these advanced reactors and their ability to actually lock in fuel contracts. In other words, things are getting really serious, and now is the time to really completely close that fuel supply chain, and that is really what this announcement is about, is to study how we do this and how we collaborate together and do it in one place that makes the most sense, which is on site together with enrichment in Ohio.
How serious it is probably only increased in the past week, I imagine. And Jake, you've had many conversations with the government. In fact, you're part of the DOE's Advanced Reactor Pilot Program, the idea being by July 4th to reach criticality for your reactor. I'm assuming that the government is like, okay, Jake, okay, team at Oklo, let's get this going, considering the supply chains for energy are that much more shook up since the war in Iran broke up. How close are you to reaching that target? Will you get there, Jake?
Yeah, I mean, we feel quite confident for one of our projects to hit that milestone and that objective. We actually got selected for 3 of them, which is pretty cool. The other 2 will follow in accordance, but those ones are a little bit bigger. And so part of what's exciting, though, what we see happening is like the support level is not just to move us into a build mode in this country, but also a scale mode, right? The Reactor Pilot Program is a really important first step to sort of breaking through a lot of the cruff about making, you know, the sort of the perception that it's really, really insanely difficult to build a reactor. It doesn't have to be, right? Part of the innovations going on in nuclear is changing that paradigm. That opens the door to scale, though. And once we get to scale, this is what we're working with Centrus on, is how do we solve the ability to scale these things? Because the biggest bottleneck fundamentally is fuel, and it's the fuel supply chain, right? And so that's one of the things we're working together is we're changing the paradigm. So going back, right, it is a little bit squishy to start. It is a bit soft because we're changing what the sort of supply chain structuring looks like, and we have to explore the best ways to do that. The good news is we have a really awesome place to do this in Ohio where Centrus has enrichment, where we think makes a lot of sense to put deconversion, and we're going to probably put fuel fabrication to support then all the reactors that we announced powering Meta with. So it's a pretty cool combo. But to get back to the original question, I mean, it's all hands on deck, right? We're changing the paradigm about the speed with which you can build systems. We're changing the permitting infrastructure. We're about to see, I think, a new wave of regulatory modernization reform that's only going to further accelerate that. And we just saw a big regulatory milestone for the industry last week. So it's a new world for nuclear, and the old models of it taking a really long time and being really expensive, I mean, those are breaking, and we're all working to sort of throw those out, if that makes sense.
Jake, I want to ask, just as one of the foremost minds on alternative power, what is your take on the impact $100 oil is going to have on the U.S. economy at a time when energy prices, electricity prices are already soaring, at a time when we see like an EV backlash pushing us back towards big inch V8s? Like, how does this affect America?
Yeah, I mean, look, everything builds off of energy, both it being available, reliable, and really, really importantly, affordable. And we've had a lot of things that have drifted from that, and this just compounds those challenges. True energy, not just independence, but to use the term like leadership dominance and frankly complete paradigm change around energy, means we have to get into the nucleus, right? Break free of the electron shell that drives hydrocarbons. Granted, they're a really good fuel source, but get to what nuclear is, which is a multi-million-fold increase in power density improvement. So it's going to be challenging across the entire ecosystem because everything is going to get more expensive, right, with prices up like this. I'm thankful that America is a net energy exporter, and I'm thankful that we're taking a very direct approach to how we can bring more power online, but it does tie over to more resilience. I was just talking, with some folks yesterday about the value of electric cars and even just plug-in hybrids, giving you a lot of flexibility to avoid the pump in many ways and some of the near-term price shocks, because all of that takes a dent out of people's wallets. So it's a combination approach of having, abundant, reliable, and affordable power really supports having the benefits electrification affords. It does improve national resilience. That's an important thing to keep in mind, as well as economic resilience that stems from that.
And Amir, you're a critical part of this too at Centrus, generating the next generation nuclear fuel. How do efforts look with this partnership, $900 million from the Department of Energy in January too? How do efforts look to expand that production?
Efforts look really good. We've announced that we have commenced the fabrication of our centrifuges. We're going full steam ahead. I will remind the viewers that the Department of Energy is still contemplating and probably will hand out more support to actually establish the conversion and funding the conversion. We hope that that positions us well for that as well. Jake talked about, and the President obviously talked about energy dominance. We have to be able to do all of it here in the United States, and I think this partnership is yet another example how the sector and the market and the leading companies are reacting to take leadership and create the skill set, the capability here in the United States. That's what dominance looks like.
All right, Jake, Amir, thank you so much for joining us this morning. Looking forward to hearing the details of that partnership. Oklo CEO Jake DeWitt and Centra CEO Amir Vexler.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
In case you missed it, on Bloomberg Deals. This is supposed to be the year of M&A, the year where everything comes back. Do you think geopolitics slows that down a bit, or have businesses just learned to cope with it?
I think business leaders have done a better job understanding and navigating the external environment, and I do think M&A is going to come back in a significant way this year. I think from an M&A point of view, it's going to be the most active M&A market we've seen in a decade.
Don't miss Bloomberg Deals, live every week.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslinda Amin in Davos, Switzerland, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's check on what's going on with stocks in the first half hour of trading. We're down about 1.5%. So 66.40 is the level on the S&P that we're looking at after $100 oil overnight. NASDAQ 100 down 1.33%. So about the same drop as the bigger benchmark. The small caps are taking a much larger hit. Obviously, the concern is that inflation either doesn't allow the Fed to cut as much as had been priced in, or even spurs rate hikes. The Dow Jones Industrial Average at 46,789. We're off 50,000 watch for now. NVIDIA right now down 0.5%. We always keep that there as it's the largest company in the world, so any move matters. SanDisk, we were looking earlier at Samsung. It is actually up 2%. You've got Northrop Grumman, little change, but this is a defense stock we're watching. They have done largely well. Airlines have done largely poorly, obviously with jet fuel up right now. American down 6%. Novo and Hims on a specific story. They're working together now. Novo's going to sell its drugs on Hims' website, and that helps. Coming up in the next hour, Shayna Sissel on the stagflation trade as oil rises over $100 a barrel.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view. As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute financial news. I'm Lisa Abramowitz in Miami Beach, Florida, at the JP Morgan Leveraged Finance Conference. This is Bloomberg.
We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest.
He's Matt Miller. I'm Danny Brown.
I'm Deborah Rodriguez. We begin with developing news from New York City, where Police Commissioner Jessica Tisch has just weighed in on 3 homemade bombs near the mayor's mansion.
I can confirm this morning that this is being investigated as an act of ISIS-inspired terrorism.
She says one of the IEDs thrown during anti-Islam counter-protests outside Gracie Mansion was made with materials that have been used in ISIS attacks in the past.
We were fortunate that the devices used this weekend did not cause the kind of harm that they were certainly capable of causing. But luck is never a strategy.
The FBI also investigating 3 people are in custody. Iran has launched more attacks on Israel and Gulf countries hours after Iranian state TV announced the late Ayatollah's son, Mujtaba Khamenei, would succeed him as supreme leader. Correspondent Bramy Inocencio is at the foreign desk.
He's been a secretive man. He's never given a speech, hasn't been seen out and about in public. No word yet on if or really when he might give an address. But Israel's defense minister last week said that the next supreme leader, whoever it will be, quote, a target for assassination.
The conflict continues to take a toll on energy prices, and that's rocking the markets. The Dow is down 669 in early trading. Correspondent Nicole Killian from Washington.
Oil prices topped $100 a barrel overnight for the first time in 4 years, while gas prices are up nearly 50 cents over the past week. The president predicted they'll eventually drop rapidly. Energy Secretary Chris Wright on Face the Nation.
They shouldn't go much higher than they are here because the world is very well supplied with oil.
Today's average for a gallon of regular gas in the U.S. is about $3.48. There are calls for a royal boycott overseas.
I'm Vicky Barker in London, where eyebrows have been raised over President Trump's recent posts attacking the UK and its prime minister over Britain's initial refusal to have anything to do with the U.S.-Israeli operation against Iran. There are even calls here for King Charles to cancel next month's state visit to the U.S. Here's Ed Davey, head of the Liberal Democrat Party.
We've seen Donald Trump's attacks on our Commonwealth ally, Canada, and now we've seen him attack our country, and I don't want our king to be put in such an embarrassing situation.
Police say Rihanna was inside but not injured when someone fired 7 shots at her mansion in Beverly Hills. This woman lives nearby.
Well, I was just washing dishes in my house and I heard shots. And I was a little shocked. You know, we don't hear that kind of thing in this neighborhood.
A 30-year-old woman is in custody. This is CBS News.
Looking for spring jewelry looks? Find them at Jewelry Television. New customers get $20 off purchases of $99 or more at jtv.com.
I'm Piera Palazzolo, VP of Digital Marketing for the American Management Association, a company focused on the management training skills needed to enhance the careers of business professionals. We did our research when it came to the best companies for website development and chose AmericanEagle.com. And we couldn't be happier. AmericanEagle.com worked closely with us to understand the front and back end requirements needed to launch an e-commerce website that could handle the complexities of running thousands of seminars nationwide. Our robust new website and improved SEO saw immediate increases in site traffic and web revenue. If you're in need of managerial effectiveness and success, visit our website at amanet.org. If you're in need of a website that provides an unparalleled consumer experience, I highly recommend AmericanEagle.com.
Transform your business today. Dial 877-WebNow1 for a free digital consultation with AmericanEagle.com.
Fallout from some old video that showed up this weekend on Fox News.
Fox News has apologized for airing old video of a hatless President Trump at a dignified transfer ceremony as part of its coverage. Online critics suggested Fox was trying to make Trump look better with pictures that suggested he wasn't wearing a baseball cap on Saturday during the ceremony for the return of the remains of 6 service members killed in the war. He, in fact, did wear a cap. Fox says a staffer inadvertently called up old video. An anchor called it an honest mistake, but not an acceptable one. Steve Kathan, CBS News.
Make way for competition in the weight loss business. Novo Nordisk has dropped its legal case against Hims & Hers over patent infringement. The two companies have agreed Hims will offer access to injectable and oral Ozempic and Wegovy semaglutides at the same price as other telehealth platforms. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Monday morning. This is Bloomberg Intelligence on Bloomberg Radio and streaming live on YouTube from our Midtown Manhattan headquarters here in the Bloomberg Interactive Broker Studio. Alexis Christophers and Scarlett Fu here with you. Paul Sweeney is off for the week. I can't remember if he's on the cruise or if he's in
He's
California.
skiing. He is going down a slope as we speak.
Okay, good for him. I mean, I don't know why he wants more winter, but we can talk about that later on.
I'm with you, Scarlett. Welcome back, by the way.
Thank you. Thank you.
Back from Taiwan? Were you in Taiwan?
So I'm a little bit jet lagged right now, but right now it's about 10 p.m., so I think I'm good for the next 2 hours.
Thanks for coming in and pulling double weight here doing the show.
Anytime. I'm glad because there's a lot to get through. And we're going to start things off with Lisa Odenheimer. She is our breaking news editor for Israel and the latest out of the Middle East. Plenty of updates to give you there. Anna Rathbun, the CEO and founder at Grenadilla Advisory, will give us her take on the markets. It feels like there's been a regime change since I was last here in the studio, I think, to put it mildly.
But I think the question is it really different from the regime that President Trump took out?
Yes,
so
all good questions.
We'll talk about it.
Tyler Kendall, our Bloomberg Washington correspondent, will also give us an update here as NATO intercepts a second ballistic missile fired at Turkey. Bess Friedman is the CEO of Brown Harris Stevens, talking to us about the residential housing market, the rise in long-term yields certainly having a big impact on mortgage rates and what that means for housing going forward. And then Kaylee Garner is a senior commodity strategist and broker at DeCarly Trading to talk about what else. Oil prices above $100. These massive gains. Last week we saw the biggest gains, it feels like, since...
I guess the Ukraine...
On record.
Russia war. Okay. In terms of crude oil, you mean?
In terms of percentage gains,
Okay, that could be possible. That could be possible.
So a lot to get through, but first let's get to John Tucker for our Bloomberg Business Flash. John.
All right, guys, this flash brought to you by IBKR with a year-over-year change in the U.S. CPI exceed 2.6% in February. Turn your view into a trade at ibkr.com/forecast. Last trading day, March 11th. Well, it's a sell-off. Markets around the world being blocked by the disruption to the oil supply out of the Persian Gulf. S&P 500, 95 points lower right now, down 1.4%, 66.46 on the index. The Dow Jones Industrial Average now down 843 points. This is a decline of 1.8%. The Nasdaq 100 down 281 points. This is a decline of 1.2%. Energy right now, the only major industry group in the S&P 500 that is higher. The biggest drag coming from consumer discretionary, home to things like Tesla. And you have yields right now. They are pushing higher, up 3 basis points, 4.16 on the 10s. The 2-year yield is up 5 basis points right now at 3.60. Off to Brent crude, the international benchmark, 14% higher, up to $105.16 a barrel. You have WTI, American crude is at 103.55. That is a 14% pop. Some of the stocks on the move, Talkspace shares up close to 8%. Universal Health Services said it plans to buy the behavioral health care platform for $5.25 a share. And then you have French President Macron seeking to launch a joint maritime mission to escort container ships in an effort to reopen the Strait of Hormuz. But he says this is once the initial phase of the war has calmed down. So again, everything comes down to the x-axis, the time factor here. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alexis and welcome back, Scarlett.
Thank you, John. Thank you so much.
I missed you. I really did.
I missed you guys, too.
He says that like he didn't really miss you prior times, but this time was different somehow.
Well, when she's out, I get all discombobulated and stuff.
The gang's back together. I mean, well, we're missing Paul, but that'll come soon enough. Alexis is always a presence here.
Great to be with you.
Because you're here for surveillance, and now we have you just carrying over.
So I'm just working a little longer today.
Yeah.
That's all right.
For the whole week. We appreciate it. All right, let's take a look at some stocks on the move today. Scarlett Fu and Alexis Christophorus here. We are joined now by our very own Christina Aquino. Christine, what are you looking at?
All right, Scarlett. Well, we got to take a look, of course, at what is being moved by oil, and that is a lot. Let's start with Chevron, ticker CVX. So that stock actually only up about 0.1% at the moment, but it is on a 3-day winning streak. That is the longest since the end of January. Also, to put it into context, its shares hit a record high on Friday, above $192 per share. It's currently trading below that at $190, but given that all the discussion about oil and how much of a premium it has priced, but the fact that it still remains below some of the key thresholds that we saw years prior, there's a lot of room for the market to price that, and the clear beneficiaries of that, at least in the immediate aftermath, is of course all these energy shares, Chevron being one of them.
And Chevron, I'm looking at the 30 Dow stocks right now. Only 2 are higher at the moment. P&G and ding, 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 Chevron.
There you go. Yeah.
All right, what else have we got? Oh, talking about the other ways that oil can impact industry. Let's talk airlines, shall we?
Let's talk airlines, and specifically about Delta. So ticker DAL, the losses accelerating from the opening drop. They are now down more than 5%. This is a 4-day losing streak for this share. And again, we have a lot of analysts warning about the impact on the airline industry in particular. Deutsche Bank warning on Friday that there is an existential threat for carriers because of the jump in oil. So taking a look as well at the S&P Super Composite Airlines Industry Index, that is down more than 3%, also down more than 20% from a late February high. So technically that is in a bear market at the moment. But specifically to Delta, we also got a downgrade for the stock by TD Cowen. Analyst Thomas Fitzgerald cutting the target for Delta to $71 from 82 previously, though they are maintaining a buy rating. It's funny though, because that cut to 71 is still about a 20% increase from its closing price on Friday. So again, a lot of room to price this in.
Absolutely. All right, let's move to a stock that's actually on the rise today.
Yes.
Christine.
Let's talk about HIMS and HERS, so ticker HIMS. It's a rare bit of good news in the markets at the moment, company specific though. So HIMS, of course, has been mired in this lawsuit that Novo has brought against the company. It ended that. It dropped the lawsuit that it filed last month, and Novo now saying that it will work with HIMS to sell their obesity drugs on the HIMS platform. So Ozempic, Wegovy, including the Wegovy pills, which are very popular at the moment, all of that will be available on the HIMS platform. And in return, HIMS said that it will no longer advertise its copies of the Novo medicines because that was a key stipulation in the lawsuit that Novo brought.
Once foes, now friends. How quickly things change in the world of business.
It's complicated.
At least they recognize the synergy, right? That
I guess there you go.
There you go. It's synergy.
Christina Aquino, thank you so much. Bloomberg Managing Editor for Markets Live. And of course, for more stock reports like this, be sure to subscribe where you can listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, we're looking at equities now at session lows with the Russell off by 2.5%, the S&P 500 losing 1.5%. Clearly, investors are repricing what they had thought might be a short-lived conflict into something that is a conflict that shows no signs of easing, at least at the moment. Alyssa Odenheimer is our Bloomberg Breaking News editor for Israel. She joins us now to give us the latest out of the Middle East. And Alyssa, we woke up this morning to learn that Iran has chosen as its new supreme leader the son of the former supreme leaders, and a hardline son at that. Walk us through what we need to know this morning.
Yes, that's correct. Iran chose Ali Khamenei's son, Mojtaba, as the next supreme leader. He's 56 years old, and his reputation is one of a hardline cleric who's going to follow his father's path. And he's thought to be close to the IRGC, and he is not somebody that President Trump would have chosen. It's been reported that President Trump is not happy about the choice.
And, you know, one wonders if this regime will be any different from the one the Trump administration just took out, or whether or not it may even be worse than the prior regime, if you can imagine that, because now you have a younger, maybe more robust leader in the Ayatollah's son.
Yeah, that's possible. And there's also the fact that he may be looking to avenge the death of his
his father.
Right, who were killed. They were killed on February 28th in the opening strike by Israel, which opened the current bout with Iran. So yes, that's also possible, though it's hard to think how it would be possible for him to be more hardline than his father.
So tell us a little bit more, Alyssa, on what we've learned in terms of Iran fighting back with its own attacks. Where are we in that?
Well, they've been hitting the Gulf countries today and, during the past days, and of course, Israel. Overnight, there were many strikes on Israel also during the day today. Today, one person was killed and another two were badly wounded. Last week, 10 people were killed, including in one place it was 9 people, including 3 siblings, teenage siblings. So they've been hitting very hard, though there is evidence that the number of strikes has declined over the days.
Tell us more just about, you're in Jerusalem, Alyssa. Just tell us what things are like on the ground there in Israel and how people are coping.
Well, it's kind of mixed. On the one hand, it's very difficult for people, especially people who have small children or the elderly, who would have trouble running for shelter, running for their safe rooms or for public shelters or for shelters in their buildings. And there's people who have had to sleep in the shelters, in public shelters, in train terminals and so on. But on the other hand, there is also people are also keeping good cheer. There's even jokes. People have put together an app called Can I Shower, which is supposed to tell you if it's safe to get into the shower when, judging on when the last strikes were in your area and so on, or another app where it tells you how much time you've spent in safe rooms, depending on which city you're in.
Melissa, thank you so much for giving us a slice of what's happening there on the ground in Jerusalem. Melissa Odenheimer is our Bloomberg breaking news editor for Israel, giving us the latest here out of the Middle East. From New York, this is Bloomberg Intelligence on Bloomberg Radio. Get the latest news whenever you want it with Bloomberg News Now. Top stories from our global team of reporters.
Defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television, top experts, great questions. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Key investors, top executives.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Oil remains in the driver's seat for all sorts of assets. Crude backing up across the Persian Gulf, storage filling up on land and sea, and producers, including Saudi Arabia, they have to trim their output at this point because there's no place to put it if you can't ship it. Earlier today, some relief on the idea that we'd get a release of strategic stockpiles from some of the G7 nations. But now France, this is like just in the past few minutes, says G7 not there yet on releasing oil stockpiles. Right now, the S&P 500, 89 points lower. That's down 1.3%, 66.52 on the index. The Dow Jones Industrial Average, 732 points lower. That's down 1.5%. And the NASDAQ 100 down 250 points. That is a decline of 1%. And let me just give you Brent up 11%, 103.08 a barrel. And then American crude, WTI, up 10%, right at 164 cents a barrel. Talkspace shares up 7.8%. Universal Health Services said it plans to buy the behavioral healthcare platform for $5.25 a share. And let's do the best performer right now in the S&P 500. Live Nation Entertainment, those shares 6.3% higher. They've reached settlement with antitrust authorities in this lawsuit that accused the company of illegally monopolizing the live music industry. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Okay, so you're all war-weary and just feeling crummy. I'm going to show you something from the lawn cam. Yes, I do have such a thing.
The lawn cam?
Lawn cam. The flowers are coming up.
Oh, nice.
Isn't that nice? I guess they're crocuses.
Well, it definitely feels like spring in New York today. I think the temperatures are getting up to mid-60s.
A high of 66. And I say
Turn
let's take
that
the show
frown
outside.
upside down.
We're taking the show outside.
I mean, okay, I hate to be double downer, but I think the cold weather does return next
It is, Scarlett, but don't look at the long-range forecast. Live in the moment.
Live in the moment. All right, thank you for that. John Tucker, I really appreciate your ending the business flash on an up note. We should all think that way. All right, let's take a look at what's going on in markets, because it feels like we have gone from a market pricing for a short confrontation into a market now looking at perhaps stagflation. That seems to be the word of the day, of the moment. Anna Rothman is the CEO of Grenadilla Advisory, and she joins us now from Cleveland, Ohio. Anna, when we talk about stagflation, it's that idea that inflation is rising, unemployment is also rising, the economy is slowing down. It's kind of like the worst of all worlds. How much credence do you give to this idea that people are pricing in stagflation right now?
Yeah, good morning. Let's start with good news. I have daffodils coming up all over my yard right now, and they're beautiful.
Thank you.
So stagflation is one of those things that you have to have lived through it for a while for it to actually make sense for us to call it that. I don't think we're there right now. So in terms of slow growth, we don't really have slow growth. In the aggregate, U.S. economy is still very resilient. Even if it's a K-shaped economy, it's actually growing at a pretty decent clip. The unemployment rate that we got and the jobs report we got on Friday, I think that's an anomaly, just as the month before's great employment report was also an anomaly. So I think that has more to do with volatility in the data rather than volatility in the labor market. And lastly, inflation is one of those things that can also creep in. I don't think the Fed is looking for a price shock related inflation. I think they're looking for more of a self-propelled type of inflation. So I think it's too early to be talking about stagflation at this time. Maybe a year from now, if we're still in this condition, I think that would be fair.
What is self-propelled inflation? Talk to us about that.
Yeah, so that's the type of inflation where the economy itself is generating the price hikes. So, you know, if you remember a few years ago, the Fed was very concerned about wage increases going up. And that's because if prices of goods and services are going up and the wage increase is going up, then that wage increase then leads to more goods increase, and then that leads to more. So it's self-perpetuating. And that kind of inflation, it can be taken care of by monetary policy and sometimes with fiscal policy. Oil price shock, that can be temporary. And frankly, with the war going on, it's really one day at a time. So I think they'll be patient on it. And just as quickly as the oil prices went up, if this thing ends, it could also come down. So that's a wait and see.
Yeah, drivers are certainly hoping for that. You look at the average daily gas price, it is now approaching $3.50 when it was below $3 prior to the start of this war. So Anna, as we look for some of this to kind of settle down, what's interesting, of course, is that the havens, the traditional havens, are not working. Bond prices are down, yields are higher, gold prices are lower this morning as well, and that may just be a knee-jerk reaction to the stronger U.S. dollar. But why are havens not behaving the way they should?
Well, let's talk about that U.S. dollar, right? Yes, I think a lot of it is reacting to the U.S. dollar, but the question is, why are assets going into the U.S. dollar? And U.S. dollar right now and oil futures, those are the two safe havens. And oil futures, it makes sense. U.S. dollar, in the narrative of Saudi America, it does not make any sense. So I think on the Treasury side, you've got inflation that is a worry right now, and certainly the stagflation trade. So the longer end of the curve is going up. It's going against a traditional narrative of safe haven. I think the gold part of it, I think it's just there's a fatigue in buying at this time, and there's a lot of uncertainty. So I think gold has, it's not like it's dropped all of a sudden, but it has been the safe haven for the last several years. So I think it's taking a pause. So a lot of the correlations that we're used to are not working. Right now, the only thing that is safe seems to be the U.S. dollar. And frankly, if you talk about the global equity markets, U.S. assets are also safe haven. It's losing less.
You know, when you think about when investors are going to have the appetite again for U.S. risk assets, when do you think that's going to be? Because when you think about big tech and investing in AI, you have to be in the U.S. market, do you not?
Yeah, no, I've been waiting for that. So part of the rotation that we've seen in the last month or two, I think that is, it's just kind of expected in the markets. I mean, you expect the markets to rotate, but in the end, long-term investors like institutional investors, if they want to be in the AI space and the development, really catch it early, because we are still in the early stages, they have to come back into the US market. So at some point, we're going to get to a point where it's too cheap and investors will come back in. And that is what I'm waiting for.
Anna, really appreciate your joining us on this Monday morning. Anna Rothman is CEO and founder at Grenadilla Advisory, giving us her outlook on the financial markets. All right, let's find out what's going on when it comes to the policy making, when it comes to the conflict in the Middle East. Tyler Kendall is our Bloomberg Washington correspondent. And Tyler, one of the things that the markets and investors were looking to was this idea that G7 finance ministers would start releasing oil from emergency reserves. And that helped calm the surge in oil prices down a little bit, in that oil prices came down from their near $120 levels. They're still above $100, but things calmed down just a bit. What is the latest on that front, Tyler?
Yeah, hey, Scarlett, good morning. Well, there was a redhead on the Bloomberg terminal earlier today saying that France's finance minister said that the G7 is, quote, not there yet for a coordinated release when it comes to emergency reserves, though the G7 is willing to take the necessary steps in order to stabilize the oil market, and that they will continue to monitor the situation closely. So it hasn't been ruled out as a potential just yet. But you're exactly right. It feels like there are these attempts to try to help stave off this potential crisis here, particularly when you listen to U.S. officials that have been urging calm and really downplaying the oil spike. I think it's fair to say, right? We heard from the Energy Secretary, Christopher Wright, over the weekend saying that this will not be a long-term conflict. Other U.S. officials saying that this is a short-term disruption for a long-term gain of the U.S. achieving its policy objectives when it comes to Iran. The thing is, it doesn't feel like there is a diplomatic off-ramp really in sights at the moment, as the White House is actually threatening to widen the war. Now, we have heard from U.S. officials that there are some other options on the table. At the moment, it doesn't feel like the Strategic Petroleum Reserve is going to be an option to tap, as officials have pointed elsewhere. But we haven't really heard a lot else materialize as those oil prices trickle down to retail gasoline. Scarlett, President Trump met last week with his Energy Secretary as well as Treasury Secretary to talk about some potential solutions to help domestic consumers when it comes to this, but nothing's really emerged beyond. We heard President Trump offer that idea of risk insurance and naval escorts for those vessels through the Strait of Hormuz. I'll also say quickly, we're hearing here in Washington that potentially the White House could ask Congress for a gas tax holiday, but at this moment, that plan hasn't materialized.
And certainly for the second time in 6 days, Turkey said that it intercepted, or that NATO intercepted, a missile from Iran. What does that tell you, Tyler, in terms of possible timeline here and how widespread this war in the Middle East may go?
Well, it's interesting because Turkey had called for diplomatic efforts to help diffuse the tensions, as we've really seen multiple regional partners be hit by Iranian drones. And we heard from Iran's president actually over the weekend saying that he had instructed the military not to hit those countries that aren't preemptively striking Iran. And he actually apologized to neighboring countries. But then you're seeing still that there has been this ramp up in attacks. It's really just the latest sign of escalation in the region. And of course, we saw the regime choose its new supreme leader. And after that happened, Iran's state media actually reported that the country is preparing to sustain high-intensity fighting. They have enough weapon stockpiles, they say, for the next 6 months, and that we should actually expect to see more advanced and longer-range missiles start to be deployed in the weeks ahead. So at this point, again, no diplomatic off-ramp appears to be in the sights on the table, as both sides are escalating this. I mentioned earlier that President Trump had floated that we could see the U.S. widen this war. He did post on Truth Social over the weekend saying that the U.S. was looking at expanding its list of targets beyond what we've seen, which has really been aimed at military and government sites. The U.S. has maintained that it hasn't gone after infrastructure. The U.S. Energy Secretary said that in terms of energy infrastructure over the weekend in an interview, though it is important to point out that Israel did strike multiple Iranian fuel depots over the weekend.
Also, I believe the president made some comments that suggested that boots on the ground is something that could be under consideration in a very rare instance. Can you elaborate on that?
So he was asked about this directly by reporters on Air Force One, and he said that this isn't an option that he would want to take, that he would only take it if the conditions were right, if the U.S. was able to fully control the situation where American boots were put on the ground, trying to diffuse some of those concerns that we've really heard from members of both sides of the aisle in Congress, as they've essentially have voted down their authority to help limit the president's actions when it comes to this, but they do bring up concerns about boots on the ground, and then lawmakers would want to get more involved. But Scarlett, Bloomberg News is reporting that the president is weighing a potential option to send in special forces on the ground to extract Iran's highly enriched uranium. So that's potentially one option on the table that we could see come up.
Tyler, thank you so much for that wrap-up. Tyler Kendall is our Bloomberg Washington correspondent here as we try to get our heads around the latest events coming out in this conflict in the Middle East. From New York, this is Bloomberg Intelligence on Bloomberg Radio. Coming up, we're going to speak with Bess Friedman of Brown Harris Stevens on the U.S. housing market.
Sintra, Portugal.
Ottawa, Canada.
Bangkok, Tehran.
Jackson Hole, Wyoming.
Windsor Castle, England.
The Circuit de la Sarthe in Le Mans.
And this.
And this.
And this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television, top experts, great questions. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So oil, you have that hovering around $100 a barrel. And traders at this point worrying about inflation and growth concerns, stagflation. Stocks are lower, bond yields are higher. Let's start with Brent. It is up 11%, 103 right now per barrel. WTI, $101 a barrel right now. That's up 11%. As far as the major averages, the Dow Jones Industrial Average down 641 points. The S&P 500, 68 points lower. That's a percent decline. The NASDAQ 100, 192 points lower. That's down about 0.8%. It's actually paired some of the earlier losses. They made all nice after months of beating each other up. Novo Nordisk and Hims and Her Health going to work together to sell their obesity drugs. Hims and Her shares today, they're 35% higher. Maybe going to a concert's going to get cheaper. Live Nation Entertainment and its Ticketmaster subsidiary reaching a settlement with federal antitrust authorities. That makes it the best performing stock right now in the S&P 500. Live Nation is up 6.4%. And then to the worst performer, Carnival, down 6%, 6.3% right now. Yeah, you guessed it, fuel costs there. And then you have shares of biotech firms. They're climbing. This comes after Vinay Prasad, the head of the FDA's Division of Vaccines and Gene Therapies, is set to leave the agency next month. So I guess they're cheering that. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alexis and Scarlett.
Thank you so much, John Tucker. You mentioned bond yields being higher, and of course that's on concerns over inflation accelerating given what we're seeing in oil prices and concern over this Middle East conflict turning into something more entrenched. And of course, with long-term bond yields, as they go, so go mortgage rates. And so I want to bring in our next guest. She is Bess Friedman, CEO at Brown Harris Stevens, to join us to talk about what's happening in the residential housing market. And Bess, I guess the best way I want to start things off is to kind of take a big step back and consider just how much international conflicts tend to affect the housing market. Yes, we know they lead to higher bond yields or they can lead to higher bond yields in this case, which could increase mortgage rates. But what does it mean in terms of demand overall for housing in the U.S.?
Well, good morning. Thank you for having me this morning. I think it's just more volatility and uncertainty. And I think, we've already had sort of a bit of a frozen housing market and some challenges with affordability. And this just creates a little bit more sort of concern for buyers who've been on the sidelines a bit. And so they may hold off, even though we saw rates go down. They're lower than they were the 30-year from a year ago, which is good. But this war is not really great for markets because, people don't know what's going to be. And so it's hard to say what the impact will be. But, I think it's going to be slow and steady and people are watching. And when buyers need to buy and can buy, they do. And in this environment, it's sort of wait and see a little bit.
Is cash still king in the home buying market right now? Because we knew for a long time there was this trend of people who had the cash were using it. It was really hard for other people to go up against them and win in these bidding wars. Is that still the case, or is that starting to, pull back a little bit?
I'm still seeing the cash is king. Last year we saw, especially in places like New York City, where you have discretionary markets, where people are buying their second or third home, cash is king. And we saw more than half the deals last year in New York City were done in cash. And so, yeah, I think that goes a long way, especially because money is more expensive. So if people have the cash, they're using it to buy their homes. So I haven't seen that mitigate at all. I think people who can afford to and have cash are going to use it versus getting a mortgage.
And a lot of the people who have the cash tend to be international buyers as well. How present are they in this housing market?
Not seeing a lot of the international buyers as of late. I see a lot of domestic people moving from within states, like New York to Texas, New York to Florida, but that sort of thing. But I don't see a huge international presence.
When you look at affordability across the map of the U.S., where does the buyer get the most value for their money at the moment?
I mean, it's really hard to say. I mean, there's certain pockets and areas, in different places of the United States where there are good, deals, where there's ample supply. But there's certain parts of New York, even New York City, where there's decent supply and people can negotiate and really get something that makes sense, where the price per square foot is really a good value. Parts of Brooklyn, there's parts of upstate New York and Florida. There's different areas. It really depends on someone's circumstances and what they can afford. But where you see tighter supply, like places like Palm Beach and Connecticut, that's where buyers are much more challenged. But there's certain areas like, in California and different areas where there's a decent amount of supply. It just really depends because real estate is so local. And it depends on someone's circumstances and what they can afford.
Yeah, absolutely. I mean, one town in one state will be completely different from another town in the same state. What does inventory look like when it comes to existing homes versus new construction?
You guys probably have read this stat that we have a shortage of homes in the United States of roughly 4 million, give or take, and we have a real, challenge in that we need to get more supply. So, builders are, not as quick to build today as they were. And so we're not seeing the same incentives to build. We have challenges with zoning, and the people that own homes already are taking their time to sell as well because they have locked in rates that are lower, and therefore they don't want to list and sell. So we have a challenge in both areas. And so, we're trying to do things like, as you guys are probably aware of, City of Yes, where we're able to get something like 80,000 new units into the housing market. We need more legislation like that so that we can get, more supply into the market. So new home sales are, new builder sales are slower, but, it's sort of a challenge in both arenas, in the resale market and in the new home market.
I'm wondering if banks are going to get a little stingy when it comes to mortgages in the months ahead. And part of that, I'm wondering, is might that be a knockoff effect of the cracks we're seeing in the private credit market? Are there any signs out there that make you think it's going to be harder for folks to get a mortgage in the coming months?
I haven't seen anything in particular, but it's been somewhat slow. If you talk to mortgage professionals, they'll tell you that people, are taking their time. They're not, jumping into the housing market in the way that they were. There's a little bit more refinancing right now, but I'm not seeing anything via restrictions that are prohibiting people. It's more of, people feel they can't afford to buy their first-time home. The stat was something like first-time home buyers are now roughly 40 years old when they used to be 28 years old just, a little more than 10 years ago. So people have been priced out of the American dream, as they say. And so hopefully we can come up with new incentives and ways for people to be able to get back into the housing market. Things like City of Yes, good legislation, upzoning, all those things. We need more supply. That's really the biggest issue.
Yeah.
Every article you read from economists, from law professors, they talk about the fact that we need more supply, and we have to put more supply in the market. Freezing rents, those sorts of things certainly do not help the market.
Bess, really appreciate your joining us. Bess Friedman is the CEO at Brown Harris Stevens, talking to us about the challenges here in residential housing. And Alexis, it always comes back to supply and the fact that there isn't enough of it. And all of that is, really the legacy of the great financial crisis, where there was plenty of supply for a while. And then because of the financial crisis, all the home building kind of stopped, and we're kind of now in this hole.
And we're sort of paying the price quite literally with the average median home sale price. I like sale price versus listing price, right? Because that's what we actually bought the home for. Is still over $400,000. So there's still, even if rates start to come down, they need to come down in a more material way to offset that higher home price.
Absolutely. These are all challenges that the government is trying to address. We are looking at higher yields this morning, with the 10-year yield now up to 4.15%.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
This is Bloomberg Intelligence. Alexis Christoforous and Scarlett Fu here with you this hour. Paul Sweeney has the week off. We are, of course, monitoring the fallout in financial markets from the ongoing war in the Middle East. You have oil prices in particular surging today. They have come off their worst levels in that they've pared some of their advances. But you look at WTI, which is the NYMEX crude, and Brent, which is the global benchmark. And Alexis, they're well above $100.
Yeah, and we're feeling it pretty immediately at the gas pump, right? I mean, I filled up this weekend in northeastern Pennsylvania, $3.79 a gallon. Yeah. That's the cheapest I could find. National average is $3.48, by the way. But, you know, up about 50 cents in just the past week.
Yeah, it's moved rapidly higher just in the last 2 days alone. Let's get a sense of what's ahead for oil and other commodities with Carly Garner. She is a senior commodity strategist at Carly Trading, and she joins us right now from Las Vegas, Nevada. So, Carly, you look at oil, and they've come off their highs of the session, but they're still staying above $100 right now. How are people? What's the sense like? What's the sentiment like in the oil market? Is this panic, or is this a sense that things are going to stay elevated for a good long while?
Here, if you look at the back month contracts, so for example, most people are looking at April futures, May futures. Those are up wildly higher, obviously. But if you look at anything from August delivery through December, we're still trading in the 70s. So the market itself is not panicking. What's happening is that the front months are, in my personal opinion, I think we're experiencing a lot, hot money rotation. We saw this in silver a couple of weeks ago. There's a group of retail traders that are shifting their money from gold to silver to the crude oil now. And so it tends to blow up the markets. And I think, unfortunately, the futures markets have an ETF problem. Again, we've seen this in other commodities recently. We saw it in 2022 when Ukraine invaded Russia. The wheat market completely blew up. And it's because we have commodities aren't as liquid as stocks. They're not as deep of markets. I know everybody thinks crude oil is this massive market, and it is. But if you look at the futures themselves, it just can't absorb the cash inflow that comes with the hot money once a trade goes viral and the idea gets viral. So most of the chaos is happening in the front months. Now, with that said, when you get this type of an oil shock, it's generally very bad for risk assets. We're already starting to see that. I've been doing this since the early 2000s, and I've seen oil move this far, this fast on 3 other occasions: 2008, 2011, and 2022. And in all 3 of those scenarios, we eventually got a wave of basically deflation in risk assets. So oil spike actually popped the commodity bubbles in those instances, and then it also popped the stock market. I'm not going to say bubble, but it triggered a correction of 20% or more on those occasions. So we have to be very, very careful what the implications of this crude oil move will be on the other markets. Now, regarding where crude goes from here, generally, when you see a commodity spike like this, a lot of it's gamma squeezing, people that bought calls on USO or put money into the ETF, like I already mentioned. On the futures side, we have the same thing. People short calls, people buying calls, and the dealers have to buy futures to hedge. So it squeezes the price higher. But usually when you see that big overnight rally, we generally retest that. So even if that was some sort of a blow-off high in crude oil, we likely see that or higher. So we're talking 120, 122-ish, somewhere in there, as a potential target on the upside.
And Carly, what's the spillover effect for precious metals? Because we saw the torrid run-up both gold and silver had prior to the war in Iran. And lately they've been, while not coming back in a huge way, there hasn't been that investor appetite. Is that really all about the dollar and the strength in the dollar, since these precious metals are quoted in dollars, or is there something more going on here?
I think the dollar is a big part of it. While we've all been paying attention to the energies, the dollar has quietly put in a triple bottom on a weekly chart, and I think it's headed to about 110. A dollar index, the Bloomberg Dollar Index, if we get up to 110 or a little higher, like I think it might, that changes the landscape in literally everything: stocks, commodities, everything gets impacted, and it's not bullish. I'll just put it that way. But we're also seeing, if you lay up a chart, a monthly chart, and I've posted this to my socials, of the S&P 500 and gold together, we can see that somewhere around the pandemic, gold started behaving like a risk asset. It actually has been very, very highly correlated with stocks. And so if this oil shock corrects the stock market, gold's going to come with it. And in other words, most people that were buying gold, I think they assumed they were diversifying or hedging against a weak stock market.
But they were
I
really
think
just,
in reality, we're going to see the opposite.
Yeah, it looks like they were just really investing in another way to invest in equities.
That's exactly.
Yeah, because you normally wouldn't see precious metals rising along with equities, and that's what we had been seeing for a long time.
Yep. Right. Absolutely correct. And so I think it might catch a lot of people off guard. And so unfortunately, I do think the door's open for a wave of liquidation that really can get quite painful in the short run. I hope I'm wrong, but it's definitely possible.
All right. I really want to thank you for sharing your thoughts here. Carly Garner, Senior Commodity Strategist at DeCarly Trading, joining us from Las Vegas. And it goes to the idea, Alexis, that gold was trading like a meme stock, the way that it was jumping by double-digit percentages on some days.
It was. Now at about $5,100 an ounce. And silver now at 84.
All right. For our listeners in the U.S., by the way, a reminder that you can listen to us via satellite radio on SiriusXM channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research, because the next hour of Bloomberg Intelligence begins shortly. We are looking at losses in U.S. equities, losses in U.S. treasuries that is pushing yields higher, gains, big gains in oil prices. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
I'm Alexis Christoforous, sitting in for Paul Sweeney. Scarlett Fu here to my right, Charlie Pellet to my left. You are listening to Bloomberg Intelligence. We've got a packed hour ahead. We're going to talk, of course, about gas prices, the impact of the war on Iran, not just on those gas prices, but on global markets. But also there's other news happening today, Scarlett, including Live Nation reaching a settlement with the DOJ in an antitrust case.
I wonder if it's going to reduce prices or just make it so that prices don't go up as much.
Unfortunately, I think the latter is probably true, but we're going to talk to Jennifer Reed, Bloomberg Intelligence Senior Litigation Analyst, about that. A little later on, Kirsten Fontenrose, Senior Fellow at the Atlantic Council on the latest in the Middle East. And then Sarah Ponchek coming up in this half hour, financial advisor at UBS Private Wealth, to discuss her outlook for these markets, which right now, it's a familiar pattern. We've got equities down, oil higher, also some pressure there for the commodities as the dollar continues to rally. Let's get the latest on these markets now with your very own Charlie Pellet.
All right, thank you very much, Alexis. Here's what's going on. The Dow, the S&P, NASDAQ very much in the red. Got to begin with the movement in the energy markets right now. West Texas Intermediate crude traded here in the U.S. up 10.5%. WTI is above, continues to hold above $100 a barrel. $100.20 right now on WTI. Again, that is a move of 10.4%. Brent, the global benchmark, also surging up 10.6%, 102.49, as we continue to monitor fast-moving developments in the oil markets. Meanwhile, a headline from the New York Post with President Trump saying, quote, there he is nowhere near sending troops into Iran. S&P 500 index right now, we do have the S&P 500 index trading lower, along with the Dow and NASDAQ. S&P down 47, drop there of 0.7%. Dow Industrials down 473, a decline of 1%. NASDAQ Composite Index right now lower by just about 0.4%. The Russell 2000 Index of small cap shares down 1.3%, with a VIX at 28, 10-year 4.14%, and the 2-year 3.59%. Gold down 1.6%, 5,088 the ounce. Silver down 0.3%, and again WTI bears are beating up now by 10.3%, just above $100 a barrel. Well, certainly oil front and center as investors weigh the impact on inflation-weary consumers, and they're trying to game out how the Fed might respond. Anna Rathbun is CEO and founder of Granadella Advisory. She was a guest right here on Bloomberg Intelligence.
Oil price shock, that can be temporary. And frankly, with the war going on, it's really one day at a time. So I think they'll be patient on it. And just as quickly as the oil prices went up, if this thing ends, it could also come down. So that's a wait and see.
Anna Rathbun of Granadella Advisory. Among airlines certainly affected by higher oil prices, United down 6% right now, American down 4.6%, Delta down 4%, cruise lines also hit hard today, Carnival Corp down 5.6%, Royal Caribbean down 2.9%, and Norwegian down by 3.2%. Recapping, we've got the VIX just above 28 right now. West Texas Intermediate crude up 9.8%, and the S&P down 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks, Charlie. Yeah, travel stocks really getting beaten up today, and I'm glad you mentioned the VIX because it was up about near 33 earlier when I was on with Tom Keene on Bloomberg Surveillance, now down to 28. And of course, the VIX being Wall Street's so-called fear gauge. All right, want to take a look at some stocks on the move now. Alexis Christophorus here in for Paul Sweeney, who's down some ski slope somewhere. I think it might be, is it Colorado? No, he's in Vail. He's in Vail.
It's a nice life.
Yeah, whatever it is, we're jealous. And Scarlett Fu here with me. And we are joined by Bloomberg's Nora Melinda in the studio to take a look at some of the stocks that are moving. Hims and Hers, man, oh man, it is on the move.
On the move today for sure. We're seeing Hims and Hers, ticker HIMS, earlier surging as much as 49% for its best day on record. So that is a big number that we're dealing with here. This is after Novo Nordisk said that it will work together with Hims and Hers Health to sell obesity drugs, including Ozempic and Wegovy, on Hims platform. We know that this has been a bit of a back and forth where we saw Hims and Hers coming out with copycat drugs, Novo Nordisk pushing back. Well, now we're seeing a bit of a resolution with Novo Nordisk saying that they are willing to sell these obesity drugs on Hims and Hers network. So we are seeing shares of Novo Nordisk, ticker NVO, up about 2.6% right now on the news. So it seems as though investors on both sides are pleased with this agreement.
All right, so a mover to the upside. What's next on your list?
Looking at shares of Live Nation Entertainment, ticker LYV, we're seeing shares up about 5.7%. This is after the company reached a settlement with the DOJ in its antitrust case. Analysts are really saying that they see the deal as a positive and it doesn't require the sale of Ticketmaster. So we're continuing to monitor this, but we are seeing share action to the upside, 5.8% higher. It says that the settlement discussions have intensified since a trial kicked off on March 2nd, and a final agreement could be announced in the coming days. So closely watching that one.
All right, then you brought another goodie for us, Brown-Forman. What's going on there?
This one to the downside. The stock is trading ex-dividend today, so keep that in mind. But we are seeing it down today. This is after Brown-Forman, ticker BF/B. We did see that Bernstein, they cut their recommendation on the company to market perform from outperform. Now, they're saying that the downgrade is based on new concerns that margins will now face pressure from more costly barreled whiskey in greater size and for longer than expected. But they do make it clear that the rating change isn't about structural versus cyclical debate that we've been seeing in the U.S. Everyone talking about people really pulling away from alcohol consumption.
Right.
They're saying that they are concerned about margins in particular here.
All right, Nora Melinda, thanks so much for bringing us the Stock Movers today. For more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or wherever you listen. Want to bounce off what Nora was talking about a moment ago with Live Nation and our next guest, Jennifer Rhee, Bloomberg Intelligence Senior Litigation Analyst. Jennifer, thanks so much for coming in studio here. We don't know a lot about this Live Nation settlement, right? Maybe we should just start with, what do we know?
Right, and it's changing by the minute, by the way. I keep seeing new reports with new details, but it looks like at least one part of it is a divestiture. That would be divesting large amphitheaters that are owned by Live Nation. The Department of Justice alleged that Live Nation owned 60 out of the 100 top amphitheaters in the U.S. And the control over those amphitheaters, which the artists really need for summer tours, desire for summer tours, was part of the problem, some of the claims that were left in this litigation. So selling some of them opens them up to other promoters.
Okay, I guess one big question people had was Ticketmaster, the fate of Ticketmaster, and whether that stays with Live Nation or whether it's spun out or the company is forced to sell that. Do we have a firm answer as to what happens to Ticketmaster?
Well, not really. According to the DOJ settlement, it does not have to be sold, but there are 40 states involved as well. They are also plaintiffs, and they also have the authority to litigate under federal antitrust laws, just as the Department of Justice does, and not all of them have settled, according to the news reports. New York has actually come out and said, this isn't good enough, we're going to continue on. So if they continue on with the litigation, they will continue to seek a divestiture order from the judge for Live Nation to sell Ticketmaster. They see that as the only solution to kind of fix a broken concert ticketing system and live concert industry. I'll tell you, I think it's a long shot. You know, once you get the settlement with the Department of Justice and you kind of you lose the weight of the Department of Justice behind you on these antitrust matters, it is difficult for the states to go forward and win, even if they won a jury determination that Live Nation was guilty of illegal monopolization. I'm not so sure that the judge would be willing to stick his neck out and impose what's considered a really drastic remedy generally to force a company to break itself up.
So let's play pretend and say the states are not successful with their trials. Does this DOJ settlement mean anything at all to you and me when we go out to try to buy tickets? I mean, and I've said this, people who listen to the show regularly know I talk about being a family of 5, and man, you're taking a small mortgage. It's just like take the whole family to go see a show. So is that going to get any better under this settlement as it stands?
I'll tell you that I'm skeptical. And you know, what you just said is why this case is so politically popular, and this was a little bit surprising because it really has bipartisan interest. It has bipartisan support. You know, it consumer support. Kid Rock was going to come along, and he was going to be a witness for the plaintiffs in this case. Because Live Nation has been under a Department of Justice consent order since 2010. So in other words, since 2010, the way they behave in the marketplace was supposed to be regulated. They were supposed to behave in a certain way, and they've managed to really get around that for years. In fact, during the first Trump administration, the Department of Justice investigated, determined that Live Nation was violating the terms of that order and extended it and sort of bolstered its terms. Okay. And now this case came along with the allegation that no, Live Nation continues to violate the terms of that order. And so my skepticism comes from there are new terms here that they're talking about that again are behavioral. I talked about selling the amps, but there are also behavioral conditions. And if Live Nation's been able to get around behavioral conditions since 2010, I'm not sure what's going to stop them now.
What about Ticketmaster's competitors? Have they done things better? Have they changed the way that they sell tickets or that they allow people to buy and sell tickets?
What's interesting you ask, because the CEO and founder of SeatGeek was one of the witnesses I heard last week. And SeatGeek started as a secondary ticket seller. They were just a marketplace to bring together people who wanted to sell tickets they couldn't use and buyers. But they're trying to get into what's called primary ticketing, being the first one to ticket an event, and really have struggled. And they say they have struggled because of Live Nation, that they have superior technology, that their platform is better, that what they can offer venues is better, but they haven't been able to get those venues signed up because either they have a long-term exclusive agreement to be ticketed by Ticketmaster, or because Live Nation, which is a huge promoter, handles artist tours, said, we'll route our artists around your venue. We won't bring them to your venue if you use some company other than Ticketmaster. So really what we've seen is that Ticketmaster doesn't have a lot of competition in the ticketing area, and part of it is allegedly because of its own conduct.
All right, Jennifer Reese, Bloomberg Intelligence senior litigation analyst. Thanks for putting this Live Nation settlement with the DOJ in perspective for us. My big takeaway is I'm not going to be paying less for ticket prices anytime soon. But Jennifer, thanks so much for being with us. We want to get to a red headline crossing the terminal right now. Anthropic is suing the Defense Department over those supply chain risk labels. So we're going to see this fight now being escalated, Scarlett, between Anthropic and the Defense Department, and some in the AI space place were saying this was not smart on the part of Anthropic to sort of ratchet things up, but here we go, now suing the Defense Department.
Yeah, Anthropic saying it's being punished on ideological grounds, so challenging that Pentagon decision to label it a supply chain risk, and as you mentioned, escalating this dispute over the use of AI in warfare. We'll keep you posted, but the two lawsuits, one in the U.S. District Court in the Northern District of California and one in the D.C. Circuit Court of Appeals. All right, let's get to where the warfare is happening right now, which is the Middle East. Kirsten Fontenrose is senior fellow at the Atlantic Council, and she joins us now to give us her perspective on what we're hearing, which is that Iran has named the hardline son of the late Ayatollah Ali Khamenei as its new leader, and Iran has maintained its attack on nearby countries. Kirsten, let me just start with this idea that Iran continues to attack nearby countries. What is the capacity of Iran to sustain these attacks?
Iran has a good stockpile of short-range ballistic missiles and continues to produce more medium-range, long-range ballistic missiles. They actually have a delivery mechanism for an intercontinental, but they just don't have the warhead to stick to it, which is something the U.S. is consistently monitoring. So they claim that they are able to sustain this for quite some time. Now, the U.S. strategy right now is to take out as many launchers and stockpiles of these missiles as we can, and that's kind of methodically being pursued. But what Iran also has threatened is asymmetric tactics. So they're going now after things we would expect. They're pursuing targets like integrated air defense sensors across the Gulf and in Israel. You'd expect that. That's essentially what the first targets were of the U.S. strikes. And there's a new reporting now that Russia may be assisting them in improving their targeting. So watch this space if that's confirmed, because that will complicate even talks with Ukraine. And they're also targeting civilian sites. And this is really what has raised the ire of the Gulf states, because they see this as kind of like a punch below the belt. We have told the U.S. not to strike from here. You're hitting us in the face. So that has backfired quite a bit on the Iranian regime, to be frank. But they can look to their asymmetric capabilities as a way to get the U.S. where we're not watching. They know that they don't match us missile for missile, air defense for air defense. And the proxies that we know about, the Houthis, Hezbollah, the militias in Iraq, their presence that was in Syria, have been degraded. They don't have their drone factory in Venezuela anymore, but they are capable of potentially causing damage to what we call soft targets like embassies or synagogues or other civilian targets around the world, kind of anywhere, which they know would require the U.S. and anyone on the U.S.'s side to be incredibly vigilant at all times globally. And that's what they are threatening, in addition to these strikes that are increasing on oil infrastructure and hotels and ports and the like.
I think we're seeing can still have a chilling effect on the globe, really. Is most of their leverage the fact that the Strait of Hormuz is basically, for all intents and purposes, shut down?
That is a lot of their leverage, because they know that has a global impact beyond the countries that are actively involved in the direct conflict. And so they expect that that will mean that other national leaders are coming to Washington quietly and saying, hey, look, we can't take this hit, and this will impact how we relate to you, whether it's votes in the UN or trade relations or, contributing to efforts that you want us to participate in, like the Board of Peace in Gaza, whatever it is. Iran is thinking this will cause other countries to get engaged on the side of forcing the U.S. to stop this war, because it's so threatening and damaging to their own economies, much less the U.S. economy. You've watched China, though, kind of carve out something for themselves. They often talk to Iran and say, we will not oppose you, for instance, in the UN Security Council, if you let our ships kind of sneak through. And we expect continued conversations like that. But that sure is a lot of leverage. It's been interesting that we haven't watched the Houthis, who have up until now in the recent years been the purveyors of warfare through the Strait. They haven't really been involved. It's truly been Iranian activity solely.
What's the number one thing you will be watching for over the next 24 hours, Kirsten?
We'll be definitely be watching this information on whether Russia is involved in the targeting. We'll be watching whether or not Mojtaba al-Khamenei, the new supreme leader named in Iran, can survive, and watching whether, as a supreme leader, he now feels it's imperative to make public statements. He's never made a public statement. He's never done an interview. The people really have never seen him. He's only known through rumor. So, you know, will this force him in a new leadership position to pop his head up, which makes him very vulnerable to strike? And how will the new council, these 88 clerics that have inaugurated him, how will they respond? Will we see them launch additional strikes? Will this be a new era of asymmetric warfare around the globe? How is this new leadership going to react to the battlefield? And what will that mean for shaping the coming days or weeks?
All right. Kirsten Fontenrose, Senior Fellow over at the Atlantic Council, speaking about the latest that's happening in the Middle East. While we're having that conversation, Brent crude coming off its highs of the day now at $100 a barrel. WTI crude below $198 a barrel. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are well off session lows, now looking at a 37-point drop on the S&P 500 index. Oil is surging, the S&P at 67.02, down today by 0.5%. Back to work Monday with the Dow down 387 now, down 0.8%, while NASDAQ is down 57, a decline there of 0.3%. The VIX at 28, the 10-year 4.13%, the 2-year 3.57%. Gold is down 1.5%, $5,092 the ounce on the precious metal. Silver, little change, down 0.1%, $84.45 for an ounce of silver. But West Texas Intermediate crude now at $95.70. WTI up now by 5.4%, have been trading above $100 a barrel. And Bitcoin at 69,076. Bitcoin now up by just about 2.7%. Some of the other stories that we're following as we have been reporting, the Justice Department says Live Nation Entertainment has reached a settlement with federal antitrust authorities. Live Nation shares are up today on a down day for much of the market, up by 6.2%. Novo Nordisk and Hims & Hers Health have struck a deal saying they will work together to sell obesity drugs. Shares of Hims & Her Health surging 41%. And as we have been reporting, Anthropic is suing the Defense Department for declaring that the AI giant poses a risk to the U.S. supply chain. Recapping, S&P down 0.5%, the 10-year 4.13%. West Texas Intermediate crude now at 95.66, up by 5.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellets, and that is a Bloomberg Business Flash.
Thanks a lot, Charlie. We appreciate it. Coming up on 11:24 on Wall Street, I'm Alexis Christoforous, in for Paul Sweeney. Sitting to my right is the lovely Scarlett Fu. We are in the Bloomberg Interactive Brokers studio, and I want to bring in Sarah Ponsick now, financial advisor at UBS Private Wealth Management, also a former reporter here at Bloomberg. Little tidbit you may not have known. She's going to discuss her outlook now for the markets. And Sarah, thanks so much for being with us. As a financial advisor over there at UBS, I'm just curious what kinds of phone calls you are fielding from clients, if you are at the moment, as to, what are they thinking about in terms of their own portfolios given the geopolitical landscape?
It's always good to be back with you and back with Bloomberg. But no, I have heard from clients. Look, anytime that there are geopolitical concerns, especially when there are concerns that hit very close to home and you see news and headlines constantly on your phones, on TV, you can't escape it. And you also see that, yes, markets are in the red today. It can be concerning. It can be concerning for you, for your portfolio, and for your long-term financial prospects. So yes, some clients have reached out asking, oh my gosh, what should we be doing? Markets are concerning, but it's our jobs to remind them. And I'm sure you guys have had these conversations many times already this morning and over the last week or so. Yes, volatility feels harrowing. It is never comfortable. But if you look at where the stock market is today compared to, when the news surrounding Iran really broke, the S&P 500 is only down about 2% on the year. We're not even 5% off all-time highs. We really have not seen large market reaction. And from our perspective, from UBS's perspective, we do somewhat align with that. The reason being that, yes, there are concerns, there are risks surrounding geopolitics, surrounding prices, inflation, given that oil prices are now above $100 a barrel. But if you look at history, what history has taught us is that typically short-term oil spikes, short-term price spikes, and geopolitical concerns and wars in the long run do not have long-term effects on investor portfolios.
I guess the problem is that this is happening at a time when there's a lot of concern already percolating in markets, whether it's about inflation, whether it's about AI disrupting industries. That's a structural issue. And you also have signs of stress in private credit. So perhaps the sentiment is fairly fragile at this moment. What has this conflict in the Middle East done to sentiment that was already, kind of wobbly at this point?
It only adds on. It's like you have building blocks that you keep stacking higher and higher and higher. And the higher those building blocks get, it only takes one more impetus or one more concern for those building blocks to fall. With that said, though, there are always concerns in markets. I think over the last 5 years even, there has not been a week or a month in markets where we were not talking about something that was concerning, whether it was the war between Ukraine and Russia, Israel and Hamas, other concerns as well, the rise of interest rates, and just look at how resilient markets have been to date. Because yes, like you said, there are concerns over artificial intelligence right now, but more so how we see it is that we're undergoing a transition of, a world in which the companies that were benefiting were the AI enablers to now the companies that are going to be able to use AI to actually produce more revenues, more efficiencies. So we see AI still as a driver of long-term markets. And I always think it's interesting and helpful to look at a couple of particular statistics in these circumstances. Again, volatility is very uncomfortable, but if you look at the S&P 500 since 1980, we have actually seen on average an intra-year drop of 14%. So every year, not every year, but on average, you see a 14% drop in the index. And yet we all know in most years, the market ends higher. There are concerns along those ways that cause those intra-year drops. And if you actually look over that same time horizon since 1980, the S&P 500 has annualized a 12% return every year. And cumulatively, that's more than an 18,000% gain. It sounds ridiculous. It sounds crazy, 18,000%. But those are actually the numbers if you look at them.
But Sarah, what about people who don't have that longer time horizon? Somebody who needs to dip into the retirement funds now or maybe to send a kid to college or pay for the last year of college, whatever the case may be. They don't have time on their side, right? So what are they to do now to try to preserve, even more than build, but just try to preserve what they've got?
You're absolutely right, Alexis. Everything that I've said so far is really, if you're a longer term investor, if you have, years on your side to grow your retirement, to grow your portfolio. But if you're someone who, like you said, needs cash to send your child off to college, you have a large purchase coming off, you're in retirement and you're actually living off your portfolio year after year. Think about how far we have come over the last couple of years. We're coming off of 3 years in which the S&P 500 annualized a 23% return. It's not wrong to take profits. It's better for you to be comfortable and, mentally know that you have a nest egg for whatever you need it for in terms of cash. So yes, if you're someone who does not have a long time horizon, consider the fact that you've had a great run over the past couple of years. Maybe rebalance your portfolio, take some profits, have enough cash on hand for those expenses that are coming over the next, year to 3 years, or your expenses to live off of over the next year to 3 years. And then leave everything after that invested in a well-balanced, diversified portfolio. But I absolutely agree with you, Alexis. If you're someone who doesn't have that long time horizon, then it's good to have some cash on hand.
Sarah, always a pleasure. Sarah Ponczek, of course, former Bloomberg News reporter, current Senior Vice President, Wealth Management over at UBS Private Wealth Management in Boca Raton. We want to talk a little bit about some individual sectors, and here I'm really talking about consumer and high-end consumer, luxury consumer.
Okay.
They are obviously impacted by how people feel when it comes to the conflict in the Middle East and how comfortable people feel about spending in this current environment. There's a lot of uncertainty out there. What does that mean for companies like LVMH? What does it mean for the companies behind Cartier? Deborah Aitken is the luxury goods analyst here at Bloomberg Intelligence and joins us now from London. And Deborah, you've crunched the numbers and you say that this Middle East war will have a quantifiable impact on the luxury goods space, at least what was expected for 2026.
That's right, yes. So we went through some estimates and some data from third-party sources. We started with Altagamma, who, having spoken to around 19 sell-side analysts, had looked at 2026, and we saw that the highest growth was set to come from Middle East at around 6%, of which 4.5% from locals and 1.5% from tourists. And that was the fastest growth in the sector which we expected for 26 to grow to 4 to 5%. So we then started to say, okay, what happens if we see demand coming off in the Middle East locally at around 10%, and that gave us about a 50 bips dent for every 10% that was coming off. And given that we get a lot of that high wealth traveling abroad also to spend, we felt they could quite quickly across the year and depending on what would happen around the area, with around 1.5% shaved off that 4% overall for the global industry.
Deb, of the luxury names, the luxury retailers globally, is any one particularly better positioned to sort of weather this storm?
I think we need to think about the biggest global makers and the most high end. So we know companies like Hermes and Brunello Cucinelli are running and expecting high single digit to low double digit growth in 2026. Much of that comes from parts of Asia at the high end, very much from the US, parts of Europe and the Middle East. So there's a very good mix there. And then also we could look at names like Richemont, for example, where Cartier has been growing very strongly. And Richemont, incidentally, is one of only two who give away their breakdown in Middle East and Africa. They have 9% of sales from MEA region, Prada being the other with around 4%, which is where it is on average for the industry overall for Middle East Africa. But overall, we would expect Rolexes and others to do very well with waiting lists. So high-end jewelry and some of the high-end leather goods or apparel makers, we would think would do very well. It's quite interesting that into this geopolitical unrest, for Q4, there were some big names coming through with high single digit or double digit growth from the Middle East. So if things do continue for a long time, it does knock some of the growth away.
You mentioned jewelry and you mentioned leather goods. What about spirits? How is that different when it comes to, the breakdown, the categories within luxury?
So the only spirit maker that I closely follow is one of my colleagues covers the high-end spirits, but I would be looking at what would happen within LVMH Group. Their biggest exposures were out of Asia and the US, and where they were doing very well again in champagnes, doing better in wines, but spirits, particularly cognacs, were difficult again for 2026. So the growth outlook there wasn't very strong.
All right, Deborah Aiken, Bloomberg Intelligence luxury goods analyst, a part of the story we haven't really been focusing on, but real interesting stuff. Thanks so much for bringing your research to us. I don't know if you're aware, Scarlett, last we were talking about how, look, you might not be able to afford a Rolex, but now you can bet on the future price of one. Kalshi actually is launching watch futures. It's a predictions market on the future prices of luxury watches.
So it's a proxy. You can't buy one, but bet on the direction anyway.
Have a little skin in the game. It's apparently powered by the watch marketplace Bezel. But pretty soon, I thought you could pretty much bet on anything anyway. Here's just one more item.
I know that Kalshi and the prediction markets in general, Polymarket too, have been really trying to find ways to appeal to female traders, female investors. I guess maybe this is one move in that direction, but it sounds like it's a trade for Wall Street guys to bet on.
Yeah, and appropriate for you to also bring that up on International Women's Day, right? So maybe Kalshi and Polymarket are listening. We'll see what they can do in terms of bringing women into the fold for prediction markets. Once again, stocks off their worst levels of the day. We've now got the S&P 500 down just about 39 points. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We are looking at the price of crude oil back below $100 a barrel. West Texas Intermediate, 96.09 right now. Still a gain of 5.7%, but again, tumbling below $100. Barrel of Brent at 98.50, up right now by 6.3%. The Dow, the S&P, NASDAQ, all in the red, with the S&P at 66.97, down 42. We're off session lows, well off session lows, down 0.6%. Dow Industrials down 469, drop there of 1%. NASDAQ Composite Index down 60. For NASDAQ, a decline right now of just about 0.3%. The VIX, Wall Street's fear gauge, just above 28, 10-year 4.13%, the 2-year 3.58%. Gold is down 1.4%, 5,097 the ounce, and again, West Texas Intermediate crude 96.10 right now. That is a gain of 5.7%. France says the Group of Seven Nations is, quote, not there yet in terms of organizing a global release of emergency oil inventories in response to the Iran war. Julie Beal is portfolio manager at Kane Anderson Rudnick, and on surveillance this morning, she told us the surge in energy prices comes against the backdrop of already higher transport costs in the U.S.
It's already been exacerbated because there are new regulations that are potentially coming down the pipe in terms of restricting the access to CDL, commercial driver licenses, in the event of a person being an immigrant, right? So if we have fewer drivers and we have higher oil prices, that can really be persistent through the entire goods economy. So even what you pay out the prices starts to become less relevant when everything you buy starts to be more expensive to move around.
Julie Beal of Kane Anderson Rudnick. Among oil names, right now Exxon up 0.5%, Chevron unchanged on the day, ConocoPhillips up 0.6%. Uber says a feature designed to match female riders and drivers will be available nationwide, expanding access to a safety measure as it seeks to resolve thousands of sexual assault complaints from passengers in the United States. Recapping, S&P down 0.6%, West Texas Intermediate crude 96.46 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie. 11:42 on Wall Street. I'm Alexis Christoforous, sitting in for Paul Sweeney, who is skiing, I believe, in Vail. Scarlett Fu here, of course, as well. You know, Scarlett, I've been looking at Netflix's stock lately because it's gained 30% in the past 9 sessions. You know what? Directly correlated to the fact that it's no longer in the race for Warner Brothers.
Yeah, clearly investors are relieved that it's dropped its bid and basically given way to Paramount to buy Warner Brothers Discovery.
Yeah, and a $2.8 billion breakup fee. Ain't too shabby either, which leads us to our next guest, Seema Shah, Vice President of Research and Insights at Sensor Tower. Seema, you've been doing a lot of research on streaming, but I want to begin I know you're not here just to talk about this, but I do want to just talk quickly about Netflix. They quickly went from M&A loser to market winner, didn't they?
They did, and what they did in the interim of these last 4 days, they've made a small acquisition of a content creation company run by Ben Affleck, which I believe uses a more innovative technology and AI, and likely with an actor having run this studio, it probably aligns them better with the broader Hollywood constituency of actors and directors, all of whom are worried that this other large acquisition is going to have negative implications for them and their jobs.
Smart move, right, on the part of Netflix.
Yes. Smart move. Yes. Well, you know, they were always very strategic in everything they did.
Yes.
So this leaves Paramount to purchase Warner Brothers Discovery, the whole thing, too, not just parts of it, which is what Netflix was opting for. Where does that leave, potentially, Paramount when it comes to where it stands in the streaming wars? Because Paramount was not one of the top players.
No, in fact, it was one of the smaller ones. This sort of brings it, if you assume that we had Paramount having about 4% of global active users, HBO Max had about 10%, so this brings them to 15%. So now they're more in line with Disney Plus or Amazon Prime, significantly smaller than Netflix still, and likely I don't see anyone really gaining that share. But really what it is, it was sort of, to me, I'm not surprised they raised the price. I mean, Netflix sort of got them to pay even more. So you have these two legacy businesses that are really trying to figure out how to compete in this world, right? Because Netflix is digital first streaming. So Warner Brothers has this content, Paramount needs that content to be in the zeitgeist. It doesn't have a White Lotus. It didn't have a Heated Rivalry or a Stranger Things. So it really needs the content from HBO. And HBO is one of the fastest growing streamers on a global basis outside of the US. That's another benefit. And I would say lastly, only 15% of HBO users are Paramount users. So this is a chance for Paramount to go get some of those other users that it doesn't have. And then maybe also to attract that, you know, the user that turns on and off based on key content, right? I saw Game of Thrones, now I'm getting off. And I'll come back, right? So
yeah,
that's kind of how I
well,
view
you
it.
got to work the system sometimes to your advantage,
You
especially
do.
when all of these streaming services, it seems, you know, raise prices every, I don't know, year or two.
Yes.
You mentioned Disney Plus, and I'm just curious what Disney Plus means to the overall bottom line at Disney. Is it helping the bottom line?
I think they've been focused on making the streaming business profitable, but historically for Disney, ESPN was the most profitable part of the business.
That was sort of the cash cow for them.
And I will say, related to that, live sports is really what is driving users and attention for the streaming network. So what Paramount and Warner Brothers have together is the rights to the NFL, the UFC, the NHL, and the Major League Baseball. So they get those sports rights, right? And that draws real-time traffic. So you'll see that when Amazon had the Thursday Night Football, it was a huge spike. Paramount was very successful having, you know, the NFL and things like that. So that's actually a huge plus, I think, for these guys to get that ongoing. And you mentioned the price, and I was listening to earlier about like price of oil. Obviously, that means the price of gas is going to go up and people will have even less discretionary income. I think you'll see more people being more strategic about which streaming services they pay for. Because, I mean, you're right. We're basically in a back to cable world where you're just trying to bundle all these things together and to keep track of what channel something is on. And so depending on what you watch, you'll probably churn in and out of those networks.
It's very difficult to figure out what show is available on which streaming service.
100%.
Googling it often is more confusing than not.
Yes.
Seema, you also have been looking at data on the AI services or AI platforms that people are using. And Claude is something that people can download as an app on their phone, ChatGPT. What have you found that's surprising?
Well, ChatGPT is by far the largest with almost 900 million global MAUs, significantly higher than Gemini, which is about 400 million, which is number 2. What we saw last week, and the reason it was sort of in the news, was when OpenAI made that deal with the Department of War, it led to significant jump in uninstalls of the ChatGPT app. So we saw the first day it was a 300% day-over-day increase. And then as we got through the week, it ended up being like plus 300 and 400% week-over-week growth in the rate of uninstalls. Simultaneously, it was the first time that Claude became number 1 on the App Store. So it was number 1 for 1 week, now 2 back behind ChatGPT. So, but what it did for them is it moved them up 20 spaces in the month.
Wow.
And it got people sort of talking about these different, and I think for the average user, there really is no difference between ChatGPT or Claude, like you're asking it to plan your vacation or something. I don't think that it matters, but it still kind of shows that these brands are now so much in the zeitgeist that public perception matters, the same way that it mattered for retailers if they do something that causes people to boycott the brand, right? So I think it was just an example of that. It didn't hurt ChatGPT in the grand scheme of things. They're still growing, but it just shows how fickle the consumer can be depending on how they view the brand's ethos.
Tom Keene, who I was on with earlier on Bloomberg Surveillance, likes to talk about how much he loves Perplexity.
I think he just likes saying the word.
I think he does too. I think he does too. Where does that fit in all of this? Because I don't hear people talk about it.
It's much smaller, but it's still there growing. They're all growing rapidly because I think the whole space is growing. It's just that ChatGPT has become sort of the equivalent of Google. When people say, are you using AI, they say ChatGPT. However, I think that one thing that Google has as an advantage is, one, when you Google something now, Gemini comes up.
By default.
And they have Android phones, and they have something called, Gemini is throughout the phone. So we call it floaty, but basically it's what they're using, people are using on the app, but in addition to the phone. So they have a lot more ways to grow their share.
Yeah, we can go on and on, but sadly we can't because the clock is telling us we can't. Seema Shah, Vice President of Research and Insights at Sensor Tower, formerly of Bloomberg, by the way. Seema, thanks so much for being with us. Continues to be a down market, S&P off 36, Dow now down 453. This is Bloomberg.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
11:53 on Wall Street. I'm Alexis Christoforous, sitting in for Paul Sweeney today. And boy, what a difference a few days makes in the world of business. Just a few days ago, Novo Nordisk was suing Hims and Hers because they were selling a cheaper knockoff brand of their best-selling Wegovy blockbuster obesity drug. Well, you know what? Now they're in business once again with Hims and Hers. Here to break it down is Madison Muller, Bloomberg News health reporter. Boy, shares of Hims and Hers up now, I think better than 30%. So Wall Street obviously likes this situation. How are these two companies working together?
Yeah, it's a little bit of a crazy, surprising situation that ends a months-long saga between the two companies. They are now pairing up for the second time to allow Novo to sell discounted versions of its weight loss drugs on Hims and Hers telehealth platform. And people might recall that this actually was the case back in June. The two companies were working together to do something similar, and that sort of fell apart spectacularly when Novo accused Hims of deceptive marketing of these copycat weight loss medications that it was continuing to sell on its platform, and that really sent Hims shares down at the time. But the two companies since then have traded various barbs. I mean, with Novo suing Hims over selling a copycat version of its blockbuster weight loss pill that recently launched. And so this is definitely a surprise to, I think, a lot of investors out there who had expected this to continue dragging on between the two companies.
So is this, what's really driving this strategic partnership, though? Is it e-health, these e-health providers? And if so, sort of connect those dots for us.
Yeah, exactly. I mean, I think on both sides, both companies are under enormous pressure right now. Hims mounting regulatory and legal pressure, both with the Novo Nordisk lawsuit that now has been pulled, but also with the FDA saying that it was going to crack down on compounded weight loss drugs. There's a possible DOJ investigation, and they also disclosed during earnings a couple of weeks ago that they're under investigation by the SEC. So they have a lot going on themselves and really need a path forward, even though they have other offerings on their platform. Investors really have said that they don't see another similar avenue of growth like weight loss drugs. Then on the Novo Nordisk side, Novo has really been losing market share to companies like Hims that sell these knockoff weight loss drugs, as well as Eli Lilly, which is a massive pharmaceutical company based here in the US, and they have rival weight loss drugs that have become more popular than Novo's. So there's a lot of pressure for both companies on both sides. These e-health platforms, like you said, have been an enormous driver of growth for Lilly and for Novo. A lot of patients are seeking out these medications on these online platforms where it's often easier and can be cheaper to get these medications. And so partnering, both companies have been looking to partner with a lot of these e-health companies, from Ro to Weight Watchers, Hims and Hers.
Right. What is Hims and Hers sort of bread and butter, if you will?
Yeah, I mean, for a long time, it was erectile dysfunction and hair loss drugs.
Okay.
And so they really went after this, consumer market, consumer drugs that are popular and that maybe patients didn't, were embarrassed for whatever reason to go into their doctor and ask for these medications. They wanted a more discreet online sort of service where they can get them. But then when they moved into weight loss drugs, I think 2 years ago now at this point, that really became what put them on the map for a lot of people. I mean, I still talk to people who weren't really paying attention to what Hims was doing until they started selling weight loss drugs. And that was a massive boon for them over the last couple of years, and really a major growth driver. And then when that sort of ended, that it became a question mark of sort of what was going to be that next avenue of growth for them.
So Novo has a new CEO, right? Mike, is it Dutstar?
Dutstar, yeah.
Okay. He was personally involved in these negotiations with Hims and Hers. What does that sort of tell you about this new CEO? I guess a much more hands-on approach than some others might have.
Yeah, definitely. And the last sort of talks and issues really fell apart under Novo's last CEO. So Mike was kind of looking to bring things back and really, from what we understand, like shepherded this renewed partnership between the two companies. He was very involved. Him and the Hims CEO, Andrew Dudum, spoke directly, worked directly on reigniting this partnership between the two companies. Mike has taken a more aggressive approach than Novo has historically, Novo's CEOs have historically, because they've really lost out in the U.S. market that they have helped create, and that is the most lucrative weight loss drug market. And he's looking for aggressive actions to get them back in the game, everything from M&A to sort of the approach that they're taking with these compounding pharmacies and with these e-health companies. And one of the things he has told us that when he took this job several months ago, one of the feedbacks he got from a lot of investors and analysts was that Nova wasn't making the most of this, consumer health, e-health market, like in the same way that Lilly was, and that was somewhere where they could really improve things. So he's said that that's been a major push for them, even with sort of refreshing their own consumer health websites and the way that everything looks, just making it a better experience for consumers, patients, and so that sort of fits in with this same strategy with HIMSS.
All right, Madison Muller, Bloomberg News health reporter. Thanks for breaking this all down, because it really was a surprise when I saw HIMSS and hers up so much today. I said, wait a minute, now they're in business.
Yeah,
with
what
Novo
is going
Nordisk.
on? Yeah.
Yeah, but I guess that's just another day on Wall Street. Thanks so much, Madison. We appreciate it. Taking a quick look at these markets for you. Still a down market for equities, but well off our lows of the session. The S&P now down 0.4%, or about 31 points. NASDAQ down just fractionally, off about 27. The Dow, though, coming under some pressure, down about 1% now, or 453 points. Oil, of course, still higher, but again, well off its highs of the day. We've got Brent up 6%, WTI or NYMEX crude up 5% at 95.60 the barrel. And for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121, presented by Golden Crest Metals. Stay tuned for the latest markets news and industry research. Your top stories and global business headlines are coming up right now.
This is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. Concern grows about rising energy prices as the war in Iran enters its second full week. CBS News contributor Javier David.
The nightmare scenario long feared has been brought to life, which is the Strait of Hormuz is shuttered. We're talking more and more now about 70s-style stagflation. It looks like there's no immediate end in sight to this conflict. It's why we're above $100 per barrel on oil and markets are swooning. And initially, you had a muted market response because everyone presumed that this would be done in days.
Well, AAA now says the national average for a gallon of regular gas is now $3.48. CBS's Stacey Lynn tells us President Trump is urging Australia to grant asylum for the women's national soccer team from Iran.
The team is facing safety concerns after some players refused to sing the national anthem during a match at the Women's Asian Cup in Australia. Iranian state media labeled the athletes wartime traitors, raising fears of punishment if they return home. 5 players are reportedly seeking asylum. President Trump weighed in on social media, saying if Australia doesn't give it to them, the U.S. will.
2 men suspected of bringing explosives to a protest outside New York City's mayoral mansion are in custody, and the police say authorities are looking into whether they were inspired by ISIS. CBS's Anna Schechter.
They might have gotten exposed to ISIS extremist content online, and then it festers, and then you have this conflict in the Middle East now, a war with Iran, and people get triggered. The extremist element came into play where they made these homemade bombs, put TATP in it, which is extremely dangerous, and drove into the city to commit this act.
The Justice Department's reached a deal in its suit against Ticketmaster and parent company Live Nation. CBS's Jamie Yukas.
Sources are telling CBS News that Live Nation and Ticketmaster will be forced to pay nearly $300 million in damages to the 40 states that sued over inflated concert tickets. The deal also requires Live Nation to sell many of its amphitheaters. The DOJ accused Live Nation of illegally monopolizing the live music industry with its Ticketmaster subsidiary, claiming the Beverly Hills company was squashing competition and driving up ticket prices.
Women nationwide can now request a female driver when they summon an Uber, as we hear from WWJ Radio's Jeff Gilbert.
An option will start appearing on the Uber app that says women drivers. Uber says it's doing this in response to requests from women to give them more comfort about the safety of their ride. This is a nationwide expansion of a pilot program. It also allows women drivers to accept more requests from women passengers.
The Dow is down 440. This is CBS News. One of the NFL's most famous faces is apparently not ready to call it quits.
Mahomes, end zone, caught by Kelsey.
His wedding plans with Taylor Swift aside, a new report says Travis Kelsey will probably not retire just yet. NFL sources tell The Athletic the 36-year-old Chiefs tight end is expected to return to play for a 14th season, but not necessarily with Kansas City. His reps are reportedly expected to talk to multiple teams. Kelsey's projection, according to The Athletic, 1 year and $10 million. He missed the playoffs last year after making it to 3 straight Super Bowls. Kelsey's been with the Chiefs for his entire pro career. Deborah Rodriguez, CBS News.
Disney and Pixar's new film Hoppers led the weekend box office with a debut of $46 million domestically. The Bride opened with just more than $7 million. Steve Kathan.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
So much for off-ramps. Welcome to the Monday edition as the U.S. and Iran double down, with Tehran rejecting President Trump's demand for unconditional surrender. U.S. and Israeli strikes intensifying. A 7th American now killed in action, and crude oil topping $100 a barrel. We've pulled back from that level. Coming up this hour, we'll get the latest from Bloomberg's Tyler Kendall at the White House. Mike McGlone joins from Bloomberg Intelligence on what is now the biggest oil disruption in market history. We're looking at crude in the upper 90s right now for West Texas, and we'll have insights this hour from our political panel. Let's get to it. We'll start on Wall Street. The news not great there either. Charlie Pellet has the latest on a nervous market. Live from New York, Charlie, how's it look?
Right now, lower across the board. Got to begin with crude oil, though. Earlier today when we came in and when we woke up and started listening to Bloomberg, we heard that crude, West Texas Intermediate, was above $100 a barrel. An emphasis on a slight pullback right now. We are looking at West Texas Intermediate crude at $96.48 a barrel, still up today by 6.1%. Brent, the global benchmark, $99.58, also below $100 a barrel, up now by 7.2%. We can ask our Mike McGlone what is going on with crude oil clawing back some of those earlier gains. Bottom line, no, Joe, Dow, S&P, NASDAQ, all in the red. S&P now down by 30, dropped there of just about 0.5%. S&P at 6710. We've got the Dow down 409, lower by 0.9%. NASDAQ down 16. For NASDAQ, a decline now of under 0.1%. The VIX with a 27 handle, the 10-year 4.13%, the 2-year 3.57%, and gold down 1.3%, 51.06 a barrel on WTI. Esther George is former president of the Kansas City Fed, and on surveillance this morning, she told us she is getting concerned about an already stretched consumer.
Now we have added a new shock, this gasoline price at the pump. We understand that diesel prices will be affected, which of course will feed into the cost of transportation and other things. And I think it creates a real point, not just of uncertainty, but I think heightened risk around consumer spending and growth as we look ahead.
Former Kansas City Fed President Esther George interviewed this morning on surveillance. Airlines and cruise stocks trading lower thanks to those higher energy costs. Right now we do have shares of American Airlines trading down by 4.2%, United down 3.4%, Delta down 1.8%, and among cruise names, Carnival Corp down 4%, Royal Caribbean down 2%, Norwegian Cruise Line Holdings lower now by 1.3%. So again, recapping here, we have got the Dow, the S&P, NASDAQ, all in the red. Do want to pass along one additional headline from the Bloomberg. Shell is going to sell Jiffy Lube International and Premium Velocity Auto for $1.3 billion. S&P down 0.4%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, lot to cover there. Charlie will be back in about 15 minutes with more on the markets, even less than that. In fact, we're going to stay close to Charlie today with not only what's happening in the stock market, but of course the oil market. So this has been quite a reversal here, having seen West Texas Intermediate crude jumping up closer to $130 a barrel. My God, I mean, we're below 100 now, and still, by the way, up 6% right now, 96.5, as we just heard from Charlie Pellet here, with our eyes, of course, on the straight. And what exactly is going to come next in the standoff here, the conflict between the U.S. and Iran? Dare we call it a war? I'm Joe Matthew. It's great to see you. I hope you had a good weekend, and we're glad you're with us here on the Monday edition of Balance of Power on Bloomberg Radio, streaming live on YouTube right now. Search Bloomberg Business News Live, unless you've got us on Bloomberg Originals, where we always save you a seat in the studio. By far the largest oil disruption in history. How's that for a headline? And it's not coming even from a news agency. It's coming from our friend Bob McNally at Rapidan Energy. The note to clients that went out this morning is a doozy. Gulf War III, he calls it. Just seeing that in the subject line is kind of a grabber. Is that what we're calling this now, Gulf War III? I haven't heard anybody put a title on it before, Bob. It looks a lot like World War III when you read it. Gulf War III, by far the largest oil disruption in history, and has zeroed out spare capacity. The second part of that line is really important here, and I'm going to illustrate to you what we're talking about here, because we're looking at a 20% global oil supply disruption. Boats aren't going through the Strait. I think maybe 2 went through the weekend. Imagine being on one of those, and of course, if they're backed by Iran, well, they've got the green light. President Trump on Air Force One asked about this incredible surge in oil prices by our own Josh Wingrove, who was packed in the back of the jet when the president walked back to take questions. Watch and listen.
What about the Strait of Hormuz? There's no traffic really going through it. Well,
that's, the ship's choices, but we have it cleaned out. We've wiped out their Navy. The Navy is now at the bottom of the sea, so that's the choice. This is an excursion. We figured oil prices would go up, which they will. They'll also come down. They'll come down very fast, and we will have gotten rid of a major cancer on the face of the earth.
A major cancer on the face of the earth. Look no further than his post on Truth Social. If you didn't hear what he said to Josh Wingrove, short-term oil prices, which will drop rapidly when the destruction of the Iran nuclear threat is over, he writes, is a very small price to pay for USA and world safety and peace. Where are we here on gasoline? Just dialing up AAA. The national average is now $3.47, and $4. And we talked to Tom Close about this the end of last week. $4 is likely around the corner when we've got triple-digit oil here, even if we're not looking at it at the moment. Was this just one big short squeeze? We're going to talk to Mike McGlone about that in a moment. But we start our coverage here on the North Lawn of the White House, where Bloomberg Washington correspondent Tyler Kendall is standing by. If you're with us on YouTube, look at how beautiful it is out there. If nothing less, the news might be horrible today, but at least it's gorgeous outside here in the nation's capital. Tyler, what's going on? We're going to hear from the president later on today, I believe, at this Republican lawmakers retreat. This is the message from the White House, right? It's a small price to pay for world peace, Tyler.
Right, Joe, the White House really appears to be downplaying the oil price spike. We also heard from the Energy Secretary over the weekend saying that any disruption will not be long-term. This is not a long-term conflict. In his words, other officials have said that this is a short-term disruption in order to achieve the administration's broader goals when it comes to Iran. The thing is, we haven't really seen any indication that a diplomatic off-ramp is imminent in terms of hearing the Energy Secretary there say that it's not going to be long-term. In fact, we heard from President Trump over the weekend that the U.S. is actually eyeing widening this war, as he posted on Truth Social, saying that the U.S. is set to expand its list of targets. And Bloomberg News is now reporting that the president is weighing potentially deploying special operations forces to extract Iran's highly enriched uranium stockpile. Now, what we can say is that it appears that even on Iran's side, we're not really looking at any de-escalation, as well as we also saw the country choose its new supreme leader. And Joe, Iranian state media reporting that the country is now prepared to sustain 6 months of fully high-intensity war power, and that we should expect to see them deploy more advanced and longer-range missiles in the coming days.
Wow, Tyler, thank you so much. We'll get back to Tyler Kendall a little bit later on in the broadcast. She's at the White House for us today. And of course, as I mentioned, the president's going to be speaking, and that will likely coincide with the late edition of Balance of Power around 5 p.m. Eastern. We will be deeply curious to hear what he says. with hope that the G7 might help here. And that's a big reason why we've seen prices relax from triple digits now to $96 when it comes to oil, at least in New York, as the G7 mulls a coordinated stockpile release. Imagine if, we open up the SPR. Well, this would be potentially a greater impact with multiple nations doing it. They didn't come to terms on it today, though. And we did hear from the French finance minister about this, Roland Lescure. Listen to what he said a short time ago.
We're not there yet. What we've agreed upon is to use any necessary tools, if need be, to stabilize the market, including the potential release of necessary stockpiles. The work is going to keep on being done in the next couple of days. The International Energy Agency was with us, so we're going to keep on working. I think they're having a governing vote tomorrow, and we obviously will keep you posted as we keep on working.
Yeah, keep us posted, Minister, because this is the next problem here. Bob McNally, in this note I referred to, said this is not a demand shock. It is a simultaneous supply and buffer shock. Hold on, Roland. This is what we're talking about. The conflict, Bob writes, has disrupted both production flows and the spare capacity that markets rely on to offset disruptions. This is why we're calling it the biggest disruption in market history. Mike McGlone is watching it for us, and thank God he's here. Bloomberg Intelligence senior commodities strategist who was short crude. I don't mean that literally, but, well, you can tell me if you were, Mike, but was talking about crude heading down to $40 a barrel until this black swan event arrived. So, Mike, I'm curious, when we see crude at 4 o'clock in the morning, I don't sleep very well. I woke up, it's at $116 a barrel around 4 a.m. Is that just one big short squeeze, or are people going long into crude oil here?
I think you nailed it, Joe, and it's impressive how our presidents are becoming very good crude oil traders. Remember, Mr. Biden released a lot of crude oil when it was $100 a barrel, and he can still buy it back forward around 70. Mr. Trump points out it's temporary. I completely agree with him. Now, the key way I describe crude oil is it's a bear market, and when it gets buried, the low for the year around $55 a barrel, you don't want to sell until you get a good chance. Now, where is that? We've just had the best chance in history, I think, to sell, and that's what that's what producers are doing. So, right now, you're looking at the front month. It got to $119.50 last night. That's a classic short squeeze. But if you look out to the contract that's going to be front month, when we're at the midterms, that's December contract. Right now, that's around 70. And I think by the end of the year, it's going to be down in the year below 57, because what just happened is all these producers just had a chance to sell forward, bring on more supply, and accelerate the surpluses out of the Western Hemisphere. Now, China and Europe and Iran, that's a different story. That's where all that money, that's where all that crude from the Strait goes from. But the bottom line is, once the Strait gets open, this is the first closure ever. Once it gets open, crude should go back to what it was doing, but from a much higher level. You know what that means? It goes down harder.
Oh, my God. Somebody's going to make a lot of money, I guess, on the way down here, Mike. We just saw a headline from Reuters. President Trump mulling export curbs, tax waivers, and other moves to curb oil prices. You heard about the insurance idea. In our remaining 30 seconds, does any of this work?
The bottom line is opening the Strait. That was the major faux pas. And the bottom line also is Mr. Trump wants lower energy prices for midterms. He's the leader of the world's largest energy producer and net exporter, and he's going to get them. Pre-existing trends are heading that way.
Do we see $4 before we see $3 again?
We could, but I think average price of gasoline is going to be below $3 by the time we get to the midterms.
Yeah. Wow. All right. Mike, thank you. I suddenly feel so much better. Did we see the worst of it this morning? A lot could still happen. And by the way, this talk of seizing Karg Island might be one example. The president remains open to boots on the ground for limited excursions like seizing Karg or enriched uranium. We're not out of the woods yet. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks in the red, and we've got crude oil back below $100 a barrel. Both Brent and West Texas Intermediate crude trading now $95 for a barrel of WTI, up 5.1%. Have been over 100. Brent right now trading at $100.20. Brent crude up by 8.1%. Stocks well off session lows, bearing declines. The Dow, the S&P, NASDAQ all trading lower. Right now a 32-point drop on the S&P at 6707, down 0.5%. At the worst level of the day, we saw the S&P down 1.5%. The NASDAQ Composite Index now trading down under 0.1%. At the worst level, have been down 325 points, down 1.4%. The Dow now lower by 430, a decline there of 0.9%. The VIX at 27, the 10-year 4.12%. Gold is down 1.5% to $5,095 the ounce, and West Texas Intermediate crude 95.60 right now, up by 5.1%. The Justice Department says Live Nation Entertainment has reached a settlement with federal antitrust authorities in a lawsuit that accused the company of illegally monopolizing the live music industry. Shares of Live Nation, they're up now by 5.4%. Novo Nordisk and Hims & Hers Health have struck a deal saying they will work together to sell obesity drugs, a sudden reversal after more than 8 months of acrimony that culminated in a legal battle. Novo Nordisk up 2.7%, but Hims & Hers Health surging now by almost 40%. Recapping stocks lower, S&P down 0.5%. West Texas Intermediate crude 95.30 a barrel, back below 100. It is up now by 4.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And that, Joe Matthew, is a Bloomberg Business Flash.
Okay, Charlie, thank you. He just brings it out so calm and collected every day here on Balance of Power, whether the market's up or down. And we'll have more from the voice of Wall Street, Charlie Pellet, just about 20 minutes time. We've got our eyes on oil for a lot of good reasons here, and it's looking a lot better than it was certainly this morning or the middle of the night. We're down to $94 now. Am I looking at this right? Yeah, it's up 4%. We were way above $120 a barrel. As I'm looking at the phone of the Bloomberg app, did they make the Bloomberg app black so we wouldn't wake up our spouses? I've wondered about that a lot because it's the only app I can seem to use without hiding the phone. Welcome to circadian misalignment. Do you feel a little off today? It's not just yesterday. You know, yesterday when we moved the clocks forward, which is just a curse, it's the biggest day for heart attacks. Have you heard about that? More people have a heart attack in the morning because you just stole an hour of their sleep. I managed to survive the heart attack, but I was really sort of not feeling great this morning, and I had to remind myself that, well, this is why. Washington Post wrote this up. Morning sun, it turns out, is key to maintaining our circadian rhythms, our sleep-wake cycles, and overall health. Do you wear one of those rings? I don't have the Oura ring, because it would be pretty depressing every morning, I think, to read what was on there. Circadian misalignment, when your internal body clocks fall out of sync with that of the sun clock and your social clock, that's when things go wrong. And from the promises made, promises kept file, I will point you back to the campaign trail when Donald Trump promised to do away with daylight savings. Remember, there was a thing going. Chris Sununu signed on to it. Even Ed Markey had legislation. This is the most bipartisan affair in Washington, yet still 48 states and the District of Columbia stole an hour from us yesterday. That, of course, is not the least of it, as we witness the beginnings of Gulf War III, in the words of Bob McNally, and try to track exactly where we're going here. With the president saying on Truth Social that, yeah, it's a small price to pay. This is, God, imagine if George W. Bush or Dick Cheney said this at the outset of the Iraq War. It's a very small price to pay for USA and world safety and peace. And he went on in a whole different post. Short-term oil prices, he writes, this is yesterday, which will drop rapidly when the destruction of the Iran nuclear threat is over. Again, a very small price to pay. He goes on to say, only fools, this is all caps, would think differently. Exclamation point. And he did write it. It's signed President DJT. Ashley Davis is just imagining what all these look like on bumper stickers. The Republican strategist and partner at S3 Group is with us right now on Bloomberg. It's great to see you, Ashley. You remember, obviously, the messaging that came around the Exxons and Halliburtons when we went into Iraq. Now I guess we're just saying it out loud here. The fact of the matter is, if we get to $4 a gallon gas and it remains stubborn, these words could haunt the president, no?
Absolutely, but let's remember the president's not running for re-election again, and he always has a surprise tweet or Truth Social. Listen, I hope that the markets and the oil prices will shake out. I mean, obviously, it's better right now than it was last night, and there's some things that are being put in place from what I understand. And actually, your guest just beforehand was talking about some of them, and also the pipelines in Saudi Arabia and UAE. But listen, I'm probably a little more conservative on this issue. Especially with my Bush days and knowing Iran, Iraq, just that part of the world a little bit, that I think that the president, the last thing he's worrying about right now, or when he attacked Iran, was the fact that what the midterms were going to be about. I think this is a once in a generational opportunity to take out these leaders. They're horrific leaders, and they understood. We understood. Our allies understood what would happen with the oil prices. So hopefully, it's only day, what is it now, 8 or 9? I think we're starting 9 actually. Yep. So hopefully this will be, we will have things in place that will help the oil prices, but also make sure the Iranian people are safe and have a democracy that they can live.
Mm-hmm. But I was wondering yesterday if it was the clock change, because everyone was calling it day 9 yesterday. It was a week on Saturday, right? I'm confused, Ashley. I'm following your count right now. I'm going to call it 9 today. But it's interesting that this will come.
9, 10.
This will come home at this retreat. It doesn't matter, of course. But the president's talking to the rank and file, the House Republican Conference at retreat down in Miami, and I think they're at Doral, right? He's going to talk around 5 o'clock. What will he tell members who are acutely aware of everything you just said? Donald Trump's not on the ballot, but I am. And these are the prices that my constituents are paying. How do we message this so everyone understands what Ashley's talking about?
First of all, I think this is a really hard message for Republicans because, and I've said this many times, I mean, most people, especially on the Republican side, do not want us to be at war anywhere. There's very few people that do, especially in the MAGA world. I mean, you see that the splintering of that a little bit. I always also say that unless you have the intelligence that a president of the United States has or some of his team to understand how truly bad these people are, ignorance is bliss for most of America, right? But I think he's going to say probably nice, hopefully a little better than what he did on Truth Social, is to tell that, hopefully this is a short time pain to have something that is better for the United States in the long run. Again, that's going to have to be something that the rank and file Republicans are going to have to believe and trust him on, especially the ones that lived through the Iraq war and Afghanistan war. But there's not that many of them anymore, maybe in the Senate, not the House. There's so much turnover.
Interesting.
But I think that he's going to give the same message. And then listen, we're still far out. I'm always a big believer that we have until maybe July for the economy to get where it needs to be. And then after that, the summer happens and then early voting starts. So we'll see.
Yes, indeed, we shall. When you think about a 7th American killed in combat as well, the president has, while he did attend the dignified transfer at Dover, and I do want to know that. I know people made a big deal about him wearing a hat, which you may or may not care about, Ashley. The fact that we're going to see more, as he continues to say, and the fact that Pete Hegseth suggested that this was some sort of fake news thing that the media wants to always talk about what's going wrong. It's an important moment when an American dies in the line of duty. And I wonder how nervous members are about that. The idea of boots on the ground not being ruled out, seeing these caskets come home, means what, if anything, on the midterm trail?
I mean, obviously the loss of life is horrific, and I think the hardest thing for the president, any president, no matter who it is putting our troops into harm's way, knowing that they could be their son or daughter. So I think that that's something that will weigh on him, the president, and the team for a long time. However, I think that a lot of our military, most of our military, sign up to make sure that they're protecting our country, and that's exactly what they're doing, and they're dying as a hero. So, and taking the opportunity right now to make sure that we are thanking our troops for serving and protecting us. I mean, we have to remember that Iran and their allies, or their subsidiaries, so to speak, Hezbollah and the other terrorist groups, in a matter of less than a year, they tried to attack us 180 times throughout the world, us meaning American assets. So it's not something that is made up, that how bad that they would like America to die and to be destroyed. Yes. So I think it's very important. But I also feel that, going back to your question, I don't know if that's what's going to impact the midterms, but I also feel that there is a little bit of conversation that's misconstrued on this boots on the ground, because from what I understand, the boots on the ground are going to be our special forces that are going to go in strategically, like whether it's part of the CIA or Navy SEALs or whatever. It's not going to be like an invasion like maybe we saw in Afghanistan.
Yeah, as opposed to an occupation. They're talking about potentially seizing that enriched uranium and maybe seizing Karg Island, both of which would be big deals. Ashley, we've got a couple minutes, and I have to ask you about DHS. This is going to come up, of course, at the Republican retreat as well. I don't know if you're keeping count on that one, but we're weeks into a partial government shutdown, and there's no one's going to break, I guess, on either side of this. There was a thought last week when Kristi Noem was reassigned, if I can use that word, that might be enough, that new leadership might be enough, that a Mark Wayne Mullen confirmation process might bring enough conversation around that people would vote to, or Democrats would vote to refund the agency. I've got a minute left. How are you looking at this? And to the extent that you know Mark Wayne Mullen, will he bring any change to this agency?
I think, yes, no, and I know Mark Wayne from the House days as well. I mean, before he ran for Senate, but listen, I think he's going to have probably more confidence than Kristi Noem had, especially at the end, and especially after some of the ICE issues. He's respected in the Senate. You already have at least Senator Fetterman saying he's going to vote for him. I actually think the tipping point maybe on some of this DHS funding shutdown is maybe the long lines at the airports yesterday or this weekend that are finally starting to happen. And then I think this Friday, the first time TSA will miss a paycheck. So the Senate, some senators would really like Senator Mullen to be confirmed in the next 3 weeks that the Senate's in before they go out for Easter break. So it will be interesting to see if there's some sort of deal negotiated during that time. Absolutely. I'm not ready to give that up.
We're going to be watching. Okay, we're not either. We'll stay with you on this. Ashley Davis, S3 Group. Thank you, Ashley, our Republican strategist who was at the Department of Homeland Security before they called it that. News from CNBC, the G7 energy ministers will meet virtually tomorrow morning. The U.S. is looking for up to 400 million barrels. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got oil back below $100 a barrel. The S&P trading lower, but NASDAQ now solidly in the green. At the worst level of the day, we had the NASDAQ Composite Index down 325 points. Right now, we do have the NASDAQ Composite Index higher by 39. NASDAQ up now by about 0.2%. So the NASDAQ 100 Index also steadying, erasing an earlier decline as dip buyers take advantage of concerns around the prospect of a prolonged war in Iran amid rising energy prices and inflation concerns. So bottom line here, NASDAQ 100 Index up 0.2%, as is the NASDAQ Composite Index. S&P down 14, down 0.2. Dow Industrials down 0.7%. The VIX at 26, the 10-year 4.12%, with the 2-year 3.57%. Gold down 1.2%, 51.07 the ounce, and West Texas Intermediate crude now at 95.20 for a barrel of WTI. Crude up by 4.8%. Bitcoin up 2.7%, 69,044 on Bitcoin. Bottom line here, oil is clawing back some of its gains. Ed Morse is a longtime veteran of the oil industry. He is now special advisor to Hartree Partners, and he says this war ranks as one of the most serious in decades.
Certainly, this is the third Gulf War we've seen since 1990, 91. Strait of Hormuz wasn't closed in the first one or the second one, and it wasn't even closed in the events of the earlier period of time in the 70s or even the Iranian Revolution. So this is pretty unique. So I'd put it more serious than anything we've seen since the early 1970s.
Ed Morse, special advisor to Hartree Partners. President Trump is expected to review a set of options to tame oil prices. That, according to Reuters, citing sources. And again, West Texas Intermediate crude up 4.9%, below $100 now at 95.42 a barrel. NASDAQ higher by 0.2%, S&P down 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, we'll see where oil is at the close of this session, because we have taken quite a round trip moving into the $120 range. We were well above 125 at one point. What are we at? 96 here. Everybody's feeling a lot better at the moment. 95 now, just chipping away at it as the G7 does its work. Maybe by the time we get into our second hour, we'll have some more news on that. So many people, when they get into the Oval Office, whether it's a reporter, a photographer, or maybe an onlooker, everyone, as you see, has been zeroing in on the president's ankles and his hands to see if the bruises are on the hands, the swollen ankles. You've been party to this conversation. When you watch the pool shot, they call it the pool. This is the individual. Each day it's a rotation. Got a couple of cameras in there that feed the pool, and it's their responsibility to transmit all these images back for those who cannot actually be in the room. And they zoom in while the president's talking on these body parts to try to gauge his health, right? Some of the issues that he's been facing. The president, looking back in the other direction, is looking at your shoes. This is a fascinating story in the Wall Street Journal. It's the hottest and most exclusive MAGA status symbol, according to the paper, a pair of Florsheim shoes. If you're with us on YouTube, look, they're all wearing the same ones. Not just Donald Trump, but Vice President J.D. Vance, Secretary of State Marco Rubio, they've got them. Sean Duffy, Transportation Secretary Pete Hegseth, Howard Lutnick, Comms Director Stephen Chung, even the Deputy Chief of Staff James Blair, the speechwriter Ross Worthington, even Sean Hannity has a $145 pair of black Florsheim shoes. The president likes the way they feel at the end of a long day. And it's funny now, he's looking at people and he sizes you up. He takes a guess at what your shoe size is and then has the box of shoes. He asks an aide to put it in an order. A week later, the brown Florsheim box with your name on it arrives. I think this is remarkable. So much for the Louis Vuittons. It's Florsheim at $145. Producer James didn't realize till right now that he was so in style. I wonder how many members of the House will be wearing them today. Lindsey Graham has a pair as well. Maybe the president will be sizing up the Republican conference when he gets to the big GOP retreat, because it is happening now. Oh, look at this, too. Not just the GOP retreat where the president was going to speak, but James Mahoney just let me know that I'm going to be working late this evening. Donald Trump to hold a news conference at 5:30 p.m. Eastern Time, right smack dab in the middle of the late edition of Balance of Power. I'm sorry, Kaylee. I'll stay late. You don't have to be here for the whole thing. We need to get to our panel because part of the government's still closed. We talked about this for a couple of minutes with Ashley Davis. Doesn't matter what shoes you're wearing. The Department of Homeland Security is shut down, knowing that ICE still has the money and the TSA does not. Did you get stuck in New Orleans or Houston last weekend? They're telling people to show up 4 or 5 hours early for a flight. The pictures are horrifying. And everybody saw this coming. We went through this during the longest government shutdown in history, right? Pretty soon, you'll be hearing about flights being impacted as well when TSA agents have to go drive for Uber or whatever it is they do to make money in times like this. It's a pretty desperate state of affairs when you're working a pretty tough job already. And this is where we start with our political panel, with the GOP retreat in the background and a DHS that's closed in the foreground. Bloomberg Politics contributor Jeannie Shanzano is with us. Democracy visiting fellow at Harvard Kennedy School's Ash Center, joined today with us at the table by Republican strategist Maura Gillespie, Blue Stack Strategies founder and veteran, of course, of Speaker John Boehner's office many years ago in a very different political environment. Ladies, it's great to see you both. Welcome. Maura, I'll start with you. Did you train or plane into D.C.?
I drove, and I'm now worried about getting back given the gas prices.
But, oh, all right. So there's a whole other problem. It doesn't matter what mode you pick, apparently. Correct. And by the way, if you want to take the train, you'll be surrounded by people who just jumped off their flight so they could try to get to New York. Mm-hmm. Is this what breaks the back again, like it did in the last shutdown?
Well, you know, it's springtime's coming, so people are going on spring break trips.
That's right.
They've got travel. You've got summer coming up just around the corner. And I think when you look at not only gas prices for driving your car, but also for flights. Couple that with the TSA issues. Flights are also going up, and there have been a couple airline CEOs that said they're going to have to raise prices pretty drastically given the war in Iran. And so I think that you're going to hear from more and more people who are very frustrated, given the fact that this war was not favorable to begin with. They're going to be more and more frustrated by this lack of focus on things that are actually impacting the American people. Mm-hmm. Trump's not worried about filling up his gas tank. He's not worried about what it costs to fly. Yeah. But that's a concern that American people are feeling right now, and they're going to be feeling as we get close to the summer.
Well, small price to pay were the words that he used, Jeannie. Maybe you've already made the T-shirt. I can only imagine what Democrats are going to do with the rhetoric here of just this past weekend. Small price to pay for USA and world safety and peace. Only fools would think differently, Jeannie. How foolish do you feel today?
Well, I feel foolish that I don't have Florsheim shoes, but do they make them for women, Joe? I have no idea.
That's a great question. I only see dudes wearing these.
I know, and Maura and I may be out as we stand in long lines, or we can't drive, so we have to walk. Potentially, the president sends women some shoes like this. I don't know. Yeah, that was quite a statement the president made over the weekend about only fools. The reality is that for so many people, they don't have the luxury that the president has of having Air Force One, of having drivers, or so many of the people surrounding him. We have to be concerned about the price of oil, the price of gas, the price of flights, the time we have to wait in those lines. So all of this concerning, and it seems to me that President Trump took a lesson from Joe Biden. He criticized him on the campaign trail, but he seems to try to be following the Biden playbook of, this isn't quite as bad as you're making it out. This is worth it. And of course, we know you can't talk people into feeling something they don't feel. And oh, by the way, if it's so worth it, then to explain why.
Well, you know, even if the House passed a funding bill for DHS, Maura, it apparently wouldn't be signed by the president. He's got other ideas here. Again, on Truth Social, the Save America Act is what he wants to sign first, saying the measure must go to the front of the line and not the watered-down version. He says he will not sign other bills until this is passed. Now, you worked for a former Speaker of the House. What in the world does Mike Johnson do with this, knowing that he's got a funding bill to clear?
Well, not only that, but the bill that the Senate now has, that with the additions that the president wants, that's not what was passed by the House.
That's true.
So it goes back because it has to get reconciled. So there becomes another hurdle there just to get that passed.
So is the House just closed indefinitely?
They're currently closed right now.
Yeah.
So they're not in this week. The Senate is. The Senate was supposed to vote today. I believe it's at 3 o'clock this afternoon. And they're going to take up the DHS funding and presumably the SAVE Act. But how they get there when Thune has already expressed hardships in getting to that threshold of 60. And so if the president's refusing to sign anything until the SAVE Act goes through with all these additions that have been brought onto it, it does create more of a problem for not only Thune, but also Johnson.
So how tough is the conversation at this retreat? I mean, we're all down in Miami feeling good about things. The president's coming over, but we don't agree on anything.
Well, and the problem is, too, is that the messaging at large sounds fine, right? Because I think a majority of the American people are in agreement that you should show an ID when you vote. That doesn't seem to be super controversial. It is the add-ons and the overly aggressive, I will say, tactics that are attached to it that's not being messaged, and that does create more confusion. There are some issues. There's exceptions for sickness, for travel, for military, but if they have to still go in person to prove their identification, it kind of negates the mail-in voting thing. So there are questions that are not being fleshed out or being messaged. So I don't know how the conference is going. I have a kind of a guess about how the conference is going in Florida. It's probably just you're doing so great, President Trump. Congratulations, well done. But the reality back here in D.C. is very different.
Jeannie, what does it tell you when the president needs to pull the trigger on a 5:30 p.m. news conference same day? I mean, this could have been scheduled last week, obviously, and maybe they had it in mind. But this does seem like an administration who thinks the president needs to be in front of the people.
Absolutely. The president responds to a couple things, and one of the main ones are the markets. And as you see oil rise to over $100 a barrel and slip and slide around there, people paying cost 50% more. We're looking at some of these states where there's an election in November where it's going to be really tough for the GOP. His party, he himself, they are at risk here. And just a few days ago, the State of the Union, he was trumpeting how he has successfully addressed the cost of energy and oil that Joe Biden, he claimed, had caused to raise. And now look where we are. So Susie Wiles last week mentioned this as a big concern. We know it's a big concern. So the president is going to have to address that. And he's going to have to say more than just, you're a fool if you don't know that this is important and you should suck it up. It sounds a bit like, you don't need more than one doll and you don't need more than a couple pencils. It's not good messaging.
I've stopped using pencils altogether to not be part of the problem. So how do you transmit that? And I don't think you have all the answers here, Maura, but I mean, I saw a couple of members doing TV this morning, and they were very busy trying to make the case for this military action, that this is something that's a generational opportunity, first time in 47 years. Now that's going to cloud the affordability message, right? Because that's the story that lawmakers are going to have to tell as long as this is hot.
I think one of the problems, too, is that that's one piece of the explanation we're getting. The other piece is that it's humanitarian. It's for safety and security. They were going to attack us. This is about making sure that we stop the Ayatollah. I mean, there is a lack of consistent messaging that's going on, and I understand that there are members who do believe, obviously, there's no sympathy or love lost for the Iranian regime. But the messaging back home and to their constituents as to why they are supportive or they should be patient and watch this play out has been unclear. And I think that leads to more frustrations when you couple that with the affordability concerns. And again, this disconnect between what's going on at home in reality versus what the president sees as his doing a great job.
Yeah, right. It's pretty hard to argue this stuff when you consider everything that we just mentioned. People waiting in lines for hours at the airports. They're watching jet fuel, and therefore the cost of flights increase. But transportation on any level, if you have $3.50, $4 a gallon gas in your car, that's all part of the same story. And when lawmakers are trying to explain the justification for a war, it's all stemming from the same cause.
And then you're also seeing this call by the Iranian regime, whatever's left of them, saying that to all their sleeper cells here in the United States and to around the world to go ahead and unleash and go ahead and attack. And so then people are reading that. They feel as though that now their safety here at home is also threatened, not only their livelihoods in terms of gas prices, but also their safety and security here. So if it was to stop us from being attacked, what did this do?
Yeah, wow, there's a lot there. And I sure hope that's not something that we're going to be reporting on anytime soon. Won't have Country Joe McDonald to sing about it anymore. Did you hear? This is for the old people. Country Joe has died. Yeah. You're going to go home and watch Woodstock later and turn it up. And boy, don't offend the neighbors. Make sure the kids are out of the room. Remember the I Feel Like I'm Fixing to Die rag? There he is. 84 years old, Parkinson's disease. Don't give me an F. Come back for the second hour of Balance of Power only on Bloomberg TV and radio.
The next stop is Vietnam, and it's 5, 6, 7. Open up the pearly gates. Well, there ain't no time to wonder why. We're all gonna die.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Oil prices pull back as the G7 works on a fix. Welcome to the Monday edition as G7 nations consider a coordinated release of oil with crude oil futures topping $100 a barrel, approaching $120 earlier in the session here. I'm Joe Matthew alongside Kaylee Lyons in Washington. She is back today. And Kaylee, the president saying this is a small price to pay for peace.
Yeah, suggesting in other interviews with media that he has a plan for everything, including what's happening with oil. The question, of course, is that plan going to be effective? If we're talking about effectively a Strait of Hormuz that is closed, spare capacity of some of OPEC's biggest producers is non-existent because they don't have anywhere to store it. And is this actually creating a scenario in which even if the G7 and the president give it their best efforts, it still might not be enough to completely stem the supply shock?
Impacting 20% of the world's crude supply, the biggest oil disruption in market history. It's a headline that certainly jumps off the page, Kaylee, and the president's going to face some pretty tough questions about that. Just a short time ago, he scheduled a news conference for this afternoon, 5:30 p.m. Eastern, so we're not done yet.
And that's after he is slated to address House Republicans who have their retreat at his Doral resort in Florida. This coming at an interesting moment for many of those, especially who are seeking re-election in this midterm cycle, when we're talking about not just $100 oil, but prices at the pump that have already gone higher and could go higher still. Makes it complicated politics.
This will be quite the retreat, and I suspect that lawmakers have a lot of questions for the president as well.
Yeah, and it's a lot of questions for market participants as well. To what extent is higher energy prices going to feed through into higher inflation, maybe even stagflation as that word starts floating around again? That's what the markets are contending with, though. It's been an interesting day. We've had quite the reversal. So for the latest, let's turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee and Joe. Indeed, oil, the big story today. Got to begin with what's happening with West Texas. Intermediate crude right now, $94.50 a barrel. We began the day with oil surging above $100, looking at a gain right now of 3.95% on crude. Brent, the global benchmark, also below $100 a barrel, $99.35. It is up, however, by 7.2%. Again, West Texas intermediate crude, $94.30 a barrel, up by 3.8%. Stocks are now trading mixed. We've got NASDAQ higher. The NASDAQ Composite Index up 27. That is a gain of 0.1%, while the S&P 500 Index now lower by 17, down 0.3, and the Dow Jones Industrial Average down 318. The Dow lower by 0.8%. The 10-year 4.12%, with the 2-year 3.57%. Right now, the VIX is at 26. Gold down 1.3%. 51.06 the ounce, and West Texas intermediate crude $94.35 a barrel. WTI up now by about 3.8%. Higher energy prices certainly affected airlines. We've got airline stocks trading lower now, with United down 2.2%. American Airlines lower by 3.2%. Delta down by 0.5%. Cruise line stocks also are declining today. Carnival down 2.6%. Royal Caribbean down 0.6%. Norwegian Cruise Line Holdings lower by 0.4%. Again, recapping here, the Dow lower by 0.7%. S&P down 0.3, NASDAQ higher by 0.1%, and West Texas intermediate crude now up 4%, $94.65 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington as Balance of Power continues, and once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. We'll continue to check in with Charlie throughout this hour, as we especially are keeping an eye on crude futures today. Again, as Charlie just mentioned, we are just shy of $100 a barrel on Brent, about a 94.66 right now on WTI. And of course, higher price per barrel does translate into higher prices at the pump if you're an American consumer and driver of a vehicle. This creates quite the political problem for the president and, frankly, for the Republican Party as we get closer to the midterms. The question is, how does the president respond? Does it make him change his calculation when it comes to what the U.S. and Israel are doing in Iran at the moment, considering that Iran has effectively made the Strait of Hormuz closed to transit for this time? Our very own colleague, Bloomberg's Josh Wingrove, was asking the president about this aboard Air Force One last night. Take a listen.
What about the Strait of Hormuz? There's no traffic really going through it.
Well, that's, the ship's choices, but we have it cleaned out. We've wiped out their Navy. The Navy is now at the bottom of the sea. So that's the choice. This is an excursion. We figured oil prices would go up. We say, well, they'll also come down. They'll come down very fast, and we will have gotten rid of a major cancer on the face of the earth.
Now, the president is pointing us to a news conference that will take place A few hours from now, remembering they're all in Miami at Doral for the GOP retreat. The president says, I'll be going to Speaker Mike Johnson's fundraising event at 4 p.m. Then prior to leaving for D.C., I will hold a news conference from a Doral ballroom at approximately 5:30 p.m. Thank you for your attention to this matter. Bloomberg Washington correspondent Tyler Kendall is on the North Lawn on a beautiful day today in the nation's capital. Not maybe as nice as Miami, Tyler. What's the president going to have in store for reporters when he meets the press later?
Yeah, hey, Joe. Well, at this point, there's a lot of questions about exactly what you and Kaylee were outlining when it comes to what's turning into higher retail gas prices at the pump. And so far, the Trump administration has really been downplaying the oil price spike, right? You had the Energy Secretary, Christopher Wright, in an interview over the weekend saying that this is not going to be a long-term conflict. The thing is, we're seeing major Middle East producers cut production. The Strait of Hormuz is effectively closed, and President Trump previewed over the weekend that the conflict is expected to widen as the U.S. looks to expand its list of targets. Throw on that, Bloomberg News now reporting that President Trump is looking at deploying special forces to potentially extract Iran's stockpile of highly enriched uranium. And at the moment, it doesn't feel like there is de-escalation on the table, which is leading to questions on just how long this disruption will last. Now, it appears that a G7 meeting earlier today and a statement that came from it eased some concerns about oil supplies. The G7 finance ministers ultimately saying that they're not ready yet to deploy from their strategic stockpiles, however, and reserves when it comes to oil. However, the option is still on the table. That's one thing that we're looking at, Joe and Kaylee, as there's new reporting out from Reuters that President Trump has an array of options he could be considering when it comes to oil. This includes export curbs, intervening in oil futures markets, and then also potentially a gas tax holiday. That's something that we had heard rumblings of last week. It would only be temporary, and it would require Congress to get done, which isn't leaving this White House at the moment with that many options.
Yeah, we, of course, heard a lot about that back in 2022 as well when Russia invaded Ukraine, and we know how that went. Tyler, I also am curious about how the White House is messaging, knowing that President Trump, when he's outlined the objectives of this conflict with Iran, has said time and again that he would like to see a regime change and that he wanted to be involved, he said last week, in the selection of the leader. What's the administration's response to the fact that now it's the the deceased Supreme Leader's son who has become Iran's next Supreme Leader?
Well, Kaylee, we heard directly from President Trump in an interview over the weekend where he said that he is, quote, not happy, as analysts point to the fact that this does signal a continuation of a hard-line regime, and this likely isn't going to be a leader that's going to look to cooperate with the U.S. As you well know, the White House was hoping that there could be a more amenable leader to the U.S.'s demands, as President Trump last week inside the Oval Office said that the potential worst-case scenario for this military conflict would be if new leadership in Iran was, quote, just as bad as the old regime. Now, it is important to point out this new leader is closely aligned with the IRGC, that military faction within Iran, and that is something critical to look out for here, because we heard from Iran's president actually over the weekend saying that he has instructed the military not to strike countries that are not striking Iran. But then just today we have these headlines coming out that NATO is intercepting missiles headed for Turkey. So there seems to be a little bit of a distance perhaps between Iran's president and now the new supreme leader, though at this point the president did come out, Iran's president did come out after those remarks and said the regime is ultimately not going to back down. As Joe and Kaylee, it feels like there is no diplomatic off-ramp right now on the table.
All right, Bloomberg's Tyler Kendall live at the White House. Thank you so much. As Tyler points to the fact that there are now missiles being lobbed at Turkey, of course, many countries in the Middle East have been targeted by Iran's retaliation. It does feel like a very dangerous moment in a large part of the world in the area surrounding the Middle East. But to hear the Secretary of State, Marco Rubio, say it, this moment is going to lead us to more safety in the long term. Take a listen to Secretary Rubio.
I want everyone to know your military is getting the job done, and every single day this regime in Iran has less missiles, has less launchers, their factories work less, and their navy is being eviscerated. And the world is going to be a safer and a better place when this mission is accomplished.
Let's see how our next guest feels about that statement. Jane Harman is with us, the former Democratic Congresswoman from California, former ranking member of the House Intelligence Committee, also author of Insanity Defense, Why Our Failure to Confront Hard National Security Problems Makes Us less safe. So let's talk, Jane, and welcome back to Bloomberg TV and radio, about what is making us less or more safe. Ultimately, does this conflict with Iran bring the Middle East and bring the world to a better place?
I think ultimately, no. I think there are some aspects that are positive, such as degrading further Iran's military capacity. Let's understand its nuclear ability was not obliterated, as the administration claimed a few months ago, and they're trying to rebuild right now. But I think those little bombs in New York City a day ago, I think that the homeland attacks could increase, especially now that our Homeland Department has been pretty neutered at the top. But here's what I would say. I say the big winners, and there are only two, and they are Russia and China. We've waived additional sanctions on Russia. I thought we were going to increase them to stop Russia's invasion of Ukraine, but we've waived them, and they're selling oil, making money, and they can perpetuate the war in Ukraine. And China now benefits from the fact that we have repivoted to the Middle East. We have fewer assets in Asia against China. China is building, is not just rebuilding, but building enormous military capacity. And it seems to me has all the moral authority it needs, I hope it doesn't do this, to annex Taiwan, given what we're doing. So who are the losers? The big losers are our president ultimately, I would predict, but in the shorter term, the United States Congress, which is sitting by and doing nothing. The Senate punted on the vote last week to invoke the War Powers Act. They didn't even vote on it. And so the president is claiming free reign to do whatever he wants, including charging taxpayers $1 to $2 billion a day to support the effort we have underway. And that effort is leading to the highest gas prices in American history. So if I were the Congress, this is advice to both parties, I'd figure out a way to work together to stop this. And I'd also figure out a way, if you want to win your election, to show that you're doing anything. The president is trampling on the Article I branch of our government.
Jane is referring to the improvised explosive that was thrown near Mayor Mamdani's residence. And I just want to mention quickly, the Attorney General Pam Bondi, Jane, just posted on Twitter, we have indicted the two alleged ISIS-inspired terrorists who attempted to bomb a protest in New York. She's got a couple of pictures here. We will not allow ISIS's poisonous anti-American ideology to threaten this nation. And I know that the ongoing threat, whether it's from a cell or a lone wolf, is a very real one. But I'd like to just ask you, with the prospect of a potentially widening war, Jane, and it's great to have you back today, what do you make of, not once but twice, NATO having to intercept a ballistic missile fired from Iran in Turkish airspace? And in fact, today we saw debris fall in southern Turkey, about 150 miles away from an airbase. Why are these not Article 5 incursions?
They are Article 5 incursions, or they could be. The country that's attacked has to invoke Article 5. And maybe Turkey is holding back. Turkey has a kind of complicated relationship in the Middle East with all these countries, in case you missed it. But maybe they're holding back. But let's see what else happens. There was an explosion in Norway yesterday, and nobody has been able to trace that. That's another new Article 5, new NATO country. So let's see if Iran is provoking Europe. Might be true. But the other piece of this, Joe, is the domestic fallout, domestic USA fallout. Those IEDs in New York might not be a one-off, as you point out. This could be going on in the country, think Washington, D.C., someplace. It's not that hard, unfortunately, to be inspired and then to carry out a terror attack. And that could be our new future in the United States. But meanwhile, soaring gas prices. The markets are unstable. And Congress is sitting on its hands. And let's understand these costs. Congress can't duck voting on the budget. Eventually, Congress will have to vote on the budget. Yes, it can have a broader government shutdown than the one we already have that's causing long TSA lines. But if Congress can't find a way out of this, I don't know what the justification is to anyone, for anyone, to be there. And yes, there are some well-motivated people in both parties in Congress. Seems like more in the minority party, but a lot more at the moment. But what would I like to see? I would like to see a functioning Congress that holds the president across the board in check. for this completely unprovoked war of choice, which is hugely dangerous and which was, I guess, inspired to some extent by his friendship with Bibi Netanyahu. But even Israel, my view, is now seems to have free license to bomb the refineries in Iran and to be doing a huge amount of bombing along the southern coast of Lebanon to prevent Hezbollah from ever coming back. It seems to me there were better options that we could have taken, and sadly we missed the movie.
Well, as you talk about all the different bombs that are dropping, Jane, the munitions that we are expending, you, of course, used to lead the Commission on the National Defense Strategy. So I'm wondering, after this conflict is over, whenever that may be, what kind of strategic disadvantage we may be in having expended all of this, knowing the defense industrial base is only capable of producing so much so quickly in order to restock?
Well, great question. And to be fair, our commission recommended increased defense spending. We talked about the broken defense industrial base, the DIB, and ways to regenerate. We talked about the fact that the business model of the tech sector is much more efficient than the business model of the Pentagon, and urged that there be more synergy there. But we also urged, by the way, that we use all elements of national power, not just hard assets, but also all the things Trump has dismantled. Sadly, this administration has dismantled our soft power, our development, our State Department. The State Department is a shadow of its former self, our use of partners and allies. And it's interesting to see, it will be interesting to see, what partners and allies the U.S. has if and when this Iran adventure ends. Again, let me say, it is important to degrade Iran's military capacity. The shock and awe of our military is impressive. It is tragic that we've lost 7 lives so far, and we may lose more if the president is able, as he says he wants to protect the traffic through the Straits of Hormuz, which is blocking 20% of the region's oil exports to the world. But I just call on Congress, get it together, act. Invoke the War Powers Act, put strict limits on what goes on after this, and surely get a handle on the costs and make clear that the American people have to be supporting this in order for our president to go forward.
Jane, it's great to have you back. Let's stay in touch as we learn more here. The next couple of days could be interesting, both overseas and here at home. I think we've already determined. Jane Harman, former Democratic Congresswoman from California, former ranking member of the House Intel Committee and author of Insanity Defense, Why Our Failure to Confront Hard National Security Problems Makes Us Less Safe. Kaylee, I'll remind everybody that for the first time since February, employees of the diplomatic mission in Saudi Arabia, American employees, have been given mandatory departure orders. Mandatory. They are not allowed to stay even if they want to, which could give us a sense of what might be next.
Yeah, speaks to how dangerous this moment is in the Middle East. I wonder what commentary we may get from President Trump about that when he holds a news conference from Florida later today. Again, that expected 5:30 p.m. Eastern time. We'll have more on that in the late edition of Balance of Power, but still ahead here in this hour here on Bloomberg TV and radio. We'll turn to our political panel as we consider the political ramifications of all of this here at home. That's next.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word from the U.S. Attorney General of the indictment of the two alleged ISIS-inspired terrorists who attempted to bomb a protest in New York City. That word from Attorney General Pam Bondi. The announcement comes as New York City's police commissioner is investigating whether the incident, which allegedly involved improvised explosive devices at a protest, was an act of ISIS-inspired terrorism. Now, the devices, which did not detonate, could have caused serious injury or death, according to the NYPD and New York City Mayor Zohran Mamdani. Developing story. We'll keep you posted with more details as they become available. The Dow, the S&P, and NASDAQ all lower. Now, NASDAQ had been higher in our last update. Right now, looking at a loss of 46 points. The NASDAQ Composite Index now down 0.2%. The S&P trading lower by 35, down by about 0.5%, while the Dow is down 434 points now, lower by 0.9%. The VIX, Wall Street's fear gauge, at 27, the 10-year 4.12%, with the 2-year currently yielding 3.57%. Spot gold is down 1.5%, retreating down to 5,094, while West Texas Intermediate crude does remain higher, but below $100 a barrel. Right now, WTI is at 95.58, up 5.1%, while Brent, the global benchmark, up 7.6%, barrel of Brent 99.79. The Justice Department says Live Nation Entertainment has reached a settlement with federal antitrust authorities in a lawsuit accusing the company of illegally monopolizing the live music industry. Live Nation shares, they're up now by 5.2%. Novo Nordisk and Hims & Hers Health have struck a deal saying they will work together to sell obesity drugs. Hims & Her Health surging now by 38.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellett. Joe and Kylie, that is a Bloomberg, Kaylee, I should say, that is a Bloomberg Business Flash.
I'll take it. Charlie Pellett looking at the markets for us. Thank you so much. As we kick off the trading week here on Monday in Washington, though we should note that the House is not here in Washington. President Trump is also not here in Washington. They're down in Florida. President Trump is set to speak to the House GOP conference as they have their retreat at his Doral Golf Club. And then shortly after, at 5:30 p.m. Eastern Time, he's planning to hold a news conference. We can imagine that Iran will be featuring quite heavily on the agenda. I'm sure he's going to get more questions about not just the U.S.'s strategy here, Joe, but also his instantly potentially higher oil and gasoline prices. He, of course, on True Social overnight suggested that higher oil prices are a very small price to pay for, and this is a quote, USA and world safety and peace.
Yeah, suggesting as well that if you don't understand where he's coming from, then you're a fool. But of course, now we've got an average for regular unleaded nationally of $3.47, and that is up pretty significantly from where we were on Friday. And a lot of analysts, including Bob McNally and Tom Kloza, who was with us on Friday, Patrick DeHaan, Gas Buddy, they've all identified $4 a gallon as a real possibility. You were on the road over the weekend. You're in Virginia, $3.39 across the board, you said, which is interesting.
Central Virginia to Northern Virginia, $3.39 at every single station.
Nobody wants to top the guy next door, I guess.
I guess not. Not when prices are elevating this quickly.
It's really amazing. And it's really the heart of our conversation with our political panel. Let's bring him in right now. Bloomberg Politics contributor Jeannie Shanzano, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, and Republican strategist Maura Gillespie, Blue Stack Strategies founder and veteran of John Boehner's Speaker's Office. It's great to have you both here. Jeannie, Democrats obviously don't want to be paying more for gasoline, but the Machiavellian view would suggest that this is pretty good for Democrats on the midterm campaign trail. Are you making ads out of this post already? A small price to pay for peace?
Yeah, I'm sure ads will be made, but of course, this is horrible for everybody. As gas prices rise, it is regressive. People who can least afford it are hit the hardest. And of course, even Trump supporters, what did they vote for, especially Trump supporters? They voted for the promise on a war on cost. And what did they end up with? A war in a foreign country. Many people still do not understand what our interest is there. And so that's the dilemma that Donald Trump faces as he comes out this afternoon or this evening and tries to address the American public on this.
Well, again, he does that after, Maura, he addresses House Republicans who all have to be on the ballot in November. This retreat in Doral was supposed to be talking about midterm strategy. This is not what they wanted to have to strategize around.
No, but it's what they're going to have to, because this is going to play a very big role in what happens come November. Not only is the House already fractured and dwindling in numbers, we're hearing of more members who are not wanting to run for re-election. And I think a large part of this is that what are they supposed to message on? There are a lot of things that the House wants to be able to tout, but they simply cannot if one week the president is touting low gas prices, and then this is happening right now where it is already jumped well over $1 from what it was when he was touting it at the State of the Union address. And so I think when you talk about the affordability message that Republicans have been harping on the White House to provide more clarity on and more messaging on, that they are going to struggle. And so unfortunately, I think that's probably what's being discussed. But it seems as though many members have a hard time, especially in the Republican Party, having those frank conversations with the president, because what he wants to hear is that everyone's happy and things are going great. That's how he operates. And then the reality is going to be starkly different.
Jeannie, will there be a long-term view looking back on this as a good thing that, you know, we hear this frequently from the president, from other Republicans. It's been 47 years in the making. Many Americans have been killed by terror sponsored by Iran, and realizing that this is causing some big disruptions right now. The president's line speaks for itself. Small price to pay for what he sees as long-term peace. Could he be viewed at some point in the future as the only leader who was brave enough to make this move?
That would depend on what happens. And of course, before you set forth in terms of engaging in a war in the Middle East, you want to think carefully about whether what you want to achieve is achievable. And that's the problem here. We've had many presidents since 1979. All of them have been faced, as their administrations have, to Donald Trump's point, with a question of should we go in or not. There is a reason that, for instance, Barack Obama chose to try to negotiate on nuclear weapons with Iran. It is because achieving what the president wants to achieve is very, very difficult. What he needs to achieve to win is regime change and replacement. And we see the replacement today. It is somebody who is more hardline than his predecessor. So yes, history will prove him right if he can achieve what he set out to achieve. But so far, nobody can tell a story that supports this war that gets us to the end he wants in a winning way. And that's the problem for the president. And at the same time, it's costing Americans a whole lot, including now 7 military lives.
Yeah, and that cost is a very heavy toll, obviously, Maura, but there also is the literal financial cost. There's estimates that this is costing $1 billion, maybe $2 billion per day, which raises the specter of needing supplemental funding from Congress. If the president asks for it, do you think he's likely to get it? Could we actually see Democrats who are on board with that effort?
He'd have to make the case to Congress, and he has so far been refusing to do so. I think that that's part of what I think Jeannie is talking about too, is that without this clearly defined plan and making the case to the American people who largely don't understand why we're even at war with Iran, and then wondering why we are implementing strikes without necessarily a plan of how to get out of it. There's been confusing messaging we talked about, Jeannie mentioned there. But more than that too, I think you also look at the president's flippant remarks about it's a small price to pay, it's not a big deal. Pete Hegseth saying this is what happens, this happens in war, being so dismissive and flippant about something that's so very serious. It just shows, again, this disconnect between the White House and what the American people are feeling and facing, between the White House and reality, what our allies are looking at and wondering, where do you stand? What is this for? And where does it end? And I think not being serious in a situation that is so very serious is a bit of a slap in the face to those of us who are wondering what's going to play out. To Jeannie's point, where does this end and what happens next?
Well, so what should happen? Maybe better to ask then what will happen at 5:30 when the president gets to the podium. He will have spent the whole day with members, hearing probably some real concern behind closed doors about all of this. What does he need to say? He hasn't had the Oval Office address or that FaceTime with the American people since this began, outside of a couple questions in the driveway, some telephone interviews, posts on Truth Social. This could be an opportunity, or it is an opportunity. How should he handle it?
It's absolutely an opportunity for him to address the nation and taking a position of leadership and accountability. That this was started XYZ. This started because of XYZ. We are now in a phase where we are implementing XYZ strikes. He just needs to lay it out in a way that shows us that he understands the severity of the situation, but also that he actually has a clear plan and a clear mission.
You want details.
We want details, but we also want a confident goal. I would say that watching him get distracted by how great he's doing, or curtains, or wearing a hat that says USA. I mean, I think that he gets so distracted by other things that it takes away from what is actually impacting us right now, what's happening on the ground, and to the people who are sacrificing and serving. And so I think that I would want to see him show some empathy, show some accountability, and take responsibility for the position that he has as Commander-in-Chief and leader of the free world and President of the United States, and in what his role is in what is happening right now.
Well, Jeannie, it of course is not only the president's role to make this case. He has charged others within his administration to go out and make the case as well, including the Secretary of State, Marco Rubio. We've heard from repeatedly the Energy Secretary was out on Sunday morning television, as was the press secretary. Do you see anyone, if President Trump cannot so clearly define it, is anyone within the administration doing a better job as messenger?
It's such a good question, Kaylee. I think what people are hearing is the bombast, is the sort of bro talk. And this is the kind of Pete Hegseth, Secretary of War talk that Donald Trump is echoing. The White House is putting out videos with references to films like Top Gun Maverick and references to video games. That sort of bravado is pretty much what people are hearing. You do have some voices in the administration who can make a more coherent argument, but the reality is this stops with the president, and everybody has to be on the same page. What are you doing, and why are you doing it, and when does it end? Those simple but not so simple questions, they have been yet to articulate a coherent answer that people can say, aha, well, this then is in my interest, and we will go along with this. But the president showcased all of where he stands on this weekend with what you and Joe were talking about earlier. To call people concerned about oil and gas prices fools for not seeing what he sees without him articulating it, that is why we are in this problem. So it's up to the president tonight. Nobody else can surrogate on this. We are in a war in the Middle East.
I don't know what you make of the memes that are coming out of the White House. They had Call of Duty footage interspersed with drones crashing into Iran. And it was the last weekend that the UFC put out the fight card for the Octagon that's going to be on the South Lawn. There are going to be 80,000 people apparently on the ellipse for this. This speaks directly to the base, though, Maura. How do you remove that and still be MAGA?
I don't know how you still be MAGA if you're looking at this, and the hypocrisy is just so rampant to me. I mean, you're looking at this, and for such criticisms of previous administrations for being so insulated and having been out of touch with reality, I don't know how you don't see this being completely out of touch with reality and what's happening, and it just takes away from the seriousness of the situation we find ourselves in.
All right, Maura Gillespie and Jeannie Shanzano, our political panel today. Thank you both so much for being with us. And we still have more ahead here on Balance of Power as we get back to the markets and what we're seeing in oil. We're off the highs of the session, but we're still teetering around $100. We'll have more with Rebecca Babin of CIBC Private Wealth next on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at losses for the S&P, the Dow, NASDAQ 100 index. We are, however, well off session lows, and we've got crude oil still trading below $100 a barrel. 94.66 where we stand right now on West Texas Intermediate crude. Still a gain of 4.20%. Oil prices clawing back some gains after surging as the world's largest economies, the Group of Seven, consider a coordinated release of emergency oil stockpiles. So again, WTI right now up 4.2%, but below 95 a barrel, 94.76. Brent, the global benchmark, also below $100 a barrel, 98.94 on Brent. It is up by 6.7%. Equities lower across the board with the S&P 500 index down 43 now at 66.96. That is a drop of 0.6%. Dow Industrials down 513 on the Dow, a decline of 1.1%. NASDAQ lower now by just about 0.4%. The VIX, Wall Street's fear gauge at 28, the 10-year, 4.12%. Gold down $80 the ounce to $5,090, down 1.6%. And again, bears repeating, West Texas Intermediate crude higher, well off session highs, however, below $100 a barrel at 95.20, up by about 4.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
Okay, Charlie, thank you so much. We'll have more on the markets from Charlie Pellet at the top of the hour as we kick off Bloomberg Business Week Daily, and it is a market that's got our attention here. Who would have thought $95 a barrel would seem cheap? Well, of course, it doesn't to anyone, but the reversal of fortune that we have seen from $119 is significant, and it has a lot to do with efforts that are being made by G7 nations to find some relief. We talked about the impact, though, on the oil shock, on the economy, with Austin Goolsbee, Fed Bank of Chicago, earlier today on Bloomberg TV and radio. Listen.
As with any supply-side shock, it can lead you in a stagflationary direction, which is to say the inflation side of the mandate getting worse at the same time the employment side of the mandate is getting worse, and that's always the worst case scenario for the central bank because there's not an obvious monetary policy answer.
And of course, that worst case scenario may have grown even more worse over the weekend with the remarkable move that we saw in energy. Eyes on Iran. Whether it was a short squeeze or not, it was not fun this morning. And we welcome Christine Aquino to the conversation, the managing editor for Bloomberg Markets Live blog, fresh off her debut on Bloomberg this weekend. Christine, it is great to see you. How are we rationalizing this type of reversal? Is it as simple as the G7 news, or is there more at play here?
Yeah, Joe, I mean, I think there's a confluence of factors here. As you mentioned, the G7 news definitely helps because some of the knee-jerk reaction is definitely about supply, especially given the news flow out of Iran and Israel as well over the weekend, as well as the neighboring countries, Kuwait and UAE, curtailing production. So all of that contributing to higher oil prices. But I think there's also a little bit of positioning here. As you mentioned, a move as big as this, as swift as this, definitely will have some investors reconsidering, or maybe it's time to pull back a little bit. And I suppose the broader way to look at this as well is, markets are following a little bit the playbook that they deployed last week when war first broke out over the past weekend. We saw an initial bout of selling, particularly during the Asia and European sessions, and then a little bit of a climb down when it came to the U.S. session. So now it really just depends what sort of details next emerge out of the conflict, and it looks like we have a long road ahead of us.
Well, and when we talk about details, Christine, as President Trump has suggested, he has a plan. We've already seen the floating of things like insurance and escorts for tankers and vessels in the Strait of Hormuz. To some extent, is this also a market that has been conditioned by the taco trade or so-called Trump put, and that's what's going on here? They expect that will kick in a more material way.
I mean, absolutely, Kaylee. They have more than a few examples to go off of when it comes to this potential kind of anticipation of President Trump backing down. But, when it comes to the conflict, though, I think the issue is that it's not a one-sided issue that can be resolved immediately by the president just climbing down, right? It is, of course, that would help. And the U.S. is a major player in this conflict, but there are other sides to consider here. And there are some things that kind of have been put into motion, especially when it comes to closures of refineries or curtailing of supply and production. That's not necessarily something that can be turned back on overnight. And this is why I think a lot of market watchers wondering if the transitory effect of higher oil prices can turn into something more than that, because all of these processes just take time.
It's a great point. Christina Kino, managing editor for Bloomberg's Markets Live blog. Thank you so much. And it's on that point I want to turn now to our next guest. Rebecca Babin is with us. She's senior equity trader and managing director at CIBC Private Wealth. Welcome back to Bloomberg TV and Radio, Rebecca. I would love to just begin with the point Christine was making about the idea that this isn't necessarily just as easy as an on-off switch. When President Trump says, and this is quoting him directly from True Social last night, that these are short-term higher oil prices, that they will drop rapidly when the destruction of Iran's nuclear threat is over. To what extent is it true? How quick could that actually happen?
So this is a great point, and I think we should distinguish between the type of disruptions that we're talking about. If we are talking about logistical disruptions, meaning the ships are loaded, they're sitting outside the Strait of Hormuz, and we're just waiting for it to open up for those ships to kind of get where they need to go, we're talking about something that can kind of heal the market rather quickly. 10, 12 days to get to where they need to be to export the crude, right? But once we start talking about supply shut-ins in the Middle East, and we're starting to see that happen in Iraq, 2.5 million barrels and 500,000 barrels in Kuwait, then you're talking about a much longer process to get those barrels back online. It's not just they're sitting there waiting to move. You need to restart the system, which then takes a couple of weeks, and then you need the shipping through. So you kind of have to amplify that timeline when you talk about production that's lost, as opposed to just logistical constraints.
And so here we have the largest oil disruption in market history. If that 20% remains locked up, did we get a sense this morning, Rebecca, of what prices could look like? That jump to almost $120 a barrel really spooked a lot of investors this morning. When could we see that number again?
So I think you see that number when we have lack of confidence on a timeline and a plan. So when there's this open-ended timeline, the market knows we have SPR. We have a tremendous amount of SPR in the global market. We have inventories. We have floating storage. We have China that's built up their inventories. The market knows that, but it can't wrap its head around how meaningful that will be if we can't put a timeline on this. So that panic will resume as this timeline becomes more opaque. So I think that's the key thing the market is trying to evaluate is how long does this last? I know I have some buffers built in. I know there's some levers we can pull, but these are not indefinite. And when I shut in production in the Middle East, those levers effectively run out a runway to help us, and we get those spikes again. So I think that's where you start to see these things come back into play, and it was a really good example overnight. Your previous guest did highlight that there were some technical factors at play, certainly on the open and the overnight session. There's been a tremendous amount of call options trading in Brent crude. Dealers came in short and needed to cover, but that's going to reaccelerate. That trade isn't over, and could certainly see those types of panicked moves again.
Well, so if we continue to see the panic moves and the pressure to the upside, Rebecca, off of concern over a supply shock, at what time, at what level does this become not about supply, but actually turn into a demand destruction conversation?
That's a critical question. There's a lot of analysis being done on that, I think, across the street. When I look at, on an inflation-adjusted basis, if we look at the spike that happened in 2008, we're looking at much higher crude prices, kind of over 200 if we inflation adjust where we would need to be to see that type of impact. I think the key metric that you've talked about is $4 gasoline prices in the United States. That's where you start to see an impact in the U.S. For emerging markets, it's different, right? I think when we start to see $150 crude for EM countries, that's where you start to look at seeing some real demand destruction start, and it will accelerate from there. Those are the benchmarks that are being thrown around. Again, we have to see how this evolves, and the time at which it spends at those prices is critical. If it's short term, we can absorb it and move on. But if this has that open-ended timeline, you will see the demand destruction start to be much more extreme.
As they say, the best cure for high prices is high prices. Rebecca, I want to ask you about Karg Island, because there are reports out there today that the United States may consider seizing Karg Island, which is about 15 miles off the coast of Iran. And it's kind of the transfer station, if you will, where tankers are loaded up before they pass through the Strait of Hormuz. The conventional wisdom here in Washington is you would need boots on the ground to do that. And I wonder if the United States chose to make that move and seize the centerpiece of Iran's oil industry here, is that an all bets are off moment, or would that reassure the market knowing that that site was secured by Americans?
Great question. I tend to think that's an all bets are off moment. That to me is Karg Island has been maintained throughout the course of this conflict. It wasn't touched during the June 12-day war. It's how we think about the long-term preservation of, crude output and supplies. And if you go after that, you've got to be able to move that crude through the strait. That means you are 100% invested and in the strait, having to protect every single ship that goes through. I don't think that that will provide the market confidence unless the strait is also open. So it has to come hand in glove with a logistical output for that crude that can be safely transferred. Just going after it without that, I think actually does the opposite for the crude market and may create a more panicked environment.
Well, and when we consider the wider environment, Rebecca, it's one thing for crude and product prices to go up in and of themselves, but that, of course, can feed through into other prices, too. When we think about the idea that you need fuel to get the things that ship goods to consumers and customers all over the world, how quickly could we be talking about this being a reinflationary kind of thing? I know you said a lot depends on time and duration, but what is the lag on that feed through to costs elsewhere?
Well, if we look at just the move in gasoline prices last week, you can see that there's been a pretty quick transition mechanism into at least gasoline prices. How it filters through into the rest of the products that crude is an input for varies dramatically by industry, right? So we're going to see some things that have a much quicker uptake of it and some lagged. And there's very smart economists out there, I think, who are trying to figure out this exact question. But I think it's months. I don't think it's a week scenario. Is it 3 months? Is it 6 months? It's likely in that window of the timeline that I hear from economists on terms of how much impact it takes or how long it takes to flow through into prices. But again, it will vary by industry, and that'll be something I think the equity market will be watching exceptionally closely as this extends out longer.
How do you read the lack of movement in oil stocks, Rebecca? We're talking so much about the commodity. I'm looking at Exxon and Chevron here. They're up modestly. The XLE is down 7 cents, and they've been kind of just floating around for the last week plus while this has all happened. Does that imply to you that stock traders see this as a short-term blip?
I think it implies two things. First, there was a tremendous buildup in energy equities leading up to this event. So they priced in a lot of this kind of heading into the event. In the last week or so, when we've seen this kind of volatility-driven increase, it's primarily in the front of the curve, right? The back of the curve is still relatively anchored, and that does speak to the timeline that I think the market is using, which is, weeks, a month, but not extended. And unless we see the back of the curve start to really adjust higher, then we could see the next leg higher in energy equities. But I just don't think with the back end at 65, we're looking at, a windfall for equities. It will take a more dramatic move, and knowing that this is going to be a long-term, not transitory event for that reacceleration, I think, in the equities.
You know, Kaylee told us this morning we needed to call Rebecca Babin today, and I'm sure glad we did, Rebecca. This has been really helpful. Senior Equity Trader, Managing Director, CIBC Private Wealth. Rebecca Babin with us on Balance of Power here on Bloomberg TV and radio. You wonder, Kaylee, to the extent these conversations are going to change starting at 5 p.m. Eastern Time.
Or 5:30 p.m. when President Trump is scheduled to give a news conference and face questions from the media about not just oil prices, but perhaps military strategy and other questions as it pertains to the conflict in Iran, knowing that the reason he's going to be in Florida giving that news conference is because he was speaking to the House Republicans who were supposed to be strategizing around the midterms. All of this is a complicated factor.
Well, as they attempt to seize on the issue of affordability, things are becoming less affordable. The question is, will it be a short-lived event? The president sure thinks so, and we're going to be talking to some smart minds on the late edition of Balance of Power to that end. Join us starting 5 p.m. Eastern on Balance of Power here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. I'm Carol Masser. Tim, my co-host, Tim Stenivek, he is on assignment. You'll hear more about that tomorrow. But with us is Bloomberg TV markets correspondent Nora Melinda. And Nora, we're looking on this Monday, March 9th, 2026. We're just a couple hours away from the closing bell. We're definitely off our worst levels when it comes to the equity trade.
Absolutely. And keeping an eye on the SPX, we do see it's lower by about 0.6%. But people really thinking about what oil is looking like in this environment and the impact it could have on inflation long-term potentially, and Fed rate cuts.
Well, on that, we are seeing also WTI crude. It was as high as just shy of 120 a barrel. Right now, we're at about just below 95 a barrel. So we have pulled off some of our highs. We're going to get into all of that. This as President Trump is talking to a lot of members of the press, including the New York Post, that he has a plan for everything when it comes to oil prices. So we're going to dig into that. So coming up this hour, though, something we talked about on Friday, and that is the concerns, maybe the reality of stagflation, lower growth. We saw that in the jobs print, concerns about inflation. So we're going to talk about that, especially with higher oil prices. We're also going to get into the political price, perhaps, of the war as factions arise among the MAGA faithful. It's so interesting with midterms, affordability, a main issue when it comes to U.S. politics. Here we are at war with a president that calls himself the peace president.
Right. And so really striking that balance, especially being that we are in a midterm year, I always keep my eyes on the real estate space. Yeah. And that has certainly been a topic of affordability. If you just flash back to the State of the Union address, people were a little bit disappointed with President Donald Trump's lack of speaking too much about his plans for housing affordability in the United States.
Yeah, specific plans always help. We're also going to get into another headline involving the media story that has gripped us for months now. It's a done deal. Paramount, Skydance, is buying Warner Brothers. But we're going to get into a headline that came out about kind of a silent investor, a passive investor. We'll talk about that. And the new media space as well. We'll do that with longtime watcher Laura Martin. First up, though, let's get you going on this Monday with a check on the trading day. Here is Charlie.
All right, thank you very much. And we are looking at a down day for the equity market. Do want to begin with what is happening with crude oil. Right now, looking at WTI just above $94 a barrel. It is up by 3.5% as we woke up and as we came to work this morning. WTI trading above $100. Also seeing Brent crude off session highs up 6.2% right now. 98.62 for a barrel of Brent, but it too trading below $100. Bears repeating. Barrel of WTI West Texas Intermediate crude 94.18 right now. It is up by 3.6%. But the war in the Middle East sparking a fresh bout of volatility with the Dow, the S&P, and NASDAQ all very much in the red right now. Looking at a 0.5% drop on the S&P at 67.05, down 35 points. The Dow down 435, down 0.9. NASDAQ did turn higher briefly earlier in the session, but right now down 39 points. That is a drop of 0.2%. The VIX, Wall Street's fear gauge, holding just below 28. The 10-year 4.12%. Gold is down 1.5%, 5,095 the ounce, and crude bears repeating 93 handle right now, 93.98 on West Texas Intermediate crude. It is holding on to a gain of 3.3%. U.S. Attorney General Pam Bondi has announced the indictment of the two alleged ISIS-inspired terrorists who attempted to bomb a protest in New York City over the weekend. Recapping stocks lower, S&P down 0.5%, West Texas Intermediate crude now at 93.80, a barrel up 3.1%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carol and Nora, that is a Bloomberg Business Flash.
All right, much appreciated, Charlie Pellet. I'm Carol Masser along with Nora Melinda. Nora in for Tim on this Monday. So let's get to it because just a quick check on our top live blog when it comes to the U.S. war in Iran. We are constantly checking on all of the new headlines. We've got the G7 vowing to tap oil reserves if needed. NATO intercepting a ballistic missile that entered Turkish airspace. President Trump signaling a widening war Iran indicating it won't back down. Some of that happened kind of late Friday and in through the weekend. And then something we also talked about on Friday, and that is stagflation trades sweeping through markets on investor unease, although we are off our worst levels of the session. We do want to get into, though, what's going on with crude and think about that in terms of economic and market implications. We did see WTI crude nearly hitting 120 a barrel today. President Trump addressed higher oil prices specifically on Saturday in an exchange with Bloomberg News senior White House correspondent Josh Wingrove.
What about the Strait of Hormuz? There's no traffic really going through it.
Well, that's, the ship's choices, but we have it cleaned out. We've wiped out their Navy. The Navy is now at the bottom of the sea. So that's the choice. This is an excursion. We figured oil prices would go up, which they will. They'll also come down. They'll come down very fast, and we will have gotten rid of a major cancer on the face of the earth.
Again, that was President Trump over the weekend on Saturday. And yes, indeed, markets do go up, markets go down. It's just the duration of those cycles that we're all trying to figure out. I also do want to point out President Trump on social, writing this on Sunday, he said short-term oil prices, which will drop rapidly when the destruction of the Iran nuclear threat is over, is a very small price to pay for the United States of America and world safety and peace. Only fools would think differently. Again, this is coming from the president writing out on social on Sunday. Continuing to tie together the social posts, the war, the economic consequences, and so much more is Bloomberg Economics Chief Geoeconomics Analyst Jennifer Welch. She joins us from the Bloomberg DC Bureau. She's been a go-to for us. Jenny, good to have you here with Nora and myself on Monday. I want to just take a step back and I'm curious about the conversations you guys have been having through the weekend today, another new week, second week of this U.S. war in Iran. Is there any consensus around the timeline of what the president and his team are thinking about how long this war lasts?
No, and even the administration has given conflicting ideas on how long they think this would last. If we recall, President Trump was saying last week that they originally planned for this to be 4 to 5 weeks, but now they've accomplished some of their goals a little bit sooner, so it may be shorter, but at the same time, he's willing to stay in the fight for as long as it takes, while his Secretary of War, Pete Hegseth, is saying this won't be a forever war. But I think a couple of signs over the weekend point to the fact that this isn't likely to wrap up anytime soon. In addition to President Trump's comments about seeking an unconditional surrender, something that Iran does not seem interested in, and suggesting the U.S. is going to escalate on its side, we also have Iran choosing a new supreme leader who, for his part, also doesn't seem to be in a rush for diplomacy or negotiations. So I think we see both sides digging in their heels here, preparing to fight this out, and Iran in particular realizing that its strategy of imposing costs on the region and on global oil markets may be starting to pay off.
What do we know about the leader that was chosen and where President Trump feels about this? As you said, he has said he wants to kind of basically sign off on this. It is the son of Ayatollah Khamenei, and my understanding is that maybe even more conservative than his father was. But what do we know, and what are we kind of trying to figure out, read the tea leaves about any kind of conversations, perhaps backroom conversations that perhaps U.S. and Iran might be having?
Yeah, so the new Supreme Leader, Mojtaba Khamenei, he's the son of the late Supreme Leader, was widely expected to be the successor to him. He is conservative, like his father, shares many of his ideological leanings, including in really believing in the core tenets of the Islamic Republic. So by no means a reformer or a change agent. This is his first public role, though, so there's a lot that we don't know about his leanings. He could prove to be more pragmatic, but at the same time, he is facing sanctions by the United States, has lost many close family members in this war already, including his father and his wife, and he's probably not in a rush to talks. I think the perspective in Tehran from members of the Islamic Republic is that they're in a war of resistance right now with the United States, and it's somewhat of an asymmetric one where they're willing to bear a lot of costs and suffer a lot of pain, and their goal is to try and make the United States and its partners blink first. And I think what all of that points to is that we won't be seeing Iran moving forward towards a surrender or the sort of decapitation arrangement that the Trump administration arranged with Venezuela, which may be what Washington had been pinning its hopes on.
So when we think about this new leadership, what aspects in particular do you think are most crucial as we think about this transition period between there as well as just geopolitically speaking, the relations between countries here?
I think the important thing to keep in mind, and what the selection of a new supreme leader demonstrates, is even though U.S. and Israeli strikes took out a significant number of senior Iranian officials, including the former supreme leader, the system is surviving, and it's finding new ways and new people to put in charge. And I think what that suggests is a level of resilience that makes a campaign to force Iran's total surrender, or whatever goals the Trump administration currently has in mind, very difficult, and the sort of campaign that might last longer than what the administration had originally envisioned. They were hoping that Iran would fold rather quickly after these massive strikes. That doesn't seem to be the case. And I think also when you look at the military perspective, it's sort of a similar story. Iran is continuing to carry out strikes on Gulf countries to hold shipping in the Strait of Hormuz at risk, and all of that is part of the reason why we haven't seen traffic resume, despite what President Trump talked about in that clip with offering naval escorts and protection, that ships don't seem to be taking him up on that offer.
I keep thinking too, Jenny, about all of this against the region, because it's not just Iran and the U.S., Iran and Israel. We are feeling strikes throughout the region, and I saw in our reporting, Saudi Arabia hardening its tone against Iran as it dealt with incoming projectiles again today, including ones heading toward oil giant Aramco's Sheba field and areas in and around Riyadh. This new leader, any consensus, as you said, he hasn't been very public. This is his first public role. But is there any consensus that we're hearing from the region about what this leader might mean for Iran going forward? And as you remind us, the regime is never one person. It's many people.
It's many people, but this particular person in particular seems to be more aligned with his father's perspective on fighting the full fight, right? And using proxies and partners to continue this war of resistance against the United States, whether it's a hot war like what we're seeing today, or more the sort of long battle by proxy that had been the preceding decades kind of conflict. I think what this means for partners in the region is they're facing increasingly tough choices as their air defenses start to run out, come under strain by the just volume of Iranian projectiles that they're dealing with. They're going to start to need to make choices about where they dedicate those air defenses. I think also this is forcing a bit of reluctance or frustration with the United States that the U.S. began this conflict despite them lobbying Washington not to proceed with it, and despite it putting them at the front lines of this battle that they didn't want to participate in, and they actually have not been, for most of them, really active participants in to date, yet that didn't seem to spare them from taking a lot of the incoming from Iran.
So could his appointment at all increase the likelihood of deeper economic retaliation against Gulf states or Western interests for that matter? And if so, what would be the knock-on effects for regional trade flows?
I actually think the longer pole in the tent for that will be the stockpiles that Iran still has left at its disposal, how many missiles it has left, how many drones it has left. The United States and Israel have really focused their attacks on decimating those capabilities, and in particular on the missile side, destroying Iran's missile production facilities, its missile launchers. We don't know how many missiles it still has in its stockpiles, but if it can't launch them, then that is a real cap on its ability to hold those assets and shipping in the region at risk. But I think the intent will remain there, because this is a strategy that Iran thinks is working, that it can essentially force other partners in the region who don't want to incur these costs to blink and to put Washington under pressure to bring the war to an end. They're also probably betting that the more that gas prices rise in the United States, that will also exert pressure on President Trump. So I think it's less about intent and more about capability. And that right now is a real big open question. But I would stagger to guess that at least their drone stockpile is significant enough for this to be a problem for at least the next few weeks.
I also do wonder, and I want to shift to your many hats that you wear, but the economic impact globally and certainly on the U.S. We just had a headline from The Information crossing that Meta Platforms closing its Tel Aviv office temporarily, that coming from The Information. We had last week a story about drone strikes damaging 3 facilities operated by Amazon.com in the United Arab Emirates and Bahrain. So I do think about this region that has really many areas have transformed themselves and embraced, I don't want to say capitalism, but to some extent, yes, in terms of building up their financial presence as trying to attract in more investors. Is it too soon to say that there will be some kind of economic impact on that region?
I think it is a little too soon to say that there'll be a long-term impact, but I think certainly the perspective from a lot of Gulf countries that, as you mentioned, have made a bet on transforming themselves into sort of pillars of stability in an otherwise somewhat tumultuous region is having all of this incoming, having these this conflict, having to deal with strikes on civilian facilities. All of that really undercuts this image that they have worked so long to build up. We're seeing a number of multinationals talk about ceasing operations or having to shift to different footing as a result of the conflict. And I think it's going to take time for them to not just rebuild those air defense stockpiles, but to rebuild that image that this conflict has really hit hard.
Beyond just gasoline in the United States, what sectors do you think also may feel the brunt of higher energy costs? I know you mentioned the fact that potentially Iran is betting on the fact that President Donald Trump will actually take a step back, given the fact that there are a lot of concerns from U.S. consumers about elevated gas prices.
That's really the wicked problem when it comes to higher oil prices, is they tend to affect everything that gets transported using gasoline and oil. So it's highly inflationary, and I think that's going to be the real challenge facing the United States. Even though we're a net energy producer now, and that will cushion the economic impact to a certain degree, it won't necessarily help folks when it comes to what the cost is at the pump and what the cost is at the grocery store. And the impact on will really depend on how long this conflict lasts and how high oil prices go, and those are interrelated. The more markets think that these disruptions won't be temporary, likely the higher oil prices are to go. We saw them touch very high levels overnight in Asia trading. They're likely to continue to grow if we think, for example, the Strait of Hormuz won't be opening anytime soon. That could put prices well above 110. We estimate even higher than that if there's a presupposition in the markets that the strait is going to remain closed for as long as 2 to 3 months. We could see prices rise much higher, and the impact on inflation could be quite significant.
Which brings us to something we started talking about on Friday, Jenny, and that is just to kind of wrap up here, this concern about stagflation coming off of a weak jobs report concerns about growth slowing, yet those inflationary concerns were out there even before this U.S. war in Iran, and this just exacerbates the situation. When do we make a call on stagflation? And, once that train has kind of left the station, like, how quickly does it happen?
That's going to be, I think, a central challenge for not just the Fed, but a lot of central banks, is how much can they look through the impact of higher oil prices on inflation? Do they think it's going to be temporary, or are they going to be facing this dual challenge of dealing with higher inflation, but also lower growth expectations as a result of these energy prices? And in many places, real direct energy disruptions because they simply aren't able to access anything. Yeah. I think the next few days will be telling in terms of how long these disruptions might last.
It's the million, billion, $1 trillion question, right? How long does this last? And that really then can make us figure out the equation as to what will ultimately be the impact. You put it all in place, though, as we need to do as we go from day to day. Jenny, thank you so much. Jenny Welch, she's Bloomberg Economics, Chief Geoeconomics Analyst there in our D.C. Bureau. As we head to a break, we just want to pull your attention to something that is going on here in New York City. New York City Police Commissioner Jessica Tisch, they're holding a press conference. This, of course, has to do with the explosives, the improvised explosives thrown near New York City Mayor Zohran Mamdani's residence over the weekend. Authorities continue to investigate this situation and potential terrorism links to those 2 suspects that are in custody. So we will continue to monitor and bring you any headlines as known. All right, we are going to stay over the conflict, the war in the Middle East, as the U.S. war with Iran marks its 2nd week. It is creating some factions among the MAGA faithful. So we're going to get into this story. It's a Bloomberg Big Take. We've got the details. And as we head to a break, just a reminder, we're definitely off our worst levels of the session on this Monday. We are still down, though, about 0.4% on the S&P 500, NASDAQ 100. Call it almost flat, a little bit lower, down about 21 points. More when we continue. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are keeping an eye on those fast-moving energy markets. And right now, West Texas Intermediate crude is trading below $93 a barrel. Yes, higher, but up 2.2% right now. Keep in mind that in the early going, we had West Texas Intermediate crude trading above $100 a barrel. So right now, stocks, the Dow, the S&P, NASDAQ, all in the red. Stocks, however, paring losses as a surge in energy prices fades after oil topped 100. The S&P down 27 now, drop there of 0.4%. Dow Industrials down 360. That is a decline of 0.8%. NASDAQ briefly was higher earlier today. We've got the NASDAQ Composite Index now lower by 0.1%. The NASDAQ 100 Index also down 0.1%. The VIX, Wall Street's fear gauge, at 27. The 10-year currently yielding 4.12%. Gold is down 1.3%. Spot gold 51.02 the ounce. And again, bears repeating, West Texas Intermediate crude, yes, higher by 3%, but it is currently trading at $93.64 a barrel. Uber says a feature designed to match female riders and drivers will be available nationwide, expanding access to a safety measure as it seeks to resolve thousands of sexual assault complaints from passengers in the United States. And federal prosecutors have charged two men, Amir Balat and Ibrahim Kayumi, for allegedly bringing improvised explosive devices to a protest outside the mayor's residence in New York. NYPD Commissioner Jessica Tisch says the devices, which did not detonate, could have caused serious injury or death. She is holding a press briefing right now. Recapping, S&P down 26, drop there of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Nora Melinda in for Tim on this Monday. So we've got the midterms coming in November. We know that. And some are wondering a lot about the political cost of President Trump's war in Iran. The president has been emphatic about his intentions in the widening Middle East war. He said just on Friday he'd accept no deal with Iran other than unconditional surrender and pledged the U.S. will work tirelessly to restore the country's economy if a new leader is installed whom he deems acceptable. That was Friday. We know Iran now has a new leader, as we just talked about with our own Jenny Welch in the last segment. So let's get to more on how some Make America Great Again influencers and GOP politicians are expressing backlash against President Trump's policies. It's a recent Bloomberg Big Take. It's something we were talking about all over the weekend. With us is Bloomberg News senior national political correspondent Nancy Cook. She is in the Bloomberg News Washington, D.C. bureau. Nancy, great to have you here with us. Great story. Tell us about this chorus of betrayal, who they are and what they are up to.
Well, thanks so much for having me. Really what has been happening as Trump has bombed Iran along with Israel is that there are a bunch of MAGA influencers who have huge names and huge megaphones, including Tucker Carlson, Megyn Kelly, the former lawmaker Marjorie Taylor Greene, who do not agree with this military incursion and have been really vocal on it. They've just been saying that this violates Trump's longtime campaign promise of America First by not sort of getting involved in the Middle East, and that this is really not part of the agenda that they're looking for.
Well, Nancy, were some of these factions anticipated? Were we expecting to see some sort of breaking up within the group more broadly? What are you hearing from your sources?
Well, this is certainly to be expected. I mean, Trump, since 2015, when I've covered his first presidential campaign, has really promised that he wouldn't get the U.S. involved in these Middle East conflicts. He was very critical of past presidents' involvement in Iraq and Afghanistan. And when he got involved in Iran before with bombings, and also when he got involved in taking out the leader of Venezuela, some of these MAGA factions also made noise then. I would say that given the fact that there doesn't seem to be a ton of strategy behind this decision in Iran, or it shifts every day, and then also the unclear timeline for how long the U.S. will be involved there, really has incited this wing of the MAGA base just to say this really isn't what we signed up for. And I just want to point out it's not just the MAGA wing that the White House is worried about. It's also independent voters who aren't necessarily Republican but who backed Trump in 2024. Voters overwhelmingly disapprove of Iran, and a key part of the midterms will be getting these independent swing voters like young men, black men, and Hispanics to keep supporting Republicans in 2026.
I gotta say, Nancy, I keep shaking my head thinking, wait a minute, we've already determined affordability is such an important issue, right? We know from past elections, it's the economy, stupid. Like, we get this. This is a playbook that is in many ways tried and true. And I'm just trying to understand, you know, who is calling the shots on this war? Is this really what President Trump wants? And it makes me wonder, is there some crazy strategy that we're not paying attention to that gives him the confidence to do this? I know the midterms are, what, 8 months or so out? Maybe I'm not counting right. Maybe it's 6 months? 8 months. But I'm just wondering, like, is there some strategy that they're like, don't worry about it, we're going to challenge the elections, the midterm result? Like, I'm just trying to understand this, how this fits in.
So from my sources who I speak to, you know, Trump really, he's a lame duck president. He's not running for president again, or at least that's what we think so far. And he really views this opportunity in the Middle East to shape foreign policy. And so what he is doing is he is ignoring his advisors' pleas to keep focusing on affordability. And he sees these huge opportunities to reshape the global order. We saw that with NATO and sort of how he's pressured those countries to up their military spending. We've seen it with Venezuela. We've seen it with Iran. His administration is eyeing leadership changes in Cuba. And so he is looking at his legacy, and he has decided that he wants foreign policy and reshaping that world order to be part of that legacy. And he is kind of ignoring advisors and all the outside pollsters who say the midterms are going to be about the economy. We know that's the case. And he's thinking much more broadly about how he wants to be remembered.
Well, what about Republican strategists? What are they saying during this time period about the potential political payoff? Because if it seems as though, you know, he's not necessarily listening to advisors, what do they think about the potential impact as we walk step by step closer to the midterm elections?
Maybe it makes him look, Nancy, very presidential in some ways, right? Like,
maybe. I think it just introduces a huge unknown into the midterms. And I think that Republican strategists are worried that if the conflict goes on for a long time, that this will overshadow the midterms. The other political risk is, of course, rising energy prices, which we've already seen happen this week. You know, gas prices has been a real bright spot in his economic agenda, whereas tariffs and other things have been more nuanced and complicated things. And if the energy prices continue to rise, then that could be a real political problem for the president in November. You have to remember, gas prices and grocery prices are usually what voters think of when they think about, is my life affordable? Am I feeling comfortable?
You know, it's interesting, though, for somebody who, you know, I think you've already referred to this, you know, he thinks of himself as the peace president. He's been, you know, critical of past presidents, George W. in particular, right, in terms of their decision to launch the Iraqi war. So it's interesting to see him do this.
Yeah, I think it just shows that he has never had, he does have some fixed ideas about tariffs, for instance, and he has some fixed ideas about immigration, but I do think that his sort of political instincts are fairly malleable, and we've seen that over his decades as a politician, and it is quite interesting that he has decided to really become this foreign policy president in a way that I couldn't have even anticipated when I covered his 2024 campaign. It's been a surprise to me the extent to which he has involved the U.S. in these different countries and sort of who's going to be running them, and just involving the U.S. military.
Well, I want to go back to what you were talking about in terms of swing state voters. How do you think about the potential impacts? What are you hearing from your sources about the impacts of gas prices, given the fact that the economy in its state is something that everyone experiences no matter what type of political affiliation you have? So thinking about this K-shaped economy that we're dealing with, plus the gas prices, how do you hear from your sources that they're thinking about the impacts for some of those swing state voters?
Well, I think Republicans are quite worried. A lot of Republicans that I speak to privately think that they will lose the House of Representatives. They think that Republicans will hold on to the Senate, but narrowly. And, you know, a big part of that is because Trump keeps straying from this affordability message. Americans still feel like grocery prices are still high. If the energy prices keep going up, that's a problem. Housing continues to be a persistent problem. We've seen the jobs numbers really aren't, you know, coming in at great numbers. Plus, People are, companies are starting to shed a lot of jobs. It's hard for people to get hired. So the economic picture is just really nuanced and not as great as many voters thought it would be. You have to remember Trump returned to power by criticizing Joe Biden relentlessly for inflation and his handling of the economy. And now Trump himself, is experiencing the same economic problems that really undid the Democrats.
All right, so it's just interesting to see this go on. And I go back to, I always think about, Nancy, with this White House, and this is because everyone kind of seems to say to us, there's a lot always going on, and you wonder what you are looking at versus what you should be looking at. And I do, once again, go to the November elections, whether or not, I was just looking at, don't judge me, but on Polymarket in terms of mail-ins and whether or not President Trump is going to, not allow those. And I think 30% of voters cast in the 2024 presidential election were mail-in ballots. So we know that this is important. So I just wonder what might be going on behind the scenes, not to be like a, conspiracy person or anything. Hey, one of the things I want to ask you is, where is Congress with all of this stuff going on? Why are they not in Washington?
Well, Congress, they always take big breaks. Part of the government is shut down, or at least DHS is. And, Congress, you also have to remember, the Republicans on the Hill, they control both the House and the Senate, have really acquiesced to Trump on everything. I do think that, if they lose the midterms, then we may see more Republicans standing up to Trump. But, Republicans have not been a huge guardrail against this president. He did not ask Congress about the bombing of Iran ahead of time. He did not get Congress to authorize this. And so, he sort of left them out of the decision-making process. And that's really their own doing. They haven't stood up for themselves to make sure that they are a check on the White House.
So if Congress does actually feel sidelined in this moment, what tools does it actually have, if you will, to rein in the administration?
Well, Congress took a vote last week, which Representative Thomas Massey put forward to try to pull back some of Trump's power in Iran. It failed in the House. And so, there is democracy working. It's just not, the Republicans are sort of loath to put that check on. I think what will happen is that if Republicans do lose the House and Democrats take over, what we will see is a huge raft of investigations into how Trump handled Iran, into how his family is profiting off of the White House. I think a ton of cabinet officials will be hauled up to the Congress to testify. And so I think that, Trump is well aware that if Republicans lose the House, there will be a lot of investigations. He could be impeached again, for instance. However, I still think that he's very focused on this idea of nation building and legacy in a way that a lot of us didn't foresee during the last presidential campaign.
Yeah, totally. I think it caught us all off guard, especially when you think of how the 2026 began with Venezuela. Nancy, thank you so much. Bloomberg News senior national political correspondent Nancy Cook. Be sure to check out. It was a big take. You can find that story on the Bloomberg and at Bloomberg.com. All right, we'll have more on the Trump White House, by the way. We'll do that in the 4 o'clock hour. We're going to have Brown University's Wendy Schiller, so we'll kind of dig a little bit more deeper into that. When we come back, a Chinese investor stepping up and investing in the new hookup between Paramount and Warner Brothers Discovery, the story that keeps on giving.
Continues. Never ending.
Laura Martin will be with us.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ in the green, trading higher now. Little changed, up under 0.1%, but looking at an 18-point gain on the NASDAQ Composite Index. The NASDAQ 100 Index also higher, little changed, up under 0.1%. The S&P 500 Index has managed to trim most of a 1.5% drop, down 19 points now, down 0.3%. It is set for the lowest since November. Higher oil costs prompting investors to price in faster inflation as well as risks to growth. The Dow down 340, down 0.7%, but keeping it all in context, S&P down by 0.3%. The VIX under 27 now with a 10-year, 4.13%. Spot gold is down 1.1%, 51.16 the ounce. West Texas Intermediate crude, 95.16 a barrel, up by 4.6%. We began the day with WTI above $100 a barrel. Bitcoin up 2% now at 68,548. Oil stocks are higher, along with the price of crude. ExxonMobil up 0.6%. Chevron is up 0.4%. ConocoPhillips up by about 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. And Carol Nora, that is a Bloomberg Business Flash.
Gotcha. Thank you so much. Charlie Pellet there with a Bloomberg Business News Flash. Carol Master along with Nora Melinda in for Tim for the next couple of days. Tim's on assignment. In the meantime, I was kind of wondering when we were going to come back to this story. And we're talking about the next Fed chair and our Bloomberg government team. Zach Cohen just putting out a story. Kevin Warsh will meet with senators this week as he seeks their approval to become chairman of the Fed. This is according to 3 people familiar with his plan. Now, the customary meetings with senators before his expected hearing mark the next stage in Warsh's quest to replace Jerome Powell as the head of the National Monetary System. So I was wondering about it. Like, there was a point where that's all we talked about, I feel like, with our market guests.
And it says that one of the senators on Warsh's schedule is Senator Tom Tillis. So it's interesting. We do know that Trump formally nominated Warsh just last week in hopes of replacing Powell. So we'll have to see how this progresses.
Well, and what's interesting about Senator Tillis is he has warned that the probe amounts to inappropriate pressure on Powell to lower interest rates. And that is, of course, the probe, the investigation into the Fed's $2.5 billion renovation of its headquarters. And Tillis has been pretty critical, very critical of this and other concerns when it comes to the Federal Reserve. So that'll be something to keep a watch on. Meantime, a story that has captured us for many months. We're talking about Paramount Skydance, the battle for Warner Brothers Discovery, also Netflix, of course, involved. Paramount Skydance winning that bid. Tencent Holdings, though, meantime, a story out today, intends to invest several $100 million in that Paramount acquisition of Warner Brothers Discovery, according to people familiar with the situation. Chinese company would be acting as a passive financial investors, according to those in the know. We wanted to get Laura Martin's thoughts. She is someone who has watched this unfold. She knows the media space, the old and the new media, as it continues to evolve. She is senior entertainment and internet analyst at Needham & Company, and she joins us from Los Angeles. Laura, so great to have you back with us. Hope you are well. The deal, it's finally done. I feel like we've been talking to you since Bloomberg Screen Time last fall when Netflix was like, nope, not interested. It has gone to Paramount Skydance. Is this good? How do you kind of finally see it? It went for a higher price. There's a lot of debt. So do you think this is a good thing for Paramount Skydance? Let's start there.
Yes, I do. I think it's their vision is very interested and very differentiated. They really are going to use the Oracle Cloud, which of course is the father that's really funding this acquisition, very closely. There's a very close technology tie-in. And I really are sort of thinking like broader about how Hollywood transitions into the AI future, which I think is going to be good for, I think this combined entity, they're saying they can close it in the third quarter of this year. So that would be by September 30th would be like record speed. But if they can, I think they would become a leader in Hollywood as opposed to two sort of, subscale competitors.
I mean, how important was this for them? We know that Netflix is the name that everybody knows. It's the world's largest paid streaming service. So just how critical was this in terms of Paramount Skydance's portfolio?
I think it was life and death for P-Sky because it was just too subscale and it was going to be irrelevant. And the competitors to Hollywood these days are really Google, which owns YouTube, and Amazon, which owns Prime Video. And those are the real competitors to Netflix, for example, and Disney. And P-Sky, without buying Warner Brothers, would have been just like a pond to be stepped on. So now with Warner Brothers, it's sort of the same size as Disney together, just with a lot more debt. So they have to solve the debt problem and generate free cash flow. They're saying they're not going to cut people. They're saying $6 billion of synergies, no headcount.
Do you believe that? Do you believe that, Laura? I feel like there's a lot of back and forth about that one.
Yeah. So the answer is they must have hits. They say they're going to go to 30 films, which is a lot of films. And if they have hits through the profits of the hits they make, because it's a lot of films, yes, they will be able to then not cut people. But if some of their films don't hit, or if they spend $100 million on a film and it only makes 20, they have to pay the debt. Because if they don't pay the debt, they bankrupt the entity. So they have to pay the debt first, which says to me, less creativity, less risk-taking, more formulaic, more sequels. And the IP, Warner Brothers library is fantastic for IP. So maybe sequels wouldn't be the worst thing, but it will take them about 3 years to return to investment grade, and that is their goal, which I think means less creativity for Hollywood films. But at least we're making films. I think with Netflix, there was a real danger they wouldn't make films as soon as the government didn't force them to make films to get regulatory approval.
And so if they're not able to properly address this debt situation, is this a sinking ship scenario here? I mean, if you think about all of these names in particular, people tend to be a bit more critical about which places and names that they're actually willing to pay subscriptions for. So you talk about the importance here of them actually being able to have some great projects that people are really able to sink their teeth into.
Well, so we have HBO and Discovery Plus, and we have all their assets now combined, and Paramount Plus. So we have 3 services. I would expect to put them to put them into one bundle, sell them separately, but then also bundle them for the discount. So I don't think there's better programmers in the TV business than HBO. So they will have best-in-class television programming.
So why is this maybe the media deal that works, Laura? You know the history, and I think about, go back to AOL, Time Warner, I think Cap Cities, Disney. They don't have a great history or track record.
Who? Media companies?
Media mergers.
Right. You're totally right about that. Look, P-Sky was going to go
I love media companies. I love working for media companies. I hope they stick around forever.
So I was just going to say, like, P-Sky was subscale. It was going to go under trying to compete with these big, deep-pocketed guys. Now it's going to try to do it with Warner. It may still go under and take Warner with it. But I sort of think they couldn't have worked without Warner. So now they're big enough, with enough scale, with a huge, really high quality library to do a better job of streaming, to do a better job of films. But really high debt, which really gives them, sort of a straitjacket in terms of their decision making, because the debt must be paid first. But if they can get the debt down, even if they don't reaccomplish investment grade, if they can just make enough free cash flow to, and all they need is a couple of hits to get that debt down faster, which will make the equity rise. So, and I do think their vision for the future of Hollywood is really innovative. So we just have to, once we get the regulatory approvals, the risks go down to execution risks. And right now we have both regulatory risks and execution risks, one on top of the other.
Hey, got about 30 seconds left. Remiss not to mention Netflix real quickly. They now have $208 billion to throw in their pocket because of the breakup fee. Are they in good shape, or do they need to I know we always talk about them with content as well, just real quickly.
Yeah, great. Netflix is doing great. They can go back to their knitting. They're doing interesting things, little steps for little feet. They do not believe in the box office. I think that's like a crime. But they're just going to go back to being a global television distributor in your home. Fine.
Yeah, fine. And I'm going to probably continue paying my monthly Netflixes.
Oh, for sure.
Netflix bill. We just do. Yeah. We just do. Laura, always love catching up with you. Be well. Have a great week. Laura Martin there, everybody. She's, of course, at Needham & Company. Senior analyst. She covers media, entertainment, and internet. Just knows this space like no others. Hey, just quickly want to mention Boeing shares. We're seeing them sell off down as much as 4%. Some airlines said to pause leasing order discussions. Considering halting jet deliveries, the Iran war has airlines reviewing growth plans as fuel costs rise. That makes sense, something we're tracking. We're back in a moment.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, back here on Bloomberg Business Week Daily across Bloomberg platforms. I'm Carol Masser. She's Nora Melinda. She's in for Tim, who is on assignment for the next couple of days, but he'll be back on Wednesday. Having said that, Nora, we've got a market where we are definitely off our lows of the session. In fact, we've got a slight gain on the NASDAQ 100.
I know, a bit of activity that we've been seeing in the market, especially as we think about the fact that investors have really been concerned about the ongoing conflict in the Middle East. I'm taking a look at the S&P 500 and financials, the worst performing group in the S&P 500, as well as consumer discretionary. But Infotech, that is our best performing group right now.
Which is fascinating, right? So you're seeing investors move in. Well, we've talked about dip buying, right? We often see that when we see the markets pull back. So we'll keep an eye on it and see if we continue to see more momentum to the upside. Having said that, I'm Carol Masser along with Nora Melinda. Let's get to some stocks on the move this Monday. With us is Bloomberg News equities reporter Avalon Purnell. It's an interesting day today, like second week of a war, but stocks, some gaining, some declining. Not necessarily all connected to the war, but what do you got for us?
Exactly. I definitely have a couple that are connected to the war. We can start off with Uber and DoorDash. Uber, that's ticker Uber. And DoorDash is ticker Dash, D-A-S-H.
Big focus group on that one, right?
Exactly. Uber's sliding about 2.3% today. DoorDash is down about 3.4%. Both of those are down because oil topped $100 today. Right. And Bloomberg Intelligence actually has a great note out talking about how ride-hailing and also delivery companies are going to be pretty much impacted by this, since they're very much exposed to oil shocks, and how it's going to be difficult for them to offset those costs given customers are pretty price sensitive right now.
Yeah, it's hard to throw a surcharge, a fuel surcharge. It wouldn't be the, first of someone kind of doing that on some different item, but you do wonder then if consumers already kind of tired of all the fees. I know I am.
You take a look at your bill breakdown, and it's just stack, especially here in New York City.
Yeah.
We also saw airlines, of course, they're really in focus when we think about those that are sensitive during this time period.
Exactly. All right, so those two are definitely under pressure. What kind of declines again are we seeing?
Yeah, we are seeing about 2.3% down for Uber and 3.4% for DoorDash.
All right, let's go to one that is surging in the trade. This is a wait what moment. We're going to talk about this too in just a moment, a little bit more on air.
Yes, Hims and Hers, that's ticker HIMS, up about 41% today for its biggest jump ever. That's because Novo Nordisk finally decided to bury the hatchet and agreed to sell its weight loss products again on the platform. And it's actually a fairly sudden shift in judgment, considering Novo literally had a lawsuit on them late last year, but they have now decided to drop that, and Hims has agreed to stop advertising, at least, the copycats of its drugs. So seems like they're frenemies.
So they get the real thing. They get the real...
Right, because they were also nervous about the fact that a lot of the things weren't necessarily FDA approved. And so they are making it very clear that they want to make sure that, doctors are aware of what patients are taking as well. This has just been such an interesting story and how it's developed.
It's just, that they were suing each other, and now that's like, okay, let's work together. So I think it's fascinating. But you're right, quite a jump back. Where shall we go next? Oh, this one was definitely in the news today.
Oh, yes. Live Nation Entertainment, that's ticker LYV, up about 4.9%. Earlier was up as much as 7%. That's after the company said it reached a settlement with the Department of Justice in its antitrust case. And more importantly, at least among analysts, they are not going to be required to sell off their ticket seller. So Ticketmaster will remain within Live Nation. So we'll see what happens next. But they did agree to pay $200 million in damages to the participating states. They also agreed to divest from a couple of amphitheaters across the country. But some are still cautioning that despite the win, there is still the issues from the Iran war as well that could be dampening consumer sentiments. Are you really going to want to spend your money on concerts when your gas prices are going up? Maybe not.
Well, it's discretionary spending. But speaking of fees, right, you go to buy tickets and it's like kind of nuts, like all the fees. And it just adds so much more on top.
I also remember President Trump at one point really putting a lot of focus on the idea of ticket scalping. If you think about how these prices surge, it's insane.
I want to just throw one more into the mix if I can, Boeing, because we did see Boeing drop pretty much to its lows. It's down about 4.5% as we speak, and this coming as the Iran war has airlines reviewing growth plans as fuel costs rise, some of them saying they're going to pause leasing and order discussion. So that's a big deal, and you got to think about it. Once you place an order, it takes a while for delivery, so it's interesting to see that momentum close. Airlines, again, also said to consider halting jet deliveries. So we're seeing Boeing shares take a little bit to the downside here in today's trade. Good stuff.
Yeah.
A lot going on. Interesting, right? Yeah. So a lot of it war-related, some of it litigation-related. Good stuff as always. Evelyn, thank you. We're going to see her a little bit later on. She is Bloomberg News equities reporter Avalon Purnell joining us here in studio. For more conversations, check out our Stock Movers podcast, 5-minute episodes, Big Winners and Losers. You can find it on Apple, Spotify, or anywhere you get your podcasts. We have a market that continues to see some momentum pushing off that bottom.
Right. I'm taking a look, though, at the Russell, looking at the Russell 2000, down about 0.6%. So it's really interesting to see how some of those small caps respond to what's going on in terms of the headlines that we're seeing in this news cycle.
Well, maybe some concerns, right, about the domestic economy. And if we're seeing inflationary pressures, higher gas prices, you do wonder, what folks can and can't do and how that affects some of the domestic plays. All right, that's going to do it for the first hour of Bloomberg Business Week Daily. Coming up in the next hour, we're going to dig in a little bit deeper into Novo and Hims and Hers settling their litigation. We're also going to get into why the AI boom will make phones, cars, and electronics more expensive. So something we're keeping an eye on. Folks, if you're watching on TV, the close is coming your way. Meantime, Nora and I continuing on Bloomberg Business Week Daily right here on Bloomberg Radio. This is Bloomberg.
CBS News on the Hour, sponsored by JTV.com.
I'm Jennifer Kuiper. A court complaint says the two men who brought explosives to a protest outside New York City's mayoral mansion admitted they were inspired by Islamic State. CBS's Cammie McCormick.
Police Commissioner Jessica Tisch says preliminary testing of the devices found one included ingredients for a highly volatile explosive used in multiple terrorist attacks over the last decade.
These statements, as set forth in the complaint, make clear that this was not random violence. This was a planned attack motivated by extremist ideology and inspired by a violent foreign terrorist organization.
The two are charged with providing material support to a terrorist organization and of using a weapon of mass destruction.
President Trump is leaving open the possibility of seizing Iranian oil as Operation Epic Fury presses on. CBS's Stacey Lynn.
The president told NBC News he doesn't want to discuss whether the U.S. should take Iranian crude, but said, quote, certainly people have talked about it. Oil prices have surged above $100 a barrel amid the conflict, and any effort to control Iranian oil could strain relations with China, the biggest buyer of Tehran's crude.
AI giant Anthropic is suing the Trump administration.
The San Francisco tech company has filed lawsuits in California and Washington demanding that the Pentagon reverse its decision, a decision Anthropic paints as an act of revenge and an unconstitutional violation of its freedom of speech.
That's CBS's Vicki Barker. For a second day, travelers report hours-long security lines at the airport in New Orleans due to the partial government shutdown. WWL's Dave Cohen reports.
Armstrong International here in New Orleans is one of the airports impacted by the sick out, shutting down many of the screening stations. People caught in the long lines that wind through the airport and into the parking garages are not happy.
We're going to miss our flight, I'm sure.
This is insane.
I had to change my flight.
You need to figure it out. Please figure it out. I'm just trying to get home.
The mayor of New Orleans has been calling on Louisiana's congressional delegation to try and find ways of getting help to get people through security. Dave Cohen for CBS News, New Orleans.
One of the so-called fixers in a sprawling betting scheme to cash in on big bets on rigged NCAA basketball games has pleaded guilty. Federal prosecutors in Philadelphia say Jalen Smith has pleaded guilty to wire fraud and bribery charges. More children are ending up in emergency rooms for serious dental problems. New research looks at why those visits are increasing and how policies from the Trump administration could affect the trend. KFF Health News contributor Angela Zhang.
Now they're seeing kids that come in and their dental disease has just progressed more than it might have before.
Stocks are down on Wall Street. This is CBS News. Colorado grandmother is fighting for a new state law against a sometimes unreliable cocaine test.
After Holly Bennett was rushed to a hospital for septic shock, a police officer charged her with cocaine possession.
And I said, cocaine? I don't do cocaine. He said, that's what was in your purse.
He had tested one of Bennett's crushed prescription medications with a colorimetric field test, which has a false positive rate of 40%. Now Bennett is pushing for a bill that would allow defendants to request a second lab test. Noah Stout is her attorney.
What I'm terrified of is there are people who don't have the resources, the tenacity of Holly, who might just be pressured into taking a plea bargain.
Michael Wallace, CBS News.
The Justice Department says it has reached a settlement in its antitrust lawsuit against Ticketmaster and its parent company, Live Nation Entertainment, that will benefit consumers by letting competitors play a role in ticket sales and force Live Nation to sell 13 amphitheaters. Jennifer Kuiper, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just about 55 minutes away from the closing bell on this Monday. Carol Masser, along with Nora Melinda, in for Tim on this Monday. I know it's been a crazy day already. You're on your second bag of snacks.
Hey, now.
Because she didn't have lunch. She didn't have lunch.
I don't
think. No, I know.
Some Cheez-Its. Keep it interesting.
Listen, Tim and I usually have bananas and things here because it's like crazy. But today was kind of a weird kind of day as we tried to assess the war impact on things playing out on the markets, and then we just had some fundamental news coming our way.
Exactly. There's been so much going on in this market.
I'm not calling you out. I'm just
no, it's okay. It's
embracing
a way to be comforted given all the volatility that we're seeing.
I want some mac and cheese as we speak.
Please send some.
Exactly.
But we were talking about volatility also. Yeah. Keeping an eye on that. I've been looking at the Wall Street Fear Gauge, which we know is the VIX.
Yeah.
It's been hanging around that 27 handle. So just kind of keeping an eye on how people are thinking about the outlook right now. We've had a lot of focus on inflation and what that could look like moving forward, but also rate cuts and the implications here.
Well, listen, there's so many questions, and a lot of it has to do with the duration of the war and how long that goes on. All right, so some of the things that we're going to be talking about over the next couple of hours. We do have two stocks, too, on our radar. Or Madison Muller's in the house. She is going to get into Novo dropping its case lawsuit against Hims and Hers. We know that stock is off and running. It was kind of a wait what moment for me, but she's going to explain it all. We're also going to get into why the AI boom will make phones, cars, and electronics more expensive. It's just about everything and anything is using semiconductors right now.
Just all of it. And I think we're still thinking about this affordability landscape when people are thinking about affordability really being the word this year, given the midterm elections.
Yeah.
So prices continue to be in focus for consumers.
And just in our 4 o'clock hour, we're going to get into someone you may know her as Charlotte Flair. Her real name is Ashley Flair. Either way, she's a WWE superstar and champion, and she's out there creating a wellness brand. So we're going to talk to her in our 4 o'clock hour. Bloomberg Business Week Daily brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, just head to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Should we get a check on trading?
Let's do it.
All right, let's toss it over to Charlie Pella. Hey, Charlie.
Hi, thank you very much. Indeed, we got 53 minutes to go ahead of the closing bell. Back to work Monday. Stocks lower across the board. However, going to begin with the SOX. That is the Philadelphia Stock Exchange Semiconductor Index. We got semis ripping higher on a down day for the rest of the market. Right now, the SOX up by 1.5%. But again, the Dow, the S&P, NASDAQ, broader market, all trading lower. The S&P, keeping it all in context, down 26, down by about 0.4%. Dow Industrials down 350, a decline there of 0.7%. NASDAQ has been bouncing between gains and losses, lower now, little change, down under 0.1%. We've got the NASDAQ 100 index also down by about 0.1%. 1%. The VIX, Wall Street's fear gauge, as we just heard, right around 27, with a 10-year currently yielding 4.13%. Gold is down 1%, 51.28 the ounce. But the big story, the move in crude. We came to work today listening to our morning program, and we have West Texas Intermediate crude trading above $100 a barrel. Right now, it is up 4.6%, but bouncing around the 95 level. WTI 95.11. Brent does remain below $100 a barrel as well. A barrel of Brent 99.28, up by 7.1%. So again, a recovery for the U.S. equity market at the worst level. The S&P had been down 1.5%, down 104 points. Right now, down 0.4%, down 24 points. As for the overall market backdrop, Savita Subramanian is head of U.S. equity and quantitative strategy at BofA Securities.
I don't know if we're setting ourselves up for a really deep bear market, but I do think that this doesn't feel like the beginning of a great year. And in fact, it kind of rhymes with 2022. Remember the beginning of 2022? Everybody was really pulled up. It was going to be a fantastic year for equities. And then we had war breakout, and here we go again.
Savita Subramanian of BofA Securities. Oil stocks trading higher, along with the price of crude. ExxonMobil up 0.5, Chevron up 0.4, ConocoPhillips up 0.9%. I'm Charlie Pellet-Nor, and Carol, that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. We'll be back to Charlie a little bit later on. Hey, shares of Novo Nordisk, the ADRs that trade here in the U.S., and Hims & Hers Health moving, especially Hims & Hers. In fact, that one soaring the most ever intraday. The two are going to work together to sell obesity drugs, a sudden reversal after more than 8 months of acrimony that culminated in a legal battle, which is what made me say this morning, wait, what?
It's been a story.
It's been a story. So here to explain, it has been quite a story. Here to explain it all is Bloomberg News health reporter Madison Muller. She joins us now in our Bloomberg Interactive Brokers studio. So first of all, I'm kind of like, what happened? But tell us, what was that issue? Why these guys were battling?
Yeah, I mean, I also, as someone who follows this space really closely, was absolutely shocked when we broke this story on Friday night. And at first, I didn't believe it when I heard this. I was like, this can't be right. I mean, these guys have been trading barbs for months. You know, the Hims saying that the lawsuit was an attack from a Danish company on Americans. Like, there's a lot of weird animosity, a lot going on, a very, very tumultuous relationship. But basically, the issue between the two companies goes back to last year. They had teamed up to, Novo and Lilly have a lot of these telehealth partnerships. It's something that helps them get their drugs to more Americans, because a lot of Americans are seeking out weight loss drugs on these telehealth platforms. And so Novo teamed up with Hims last year to offer its obesity medicines on Hims' telehealth platform. Then, I think it was like less than 2 months later, they abruptly ended the partnership because Hims was continuing to sell these copycat weight loss medications on its platform. And really, Novo said that the issue was the deceptive marketing and the fact that Hims was continuing to really market these medications. Fast forward a couple of months, Novo is having its own issues here in the U.S., especially competition with Eli Lilly, competition with these telehealth companies. They launched a weight loss pill that was really key to their comeback strategy. And a couple of weeks later, Hims launched a knockoff version of that pill. And so Novo was like, okay, we're done playing. We're going to sue you. Like, pretty swift action. The FDA came in right behind that. And they were like, we are also going to crack down on compounded GLP-1s. And then now, shockingly, they're dropping that lawsuit.
We love
and they are turning a tide.
They're
yeah,
besties again.
Yeah, exactly.
It feels like a sibling rivalry, just watching that back and forth.
Yeah.
And so public.
So
just
public.
Out there for everyone to see. But I'm curious, when we think about the idea of copycat drugs, we obviously know that the United States kind of came in and pushed back on it alongside Novo Nordisk. But how far can you really run with something like that? What made Hims and Hers feel as though that was something that they could do in the first place?
Right, and that's a great question. So it was allowed for a certain period of time when the weight loss drugs were actually in shortage. So these compounding pharmacies can make copycat versions of medications when they're in short supply, and that shortage is something that the FDA designates. So it's pretty official. But then that shortage ended. Lilly and Novo were able to make enough of their drugs, but companies like Hims and some of these other telehealth companies, compounding pharmacies, continued selling the drugs sort of operating under the assumption that like, oh, the FDA is just not going to do anything. Like we haven't seen them do anything before. You know, some of the like language regulation around this is a little bit murky, a little bit of a gray area. Like we think we're going to be okay. We're just going to keep doing this. Another way that they got around that was by not making exact copies of the medications, but by slightly tweaking the dosages, microdosing, things like that, adding B12, adding B6, adding a
but
whatever.
Was it patent infringement?
Well, so that's what then Novo was suing Hims over. So that was the first time they had filed any type of lawsuit against a telehealth company for patent infringement. So it was really a step up, sort of signaled more aggressive action from Novo, and then now they've pulled that lawsuit.
So is this a win-win for both in your view? You've watched this space, you understand and how it continues to evolve. Is it a win-win for both?
Yeah, I mean, both of them are in really precarious situations. I mean, Novo really needs this partnership with Hims because they need pretty much any partnership they can get right now to get their drugs to more patients. Even though Novo created the U.S. weight loss market, they've really lost out in the last year or so to Eli Lilly. It's pretty remarkable. So they kind of need to do everything that they can right now to get their drugs to more patients. Hims, on the other side, has really, you know, the last few weeks, especially with the Novo lawsuit, with the FDA clamping down on compounded drugs, DOJ investigation, SEC investigation, like they have a lot going on, and the future for this compounded weight loss drug business was very uncertain, and their stock has really suffered as a result the last several months, and investors have really been questioning, like, what is the path forward for this company? And so they needed this deal from that, you know, that perspective of needing a lane and an avenue forward for growth.
Does Hims and Hers Health have any real competitor? I mean, from my perspective, I would assume as a consumer, it's really convenient that you can just go online, shop for what you're looking for, and then, to my understanding, it's mailed to you. So do they have any other competitors that you kind of keep an eye on? It's interesting seeing them down so substantially on the year when you think about them as a convenient avenue.
Right. It's interesting because there's actually not that many telehealth companies sort of in the same caliber that are public. So Hims is usually used as sort of like a proxy for the industry. At least that's how I've heard it described. They do have competitors like Weight Watchers now is offering GLP-1 medications. They're actually public. Ro is probably the biggest competitor to Hims, but Ro is still privately held. So not something that we can really assess from that standpoint, but there are some competitors out there. It's just Hims tends to be the one that's like really on investors' minds or, you know, in sort of like the public consciousness and discourse.
I do want to point out, if you take a look at Hims and Hers, I mean, as you said, 31% to the downside here this year in 2026. Almost 40% of the float is short, so there's a lot of negative sentiment. While you're here, before you go, I want to ask you about the head of the U.S. Food and Drug Administration's Division of Vaccines and Gene Therapies is leaving the agency. It's not been a great tenure for him. I did see a lot of biotech shares moving late Friday, and we continue to see it today. Significant?
Yeah, this is definitely significant, especially for the biotech industry. Prasad's tenure has sort of been marked by a lot of controversy, a lot of issues for biotech companies. It's been a real challenge, and so a lot of investors sort of breathed a sigh of relief when they saw that he was exiting. You know, the FDA said that this was a planned departure, that he had only really planned to be at the agency for like a year, but that's not something that was widely known, I think, during his tenure. So it definitely came as a surprise, but I think a welcome one, and we did see a lot of biotech stocks moving on that last week.
Isn't it amazing all that she knows on this space? You blow my mind every time we talk.
There's always lots happening.
There is a lot happening, right? And I'm sure more to come. Madison, thanks.
Thank you.
Really appreciate it. Bloomberg News health reporter Madison Muller right here in our Bloomberg Interactive Brokers studio. All right, folks, we're headed for a break. Right now we're down about 18 points on the S&P 500. NASDAQ 100 holding on to a gain of about 24 points. So we'll see if that holds to the close. When we come back, why the AI boom will make phones, cars, and electronics more expensive. Can anything get cheaper?
It would be nice.
This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a turnaround for the U.S. stock market. We've got 39 minutes to go with the Dow lower, little change right now, but the S&P and NASDAQ are both advancing. CBS in an interview reporting that President Trump has told a reporter that the war could be over soon. Right now, the Dow higher by 9, little change there. The S&P right now up 22. Again, developing story. Stay with Bloomberg for the latest. The S&P up by about 0.3%. NASDAQ solidly in the green, up now by about 0.8%. And in terms of the turnaround for this U.S. stock market, got to keep in mind that at one point we had the S&P down by 1.5%. Right now, the S&P 500 index up by about 0.3%. The VIX now below 26 with a 10-year at 4.11%. Spot gold down 0.6%, 51.38 the ounce, and Bitcoin now higher by 2.5%, 68,911 on Bitcoin. But the big story today involves crude oil. West Texas Intermediate crude, which started the day above $100 a barrel. WTI just above 90 right now. It is now actually lower by 0.5%. Again, West Texas Intermediate crude 89.88 right now, a print below 90 on WTI, dropping right now down by 1.3%. Again, recapping here, S&P 500 index up 0.3%. Fast-moving markets. Keep it locked into Bloomberg Radio for the very latest. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Just to rehash, because we are definitely seeing a very definitive market move here on those headlines coming out of CBS. That President Trump said the war could be over soon. He cites CBS citing a phone interview with President Trump. He says the United States very far ahead of a 4 to 5 week time frame. Again, these are headlines coming from CBS specifically. And just take a look, if we can bring up the market boards, there you go. You've got stocks now straight line up to their session highs. So we're up about 26 points, 0.4% higher on the S&P 500. The Dow is up about 0.1%. And we've got the NASDAQ 100 also up at about 0.8%. Industry groups all increasingly moving into the green.
What a reversal that we're seeing. I think that's something that traders wanted to know. They really just don't love the idea of uncertainty, and clearly President Donald Trump is saying that this may not stay around for as long as maybe people were anticipating.
I guess I would say nothing really has fundamentally changed,
right,
folks. We're still at war. So, that's the other thing. But if the president is saying that, markets are definitely listening. Investors are listening. Infotech now up about 1.2% as a whole. More of the major industry groups in the S&P 500. There are 11. We've now got 7 of them higher for the session. WTI crude has moved down to its lows of the session. It's now down about 2% as we speak, so we are well off. We saw about almost $120 a barrel for WTI crude. No surprise, we've seen the dollar, which has strengthened on this war. It is now down slightly in the session. So again, we're seeing some pretty swift reaction in terms of the markets.
Absolutely.
All right. Let's. We're going to keep an eye on that and look for more headlines. EM currency, emerging market currency index also erasing losses amid those comments from President Trump. So we'll continue monitoring that. In the meantime, one of the things that's definitely caught our attention on this Monday, and that has to do, speaking of wars, a different type of war, the global chip war, definitely on. It's happening in a world where there are semiconductors, nor in so many different things in our worlds and at work and at play. And this is really the subject of the Technology Quick Take today.
Right, and we've been talking so much about the tech space lately, but this chip war is something that we're just continuing to watch every new chapter unfold. And, of course, our next guest is all over it.
Yeah, she is. She is Sarah Fryer. She and the team putting this out. Bloomberg News Big Tech team leader Sarah Fryer is with us. She is also the author of No Filter, the inside story of Instagram, and she joins us from our Bloomberg San Francisco bureau. Sarah, this is a great story by the team putting this out here. Is it as simple as lots and lots and ever-growing demand for semiconductors, and so it's just outstripping supply? We just can't make them fast enough. It feels like that's the story we talk about a lot every day.
Well, it is that, but it's also the kind of semiconductors that are being that are being made and contracted for are the high bandwidth memory chips that go in AI data centers. And if you remember last time I was on here on this show, I talked about the $650 billion that big tech companies plan to spend on AI infrastructure this year. It is just stunning how much they are planning to build out, and that requires a lot of chips. And if the memory chip makers are devoting their time to making high bandwidth memory, they're not making the DRAM and other types of chips that go into your phones, your cars, your laptops, your other electronics. So it's going to make everything a lot more expensive. It's causing a bit of a crisis in consumer electronics where people don't know when and if relief is going to come for this dramatic shortage.
Well, first of all, I love the graphics and the layout of this story. Make sure that you check it out on the terminal, everyone, if you have not. But one thing that I find interesting in this story is, say, in some cases, spot prices have jumped nearly 700% in the past year. What is your team hearing from sources about the outlook here, especially if we continue to stay along at this pace?
Well, it's a tricky situation because the memory chip makers, they've always had to deal with this push and pull of demand, and if they make too much, they're dealing with time horizons where they're spinning up factories, they're manufacturing these chips, and they have to expect that on the other side of that they're going to have a buyer. The problem is if they make too many, then they end up having way lower margins. So right now they're having really high margins and they're doing well. If they scale up their production, which they're going to do, they can't do it too much or else they might have a glut. And so that's what happened to them during the pandemic when there was this big electronics boom. Everyone was buying stuff for their home offices. Then that stopped. Then they were in a really difficult spot. So they don't want to make that same mistake. But is this AI boom going to continue beyond this year in terms of infrastructure? All signs and predictions from the companies that are spending on AI infrastructure point to yes. However, anything could happen. And so it's just this very tricky market dynamic that they are going to build out more, but even then, relief might not come for another year or two, and then you don't want to overdo it. You don't want to overcorrect because then you could really affect those margins.
We are talking with Sarah Fryer. She's Bloomberg News Big Tech Team Leader, and we're talking about this story on the Bloomberg about why the AI boom will make phones, cars, and electronics more expensive. We're watching that, but I just want to go back to, for just a moment, Sarah, some headlines continuing to cross from an interview that President Trump has done with CBS and the CBS reporter out on X. The president is saying that he has someone in mind to replace Mojtaba Khamenei, of course, who has been the leader that has been put in place to take over from his father, of course, after his death. So it's interesting to see that President Trump, is commenting on that too. And of course, we did see that President Trump earlier say that the war could be over soon, and we saw a swift reaction in markets where we have moved up in terms of equities. We are now green across the screen, and we've seen WTI crude actually now lower on the day, so we've seen certainly reaction. Sarah, getting back to you, because I do feel like when we think of narratives, it is certainly what's going on and how long this war goes on, but the AI narrative is just constantly there in the background. You mentioned that the cycles, so nobody has said that it's different this time around when it comes to the semi kind of build out cycle, oversupply that will lead to lower prices. People still believe that that is still intact.
Well, I think that there are a number of executives who are very concerned about hitting a wall in terms of chip supply, and overall we're hearing, we may be fine for the foreseeable future, but then what happens after that? Will we have enough? And so a lot of the big tech companies are signing contracts for for many quarters out, and that's become troubling for some of the smaller suppliers that don't have that negotiating might or that kind of balance sheet to support that. And we are hearing that some products may just be too unprofitable to make, that we might see some categories never launch or come to market. It's really a confusing time for those who are building businesses that are hardware businesses. And then, of course, there's the uncertainty, which we don't go into this story, but overall, there's this uncertainty of war, and that tends to not be great for supply chains either.
So what do you think are some of the knock-on effects or maybe some of the derivative impacts that come from these higher prices? I mean, if we think about energy, that still continues to be the focus, not only with the national news, the international news that we've been seeing with this ongoing conflict, but when we think about energy prices as it relates to data centers, it's a story that we've been following for quite a while. So I'm curious.
It's just huge. I think the memory chip crisis, the supply crisis is just the beginning of the walls that are going to be hit in this build out of AI data centers. What happens when you run out of construction workers, when you run out of real estate, when you run out of energy, like you mentioned, when you just can't get enough water to cool down the data centers, when communities start fighting back against having them in their local area. So, and we're already seeing issues in each of those categories. You have some data centers where the energy contract that was done, the energy is not actually provided. So I think that this these plans that these companies are making for this dramatic AI build out, they're going to hit against reality. And we are starting to see with this memory chip shrinkage, the crunch on memory chips, that we are just going to see more stories in this vein.
Yeah, it's kind of fascinating. I also think about, Sarah, that these chips become more efficient, right? Using less energy. So you just wonder, maybe we won't need as many, and even if there is the build out. So
even if the innovation, I mean, there is a lot of chip innovation happening right now, but it takes a while to build, to try to figure out. I mean, the explainer goes into how difficult it is to get these chips right, to do it without errors. And the people who are building out these data centers, they don't want things to break, right? Because that would render it difficult to find the problem, difficult to fix, and could render an investment less usable. So I think that there's going to be innovation in this market. There is innovation in this market, but it's going to take a while to see that change the kind of supply and demand imbalance that we have right now.
Right, exactly. And as you mentioned, these companies want to be so careful about overbuilding, right? These things are not inexpensive. They take a while, and you don't want to be in that spot where you've built it and nobody comes. And that's a really a massive problem. Sarah, so glad we could get to this story with you. Sarah Fryer out there on the West Coast. She's Bloomberg News big tech team leader. She's also the author of No Filter, the inside story of Instagram. We are counting down to the close on this Monday. And folks, once again, we have seen swift reaction in the U.S. equity markets. This, as President Trump tells CBS that the war could be over soon and says the U.S. is very far ahead of a 4 to 5 week time frame. So again, he also is mulling taking over the Strait of Hormuz, which we know has been so important in terms of moving oil around, moving stuff around in general, but that has certainly been a big factor in terms of the energy markets. But we're looking at New York crude below $90 a barrel, and we're seeing stocks across the board moving higher.
Not exactly what I would have expected this morning, but stay on the edge of your seat here in this market.
You never know. In any given day, we mentioned the VIX is higher. We've seen a lot of volatility in today's trade. All right, folks, we're coming back right here on Bloomberg Business Week Daily.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing, a dramatic turnaround for the U.S. equity market with the S&P 500 index up 63 right now. That is a gain of 0.9%, best level of the day right now. Dow Industrials up 306, higher by 0.7%. NASDAQ up now by 309 points, up by 1.4%. At the worst level of the session, we had the S&P 500 index down 1.5%. Right now, we have got the S&P advancing 0.9%, higher by 58. The VIX now at 25 with a 10-year, 4.09%. Spot gold is now down $40 the ounce at down 0.8%, 51.31. While West Texas Intermediate crude, dramatic reversal there. Earlier in the day, we had WTI trading above $100 a barrel. It is now at 85.63. West Texas Intermediate crude down 5.3%. Barrel of Brent below 90 now at 89.65. That is a drop right now of 3.4%. Bitcoin now up 2.5%. Bitcoin 68,937. So again, recapping here, the Dow, the S&P, NASDAQ, they are all advancing. S&P 500 index up by 0.8%. We've got the SOX, the Philadelphia Stock Exchange Semiconductor Index, surging 3.6%, and the VIX at 25. Again, West Texas Intermediate crude. What a story there today. Dramatic reversal, down now by 5.8%. WTI at $86 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Daddy, can I drive?
Yeah, sure, why not?
Do I look like I drive a minivan?
Shut up and drive.
Don't drive angry. Don't drive angry.
I'll drive. Shotgun.
This is the drive to the close.
If you had access to a car like this, would you take it back right away?
On Bloomberg Radio.
All right, TikTok, everybody. Just about 18 minutes to go until we wrap up the trade on this Monday, March 9th. Carol Masser, along with Nora Melinda, she is in for Tim. Sorry, I was looking at the screen. And we're just coming off our highs of the session, but we're green across the screen. I mean, we're now up about 49 points on the S&P 500, Nora, good for a gain of 0.7%. We're seeing big tech names actually leading back. Yeah.
Yeah, I mean, it's really interesting to see this reversal where we were clearly in the red before. I mean, the S&P 500 wiping out a loss of about 1.5% on an intraday basis before swinging back higher, up about 0.7% right now as we speak.
Yeah, and this, of course, has to do with those headlines out of President Trump in an interview with CBS talking about maybe the war potentially ending sooner rather than later, and also talking about or considering maybe taking over the Strait of Hormuz. So we've definitely seen a different, much more risk on. We've seen WTI crude down now about 4% in today's session. We're talking about 86.89 a barrel as we speak. We've also seen the dollar back down, although it's bouncing around here. It's just down a tad, about 0.1%. Let's see what our next guest has to say about the market environment. Great to have with us Paisley Nardini. She's Managing Director and Head of Multi-Asset Solutions at Simplify Asset Management. And she joins us from California. They have, by the way, about 12.46 billion in assets under management. That's at least at the end of January. Sorry, I'm watching too many screens, Paisley. Monday.
It's a busy day.
Well, it went from being kind of like, all right, trying to figure it out. We thought we understood the trend here, and it's definitely changed just in the last half hour. How do you see the market environment? What has fundamentally changed in your view?
A lot has changed since the future was open last night, I will say that, but I think today is a great example of how resilient markets can be. Despite all of the noise, all of the uncertainty, markets continue to push higher. And I think as an investor, you really have to balance the short-term noise with those long-term objectives. Markets tend to go up higher more often than do not, but that does not mean that you should be asleep at the wheel. And I think that's why in this type of environment, we've seen diversifiers like oil, like energy, commodities, and even some more of the equal weight equity exposure really outperform this year. So a reminder to investors to always be diversified.
I just want to mention to you, Reuters is reporting that the president is weighing further easing of Russian oil sanctions. So we are seeing that as well across the Bloomberg. I'm going to continue watching for some headlines, Nora.
Absolutely. Well, Paisley, you mentioned the idea of kind of keeping a long-term investment focus instead of just trading on the short term here, because there has been a lot of volatility in the market. I'm taking a look at the VIX right now at just below that 26 handle. People really trying to figure out where to be in this market. So as you kind of think about the long term, where do you want to be? Is there anywhere that's most attractive to you right now?
Yeah, I think, well, right now, I think what's really attractive is liquid alternatives and diversifiers. I think commodities broadly, irrespective of the run-up that we've seen in oil and energy just in the last couple weeks, I think commodities broadly have started to show resilience after really years of staying dormant. We saw that with precious metals last year, that even continued into January. So I do think having dynamic and flexible commodity allocations is still a very big focus for investor portfolios. But I think bigger picture, and what we started to see several years ago, was this dislocation between stock bond movements. I do think right now we're still kind of focused on that anti-bond, anti-duration trade. But even in the year-to-date period, core bonds have outperformed equities. So I think bigger picture, the Fed is in a bit of a rock and a hard place right now with some of these stagflation concerns, some of the higher inflationary concerns. If we do see these tensions in the Middle East start to resolve, we could see inflation considerations start to move lower. That would be supportive for the Fed to kind of put some of those rate cuts back on the table, which right now have been pushed to the back half of the year. So all of that to be said, stocks, bonds, but also liquid alternatives as a part of that third leg of the portfolio, I think is how investors should be thinking about building portfolios for the next several years.
Well, I mean, of course, we have gotten more developments just coming out of the headlines that we were speaking out about a bit earlier, but a lot of attention has been on the oil market. So talk to me a bit more and put this into context for me about the stagflationary fears that people have been discussing. What does that look like to you?
Yeah, so ultimately, oil and gas has been actually a very large deflationary force over the last couple of years. Oil has really been low and muted in price, and I think there was an expectation that we would start to see, just due to some supply-demand mismatch, start to see some rise in oil prices. That obviously has been accelerated and exacerbated over the last couple of days, with oil, reaching $115, $120 a barrel overnight. We've already started to see that subside, but ultimately, that oil and gas pressure on inflation measures is what we're expecting to see, and that kind of bleed through or feed through into the inflation expectations. I think in the last few months, inflation has been trending in the right direction, but it still remains quite elevated over that, longer term 2% target and kind of more 2.5%. So I do think it's so important over the next couple of days and weeks, the impact of these tensions in Iran and the impact that that will have on oil prices and thus on inflation measures broadly, because if we can resolve that component, I think markets might feel a little bit more confident that inflation is still moving in the right direction, which is lower, which again puts rate cuts back on the table, which is going to support markets broadly and support even some of the more unloved parts of the market, like small caps and more value-oriented stocks.
Hey, Paisley, what's kind of the narrative or fundamentals that you can kind of hold on to in this market environment? And I guess maybe even a better question is, did you change anything in terms of portfolio management as a result of the U.S. war in Iraq 1 week ago? Or are you kind of still marking time to wait and see what happens next?
Yeah, so at Simplify, we have been very much focused on diversifiers within our portfolios for years. So we've already had commodity allocations, we've already had exposure to metals, to oil, to energy, but we do so in a way that's quite flexible and quite dynamic. And so we kind of say, like, commodities when you want them, not when you don't. And so our strategies are constantly adapting. A lot of the measures we're looking at is kind of rise in momentum or price trend that might signal that some of these commodity allocations are headed for higher prices. And so really, as it relates to Port Done Differently in the last couple days, is really just making sure we have a pulse, we have our hedges on within our portfolio, and we're looking for any tactical dislocations for opportunities. But again, bigger picture, always looking for ways to stay diversified and stay in some of these more liquid alternative parts of the market so we can ensure the ability to be dynamic.
All right, we're going to leave it on that note. Paisley, thanks so much. Good to check in with you. Paisley Nardini, she's Managing Director, Head of Multi-Asset Solutions at Simplify Asset Management, joining us there on the West Coast in California. Hey, folks, we want to go back to what has definitely moved markets in the last half an hour or so, and that is President Donald Trump saying the U.S. war on Iran could be ending soon, stating the operation is ahead of schedule. He was making these comments to CBS News. He also said the military operation is very far ahead of its initial 4 to 5 week time frame, and that Iran has no navy, no communications, they've got no air force. Curious to see what our team is hearing, as well as we know that we can sometimes get headlines, and whether or not that turns into actions, we will certainly see. And we know the president is going to make some comments potentially later on this evening. He's going to be holding a press conference tonight from Florida before he returns to Washington. Right now with us is Jordan Fabian. He's Bloomberg News White House editor, and he joins us from the D.C. Bureau. Jordan, let me toss it over to you. These headlines have definitely got attention on Wall Street. We've seen markets, equities are now to the upside. We've seen the dollar back off. We've seen crude move way down. What are you guys hearing in terms of where the president is right now, and whether or not this war might be coming to an end sooner rather than later?
Those top-line comments to CBS News would certainly suggest that the president is looking for an off-ramp. The White House and the president saw all these negative indicators in the markets over the